coffee. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Look who's back. That's right. Tom Sosnoff, everybody.
Welcome back, my lord.
Can I have your picture, Tom? Can I take a picture with you? I'm so sick of you, honestly. Honest to God.
Welcome back.
Oh, boy.
I've only been.
That's what he would make me do at a live show. Like when nobody applauded or anything like that. I have to run up and down. Yay, Tom Sosnoff. It's a horrible. Yeah.
Welcome back. When did you get back?
Late last night.
Oh, wow.
Yeah, like 11:30. My flight. I missed my flight in Guadalajara.
No.
What?
You were there 2 hours early, maybe
2.5 hours.
2.5 hours.
That's not early enough for an international
No,
flight.
it's plenty of time. I got through. I got there 2.5 hours.
I forgot to stamp my passport.
No. Nobody forgot. You know what? The way you spin a story is amazing. When you have global entry, when you go through global entry, instead you just stand in front of a camera. They take your picture, and it gives you, and they give you a piece of paper. You're supposed to keep that piece of paper. That's your.
Did you know that? Did you?
Of course, I knew that. Everybody knows that goes through there.
Tom has like a total deletion sort of personality. He just instantly just deletes things.
This jamoke threw it out.
Sure.
So when you come back in,
I'm inbox
it's like, how did you get here? By boat? Did you swim here? Did you take a bicycle? How did you get here?
Yeah.
How'd you get into our country?
Mexico is like that, yeah. But then sometimes you just have to pay enough money, then they'll give you another one.
You know, being in Mexico, when you talk to people there, it's so funny because there's like 1.2 million Americans living in Mexico illegally. So so everybody jokes, they're like, we're gonna deport all the Americans.
Yeah, well, he almost got deported back.
That's funny.
He was almost on a semi in the bottom of the thing by the wheel well.
It's really funny because nobody realizes that there's over 1 million Americans.
What does that have to do with you missing a flight? Because
okay, so I get the thing, so it's not stamped. Whatever.
Thing.
Did
you get the paper when you came in?
They go, you've got a half hour before the plane's taking off.
Right.
So you got a half hour.
But you had been sitting there for 2 hours. You could have figured this out.
2.5 hours. I had no idea. So anyway, so they go, you got to go downstairs to immigration, go back
to another office,
get your thing stamped, and then come back to
your passport stamp.
So I'm running around this whole terminal.
Running is not the operative word. Nope, but go ahead, try again. You're shuffling around.
No running.
Right, yeah. No, back up. Let's rephrase.
Going really fast. I can't find anything. Nobody knows where the immigration office is. Okay, nobody. There's no signs.
You don't speak Spanish. I'm sure there are signs.
Not even close. So finally I find the immigration office and there's a line. And I'm like, okay. And so
you weren't the only idiot.
Well, I don't know what everybody else was doing.
Right.
So I get there, immediately the girl stamps my passport. She's
How many people were in line?
Maybe like 4.
Could you have asked them to, know?
Because they've been waiting also. So anyway, stamps my passport, fine. I got to go back through security. And this time security has to open up my entire suitcase.
Oh, no.
Because of taking home a couple of gifts.
Yeah.
Oh, no.
And then they...
Although I call bullshit because I see no gifts.
With you, V.
Yeah, go ahead.
Where are these so-called gifts?
Are they searching through everything? And I'm like, oh, God. So they close the gate, 10 minutes before the flight.
Right.
And so I have like 2.5 minutes to make it. I couldn't.
Missed it by that much.
I missed it by 2 minutes. But anyway, so...
And then how much longer did you have to wait?
2 hours.
Oh, that's not bad.
Yeah. So
it could have been way worse.
It could have been way worse.
Well, he's going on 5 hours now.
But then I missed.
It's because this is what happens when you don't travel with your handler.
What happens when you don't
When you don't travel with
and you don't follow. God, that's horrific.
But then I booked a flight on another. I got home.
Nope. Okay.
Oh, I'm sorry, dear baby Jesus. I'll never ask for something like that to happen to Tom.
I know, we got to be more specific in our rituals.
You were too good to me.
I just want to go on record as saying, though, I love Guadalajara.
Okay.
You say I'm going every year now.
Going every year.
That's wonderful.
So what'd you like about it so much? I mean, I'm being serious.
Guadalajara?
Yeah. Is it? I mean, it's not near the water, right? I mean,
no.
Right.
So you didn't go to Guadalajara. You just were in Mexico City.
Right, and I
Okay,
had
right.
a 4-hour flight like every other normal human.
Right,
being.
okay.
I didn't do anything.
Yeah, we were in Mexico City together.
Right. I
Happens in Mexico
wasn't sure. I
City,
didn't know.
stays in Mexico
Me, Tony,
City.
and Scott were in Mexico.
Yes. And how was that?
It's a threesome.
That was great.
Yes.
That's first of all, I'm going to just flat out say, I will take the food in Mexico over any other country I've ever been to.
Wow.
Not even
How
close.
we're ranking. Mexico's your number one seed.
Mexico is absolutely my number one seed compared to, and I mean, this year I've only been to Italy and, London, that kind of stuff.
Sure.
Mexico, India, and
Mexico
Not this year.
blows it all away.
Wow. What was the best thing you ate in Mexico?
We went to 2 really kind of like hip, expensive taco places, and they were incredible. But he asked him, we ate until we were literally sick.
I was sick to my stomach. No,
Yeah.
and I was in bed by 7.
What kind of tacos?
Because you eat at 2:00 in the afternoon.
They were all meat, but they had different kinds of meat. Like you could have
sirloin and ribeye and
sliced filet mignon, whatever you want.
Oh, wow. Okay.
And when I say they were great, they were beyond great. Like this is the greatest thing I've ever had. And we just sat there and we're like, we ate until we were sick.
right.
Okay,
And,
well, don't do that.
No, it was obnoxious. It was obnoxious.
It was so good. And then the other
And I
night,
promised myself the second day that we went for tacos, which was like on the bookends, the first day we got there, last day we got there, we ate 5 tacos. Okay,
Yeah.
the first day. And I said, I'm not eating more than 3 tacos. And they're not like normal tacos. They fill it's like a plate. It's like
Oh, okay, they're not the little street tacos.
No.
No, okay.
and they're not. There's nothing. It's just a tortilla and meat.
But I learned one thing in
nothing
Mexico.
else.
Nobody touches your taco. Like you get to make your
you
taco
put whatever
the
you
way
want on it.
you want it. They give you all these little sizes. with
Wow,
nice little
okay.
spoons. It was very, very nice.
In between that, we had a 2 Michelin star restaurant
Yeah.
that we went to that was unbelievable. And then
Is that like contemporary Mexican or like
Yeah.
what? Okay.
Yeah, and in a seafood restaurant. It was more than I deserved. But I have to say one other thing. That was wonderful. That was great. All of that was good. But it was the bow or the package of the whole thing that Tony from Mexico, and that's why I'm wearing his shirt today. This is Tony from Mexico, TM. He was the most gracious host. It was absolutely wonderful. There's nobody
He's a remarkable human being.
like him. Yeah,
we got to live the life of a Mexican billionaire for like 4 days.
I mean, yeah, come on.
Yeah.
You walk out of the restaurant, the car's picking you up.
Yeah, it was silly.
bulletproof
silly,
car.
stupid.
Of course.
Yeah.
We
course.
lived the life for
It was great.
4 days. It was great. And I had a show there, and it was
Show was great.
show was great in Mexico City. But the show in Guadalajara, the events in Guadalajara were unbelievable. It was probably my favorite day in the last of like being in front of customers in the last 25 years.
So suck it, everyone who came to Chicago. Thanks for nothing.
That's right. San Francisco coming up in a week. Screw it.
Screw you guys.
No, it's different because this was all kids.
Yeah, no, I
I
get
was
that.
at Pan American, University of Pan American, and
Sure.
which is I guess it's one of the best institutions in Mexico.
Okay.
And I was at the Guadalajara campus. That's because I've been there because they teach trading.
Yes.
And we did an afternoon session with, a morning session with like over 200 kids. And we did an afternoon session.
Do they have like a translator on stage with
No,
you or
everybody
no?
speaks English.
Oh, okay.
In the finance program, everybody speaks English.
Oh, interesting. Okay.
Yeah. And the kids there, if you want to go into business,
Sure.
actually, a lot of the classes are taught in English, but you have to get into the institution, you have to speak English
Great.
because that's,
Sure.
basically
Yeah,
that's
business,
language,
yeah.
business language. But in the morning, we had, about a little over 200 kids, which is really a lot for college. It's way more than we get at an American school. I mean, there's only 6,000 kids in the school.
Sure.
And but it's like it would be like the equivalent of like an Ivy League school. And then in the evening we had 350 people.
Wow.
And they're all young.
Yeah.
Like all young. Like you look at the demographics, everybody was, from 20 to 24.
Mm-hmm.
And the amount, like just the hunger, like you could just see it.
Yeah.
It's
All right,
incredible.
stop meat riding them already.
But I'm just
crying out
It was an
loud.
unbelievable it was an unbelievable experience.
That's wonderful.
We're all into it, and the university was great. We signed a deal to like work together into the future, and that was special, that trip. And the food in Guadalajara, oh my God. So they have one sandwich there, which I did not love, but it's their famous sandwich, which is like a
dip something.
It's like pork. It's like pork. It's pork on a hard roll, and then you dip it in some kind of sauce of your choice of sauce.
Okay.
It's almost like not stale, but I mean it's almost like
it's almost no, it is stale.
Right, and then you dip it in the sauce, and it kind of
did not love it.
Sucks it all up.
Wasn't my favorite. It's kind of like Italian beef. But the food, forget about that. But the food, we had again. This is my second time eating ant eggs.
Yes.
Tony,
I didn't get any of that.
Escamole.
Yeah. And then tongue and the whole deal. But Tony didn't realize, or maybe you did realize.
No, I didn't, because I don't know what you're going to say. Right?
When we were at the restaurant in Mexico City, remember those carrots?
Yeah, they were amazing.
Do you know what they were dusted in?
No.
Because I read about this.
It was excellent.
I know.
But I don't care what it was. It was actually, it was like one of my favorite things of that meal. But go ahead.
It looked like a carrot, but it was really corn. Do you remember that?
Yes. Right.
So the reason.
Like a baby corn.
Like a baby corn.
Medium corn. Like a medium, like an adolescent corn. Okay. It wasn't quite a baby one. It was like adolescent.
Sure.
Dusted the whole thing and rolled around in dried ants.
I had no idea. It was excellent.
That's the chef's famous thing. Like he's this world-renowned.
He just puts dried ants on everything.
No, you wouldn't know. It's like just salt. It's just
sure. It's like a hot Cheeto dust, but made of ants.
Idea.
I had no idea, and it was awesome. Yeah. I actually you left a little of yours. I almost grabbed a little bit of yours.
I read about it. Somebody sent it to me. Might have been Scott or somebody else, but sent it to me with pictures of it. That's like their favorite.
Yeah, that's you and Scott have that thing together where you guys just send things to each other, even though the three of us experience something. You guys just send it to each other. It's you guys against me for
the 10-year-old mole, all the stuff. But the food, unbelievable. And in Guadalajara, we had, the stuff we had there was just off the charts.
How was the golf?
One day I played really good. The next day,
one day he played lights out.
Wow.
He played 9 holes and he shot a 39. I gotta give him his props, man. I don't lie.
It's a hard golf course.
Yeah, that's pretty good.
Well, it was great. It was great, and he missed 2 putts that were makeable. He really
easily could have had a 37 on that night.
Wow.
But in fuego. I mean, he was just. And we didn't bring our clubs, and he's like, I really love these clubs. I really like the shaft.
They changed the clubs on me the second day.
No, these are amazing. And Tony from Mexico had brought an extra set for him.
Sure, of
course. He's like, yeah, I'm glad you like them. Now last year he played, I wasn't there. He played horrible, and he hated the clubs that he had. Absolutely freaking hated them.
They were the same clubs.
And Tony goes, so you want a secret? He goes, yeah. He goes, same clubs as last year.
That's why I love.
The second day he was garbage.
That's why I love
he came
Tony
back
from
to
Mexico.
earth.
Second day I played like crap. Eventually Tony's game took me down.
Yeah, right. That's what he kept telling me. You only play, as well up to your competition is what he told
Eventually, so it was great. Golf.
Does the ball go farther because of the altitude? Because
not the second day.
Okay.
Second day, nothing's making anything go further.
Because you're at 8,000 feet, though, right?
8,000.
So yeah, that ball.
I didn't feel it. Did you ever feel it? Like I never felt winded. We walked the course.
No, we walked. We will pretty much walk the entire course.
Yeah. Did you feel it? I mean, you always walk like that, so it's hard to tell if you were feeling anything. So
I didn't. The 8,000 feet.
This is what peak male performance looks like.
Did you take your creatine that day? You must have. Yeah, you were strong.
No, they. It's really a beautiful. It's where they played one of the Live tournament.
And that's where
they played a PGA tournament there.
I don't follow the Live tournament.
So I'll just make sure. So on the 18th hole, there's this bunker on the right hand side that I hit it into it from my drive, and it happened to be the same bunker that Tiger hit it into from his drive, but he drove from like.
Right, the professional tees. You were hitting from the ladies' tees.
His tees.
We were hitting in front of the ladies' tees.
Right, yeah.
His tees were about 100 yards behind mine.
Right, yeah.
So Tiger hit in this bunker, and there's a giant tree in front of the bunker. And they call it this famous shot because he won the tournament there because he hit it out of this bunker onto the green. So I had no idea. So I'm standing there, and then all the caddies and the guys go, that's Tiger's bunker. They renamed it, because he made this unbelievable shot. And I'm like, how could you possibly hit it over this tree? Like, it's just sitting there, like, realizing how...
But then you felt the spirit of tiger enter you. And
No,
I hit it right in the middle of the tree.
No. That was Montezuma's revenge that he
I
was
hit
feeling
it
at that
dead
point.
smack into the middle of the tree.
And then did the ball come back and hit you in the face?
At that point, I was done. It was 18th hole. I was tired, and I was playing like crap.
Yeah.
So, but we had a great time in Mexico City, and we overate every single day, every single meal, and then we had an unbelievable time in Guadalajara. So it was an incredible trip.
And if other people would like to replicate the Mexican billionaire experience, how do you facilitate that?
Happy to give restaurant recommendations in either place. But,
Yeah.
I mean, I did give 4 days of speeches, so it wasn't like, we weren't all just. Yeah.
Anyway, well, we're happy to
How was the
have
talent
you back.
in Guadalajara?
What kind of talent?
I gotta explain it to you now. I mean, are you that old for crying out loud? I mean, you look it, but I thought maybe you'd have some fire burning still
women
inside
in
you.
Guadalajara?
I mean, snow on the roof kind of thing, fire in the.
Women in Guadalajara, absolutely beautiful.
That's what I'm hearing.
Yeah.
Yeah, it's
Like drop dead beautiful. The whole city.
Okay, cool. Let's go on to objectify another ethnicity, I guess. I don't know. I don't know what's happening.
It's a compliment. It's not. I mean,
Compliment.
yeah. I mean, listen. It's just a compliment.
People are. It's also
like you're dressed for Halloween today. What the hell do you got going on there?
You leave me alone.
I mean, they're more. Their business attire is different. They're still a country that dresses. That the first night we got there, we were doing this thing. Everybody's in a black suit.
Wow.
Actually, that was the first thing he said when he got up on stage. I didn't get the
First
black
thing I
suit
said, I didn't
memo.
get the black suit memo.
Way to break the ice, Tom. Really.
You-
First of all, English is a second language for every person there, and you're cracking jokes. Very
You
good.
own one black suit, and it's
And it's
the
JJ's.
combination parts. Yeah, it's the pants are from one of your friends, and the jackets are from another.
I don't have I didn't get the black suit memo.
Right.
They
Well,
are
you don't own
very-
a black suit, sweetie.
Everybody's very dressy. It's very.
Oh, I love that.
At the university, everybody was in suits, and I'm like, not the kids, but every.
Oh, I love that.
But it was awesome.
Well, hey, we got to keep it moving here because we got a great show for you today. It is a wonderful Wednesday, and Tom is back in action. At the top of the 8 o'clock hour, we're going to bring you an options jive going long. 5 powerful market plays. Ooh, I love stuff that I can use. That's going to be right at the top of that 8 o'clock hour. Then it's a assume the position Wednesday. So 8:40, we got what's your assumption? Did you miss viewer submitted trades?
I was able to trade a little bit. I mean,
I was gonna say because there was a lot going on in the markets while you were gone.
the last 2 days were pretty dead.
Yeah.
Last 2 days were beyond.
I mean,
Right, but not the day that you left. It was
The day we left
exciting.
was
and then that
actually the low in the
Friday.
market,
That
I
Friday
think.
was cray cray, just straight up 100 points in the S&Ps.
yeah, I didn't miss that at all.
Yeah.
The day we left,
You were able to witness that, and
I was able to deal with that. The day we left, at one point we were getting on the plane, they were down 65.
Right.
Got off the plane, they were like down 25. We traded the whole way down to Mexico.
Yeah.
So
Well, you're going to get what's your assumptions. Reviewers write in with an underlying and a directional bias. That's at 8:40. Then 9 o'clock, we have market measures. Monte Carlo, the power of randomness, is another Jacob Pearlman production. You definitely want to stay tuned for that.
I like that, the Jacob Pearlman production.
Jacob Pearlman production, a JPP, if you will. And then 9:30, you guys are going to be taking some calls. Open the phone lines. Tom's back. I'm sure you got some.
yeah, we are.
And 9:40, we got Nikki Bat in the house. If you have a smaller sized account, Nikki is in with Johnny Trades. That's going to be at 9:40.
Yeah, he is.
So that is perfect for that. And then truth or skepticism. You're back with Dylan. What are you talking about?
We have a couple of different topics.
Okay.
We're going to talk about
How to take a picture with beautiful women, what angle to use, or something like that. What are you supposed to do?
It's funny, I was doing an interview with one of the newspapers here, and they go, which side, because they're like,
Oh, I have a better
Which
side.
side is
I
your
have
best
a side.
Yeah.
Is that what they asked?
no, they didn't put it that
There's
way.
only good and better, and some things is only worse and horrible.
He
And the
just
other-
said, what side would you prefer for the camera? And I'm like, it doesn't. I don't care, whatever,
Do you have a bag?
No, you should have said, obviously, my good side, and then let them decide which one was your good side.
They were very nice about it.
What are you talking about with Dylan?
They were toying with you. What do you
Yes.
mean?
We are talking about the relevancy of the Fed.
Okay.
And which is an interesting topic.
Topical. Yeah, we'll get into it.
And then we're also talking about something that I wrote about a little bit, but we're like, because it's Nvidia earnings this afternoon.
Yes.
So we're talking about a little bit about, are these chip stocks, we know how important they are to the future of technology and to the future of AI, but are they fully priced?
Oh, okay.
You know, like meaning, you know, like at some point the stocks get ahead of the technology.
Right.
And the question is, are the stocks ahead of the technology?
Right. So that is our run of show for today. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Breaking
Across the wire. Leading story. Top story. Just in.
In today's headline. This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It is August the 27th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Mr. Bat, earnings. I think there's a couple today that are.
Oh, today's the day, Nvidia.
Today is the day, yes.
Today's the day. Sadnov has been waiting for 48 hours. He's asked me every day what time Nvidia earnings come out on that day. Sadnov, today is the day. After the close today. After the close today.
After the close, it's the after
Proud,
party.
NCAP, BBY, which is Best Buy, which time gets confused with other stocks, and then DG.
Gotcha. Hey, well, this leads to what you were talking about with Dylan today. You probably stole this headline from me. Wall Street is more focused on Nvidia than threats to Fed independence. Let's go.
I mean, that is not what we're talking about.
Well, I'm just making a joke, but
yeah.
But do you think that Wall Street is more focused on Nvidia than threats to Fed independence?
100%.
Okay. What are the ramifications of that right now?
Well, I don't really know that. I don't really like the headline that much, but the Nvidia implied.
I'm happy you're back.
The Nvidia implied move is
small,
about 6%.
What are you gonna do in Nvidia?
Yeah, $10, $10.5, $11.
It was 11 yesterday. Yeah, it was like 10.5 today.
What is your plan?
I'm gonna sell some calls.
You're gonna sell some calls.
Yeah, I'm a little bearish in Nvidia.
Okay.
Especially.
So you're just gonna sell naked calls in
out
Nvidia.
of the money calls,
out of the money,
outside the expected move.
Junk.
All right.
I just over 200.
Okay.
You know, the stock's up about $2 pre-market. I think it's going to be a good opportunity to lay out some calls this morning.
Okay. And see what happens. Well, speaking of this, the dollar continues to weaken as investors fret about Fed independence. Of course, treasury yields are higher. Bonds taking in on the chin. Dollar is struggling to gain ground. Yen is strong. Euro strong. Let's talk currencies.
That was yesterday. Today, yen is weak. Euro's weak. So the dollar's strong today.
Okay, good. Well, last night when I wrote this.
Yeah. I mean, I'm not sure about all these Fed independence headlines. The Fed is independent.
Sure. Yes.
You know, protecting that independence.
Subject to change.
Right.
Protecting that independence is super important. There's a big difference between protecting the independence of the Fed and talking about the importance of the Fed. Like, I can argue that the Fed is not nearly as important as people think.
Right.
But I also can argue strongly in favor of they should be independent from the executive branch.
What are you doing in bonds?
Oh, hold on 1 second.
Okay.
So the other thing about the Fed that people have to realize, it may not be that important in good times, but in bad times, it's very important.
Yeah.
So like when you get into crisis mode.
So are these good times you're admitting?
I think so.
I would say so.
But when you get in crisis mode, you need the Fed.
Yeah. What are you doing in bonds?
113.27.
We're long.
Tick off of their lows. Today's
bought some last night. Sold some puts in the bonds yesterday, but the puts aren't going anywhere. I mean, they can't even find a bid for the bonds.
Okay.
Which makes me a little nervous about the downside, honestly.
Yeah, IB rank of 5 in there.
I know, and they can't find a bid. But I'm short 13 puts in there, and I'm just staying short them.
Okay.
Because they just
be careful.
Seems to be the trade that works, but
be very, very careful.
I can't believe the bonds are in the 113 handle still.
Well, it works until it doesn't. So.
What an opportunity.
Enhance. Hey, short interest on the NASDAQ rose 2% in mid-August, the exchange said Tuesday. Investors who sell securities short are just leaning into tech heavy stocks. Do you put any credence, or is there anything that you take away from this headline?
It scares me. I mean, I'm a bear right now in the Nasdaq. I just sold some Nasdaq futures this morning.
Right.
And I want to get short Nvidia. I mean, anytime the short interest rises, I mean, listen, I don't know if that's a big rise, actually. Tony, is that a big rise, 2%? I don't know.
At all-time
Statistically, I don't really know. I
Probably
don't follow.
not.
Okay, well, someone get data on the phone. Someone get him in here. No.
I mean, did it rise 2% from all-time lows in short interest?
No.
Well, that's what I'm saying. You know what I mean?
I just don't know if 2%. Like, I don't follow those kind of statistics.
Sure.
I don't know
Okay.
the big deal. But I would say
Well,
that
it's not zero.
it's more bearish than it's bullish.
Yeah. All right. Well, do with that what you will. Hey, the Pentagon is weighing equity stakes in defense contractors like Lockheed Martin. The Trump administration military leaders are thinking about whether the U.S. should acquire equity stakes in defense contractors now. Lockheed Martin, which makes most of its revenue from federal contracts, is basically an arm of the U.S. government. So why shouldn't the U.S. government profit? Nvidia, reporting their earnings today, is going to give 15% of their profits to the government now. AMD, the same thing.
In China.
Right, in China. Okay. Government owns 10% of Intel now. Should this trend continue?
It's an absolute disastrous trend. I hate it.
But if we're giving them contracts, like we should get something back from that, right?
No.
I don't know. I don't know what the answer is.
Think about the word competition.
Yes.
And one of the principal foundations of
How many people
capitalism-
build bombs?
One of the principal foundations of capitalism is to create an environment
Yes.
where there's competition.
Yes.
You get lower prices. If the government is investing in these companies, they're going to be very reluctant to look at innovators and disruptors because they have an investment in somebody else.
Oh, I see.
I do
Okay.
not like this at all. But again, I wouldn't believe a word Lutnick says.
Okay.
I think he's a lion creep.
All right. LMT. Can we look at Lockheed Martin, please?
You know what? The stock is $450 forever.
Really?
And
Yeah.
and it's the markets are you can
The
drive
markets
You can't
are
trade it?
horrible.
Okay.
horrible.
And I kind of agree with Tom on this. I mean,
All right.
I mean, it does ruin all the competition, like, right?
Yeah. I kind of agree with you. I would like it the way it is.
I mean, the way the government should government.
Yeah.
You know, that's how it works.
Yeah. All right. Hey, in other news, Bitcoin versus gold. How about why choose? Gold bars are now tokenized on the Bitcoin blockchain. Trio, a Bitcoin native marketplace, is behind the tokenized gold offering. What are your thoughts on tokenized gold?
Almost 3 years ago, we offered tokenized gold on Tasty.
We did? Where was I?
Yeah.
I don't remember that.
We were
Okay.
the first firm in America that I know of. I mean, do you know any other firms, do you? We were the first firm to offer tokenized gold on the platform.
Okay.
If you remember, we offered tokenized gold, so you could trade gold 24 hours a day.
Oh, I remember our Paxos gold.
Yeah, we offered
Yeah.
it's a Paxos Gold Fund.
Okay, yes, I do remember.
Effectively, that was tokenized gold.
Gotcha. Oh, I see.
Right. So we offered this, almost 3 years ago. Now, at the time we offered it, we were the first firm, and nobody really used it. Like we traded very, very small volume in that.
Sure.
We just wanted customers to have access to gold 24 hours a day. That didn't want to buy or trade the futures because the futures were a big contract.
Right.
So we offered tokenized gold. I thought it would be bigger than it was, and it really
You were just too early.
maybe. But the reality is that it's not something that's new.
Right.
It's just something that I'm not sure that it's that big a deal. Tokenized gold.
Okay. What about physical, real gold? What are you doing in the metals? Gold,
But
silver,
I am bullish on tokenized everything.
tokenized stocks.
Remember, when we offered tokenized gold, we were the first firm. But the SEC came by after that and said,
Sure, but it was Gensler's.
no, I understand, but they said, They said, and then we had to take it down.
Yeah.
So it was like, okay, and now they can do it again. It's like ridiculous.
What about physical gold, actual gold?
Well, there's two different kinds. Physical gold.
Okay, I meant just go. Oh my God,
Gold
dude!
futures.
I just okay.
Aren't you glad he's back?
Yeah. Yes.
Let's get it right. So
Gold,
gold
futures.
futures.
Yes, sir.
Gold futures are different than spot gold, but gold futures, I mean, They bid pretty strong, to be fair. I don't like it here. Down $3 today.
Sort of
$3 is nothing.
Nothing.
Yeah.
a flight to safety or something?
Bitcoin has sold off and gold has gone up. I mean, I don't really understand if I don't even know if there's. Our research says there's no relationship there.
Okay. Hey, just one of the earnings from last night. You probably didn't trade it, but Okta raises their forecast as the CEO says economic conditions were better than we thought. Okta brought in revenue $728 million versus $711 expected. Stock up around $3.50.
I don't think we've ever traded OKTA.
Okay.
I don't think so either, to be quite frank. But
Not that I can ever remember.
Stock's $95. You are right, up around $3.5, $4 off of its lows. I mean, it was much closer to its recent lows, around 90, than it was its recent highs of around 127.
How are the markets in there?
I'm looking at October. They're about 50 cents wide.
Yeah, that's not great.
Maybe even wider than that on some of the like $half wise strikes, like 97s and a half.
I just thought I would mention it because they had earnings.
It's a good mention.
Hey, here's something interesting. Meta is launching a California-focused political action committee that would back state-level candidates that favor lighter regulation of technology, particularly AI. I know we don't have a lot of historical relevance for what happens when tech people pay in elections, but so far, that data's not great. What are your thoughts on Zuckerberg starting AI super PAC?
I hate him.
Okay.
I seriously do. I mean, listen, if he wants to make the world a better place.
Sure, he does not.
Which he does not. I mean, he's worried about making AI a better place.
Yes.
I think there's bigger problems in the world than backing pro-AI candidates. I'd rather see him care about something else other than just AI. So, let's give Mark Zuckerberg.
I went to my son's school last night, and the English teacher was talking about why the kids don't do any work at home. Like we always have like projects to write.
Oh yeah, I always had homework. Yeah,
homework
stuff at home.
You had to write something like write this story, and
yeah.
he's in honors English, if you can believe that. My 4.0 student, he told me, he goes, Dad, I'm a 4.0 student right now.
Right now?
Yeah.
He hasn't got
6 days of school, you know what I mean?
That's fine. Just let him believe.
He told me that 24 hours before I went to school, and then when I met the teacher, he says, we don't do any work at home for writing because of AI. They really can't
Oh, right,
If you go to look something up and you don't want to use AI, it's going to give you an answer that's AI generated.
Right, yeah.
You're not going to think for yourself and stuff like that. So I do all the writing mostly in school.
That's
great.
great.
Why you don't see it. And she goes, and I just want to, your son didn't do very well on that quiz that we took. So I came home, I'm like, what happened to my 4.0? Goes, well, a B in honors English is really still an A, so I'm 4.0.
Weighted, yeah. Yeah, there you go.
Anyway,
he's giving you the curve.
The point I'm making, I'm telling a story about Vinny, but the point I'm making here is they're concerned about it in school too, about how to kind of govern this.
Well, I mean, of course, but that's a different issue.
Sure, yeah.
100%.
Yeah.
I was just saying,
What are you guys doing in Meta?
Nothing.
Yeah, 753 down around 50 cents a buck or so. Market's basically unchanged. Actually, even the S&P just turned a slightly pink red.
Well, I'm skipping a story here. This is interesting. A new study from Stanford, I believe, says that AI is actually cutting employment in the United States, and this is according to a years-long study by Stanford researchers. But where it's cutting jobs is very interesting. We find that the widespread adoption of generative AI, early career workers, so those workers aged 22 to 25, in the most AI-exposed occupations have experienced a 13% relative decline in employment. So, yeah. What are your thoughts on this? So they're like, for other age groups of people, there wasn't as precipitous of a decline. But AI is killing jobs for certain parts of our workers.
I think it's a very misleading stat, because I think that AI is also creating a lot of jobs.
Okay.
And I also
did actually a good talk on that in Mexico City.
I did give that's the discussion I gave the other day in Mexico City, and talking about how AI is actually, all you hear is the negative. So I gave a lot of the positives.
Right.
Really good.
And I think it's creating a lot of, I I think that on surface, you can say that some of the old jobs that used to exist are gone. That's the 13%. But I don't think it's taking into account all the new industries and jobs it's actually creating.
But what do you say to those people that are devastated by that 13% reduction? Like, I do get that there are the benefits, like
What do
you
I
are
say?
saying.
I-
Because that's still devastating because you're
What do
just
you say
starting
to
out
the,
in
These
your...
are young people
Right,
who have to adapt to a changing world.
Okay.
Nobody said anything to me when they went electronic
All right.
trading on the CBOE.
All right.
Right? Nobody said, hey,
Okay.
bat, what are you going to do?
forward.
Yes,
You have to- I have to adapt. We have a saying here at Tasty.
And I said, would you like to biggie
This
that?
is such a boomer mindset, but go off,
We have a-
Kings.
we have-
Go off, Kings.
We have a saying.
As opposed to help me.
We have a saying at Tasty.
Yeah.
It's called markets move.
Yeah.
And what you're seeing right now in the world is the markets are moving. So let's not worry about the jobs that AI is killing. Let's worry about the jobs
Seize the
that AI is
moment.
creating.
Right.
Yeah, but say that to the people whose kids are now living at home again.
Yeah. You're going
You
to
have
find the seize the moment too.
All of us have been through that. Like Tony just mentioned, I know it sounds like crazy because it was 20, 30 years ago, but 25 years ago, the exchanges, we're all standing there screaming and yelling, and next day we're like,
Nothing.
next day is nothing. Everything goes
Right.
electronic overnight. We're like, what happened to the 6,000 guys or with 6,000 people in the pits in Chicago?
And their support that they had behind them and those
what
people
happens
that
is
helped them.
everybody retrains.
And I get that, but for you in that position and instance, you had a very nice financial cushion compared to someone
Not necessarily.
compared
No,
to someone
bullshit.
who's just freshly graduated from college.
Self-
is all I'm saying.
Self-made. Neither of us.
I didn't say it wasn't self-made, but I'm saying there was a financial
And there
cushion.
were those traders that started 3 months before it went away.
Okay.
I mean,
All right.
and there
I'm
was those that
going to
started
be fair with you about
2
this.
years.
All right.
I really don't like this argument. Tony and I started out in this business at the end of one of the worst recessions you've ever seen. In the late 70s to early 80s, there were no jobs. Interest rates were 19%.
Okay.
The economic environment in the late 70s, early 80s was
not.
so much worse than it is now. It's not
Yeah,
even
but you
close.
could buy a house for $4,000.
Oh, please stop. You could not.
I'm gonna keep it moving, boomers.
bullshit.
Hey, here's when you can skip
That's why I don't like
work.
people that whine about today's world.
Here, the boomer martyrdom.
It's
Here we
always
go.
hard.
Yeah.
It's always
hey,
hard.
here's when you can skip work for the next Apple event. We have an official date for Apple's big fall event. I announced this yesterday, but it was everywhere. It is Apple event is September 9th. It is called Awe Dropping. It starts at 10 a.m. Pacific time. They are going to unleash 4 new iPhone 17 devices, possibly the AirPod Pro Max 3s. That's very exciting. Sometimes these events are little mini binary events. There's going to be iOS 26, iPad OS 26, Watch OS 26, the new phones. This thing looks like it has some sort of infrared or heat-seeking technology. Maybe the phone can scan you. I don't know. What are you doing in Apple?
Well, Tony needs a new phone.
I need a new phone.
Ooh.
My battery.
I'm going to help you. Okay.
My battery goes dead like immediately.
I'm going to figure out which new phone you need, and we're going to make it a series.
Okay.
And I'm going to help you.
Okay.
But what are you doing in Apple to try?
I'm a little bit of a seller of that.
Yeah, no,
I
I'm
think
gonna
we
help
work
you.
well together.
I help you guys with your tech stuff. What are you doing in Apple? Nothing?
We do not have a position. Actually, let me tell you.
IV rank is 16, trading 2, I'll round up, 289, which makes it
This
down
is
around
the
50 cents.
smallest positions that I think I've had on in almost in 2 years.
Yes, I
Wow.
had to go through your
And-
positions, and they are tiny.
Yeah,
much
for
like everything else.
right
I
now.
do.
I don't have an Apple position.
Okay. Hey, this is crazy. Klarna, the buy now, pay later Paragon, is seeking a valuation of $14 billion.
I'm seeking a valuation of $14 billion for Tony.
In an IPO next
Tom.
month. The
key word there is
the
seeking.
company paused their IPO plans in April after Liberation Day roiled the markets. The shares sold in the offering could be priced between $34 and $36 as early as this week.
Where were your price moving?
Obviously, you can't trade Klarna now, but you can trade Affirm. So
Yeah.
it's in the space. So
No.
I hate that model for society, this whole Affirm kind of thing.
I hate that you can use it for like a DoorDash Chipotle burrito. Like, I don't think people should be using it for like that kind of debt. Like, but you do you.
They should
guess.
steal the cheese when I had no money like I did.
Yeah.
Okay, that's
yeah.
what they should do. $78, I'll round up, basically unchanged, near its highs. Ivy rank of 36 is actually very good because it has earnings coming on the 28th, which is tomorrow, Sosno.
There you go. You can trade a firm for earnings.
AFRM.
Hey, I'm skipping another story here, Beth. EchoStar stock skyrockets 70% on news that AT&T is going to buy the wireless spectrum for $23 billion. The deal covers about 50 megahertz of nationwide spectrum, and it would expand AT&T's 5G and fiber services. T is AT&T, and SATS is EchoStar.
Yeah, I'm not going to look at either one of those.
Okay.
Nothing says yay if
Yay.
you work for EchoStar than being bought by AT&T.
Yay. Hey, well, how about this? UnitedHealth is still facing an ongoing criminal probe that's broader than Medicare. The Department of Justice Criminal Division is digging into UnitedHealth Group's prescription management services, as well as how it reimburses its own doctors in an ongoing probe into the firm's operations. What say you in UNH?
What's funny about UNH is, I think it's unchanged today, but what's funny about UNH is, it got this huge boost on that Warren Buffett news.
Yeah, they sure did. It went from around 250-ish to 300, but remember,
No,
it's
around
down.
277 to like 307, that kind of thing, and now it's back to 300.
Yeah.
But
So happy he's back.
Down from 600 just in April.
Yes.
Go ahead,
Yeah.
yes. But I like that he was buying it on the cheap relative to where it's been, as opposed to buying a firm. Go ahead.
Yes.
but I mean, it's been a better trading vehicle now. But I wouldn't
Been going
say,
sideways for the last 2
I wouldn't
weeks.
say that we have any
Right around here.
directional stuff on.
Okay, that's fine. Boeing Defense puts talks with striking machinists on hold. The union says the talks between the two had only just resumed the day before. Now the strike talks are pushed off until at least after the Labor Day holiday. What are you doing in Boeing?
Boeing.
Haven't traded.
Also, Boeing could be one of those defense stocks that the government could own.
I have not traded. Yeah, I mean, it's a perfect example of a conflict. I mean,
Sure.
Well, how'd you feel about them giving, EV credits? The government was giving that. I mean,
I don't care about credit.
But the credits went to the consumers.
Credit went.
I know, but it comes from somewhere. It doesn't come from
I
there. I
Sure,
mean, the
no,
government
you're
has to
right.
pay
Sure,
for
sure.
it. I mean, where do you
Well-
pick and choose your battles? I'm just playing devil's
I mean,
advocate.
I don't mind the credits for EV because it's
Why? I'm paying for it. I didn't buy an EV, and
it's on you.
Yeah, but I also pay for other
pay
people's
for it.
child
How does that
tax
make you
credits.
feel?
I pay for other people's child tax
Sure,
credits,
where
and
do
I don't
we
have
draw
to.
the line
No,
is
I'm
what
just
I'm-
saying,
Again, just playing devil's
this
advocate.
argument could run away from everybody.
It's not.
Like,
It's
I'm
apples and
asking a
oranges.
question. Not,
It's apples and oranges.
yeah. I
I
mean,
think it's like a Fuji apple. And
hey, this is funny. You missed kind of the drama about all of this, but it did have financial consequences. Now it seems they are turning for the positive. Cracker Barrel stock is now on the up and up after they have restored the new logo. I don't know if you saw the outrage. So they just got a modern
My
logo.
outrage is that their food stinks.
No, yeah, they got a modern logo.
Their
It
food is
wasn't
bad.
intended.
So
They
disgusting.
got a
When was
modern
you at
logo.
one? When was the last time you were at one? Sorry, Vanna.
I don't know.
It's been forever. I at least went to one.
They got a modern logo. It was not intended to be woke, not woke. They were just trying to modernize because, like, a lot of
I saw
companies
the
are.
new logo.
Because they
It was
got
just
rid of the
cleaner.
cracker and the barrel.
They got rid of the cracker and the barrel.
Is that
That's
why
the
everybody
best.
I don't know what everybody was upset about. Like,
I don't
really
even know what
didn't
people were upset about. It
So
looked
they got rid of
fine.
the old man and the aesthetic, and they were just went to a more clean aesthetic. And I understand, like how everything.
No, I don't understand what companies do. I don't even understand when we did it, when we changed
Why-
it.
No, but
Sorry,
like
I
when
think it's
McDonald's
silly.
used to be crazy and full of colors, and now they all kind of look just kind of
Yeah,
like
but I like
Apple
McDonald's
stores.
full of colors.
So then that's fine. Like just the trend is to more bland corporatization, but the response has been wild. But the stock is up again today. It was up again yesterday.
What's the symbol of this stock?
CBRL.
I've never.
It was, but they wiped like $400 million off of its market cap
They
in
should
this
have done
whole
that based on the
kerfuffle.
quality of their food.
Well, okay,
Earnings September 18th. Looking at October markets, they're not tradable.
okay, yeah.
I mean,
this whole thing is just so silly.
It is so silly.
Hold on.
So silly.
Can I
Thank
just
you.
say something about this whole thing?
Yeah,
I don't care how much money they lost off their
market cap. Yeah,
because I'm sure they'll get that back.
sure.
But the amount of publicity they got for free, being on the front page of everything for this thing, it was
Oh, all the TikToks, all the Instagrams. It's pretty
probably
funny.
so well worth it for them. And it wouldn't surprise me if they had something to do with
No, because the reputation threat was real and it was swift and they corrected course fast. But I think there would have been real financial consequences had they not.
They should have put the money.
Like, I don't think it was a
all
stunt.
those signs. Which
it wasn't a
was
stunt.
$1 billion, whatever it was.
I don't
into
think,
the quality of their food.
Hold on. I don't think it was intended as a stunt.
Oh, okay.
But I think that they jumped all over it and they got more PR and more publicity and more free advertising. I mean, they were front page news everywhere. And I think it's huge. I think they realized and they took advantage of it because they threw a little bit of gasoline on the fire here.
Well, speaking of front page news, Beth, I'm going to my last story here. I was never a trader in the 80s.
Oh, gosh.
But is this what it's like to do cocaine? Because yesterday for me was the greatest day of my life. Let me just break down the scenario just real fast. I'm in a meeting, right? I'm in a content meeting with Beth and a bunch of other people on my team. This is why I'm dressed like this today. So I saved it to the end. I didn't derail your conversation about Mexico and Michelin stars. This is the last story, and then I'm leaving. So I was in a content meeting yesterday, and my Teams starts blowing up because Casey from HR is a Swiftie, but she's like, Vanetta, oh my God. And I'm like, Casey, what? I'm like, girl, I'm in a meeting. And I was like, okay, I didn't know what was going on because I only had my work computer.
I knew what was going on.
I only had my work computer, and I only had my work phone, right? So then my watch alerts just start going off, but I can't see them. So I come out of the meeting. I see Jenny, because Jenny was here, and Jenny says to me, did you see that Taylor is engaged? To be fair, Jenny gets stuff off of Facebook and is wrong 99% of the time. Because once she sent me a picture of Travis and Taylor with like an Asian baby, and she's like, is this real? And I'm like, girl, no. So then I went into another meeting, and then when I came out of that meeting, I found out. Through an Instagram post simply titled, your English teacher and your gym teacher are getting married.
And we cried.
Set to the song So High School. So I run over to Casey's desk. I am sobbing. I am crying. Casey is crying. This other woman looks at us. She's like, are you okay? And I'm like,
I knew it was real when I heard that Tom Sadloff was going to be on CNBC this morning talking about it, which was amazing.
In the most perfect proposal. So we found out last night that while Taylor was on her now Guinness record-breaking appearance on the New Heights podcast, Travis was setting up his backyard with $40,000 worth of flowers. So we found out because Ed Kelsey has not been media trained. We love Ed. So he proposed actually 2 weeks ago. So he proposed to Taylor right after the podcast in a literal garden of a secret garden that she sung about. And it's the love that she has written about for years.
I was going to throw up
and
last
she has
Tuesday
finally,
with tacos. This is really
she's
going
finally
to
found, no matter if you're a man or a woman, to finally have a partner who supports you and uplifts you and is a fountain and is not a
now they're going to have a Taylor.
So anyway, wait, listen to this. So a poly market user named Romantic Paul aggressively started buying Taylor Swift engagement, whatever markets yesterday afternoon. He nearly doubled the price. and then it went up in the prediction market. So, I'm so excited. I'm so happy.
Guys, I like both of them.
Yeah, I think they're
going to have another one if they actually do get married.
I like both of them, but this is going to be unfair.
I'm going to be insufferable. I am going to be insufferable. I cried so much yesterday.
I can't wait.
Oh my God.
I can say for sure I didn't cry over this.
Oh my God.
Now listen.
I'm just so happy.
Let's put real statistics up there. There's still a 50% chance they're going to get divorced.
No. It's in game. Here is my viral video of the day. It's basically how I felt. Watch
Congratulations on their engagement.
Thank you. Thank you.
Oh my God.
Anyway, but I like it. People were texting me congratulations. Like, it was great. It was wonderful.
I know you've wanted this for a long time. Congratulations.
If it never happens for me, just her having it is enough. It really is.
Can I take a quick 90-second break? You can take that outfit off. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Confirm and send next.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. TastyTrade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
You can get up to $4,000 when you open and fund a new account with TastyTrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new TastyTrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? TastyTrade. Make your move.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on TastyTrade. Genius loves company.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live. But before we do, let's take a quick look at the market. Saznoff, I know you haven't watched it in the last week or so. So even the S&Ps are down $2.25, but they are just off of their highs, trading 64.80. Tight market last night, probably the tightest overnight market that we've had over the last 48 hours, with the 2 last days in the market being very, very quiet amount of E-mini S&Ps trading, 800,000 all day. It's been quiet, creepy kind of market. One day was creepy down.
It's been creepy quiet.
Yep, and the other day was creepy higher. NASDAQ down 14, Russell down 6, and the Dow down 6. They're all down around the same. Maybe the Russell, which was the strongest of the group yesterday, the weakest of the group today. Really no bearing there. Volatility up 18 cents, just under 17. You can see here at its lows or just off of its lows. No hint there, I think, on anything for me on direction. Bonds down 17 ticks. That's a big move, Sadnoff. 113.16 is the low.
Ugly. They're ugly.
They are ugly. UGLY?
Yeah,
ugly.
bonds are ugly.
Yep.
And I bought some last night, and I could have sold them higher, but I didn't want to take 6 or 7 ticks.
You, Johnny. Bitcoin basically unchanged. It, too, has had some volatility to it, trading just under 112 right now. It flirted with going under 110. In fact, it did trade under.
I think Bitcoin's going to go into the low 80s, maybe high 70s. That's what I'm looking for.
Now, you've been saying this for a long time. Now, remember in April, it did get into the 80s and 90s.
It got into the 70s. Yeah, it got into the mid 70s, but it didn't stay there. I think it's going to go back there and test low 80s, high 70s, maybe. Okay. I think that'd be great, because then I think you get a chance to.
I'm just saying, it's not. It just happened in April. It's not like it's like that.
Oh,
like,
yeah.
Like, no. You're not making. I mean, it's a bold-ish call, but it's not out of.
I mean, I think all the markets that are completely saturated right now have some
very crowded.
outside.
I mean, right? Like that crowded space. Yeah. Like the yeah.
I mean, like the AI space is crowded. everybody's bullish, everybody's long.
How many fake pictures of Tom Sazov can you make before you get bored? Sure,
Exactly.
I agree with you. I agree with you. Oil up 27 cents. You could see here yesterday. It was
Down big.
Yeah, it was up big one day, down big the other day, taking everything back. Gold basically unchanged. You really do have an unchanged market across the board.
All right, let's go. We got to.
That's it. We're done.
We got a lot of stuff to do today.
I was just going to give a really golden nugget, but I'll save it for another day.
Save your golden nuggets. Confirm and send. Emails that came into us from viewers all over. This person writes, I have a couple of positions in earnings stocks. The positions expire in September, but I'm wondering if I should roll or close them early because I didn't intend them as earning trades when I put them on.
This is a difficult one for me to answer because I have my own kind of way of doing it. So I'm going to tell it to you, and then you could take it for yourself. If it's a positive type trade, I would probably take it off. So if you have a positive-ish P&L and you're going into earnings and the directional bias was one that you made without a lot of conviction to it, maybe volatility was high, there was some call skew, and you did a ratio spread to take advantage of that, blah, 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 I get out of it. If it's a trade that hasn't made money and it's within my range of P&L matching what I could make on the overall trade, I probably close it, but I definitely roll it from September to October. That would be a no-brainer to me.
I feel a little different than the bat on this one. My thought is, I usually keep the positions on. I usually just widen the strikes. I recenter and widen the strikes for earnings, so I usually keep the positions on. But that's because I'm comfortable with earnings plays. If you're not, and you didn't intend them to be an earnings trade, then just take them off.
Yep.
Don't even deal with it. Why do you want to torture yourself? I mean, if you want to roll forward, or you want to recenter, you want to, whatever, do it. But if not, just close the trade and move on. It wasn't put on as earnings trade. It's no big deal.
That's right.
Just let the earnings go, and then put it back on or something else. But don't be in anything you don't want to be in.
Correct.
Let's go next slide. I read multiple articles on AI impacting trading, some good and some bad. As an active trader, do you think AI will help or hurt me in the future?
I like the way you look at it, Tom. I think the glass being half full is a much better way of going through life than being half empty. So I think it's going to impact trading. I think it's going to change it, just like everything changes. Technology changed the market, made it a lot easier to reach multiple exchanges and worlds in a click. I think it's going to help. I don't think it's going to hurt. It's going to change the market, sure. Markets always evolve. Every 10 years, it probably should.
There is zero chance that AI is going to impact trading in a negative way. Zero. I think AI is going to be, of course, there'll be some good and some bad. But as an active trader, I think AI will help you 100 times more than it will hurt you. And I did push out a piece on this. I just did a lecture on this, and I offered a link. Beth, do you remember the link from Sunday's Cherry Bomb? I don't have it right in front of me. I think it's, well, I don't want to speculate. Do you have the link, Beth?
I can get it for you.
And then I'll tell you the link because I offered it to everybody, so you can just download it if you want, and you can see I listed 35. I put 35 slides together on why I think AI and digitization are good for trading. And it's a little different take than anybody else has had. So if you'd like to have it, we'll post the link in a couple seconds. I listed in the Cherry Bomb on Sunday, but you can, I'll give you a link in a second. Okay, let's go next slide.
I found it, Tom. It's right there.
Oh,
wow,
here.
Are you good?
tastylive.com/Mexico 2025. That's because I just gave this lecture in Mexico last Thursday. But tastylive.com/Mexico 2025. It's just all the bullet point slides. And if you want to see the 35 reasons I think this is good, there you go.
Nice.
Let's go next slide. How big a percentage of my portfolio should be allocated to crypto?
We talked about this pretty early, and I think if you took our advice on, or suggestion, I should say, on this quite a few years ago, we said I think the number was like somewhere between a wide range of like 1 and 8%, closer to 3% being what we were talking about, 3 to 4 or 5%. So I think that still stands.
I agree. I think that this is a very, obviously this is a very personal number.
Sure.
I know some people, like my kids, for example, my son.
He's a lot heavier in it, isn't he?
Yeah, he's probably got 50% of his portfolio in crypto because he likes it. Younger people have a much higher percentage. For me, it's probably 1%-ish, maybe. I think 1 to 3 is good.
1% is the GDP of Mexico. So
I think 1 to 3% is good. Our research, we did research on this. We said
keep buying these bonds, it's going to be a higher percentage because the rest of your portfolio is going to go down.
This is just for a scalp.
I'm just kidding.
Our research said 2, 3, 4%, and that's it. I'm gonna stick with that. I think it's a good number. Now, how much of your portfolio? Crypto is small. The whole world of crypto is smaller than the world of Nvidia. Mm-hmm. How much would you put in Nvidia? Not more than 1, 2, or 3%. I think. I would assume. I don't know. 4%. How big a percentage? Oh no, that's what we just did. Next one. I read that there are now more ETFs than stocks in the U.S. market. I had no idea.
Me either.
There are 4,300 ETFs compared to 4,200 stocks. Does this hold any significance for you?
Zero, because
By the way, I did not know this.
I didn't know the statistic. I'll take it as real, but
I'm taking your word for it. But yeah.
Yes, I would venture to say that 4,250 of them don't trade or hardly trade.
Anybody can build an ETF.
Yeah.
It just costs about 50 to 100 grand. You can launch an ETF, maybe 100 grand, let's just say. Mm-hmm. And then you have a lot of regulatory requirements to maintain it and all this other stuff. It's not that easy to launch a successful ETF. Like Tony said, if there's 4,300 ETFs, 4,200 of them don't trade.
Right, and I was just throwing that number out.
Yeah.
I'm just making 95, 98%, whatever you want to say.
But does it hold a significant? None, zero.
Yeah.
Literally zero. Let's go to the next slide. Does the Fed matter? Well, this is a topic that Dylan and I may talk about today. There's been a lot of political pressure, people leaving, new people being named, etc., taking place. However, the market appears unfazed by it all. Do you think this is a sign that the Fed is irrelevant?
Again, opinions are like armpits. You usually have two. They usually stink. I'm going to go with the market as the king here. So whatever's happening at the Fed, now I'm not saying the Fed is irrelevant, but whatever's happening at the Fed, the changes there means nothing to the market. Or you would see a lot more volatility in bonds and a lot more volatility in the market. So for me, I'm going to default to those who are a lot smarter on the subject than me, which is the market. I'm going to say it doesn't bother me at all.
I thought you were going to say me. I do not think that the Fed is irrelevant, although I've always said that the level of importance that people talk about the Fed with, or the level of relevancy they talk about, is way overdone. I think the Fed, when in good times, has a relatively easy role. It's just to track the bonds. I think in periods of crisis, when there's an economic crisis in this country, you need the Fed to do whatever it can to flood the system with liquidity to protect the economy. So I do think that we use the Fed now different than we used the Fed in the past. 2008, we used the Fed to help, right the ship. And there's other points, especially during the pandemic and stuff, where we use the Fed to right the ship. I think the Fed is relevant, but it's more of like, when it's in crisis mode, it's very relevant. When it's not in crisis mode, I think it's, the importance is overstated.
Mm-hmm.
Let's go to the next slide. Last one. With overall market volatility this low, do short-term, long volatility plays make sense? I realize they will lose more than they win, but if I think volatility will expand, does it make sense to be buying VIX calls or maybe /VXM, which is the micro VIX futures?
Correct. It would be /VXU right now, and when this was written. But yes, either way, it's irrelevant. They're talking about buying VIX. Would it?
No. It's still VXM, and then it's U. The symbol's VXM. It's the micro.
Oh, for the micro. Yes, I'm sorry. The month issue. I apologize.
And a month is U.
Yeah, I apologize.
But that'll come up automatically.
Yes, of course. So does it make sense? I'm going to say no, because we're at all-time highs and volatility is at all-time lows. So if you had done this any other day, but right now, today, you were doing it at a higher price. Now, may it make sense moving forward? Not a bad idea, in my opinion. I would like some sort of covered call on / VX versus VIX calls. The problem with that trade is you don't get any margin release, so it's very capital intensive. So for me, I would just look at the micro futures as you looked at here, and I'd be looking to buy or sell those. But like I said, any other day but today, you were doing it at a higher price. So did it make sense? Well, it hasn't worked.
Well, it definitely hasn't worked. I mean, VIX is not at an all-time low. It's just it's at like a year low.
Did I say all-time low?
Yeah.
I misspoke. For me, my all-time low is like a 45-day time frame for moving forward.
So I agree with Tony on everything except I would probably, if you really want to do something in the VIX, I would buy a VIX call spread because I think, you got to sell some of that junk in there. So you got to do the call spread. I do a wide call spread. You could buy the micro VIX futures, or you could also do the same thing in VXX. Whichever one has more liquidity or tighter markets. I haven't looked in a while. I haven't looked at the VXX markets in a while, so I'm not sure how tight they are, but I would say VXX or you can sell puts in VXX, or you can buy call spreads in VIX. I know Tony's making a face, but I get that. But the VIX is hard to get long. But if you really feel strongly and you think the market's going to sell off here, I think there's a
micro futures is like 100 shares of stock. I think you probably could afford that. Yeah. That's what I would go with.
I like the idea of buying VIX here. I'm not long it, but I am short the market. Mm-hmm. Remember, if you're short the market, you're long VIX
synthetically.
Yeah, same thing.
Yes. Very good.
Like rather than buy VIX calls, I'd rather get short SPY.
Sure, or call spread in SPY or anything like that.
It's a cleaner trade. Okay, it's more liquid.
Yep, very good. Saznoff, are you done talking? Because we have to move on. If that's okay with you, it's time of the show. We take a little break and then we do an option jive. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on TastyTrade, named best online broker for options trading. Genius loves company.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really TastyLive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
It's options.
Jive. Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with an option jive.
Music with that.
What's that?
Just say option jive. I gotta get a little music or something.
It should have something.
All right.
Even the SP is down 4, Sadnov. All quiet. I'll let you know if anything happens.
Thank you so much.
Nothing's still happening. Just so you
now we got to do some little research, huh?
Let's do it.
I'm back, bitches.
I'm back. You are. Mm-hmm.
It's 8:12 in the morning. So happy to be back in Chicago. Kind of. I enjoyed my little world tour. Next world tour, just so you know, is San Francisco in a week.
Yeah, it's right here. I was talking about it all day yesterday.
Yeah, we're in San Francisco a week from this Friday.
September 5th. tastylive.com/events, Sosnoff.
We're at the Regency Ballroom. I don't think we've ever been there before, but I am looking forward to it. And I'm supposed to be having Peking duck there, so I'm very excited about that too.
Wow.
Yes.
I know I'll be having Peking duck. You may have some sort of exotic place that you have to go to see friends of yours.
Doors open at 8 a.m. in the morning. The show starts at 9.
Yes, they do, Sosnoff.
And we're looking forward to seeing everybody in San Francisco. We haven't been out there in a while.
Are you in hair and makeup for that hour between 8 and 9?
God. And can't wait to see y'all. We have not been to San Francisco in at least, I think, a year or two. So
longer for me.
Yeah, well, you should be banned from San Francisco. But one of our favorite cities. Can't wait to get back out there. And if you haven't signed up yet, tastylive.com/events.
Come out and see us.
See you in a week. Week and a half. Plenty of seats.
A week and 2/5.
Yeah, we always make sure. We never turn anybody away for these shows. All right, let's do it. So the research team wanted to give you an example of going long in something, okay? How do you get long? And again, we're going to probably do one of these things in getting short as well. So we picked gold, and we're going to use GLD because it's a gold ETF. It's I would give it 3.25 stars liquidity-wise. I'm not going to give it 4 because it's not there. 3.5 might be a little bit of a stretch. 3.25, all right, I'll give you that. But
and something to change. Markets get a little tighter,
yeah,
and they get a little wider in there.
I mean, it's not quite as liquid as GC, but it's the best of the gold ETFs.
It's a lot smaller than GC. 5
powerful market plays for getting long, and in this case, we're using gold as the example.
Yep.
We're using GLD. We're not telling you to go long gold. That's for sure.
No, we're just showing you the different ways that you can do it. 5 different ways.
We're showing you 5 different strategies to go long. We're using gold as the example. All right, Beth, let's go.
And you can use this, this is just gold, but you can use this in anything, any stock.
That's my whole point. Yeah. 5 ways to go long. Mm-hmm. Okay, so we're going to talk about long stock, covered calls, synthetic longs, put credit spreads, and a call debit spread. All right. So just buying stock outright, buying stock, selling a call, doing the synthetic long, which is virtually the same as long stock. The put credit spread, which is selling an out of the money put spread, and the call debit spread, which is buying the at the money, which is, okay. We made this really simple so you can see kind of the buying power on the right-hand side from full notional to full minus the credit to 20 to 25%, to the width of the spread to the net debit. One of the things that separates trading in 2025 from trading in 2005 is just how people control their buying power usage.
And the ease of controlling your buying power.
Yep. And so all of it's laid out in this slide. Let's go next slide. So the first slide here, well, the first one of these strategies we talk about is just long stock. This is your black and white plain vanilla trade. Just go out and buy the stock, Tony.
That's correct. And you don't have to buy 100 shares of anything. You can do odd lots if you really wanted to. You know, you could do whatever you want, but 100 matches up to options. That's why we use 100.
But everything, for the purpose of this discussion, everything's a round lot, which is 100 shares.
Multiple of 100. Right.
Top 50. It's a 50-50 shot. Delta is 100, of course. The max profit, unlimited. The max loss can be stock go to zero, I guess, but that's assuming. I don't really think that that's fair because I don't think gold can go to zero. And the buying power reduction is.
Well, I didn't think oil could go under zero. So, I mean.
Do you think gold can go to zero? Because there'll be a lot of people.
No, but I didn't think oil can go under zero.
There'll be a lot of people zero bid for gold. And oil in the.
You'd have to get past my boy Frankie in the chat room before you get to zero, okay? He's going to be 1 cent.
Let's be clear about oil. Oil got under $10. But the oil that actually went negative was an oil contract that was expiring that day that had to be delivered.
That's correct.
So, but the actual oil, the futures market in oil never got below 10.
That is correct.
So the buying power reduction is half of the notional, and since it's a $310 stock, it's $31,000. Let's go next slide. That's pretty basic. So then we just add a short call to this, and this is what happens when you sell a call against your long stock. Now the difference here is we would never sell a 63 delta call. We would have sold an out of the money call. Yeah, so I'm not sure why they chose that particular call here. Maybe because
the oil's 311, gold is 311. They're selling the 318.
They are?
Yeah, it's giving you $62. There's a cover call.
I'm sorry.
Let me explain to a cover call. I know it's a little bit difficult for you. You just did 100 shares by buying it.
For me is reading the screen.
You just did 100 shares by buying the stock outright. Now they're showing what else you could do. You could buy the stock outright still. We still have that stock.
Like I said,
now
the research
team
team is spot on.
to take that stock away from us out of the money. Go ahead. You can get
I will
it.
correct Tony here, and the research team is spot on. Don't diss the research team. The pop here goes from 50 to 63. Your delta is 63. That's your pop. Your max profit, because you've now capped it, is $1,200 instead of unlimited. Your max loss, obviously, $1,000 less. And your buying power reduction goes down by 500. It's not a dramatic change, but the most interesting part of it is your probability profit goes from 50 to 63.
Right.
That's pretty damn good. That's almost, you're almost improving it by 25+%. Let's go next slide. Well, a synthetic long is buying. No, go back, Beth. Right there. So a synthetic long is buying a call and selling a put of the same strike. Could you do different strikes? Of course. But if you do different strikes, like buy an out-of-the-money call and sell an out-of-the-money put, you're going to have a lower delta. But you can do it on any delta that you want. A synthetic is just, hey, buying a call and selling a put is a synthetic long. If you want to buy an out-of-the-money, if you want to sell an out-of-the-money put and buy an out-of-the-money call, you can do that too. Doesn't matter. Whatever the net delta is, that's where you are. In this case, the buying power reduction is only $7,000 as opposed to buying the stock outright. So there's a little bit of savings just because of the way margin rules are written. But it's still a delta of 100, and it's exactly the same as the synthetic long.
And I would prefer that over the long stock myself.
The requirement for the long stock was a minimum of 15,500. The requirement for this trade is 7,000. That's interesting. Okay, it's more capital efficient. That's why we're showing it. Let's go to the next slide. So this is kind of a classic short put spread. Now you're getting up to the 70% probability of profit, and you're getting to buying power of only $364. So now we're in a different world here. We're starting to use options as both a synthetic and a strategic approach to trading. We're improving our pop up to 70%. We have a much smaller delta, so trade's going to move slower. We have a much smaller max profit, only $136. We have a max loss of $364 and a buying power reduction, which is equivalent to the max loss, $364. Pretty simple, pretty straightforward. We've been talking about this for years.
Yep.
Let's go to the next slide. And here we have the $5 wide call debit spread. This is where we buy the at-the-money call. Either we buy one strike in the money or at the money, and we sell an out-of-the-money call. In this case, we bought a call debit spread. The pop, if we had moved the long strike, one or two strikes in the money, the pop would have been 50-50. But since we did it just at the money, the pop's a little bit lower. It's 47. The delta is the same as the short put spread. The buying power reduction is 220. That means your max profit is going to be the inverse of, or 280, and your max loss is 220. The inverse of the width of the strikes.
Mm-hmm.
Classic. It's a classic long call spread. Let's go to the next slide. So stocks give you a single way to take risk, long or short shares, but options provide a toolkit of strategies that let you adjust probability of profit, define the risk and reward precisely, and scale positions with less capital compared to stock ownership. One of the reasons that the industry has gone from 8% option trading in 2001 when we first built Thinkorswim to almost 70% now in 2025 is precisely that reason. You can scale positions with less capital compared to stock ownership. Period. Do-do-do.
Ba-dum-bum.
That's it.
You good?
I am good.
Let's take a quick 90-second break as even the S&Ps make new lows, enough down $7. Gonna make you a holler? We'll find out.
I thought they were crashing.
We'll find out right after these messages. The opening bell next.
You can get up to $4,000 when you open and fund a new account with TastyTrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new TastyTrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? TastyTrade. Make your move.
We built TastyTrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. TastyTrade.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No. I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your shore.
I mean,
This is moving so fast, and I like it.
Yeah.
like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new TastyTrade and TastyLive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the opening bell, Sosnoff.
I'm ready.
I know you are. Even the S&P is down 7, right near their lows, about $1 off of their lows, but a very, very tight market. 14 handles top to bottom, as you can see here. NASDAQ down 32, Russell down 7. That's your leader in the clubhouse to the downside on a percentage basis. The Dow down 34. Pretty much small moves across the board in all of the futures, equity futures. Really lulling you to sleep here. Volatility up 15 cents to 16.95. Bonds are down 19 ticks, about 4 ticks off of their lows. You can see here's the areas they've gotten down to multiple times over the last week or so, only to bounce ever so slightly up to about a full point, which is $1,000.
I mean, they're trading in a pretty,
very tight range.
Yeah, very tight.
Some would say channel or wedge.
I have been buying bonds on every dip, and it's been working. Fingers crossed.
You've been taking quick profits, too, in there. You decided not to do that this morning, and the market slappy poo-pooed you.
The rule is no hero shit, Tony. It's a rule in this business. I've been saying it for
Did you break that rule this morning?
No, it's not enough. But we've been saying no hero crap for literally for 40 years.
Yes, we have been. Even when we were doing hero crap stuff.
Yeah. There's plenty of times I wanted to be a hero, but decided very happy that I listened to my rule.
Sure.
I thought they closed way too rich yesterday. I was boarding my flight watching
They just stair-stepped higher the way they stair-stepped lower.
And then they goosed them right on the close.
They goosed them right on the close, just like they sold them off right on the close the day before.
They sold them off down 25 on Monday on the close, and then they bid them up 32 on the close yesterday, and now they're giving back that other 8 or 9 points, and it's got a tiny little bit of NASDAQ futures to the downside today. But surprisingly, to be honest, I was kind of hoping they opened higher today so we could, we whack them in half?
Oh, don't worry, this is a higher level than you thought they were going to be at anyway, right?
Well, the NASDAQ, I was hoping more, that 600 level, but we'll see.
23,600.
Yeah.
Williams-Sonoma had earnings last night. It's up, it looks like about $6 to $10. Again, these were marginal at best. MDB looks like it's up 30%, $68. That's a big move.
What stock is that?
MDB, that's that MongoDB. Very wide markets. I don't know.
Who names their company MongoDB?
I'm sure there's a reason.
Is it Mongo Database? Is that what it is?
I believe so. Let me see.
But who names their company Mongo? Me, Mongo.
Oh, rest in peace, my man. Rest in peace.
No, that's the Mongo from
the Bears.
Yeah. Steve McMichael. But
that's what I said. Rest in peace.
Who played Mongo in Alex Karras, right? In Blazing Saddles. Don't you remember Mongo?
Yes, but I forgot Alex Karras. Sorry,
Isn't he? He's the guy that hit the horse.
Yes, it was an ex-football player, but I don't remember him.
Alex Karras, I think that's who it was.
Yeah, right.
And Mongo, he was the original Mongo.
I got it, but I'm not up on my 1960s, 70s football players from yesteryear. I apologize.
Mongo like beans.
Yeah.
It's great.
Huh? MongoDB. Anyway.
Didn't hold up over the last 45 years according to my own kids.
Yeah.
But for me, it's great. It's the greatest.
I know. You like to live in yesterday.
Anyway, yeah, but I was thinking Mongo, famous Mongos. Those are the only two Mongos I know.
Let's take a look at what's moving the market as Sosnoff reminisces about.
Well, I mean, a MongoDB, I never really traded it.
50-year-old movies. A&F. Huh? Abercrombie & Fitch down $8.50. MSTR down $3. BABA down $3. TSM down $3. Sosnoff, they're hitting your China stocks. PDD down $3. Baidu down $2.50. IBKR, after going into the S&P 500, catching a little bit of a bid intraday, has sold off to lows it has not seen since, call it mid-July or so. Down $1.75 to 61 and change. AMAT down $1.60 or so. PayPal down $1.20. JD, another Chinese stock low. Let's see what's moving the market higher. MDB for earnings up over 30%, 32% Sosnoff on 2 million shares. That's why you got to stay with liquidity here, ladies and gentlemen.
It's not that much.
Not that much? What's not that much? Not that much stock trading or not that much of a movement, 30%?
No. That's not very much stock trading.
No, it's tiny. That's why I say you got to stick with liquidity when you're looking to trade these stocks, whether it be earnings.
I have one Chinese stock, JD.com.
Chinese, Japanese. What's the difference? Maine, Portland.
Well, it's not doing good anyway.
Doesn't make a difference, right? Let's see what else we got here. While I was talking before we were interrupted by Sosnoff, Snow up $3.60. Crowd, which has earnings after the market closes today, up $3.40. It's a tug of war between red and green. Sosnoff, red winning ever so slightly right now.
Yeah, I wouldn't exactly call this the
Actually, the Dow just turned positive by 19. Tesla up $1.60. Did you find a little golden nugget miracle?
I did not yet. I'm looking to see what stocks that.
What's Nvidia doing? You sold some calls yesterday because you could not remember what day was earnings. Nvidia down 90 cents.
Nvidia was up $2 pre-market.
Nvidia got as high as 82. It's 80 and change right now. So yeah, you are correct. It was a little higher. Now it's a little lower. Just doing some housekeeping right now.
Yeah, Reddit was up $7 on the opening. Now it's up $2.
Reddit?
Not much. Yeah, Nvidia was up $2 pre-market. Now it's down. Weird stuff. Just looking around to see where we got.
Reddit IV rank of 21.
Yeah. I mean, I don't have, my positions are relatively small here. I'm looking at
tight. We would say tight. So I don't know if you're holding your cards close.
What do you think, right? Ooh, a little bounce in natural gas this morning. I've been hoping for that, looking forward to that.
A drowning man reaching for a straw here in net gas as it is up 10%, which is a 3.5% move, but it is down 1,017% prior to that.
Trust me, I'm very aware. It's been down basically every day for my entire life. It feels like I'm going to roll up some calls in there and be aggressive and
roll up some puts, Sosnoff. We roll up the untested side. Puts, calls.
You know,
did you have this problem when you were doing your presentations too? I mean, I listened to the first one. There was a lot of slides there, so it was hard for you to make a mistake. It was hard for you to read, but it was hard for you to make a mistake. But when you were in Guadalajara and I wasn't there to correct you, I know Tony from Mexico was helping you, but was he able to catch you as quick as I am? No, I got it. I saw your answer.
He's a lot quicker than you.
I'll go with your original answer. It's okay.
A lot quicker than you. Anyway, looking at my screen to see if there's anything else that looks
Well, whose screen would you look at if you didn't look at your own? You can't beat me today. I'm on fire. I'm in fuego. Last night was my wife's birthday.
You're just yakking. What?
Last night was my wife's birthday. Did you wish her happy birthday?
I didn't even know it was her birthday.
You knew it was her birthday. You knew it was her birthday.
Well, I'm taking
Did you wish her happy birthday? You have a chance now.
I'm taking her to lunch today. Better wear something nice.
She'll come to play. She'll come to play. She knows how to pay. She knows how to pay. Yep. What are we looking at here? Anything else, my friend? Prima notte?
Prima notte. Let's take a look here. I mean, all right, what are we going to do?
Well, you asked me, what do I think about today? I think much to do about nothing, like yesterday and the day before. I'm sorry, everything's going to be waiting. If it's Nvidia is the reason,
well,
I don't know
what. I'm going to tell you one thing about Nvidia. Now it looks like the calls are a little bit up. Yesterday they were at.
Nvidia down 80 cents. Not sure.
I just watched some of the out of the money calls, and they're higher today than they were yesterday with the stock down today.
You probably have the wrong strike. Let me take a look. Let me take a look here. No, you are actually almost correct. I mean, yeah, you're almost correct. You're almost correct. Let me do this for you here. Sosnoff on the file page. Go to Tom. We're gonna correct you right now if you are correct or not. Chances are you are wrong. But foiled, Sosnoff, you are correct. You sold these calls at 72 cents with the stock at 182. The stock is at 181, and they are the same price, maybe even a penny or so higher, Sosnoff. Which leads me to be more correct than you are.
What's more interesting is that some of the ratio spreads that I was trying to put on yesterday, I was trying to do them at, I was trying to do 1/3 ratio spreads in the 192-200 in Nvidia, and the market was 18.20, 18 cents, 20 cent credit all day long. Today, with the stock down,
right, down from the level you about $1 lower than
did
what
it
you
for
were
a 28 cent credit.
Right.
10 cents higher than yesterday, which is kind of weird to me. But
and you look here at the expected move. I said it was $10.5, $11 yesterday. It's still $10.5, $11, maybe closer to $11 now. Yesterday was closer to $10.5. So that's volatility expanding going into earnings.
With the stock at 81, with the stock where it closed last night, it looked to me like there was a tiny little bit of a put skew. When was the last time you saw put skew in Nvidia?
You see put skew now? I didn't look. I'm asking.
You can look. I do.
In the 2 days? What were you in September?
In the 2 days. In the 2 days. The earnings play. Totally the earnings play.
Stock 180. Let's see. 170 is 2. 190 is no. You're wrong again.
I see a little bit of put skew.
Well, you can see whatever you want. $10 lower, the puts are $2, and $10 higher, the calls are $2.46.
$10 higher, the calls are. I'm using the 892 and a halves, and the 80 and the 72 and a halves, and the puts are about 7.
Well, that would be $7.5, $8 away, and $10 away.
That's where they just were a minute ago, and the puts were higher a bit. I'm just telling you, I've been watching it.
You're wrong.
Implied move is 6%. 6% is just under $11. You get back into it all. But what's interesting in Intel is, what's interesting in Nvidia is that usually the calls are like 1.5 times as expensive as the puts. And they're definitely not this time. We could argue over whether the puts are more expensive than the calls or vice versa. But whatever the case is, the skew is either flat or a little bit towards the put side, which I find very interesting because I haven't seen that in Nvidia in 3 years.
Agreed.
I don't know if that means anything.
Yep.
It just means that option traders are, a little less bullish than they've been. I'm curious I'm curious to see if the market if anybody even cares about anything all day until Nvidia comes out. I mean, I think you're going to see like this crazy little tug of war, and nothing's going to happen all day.
I concur. I said that too. Yep,
Yeah.
totally agree. Well, you know what, Sosnoff? Let's see what our viewers on your first day back have found for you. You know why? Because we do What's Your Assumption after this, where I ask the viewers to come up with trades for you and assumptions. And we're going to see how you can butcher them. Like the put skew versus call skew that you just did a moment ago. We're going to take a quick 90-second break. You're going to see more of that live with Mr. Tom Sosnoff next. Ba-dum-bum.
Look who's back testing. TastyTrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at TastyTrade. Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like, in horse racing they would call it wire to wire, and in trading they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at TastyLive.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies? Excuse me? I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? What? Uh-oh, watch yourself. We don't want to get hit by a car. No. My brother did that once. He can't talk now.
Oh, my God, I'm serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? Oh. First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Got the need for speed? No problem. At TastyTrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. TastyTrade, make your move.
Tomas, we're back, my friend, with the even the S&P's unchanged. NASDAQ trying to bring us lower by 65. Russell up 12, strongest of the group. And the Dow up 100 and change. So I was like, don't panic over there. Try to have some, diamond hands.
Have I ever panicked?
All the time.
Never.
All the time.
I haven't panicked in a long time.
I'm just kidding you. You're good, boo.
Let's do it. Before we'll talk about other stuff in a second.
Sure.
I just spent 4 days alone with Tony. That's a lot of time. Like, I should win something.
Oh, come on.
I should get something, Beth.
You guys have fun.
I should win something, get something. I should get a prize.
He's easy to travel with.
Yeah, he's easy to travel with.
I am easy to travel with. Come on.
Yeah,
like you say, like, yeah, he's easy. Like, you gave me a bone. Like, really, I'm a pita, but you like threw me a bone.
Yeah, he's easy.
I carry your bag for you.
You don't carry my bag. You didn't put it up on the thing.
I didn't put it up on the thing. Are you going to talk like this for the rest of your life? You mean I didn't put it in the overhead? I didn't take your luggage or suitcase and put it in the overhead? What, are you missing these words?
You made
The sad part is we know what he's saying.
I know. It's horrible. That is
made me put it up in the overhead myself. I could have injured myself. A lot of things happening.
Protect the head. Protect the head.
Protect the head. Yeah. You didn't pre-order me my meal.
Scott and I both had the same meal. We got the pasta on the way home.
Good. Cheese tortellini?
No. Pasta with like peppers on it or something. It's horrible. It was really horrible.
Always get the cheese. Always get the cheese tortellini.
Oh, it wasn't it?
Whatever you do, get the cheese tortellini. I've been telling you this for years. Oh, a little bun scalp. Something, honey.
Bon Scalpellini, 1323. Good job out of you.
Took my 6 ticks.
Did you roll up puts in Reddit? What's wrong with you? No,
I rolled down calls this morning. Rolled down calls, rolled up puts. Do the whole thing.
You really like to get twisted in the wind, don't you?
Yeah.
I mean, show some intestinal fortitude from time on time.
Right,
you've been here a long time. I mean, come on.
Let's do it, Beth. Let's see these trades.
Now we can do it. What's your assumption?
All right, Jack from Guilford, Connecticut. Okay, Jack, true story. My dad lived in Guilford, Connecticut for about 2 or 3 years on a pond.
On a pond? He lived on a pond? In it?
Next to a pond.
Oh, next to a pond. Okay.
Next to a pond. I used to swim in the pond and go fishing.
Is that where the first snake bit you? Is that it?
I have never been back to Guilford, Connecticut, but for about 2 or 3 years, I don't remember what year it was. Had to be in the early 70s. My dad lived in Guilford, Connecticut, and nice place, beautiful. DUOL. I
don't know what this is either.
I don't know what that is. Let's take a look.
I think we've actually traded once before, though.
DUOL.
We've looked at it. Duolingo.
Oh, Duolingo.
See, now you know it.
$319 stock. Traded 98,000 shares today. That's not good, Jack.
No, this is going to remind me of MDB right now.
Yeah.
I would probably say
October
no
17,
bueno.
36. Okay, hold on a second. Let's see what we got. He wants. I have not looked at this stock in forever. Stock's on its butt. It is up $3 today. Stock's on its butt. That's why you want to get long it, right?
Hope you got long it yesterday, even if I would not have.
Filled the gaps from Feb to May. Strong volume from the beginning of August. I like the chart. IVR 30. I think I could have been on board with you, Jack, here, but the stock's up too much today. If it goes down on the day, we'll put something on. I actually don't hate this play, but this is a very illiquid stock. Like I said, it's only traded 100,000 shares today. This is a tough one.
Yeah, I abstain.
Yeah. So I'm gonna pass for right now. And if the stock sells back off, which I know you wanted to do if the stock was lower, which makes sense to me. I like the call. Let's go next slide. Mike from Salem, Oregon, wants to do the 0 DTE, $20 iron fly at the opening, taking profits at 10%. SPX. SPX. We'll go to
Vicky put it on yesterday. Worked very nicely for him. Took, I think, 20-ish%. Half the
0 day. You want to do the iron fly.
Yeah, we didn't do the iron fly. We did more of a classic 30-ish delta on each side.
$20 wide.
You're gonna collect around $5.50 or so.
What? $5.50?
I said you're gonna collect around $5.50 or so.
$20 wide?
I mean, you should get.
Looks like I'm gonna collect about $11.
You're not using the right strikes.
$20 wide, right?
Yeah, $20 wide. You're not gonna collect half the width of the strike. Oh, you're doing the iron fly. I said
That's what he said.
did a classic iron condor at the 30-ish delta where you're going to collect around $5.50.
I know, but our man Mike here said
you never do what anybody asks you. But go ahead. All right.
Okay, Mike. Iron fly done on the opening. Let's see. We sold it for $11.05.
You are correct.
Think that's mid price. Let's see what happens. That means our goal is to take like a buck out of it, right?
That's correct.
Yeah.
That's correct.
Charlie from Omaha, Nebraska.
Hey, Chaluch.
Looking at BMNR.
Who?
BMNR. Now, this stock has already traded.
Bite me. Oh, BitMine. Sorry. Sorry. It said bite me. Sorry. That's BitMine. I apologize. I apologize to Beth. I apologize to everybody.
Charlie, that's what happens when you get old and you can't read.
New stock.
BitMine looks like
40, 50 cent, 70 cent wide markets. What do you think here?
Our man is bearish, and the stock's down $2 today already.
Mm-hmm. Volume is relatively it's okay, actually.
Which is a pretty good call.
Open interest, you got some thousands on here, Sosnoff. Just came out with dollar-wide markets, strikes, I'm sorry, not too long ago.
Let's see what we got here. SEP options, 23. Let's go to...
You would look to go to October, wouldn't you, with 51 days? You got a lot of open interest in the calls. This is tradable.
Yeah. I'm gonna.
Open interest doesn't matter to me but if we're bid ask and trying to see what like I'm not looking at open interest.
I just want to see how this thing trades, Charlie. So I'm gonna I'm seeing where the skew is too. Let's see the calls.
Skew is going to be the upside, Thomas. Come on, you got to look at this. I mean, you've been doing this for 40 years. You got to freaking understand where the skew is.
I'm gonna trade. I'm gonna sell the 35.90 seems kind of crazy. 35.90 strangle.
35.90 strangle is not doing what the gentleman said here. I mean, it does have a little bit of short delta here.
Little tiny bit.
Like 2.
I just want to see how bad the markets are or good.
You're talking about liquid, how liquid the markets are, right?
Yeah, I want to see where I can get filled.
Well, I mean, you've got 5 cent wide markets. You probably got filled 2 cents off of mid price.
3.
Okay, well, you're horrible.
I did this trade for 488.
I
just want to see what's going on, Charlie. So let's test it out. I mean, the stock.
You could probably do it better, Charlie, with your eyes closed.
I mean, the stock's already down $2 today, and it's only a $45 stock, or $48 stock. So I'm not going to get too short. Let's go next slide. But I like the call.
Mm-hmm.
Now I'm short premium there. I'll watch it. Jake from Boise, neutral in ETHA. I've had a hard time in this stock, Jake. I've had a position on for pretty long time now. It's been a challenge. Stock's $35, sitting there. Where am I?
Where are you?
I know my position's not good when I'm inverted.
That's
so
one indication. Yes.
What do you want to do? Naked strangle. I have naked strangles in there. I don't think they're too risky. It's a $35 stock. I think it's completely reasonable. I'm going to be short the 32.37.
32.37.
No,
love it.
Get back. Let's see. Let's do 33.
There you go.
32.38. 32.38 puts me about right smack in the center.
Okie dokie. A little pokey?
Yeah. We're going to give it a shot.
A shot we shall.
We'll fill this, Jake. I'm just not sure what exact price. It's completely neutral. but I'm working it.
I'm working it, boss.
Let's go next slide. We'll get back to it because we're going to get filled.
Oh, you think so? And you did get filled.
144 and 172.
You rolled in here. You got one back.
Yeah, 316.
Right.
316. Let's go to the next slide. Russ from San Lorenzo, California. Natural gas. Hey, Russ, we got a bunch of natural gas positions on already. We've been struggling in there, to say the least. We are currently in...
Catching a little bid for you, Savno. Flirting with a
little bit.
Flirted over 290 just a moment ago.
270, 315. We have that trade on pretty
One of the biggest percentage movers, up 3 1/3%.
Yeah. 270. We're currently in the 270. He's a little bullish. You know what? I'm a little bullish too.
Okay.
I'm already in a bunch of strangles, but for you, I'm going to.
But for you, I'm going to cut them up real good.
For you, I'm going to roll up my put side, and I'm currently in. I'm going to take my 270 puts, move them up to 275, because I'm already long, and I'm going to get longer. Okay.
I like it.
So I sold a put spread in there. Let's go to the next slide. Brian from Denver, Colorado. He is, I'm neutral to bullish on Nvidia, but I don't want upside risk. Put ratio spread. Well, actually, Brian, I'm neutral to bearish.
Wow.
So I just did a call ratio spread in there this morning. I'm not going to do a put ratio spread because I have a different opinion, slightly different opinion. I'm not super bearish. I just want to play the downside. I think the NASDAQ is overdone here. Let's go to the next slide, because I just did a call ratio spread. I did the 95 102 1/3. No, I take that back. That's wrong. I didn't do that.
No.
I'll tell you what I did in a second. I did the 192.5 200s 1/3 for a 28-cent credit.
In where?
Nvidia.
Oh, yes.
Let's go to the next slide. Topo Chico. Dell. I don't know. Topo Chico, you got it. You have an opinion. September 19th earnings trades. When is earnings in Dell? Let's take a look.
Dell, Dell. I could do that for you, Thomas. A lot quicker than you can, for sure.
August 28th. That's tomorrow?
After the close.
Tomorrow after the
Not
close.
something we usually trade. 268,000 shares have traded. Markets are okay, and Dell better than you probably would have suspected.
Dell has been drifting higher for quite some time. You're no clue. Take me to the promised land. Oof. I like the 2-dayers in here, and I like the 2-day. This has a $10 expected move. It's a $1.31 stock. So let's say that's a 7% implied move.
Right.
Now the problem is Nvidia has a 6% implied move, so that's more interesting. IB rank is super low at 29. The other problem with Dell is the liquidity just isn't there very much. Markets are 20 cents wide. Nvidia, the markets are a penny wide.
Right.
Dell's trading for 131. The implied move is $10. You go 2 times the expected move. Oof, there's not much there at all. It's limited, dude. Oof's right. I'm okay with the put ratio spread in this stock. I didn't like a put ratio spread in Nvidia, but I'm okay with the put ratio spread because I think it's going to be harder to get a decent fill in here. If we go to the expected move, which is $10, we go inside the expected move. Ooh, man, these markets are not good.
Oof.
Let's say we buy the 123s. And
let's say we do that.
Let's say we buy the 123s and we sell the 120s 1/2. I think I can do that.
You think you can?
As a put ratio spread for a 64-cent credit? No, I think it's going to be way lower. Maybe 58-cent credit. I got filled.
Nice.
1/2, 58-cent credit. Bought one of the 1 23 puts, sold 2 of the 120 puts. That's my ratio.
I like it.
All right. Okay. I mean, I don't know,
It
Topo.
is. I mean, it's their assumption. You're playing on it.
The earnings is not till after the close tomorrow, so I want to see what happens first.
Correct.
In there. It's a tough, it needs to trade a few million shares. It's only traded 200,000 right now. I don't love it. Let's go next slide. Sean from Hong Kong, GDX neutral. GDX outran GLD way too much. Time for a breather. I think that's a pretty good argument. The problem is, can you make any money in this damn stock? Yeah, this stock's had a pretty wild run. I think it's time for a breather too. Let's go to ACK. And in ACK, time for a breather means, well, we got to sell something around 20 deltas, 24 deltas in that range. Let's go 20 delta call. And where's the 20 delta put? We're going to go 23 delta call, 24 delta call, 23 delta put. About 195. That's mid price. Nothing done yet. Sean, I think that's the right play in here. Is like a pretty decent string. I think these markets are crap. But let's see.
Here's what you think, Sosnoff.
It's probably going to fill. Yeah.
194.
194 is actually not a bad fill because it's only a penny off mid price. Let's go to the next slide. Ajit from Chicago, Illinois. CRM. Ajit's neutral. Long at the money calendar. Front month IV low. Earnings tenor inflated. IV skew strong. Edge to the calendar spread. Okay. All the logic makes sense. Stock's up about $3 today. Stock has currently been kind of flat. Long at the money calendar. So we will sell earnings coming up, like you said. Long at the money calendar. Let's sell the, where's the stock? Tony, what strike should I use?
CRM.
240 puts, 242 puts, 245 puts. Which one? Pick your poison.
Earnings coming September 3rd. Stock's at the lower end of its range. Oh, split the baby. Go right in the middle, Saz.
Right in the middle?
Yeah.
245 puts.
Sure.
Doesn't matter. Puts or calls doesn't really matter.
That is true.
So we're selling the SEP 245 puts. We're buying the October. Oh, they don't have 245 puts. So let's do 240. So we're going to buy the October 240 puts. We're going to sell the September 240 puts. And the spread trades for a little over $2. I think, man, the volume in there is really light today. What's going on? 215. I did a little price discovery at 215. All right. By the way,
15 it is.
S&Ps are now up on
up
the day.
$1.50. Nasdaq still down 46. That's your weakest of the group. Russell is up 590, and the Dow is up 84. Volatility still up 10.
Let's go to the next slide. AJ from LA, Costco, bullish. Didn't Costco have a pretty big sell-off recently?
Costco's had a pretty big everything lately. Costco is up $2 right now, trading $9.43. But yes, over the last 5 days or so, it's come from flirting with 1,000, Sadnov, or back to 1,000, back down to around $9.50 or so. $9.43.
Best play in Costco. Ivy rank's pretty decent. Expected move is $65. Stock's trading for $9.42. I mean, I think you just go down to the one standard deviation put and sell it. The problem is, where does it trade? There's no volume in here. And the markets are 75 cents wide. I kind of like a naked short put in here. I know it's a little expensive. But I kind of like that play.
Yes.
I just don't know where I can get filled. I don't want to give up too much. So I'm trying a bunch of different prices. We're going to come back to you, AJ, because we're going to get filled in here. But so far, no bueno. I think $8 fills me, but if I don't get filled there, then I got to spread it off. Nothing. All right, let's do a spread instead. I tried, AJ. Now we're going to do the spread. So we're going to change our game plan here, and we're going to sell the 890s and buy the 880s. Trying that. You know, Costco's not the most liquid stock.
No, it's not. I actually got into a little trouble there. I
sold the 890, 880 put spread.
Yes, you did.
For 201. I don't know. I'm okay with that.
Yeah.
Let's take a look and see how our 0 day is doing.
Trade. I mean, what are you going to do, right?
Let's take a look at our SPX 0 day. It's unchanged.
SPX 0 day is unchanged.
SPX 0 day is unchanged. Now you could, if you want to, you could roll up the put side a little bit because the stock market's rallied.
You could if you wanted.
So I might just roll those up a strike. Now you're saying, why would you ever adjust an iron fly? Because I do that all the time.
Sure, I get that.
So I just rolled up a put spread for $1.50 just to give myself so it's a little bit uneven now, but it's okay. Give yourself a little delta adjustment. It's cool. Is that the last slide, Beth, or more? Okay.
That's it, Sosno.
So Duolingo, we didn't trade it because the volume was really low, and it would have been hard to sell anything in there, put spread, puts, or whatever.
Right.
SPX, we did the 0 day fly. We're about unchanged on it right now. BMNR, we did sell a strangle in there. ETHA, which is the Ether ETF, we did sell a strangle in there. NG, which is natural gas, we sold a put spread in there. Nvidia, I didn't do the put ratio because I had just done a call ratio spread this morning. In Dell, we did do a put ratio. In GDX, we sold a strangle. In CRM, we bought a put calendar, which is right at the money. And in Costco, we sold a put spread. So we got long Costco, flat CRM, flat GDX, a little bit long Dell for earnings. SPX were no deltas for today. And then natural gas, we got a little bit long. And BMNR and ETHA, we just sold premium. Pretty good mix of 8 out of 10.
Very good mix. Nice job out of you, Sal. A better job out of you out there, our viewers, for bringing us those assumptions. So I appreciate it, even if Tom butchered many of them. We're going to take a quick 90-second break and come back. We got more Tasty Live. Sadov, what comes up next? That's right, a market measure. You're always right, Sadov. On the ball, sharp as attack. We'll be back in 90 seconds with Tasty Live. Market measure next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up, so make sure you don't give one to Tony or Scott because I don't want them to benefit from us.
That's okay. Good job out of you.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
That's right, Sosnoff. That music can mean only one thing. It's my man Jacob in the house. How are you, Jacob?
Good morning, boys. Good morning.
Good morning. Good morning.
Good morning.
Good morning. I can't believe we're losing you, Tom.
He's talking to you.
Oh, I'm back. It's all good.
No, you're back for now. You're back for a minute. This is quite the news.
We're back on the road. We're back on the road next week. But go ahead. What do you got?
So today I want to talk about Monte Carlo again. We've talked about it before, but it's so crucial to how the platform works on the underside that I think it's important to cover it.
Yeah, let's do it.
And in particular, I had some historical. So it's called the Monte Carlo method, based off of the Monte Carlo Casino, but that actually isn't developed anywhere near the Monte Carlo Casino. That's a code name, which is a fun fact that we're all going to get into today. But yeah, we'll talk about Monte Carlo method. It's sort of a really powerful tool for using randomness to unlock deterministic things in a surprising way, to do computations that would be deterministically sort of infeasible and to get very accurate results very quickly. And, it helps us blow up bombs quickly, or it helped make sure bombs would explode once upon a time. The actual ones that got dropped were dropped before the method was developed, and they were just crossing their fingers that it would work. But in the post facto, they determined how to do it. So let's get into it.
Try it.
Let's do it. I've been to that casino.
The real problem here is that despite the fact that people tend to use the phrase exponential as if it meant, super fast growing, and it is very fast, right? If 2 is your base, the exponential growth goes 2, 4, 8, 16, 32. Right, that's pretty quick. And for most people, right, that's the rate at which bacteria will reproduce. For most people, that is as fast as they can conceive of everything. There are many faster rates of growth that come up in mathematics. Combinatorial or factorial growth comes up when you're considering paths or different arrangements of things, right? And those go instead of being multiplied by the same number every time, they get multiplied by a larger number each time. So they grow much faster than exponential. They completely dwarf exponential. They make exponential seem like linear. It's 2, 6, 24, 120, 720. It gets out of hand too fast. But the thing is that American options can be exercised at any point in the life of the trade, which means that the entire path of the price matters, which means that we do have to consider all the possible paths, which can make it sort of impossible to actually model or get precise answers to things. In a pure Black-Scholes model, you can do this because Brownian motion and normal distribution are very well understood, so you can short circuit a lot of the computation. But if you want to do anything a little more complex, any sort of local volatility or dynamic volatility model, those tools go out the window, and you're left sort of flailing about, wishing you could conceive of all the paths at once. So instead, what we're going to do and what happens inside the platform is that we rely on what are called Monte Carlo methods, where rather than doing an exact computation, we do probabilistic simulations and come up with a very close approximation to the numbers that we want. So let's see how that process works and what it can get us. Let's go forward one, Beth. Thank you. So the historical fact that I felt like that our viewers really need to know is that the Monte Carlo method was first developed as part of the Manhattan Project. You know, it's in 1946, so the Heisenberg movie has already come to its conclusion, but it still is important. Stanislav Ulam got sick and was in the hospital playing solitaire. And the solitaire game he was playing is one of those ones where, depending on the initial state of the deck, it might be impossible to finish or it might be possible. And he, as a mathematician lying in a hospital does, thought to himself, how likely is that? What are the probabilities of going on? It's, it's just 52 cards. It depends on their arrangement. It's 52 factorial is a very, very, very large number. And he was trying to do it by exact combinatorial means and just kept failing. Now, maybe this is because he was sick in the hospital, or maybe because it's an unreasonably hard question.
Wait, the Manhattan Project, you're talking about World War II, right? Like the atomic bomb?
Yeah.
That's a fun fact I had not known.
Yes, because in order to make sure that the nuclear fission occurs, you need to be sure that the neutrons are actually going to collide, which means that you want to consider the paths of the neutrons. And considering the paths of the neutrons is a lot like considering the paths of the underlyings, in that it's combinatorially complex and sort of too hard, even though they had all of the precise inputs that they would need. Actually getting an exact computation was proving too difficult. And so they were left sort of crossing their fingers and hoping the bombs would go off. But he was lying in the hospital playing cards to himself, and he thought, well, maybe this abstract thinking is too impractical. I should just do something more crude and straightforward. And I'll just lay out the deck 100 times and see how many of them it's repeatable, it's solvable, and then this will give me a reasonable estimation for the likelihood. And this turned into the Monte Carlo method, right? It's called Monte Carlo method because as part of the Manhattan Project, it needed a code name. You couldn't just tell people what you were working on. And that's why it's called Monte Carlo. Apparently, Ulam's father used to lose his money at the casino. But it's not named actually. It's named after the casino, but only as a code name.
I did not know that.
The actual methodology was after Ulam got out of the hospital, he went and talked to John von Neumann, and the two of them worked together to sort of figure out exactly how many simulations you would need to do in order to get a good estimate, and work out the things that we'll cover the rest of this piece. But yeah, down there in the bottom right is our nuclear bomb ready to go.
Good to know. I had no idea.
Yeah, I had no idea.
Yeah. That's why I thought we should do a fresh Monte Carlo piece, because this is a fresh Monte Carlo fact. I mean, it's not fresh. It's 70 years old, but it was new to us. So I thought we should share with everyone. So let's go forward. We'll see how it works. We're going to do a very simple computation. We're going to compute the value of pi. 3.14159, yada yada. But pi is really physically primal in its relevance. It's the ratio between the circumference and diameter of a circle. It comes up anytime there's spheres or circles of any sort. But it's an irrational number, and ancient mathematicians didn't really have good ways to deal with irrational numbers. So the Egyptians went with 22/7, which is pretty good. It's 3.1414. Which is, a pretty good approximation of 3.1415, but it is not exact. Thanks to the speed of modern computers and pseudorandom numbers, we can come up with sort of a dumber way to get a better approximation by doing this Monte Carlo approach, right? So I take a square. I say that the square is, unit 1 on the side. I'm going to drop points into it randomly by just picking an x and a y coordinate, both at random between 0 and 1. But then I'm going to draw a quarter circle to inscribe inside the square, right? You see that arc. And now we can get a good estimate for pi, because some of the points will land inside the circle and some will land outside the circle. Since pi is supposed to give me the area of the area of the circle, the ratio of the area of the circle, the quarter of the circle, the radius of the square should be the percentage of points that land inside the circle. And so that gets me that 4 times the number of points that land inside the circle divided by the number of points dropped is pi, right? The 4, because it's a quarter circle. And so you can see here, as the number of points getting dropped ticks up and up to a few thousand, the approximation gets to be very good. And we'll be more precise about how good that is in a second. But the idea here is that this very crude method of like, I'm just going to throw darts at the dartboard and see how many of them land inside the circle gets me a better approximation for the value of pi, the actual area of the circle, than anyone had access to for thousands of years. It's a very like strangely powerful technique. It's somewhat counterintuitive to use randomness to compute deterministic values, right? There's nothing random about pi. Pi is just what it is. But by adding a little bit of randomness, you can get a much better approximation to it than anybody had for a very long time, which I think is a surprising and powerful technique. With sort of the great insight of
that's pretty interesting, actually.
Yeah. So let's look at how this actually applies to the probabilities that we want to compute, right? We don't actually spend that much time computing how many points land inside a circle. We spend time computing, what's the probability of getting to 50% profit. So let's go forward and we'll run that through the Monte Carlo machinery and see how it works out. So the first step you want to do is you need to simulate price paths. And you're right, this is going to be the equivalent of the one dart thrown at the dartboard. So we're going to do it lots and lots of times. But each one is going to have to require the simulation. And to simulate a single one of them, we're going to flip a bunch of coins. How many coins? Well, we'll say between now and expiration is some amount of time. And then there are 2 points here where we're going to need to pick big numbers in order to make our approximations good. The first one is we want to cut up the time between now and expiration into a bunch of little pieces. And then the second one is how many simulations we're going to run. But each simulation is going to be a better simulation if it cuts it up into finer pieces. So we cut it up into n pieces. So that's tau over n. Because of how standard deviations scale, each one will be square root of tau over n times the standard deviation or the volatility. Right, if tau is measured in years, you can just use the VIX volatility. And at each step, you multiply the price randomly by e to the positive volatility or negative volatility, right? You either go down or up by a factor of that. We're doing it as e times because we want to do this thing where we've talked about a number of times about why we use log and why we want scaling to work out, right? We want things to work in a way where up 10% minus 10% doesn't leave you up 1%. Right, we want it to exactly cancel out, and so that's why we put things into the exponent. And this gets you a Black-Scholes simple random walk in the log return space, but you could adjust the volatility, right? There's no requirement that the volatility in this methodology be constant, and so all the dynamic volatility models can be handled in this exact same way. The machinery is powerful enough to just absorb a wide variety of models. All you have to do is say, well, I don't think volatility is constant. I think that if the price goes down, volatility will go up. I think the price goes up a little bit, volatility will go down. I think the price goes up a lot, volatility will go up, but not by as much. And those can all be just change that sigma to a sigma sub t, and it's no problem. The model, you can still run 1,000 trials and still get your Monte Carlo probabilities out at the end. So we run 1,000 of these trials, and then we want to ask questions about how our options have behaved. So we do a very straightforward thing. We plug them through our payoff functions. Let's go forward one, and we'll see how that goes. So the possible price of an underlying is, modeled by your paths. We now have thousands of paths. We don't think that this is all of them, right? Because we know there's a combinatorial number of them. There's in fact literally trillions of possible paths if you split it up into a bunch of into many spaces. So what you want to do instead is you want to just use several thousand paths, but make each one picked randomly so that you have a good chance of getting any of them. Right, so that it doesn't matter that you're not doing the trillion possible paths. 1,000 randomly selected paths gets you a reasonable sampling from the trillion possible paths. And so then this lets us answer questions like, did the trade ever reach 50% of max profit, or was the strike ever breached? Because we can see how many of the paths it was and how many of the paths it wasn't, and this will get us all probability. We look at how many successes over how many total trials. And this doesn't matter if you're doing a single option or a multi-leg function or a multi-leg option or a calendar spread. It's all very straightforward once you've got your simulations run to just plug into it and ask any question you want and get different probabilities. And this is what happens under the hood inside the platform. This is where all the CVARs and P50s and things inside the platform come from, is running a few thousand Monte Carlo simulations. I forget. Dr. Data will know exactly how many, or once knew exactly how many simulations run inside the software. I don't, but it's a couple thousand. It's enough to be pretty close.
It's between 1 and 3.
Yeah, 1 in 3,000.
Yeah.
Okay. Not between 1 and 3 trials, like 2.
No, between 1 and 3,000. But I've asked him before, like, what's the minimum? And he said like 300.
Yeah, so let's go forward one, and we'll see sort of how the error scales with the number of trials. That's my next slide, which is the rate of conversions. Right, we're doing this simulating, approximating. Some things are not going to be exactly precise, right? We got a very good approximation to pi, better than 22/7, but it's not the exact value of pi. It took a few thousand darts. Right, the estimated probability is a random variable that will depend on the random simulations. Each simulation is going to have accuracy about 1 over square root of n. So, right, if n is, I'll say 400, then that's 20, right? Then square root of 400 is 20. That means you're getting about 5% error, right? If you do a 400 trials, you get about 5% error. If you do, 3,200 trials, you'll get about an eighth of a second. You'll get about like a 2% error, which starts to be not that bad, right? At least as far as the idea of like, if you're going to make a decision, right? If you're going to decide, does this trade look good or not, then a fraction of a percent off for a retail trader is just not going to make the difference, right? You can only trade discrete contracts. You can only yes or no trade them. There's a cutoff to the decision-making process that means that at some point you're accurate enough to not worry about it, right? And that all of the variations are based on 1 over square root of the step size and the number of trials. So you just want to cut it up into, and 3,000 seems like a reasonable, compromise. Because every time you quadruple, in order to double your accuracy, you need to quadruple your number of trials. So at some point you want to stop doing that because you're not getting as much out of it anymore.
Well, also because on a retail level, we're not talking about massive size positions or that much risk. So it generally just a close enough approximation is plenty good.
Exactly. Well, especially because right at the end of the day, you have to boil down to yes or no, I'm making the trade or not making the trade, which means that there's some amount of, once you're precise enough, you don't need to be, unless you're right at the cusp, unless you're really torn about whether or not this looks good to you or not, in which case you can be doubtful. But you'll probably fall pretty solidly on one side or the other, and then you know that you're within the error bounds, right? Everything's a little
what people are looking for is confirmation and validation more than they're looking for like a trade idea.
Right, or risk, right, or risk error, right? They've got a trade idea, but they want to know like what is the actual downside of this?
Yeah.
Well, to get to a good conditional value risk approximation, we ran 3,000 simulations. We looked at the 5% worst of them, and here's how those did. Right, that's a pretty good idea for how bad things might go. Exactly. All right, yeah, let's go takeaways.
Takeaways.
Reaching exact probabilities based on price paths is computationally infeasible because of the rate of combinatorial growth, especially if the model is anything other than a traditional Black-Scholes, anything with a changing volatility or jump possibility or anything like that, and the actual ability to do the computations goes out the window. Monte Carlo methods were originally developed to make sure that nuclear fission would be successful. And they use the sort of very counterintuitive idea that you can insert a little bit of randomness into a problem and get very good approximations to deterministic questions that were previously impossible. But it's important to keep in mind that they can only really be as good as the model that was used in the simulation and the number of trials that you're doing. So as a retail trader, it's important to remain attentive and active because, right, we don't exactly believe the Black-Scholes model is exactly true. So these things are all going to be slightly discrepant from reality. So but if you're staying active and attentive and making sure to monitor your positions, this difference won't make very much difference because it'll all be very small, at least over a short time spans. But don't put all your faith into a theoretical computation and then walk away for a year. That's probably not a good choice. You want to stay small, stay often, keep yourself a little diversified, just in case there's some flaws in the model, some flaws in the computation. You have to be a little bit prepared for some error bounds.
Yeah, the way we built it in the platform is really for the purposes of validation.
Yeah.
Which is how I think people should use a lot of this technology.
Sure.
Is for validation.
Validation and error estimating, right?
Yeah,
or risk
error
estimating,
estimating,
right? Giving yourself a good concept of what a downside might look like.
Exactly.
Right? Because if you ran 3,000 simulations, you probably didn't miss how things could go wrong. Out of 3,000 tries, a few of them gave you a very bad result, and so you can see what those look like, even if you don't actually compute what the literal worst possible result is.
Jacob, I have a question for you on this too. Why aren't you at Burning Man?
I sprained my shoulder at the beginning of the summer, and I really didn't feel like going and babying it. I was worried I was going to have to hurt it. And also, my partner is finally graduating, but her due date's in 3 days, so we didn't want to have to be preparing for that as well.
That's love, Jacob. That is love. That is love. Although you did miss that. It was a little bit of a sandstorm that I saw, I thought.
Sandstorm, lightning storm, rain, mud.
But that's the whole.
What happens when Jacob doesn't show up?
No.
That's not true.
When he's been there, they've had plenty of acts of God.
Floods, famine, locusts.
I think that's the whole thing with Burning Man.
We always have plenty of food. Everyone's very well supplied. But we did have floods. We did have lightning. We've had snow. We've had all the weather.
Very nice. Yeah. Good job out of you, Jacob. Son, you ready to take a quick 90-second break?
Ready.
We're going to take a quick 90-second break. You know what we got coming up next, Jacob? Fan favorite Nick Batista. That's right. Johnny trades next. We'll be back in 90 seconds. Let's take the
Young hero.
Thank you.
You can get up to $4,000 when you open and fund a new account with TastyTrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new TastyTrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? TastyTrade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
TastyTrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
If you missed the live show, here's our cherry on top weekly recap.
I made smash burgers, and well, I can tell you what I do. That's a game changer. I took it from TikTok. You freeze a stick of butter, and then you put it through that scraper. You know, one of those things, a grater.
A grater, cheese grater.
Yeah, cheese grater. And then you put a little butter on the, mix it in with the, when you smash them. It's great.
In with Tony. You mix it in.
This is a second language. I mean, you take you freeze the butter. It's like all that, and you take the thing and you freeze the butter.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got the need for speed? No problem. At TastyTrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. TastyTrade, make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on TastyTrade. Genius loves company.
My friend remember that music can mean only one thing. That's right, fan favorite and my co-host. That's right, Nick Batista in the house. Yeah. The Bat Boys bringing it strong.
You know, we haven't done Johnny Trade since the first week in August.
It's a lot of Batista. It's a lot of Batista energy. It's a lot of.
And we're going to your phone calls immediately following this. 855-238-2789 or 855-BE-TASTY. Phone lines are open right now. Call in. We only have about 15, 20 minutes, but get to as many calls as we can.
A lot of Batista energy in the house.
How was Mexico?
It's strong, isn't it?
That's a little.
It's strong, isn't it?
A little stinky.
Omaha.
Overwhelming. Mexico was great.
Yeah.
Loved it. Absolutely loved it. And
first non-beach vacation in Mexico I've ever had. It was amazing.
Yeah, probably me too. Well, second. But it's very different when you go.
You always got to do things twice as much as me.
You know,
unbelievable.
Mexico, we both for pretty much.
It's different when you do the pinky up.
We've always been going to resort towns.
Yeah.
And for 2 years in a row now, I've gone to Mexico City and Guadalajara, and it's a completely different world. The best food in the world.
Mm-hmm.
Unbelievable. Now, all we did was eat, which is not a great thing.
That's, that's typical for you, I feel like. What else do you do? You don't do boats, you don't do water.
You play a little golf.
You can't swim. Yeah, you play a little golf and
It wasn't, you know what? Truthfully, it wasn't really like cool weather.
No, it was not. It was 70s.
In the summer, it rains in Mexico.
Okay.
It's the rainy season, what they
it's
call
a rainy
it,
season.
Thomas.
So every day it rains. But every day when we were out, it was sunny in the morning and rainy in the afternoon. But it was great. It was great. Good. And the events were great. So
well, we're happy to have you back. It's just
don't
not
bullshit.
It's not the same.
You don't lie on this network.
I know. I'm just kidding.
Bullshit.
What do you got for us, son? Give us something.
I got a couple trade ideas. First time in a while for Johnny
look at
Trades.
You're just like me. I traded IBIT yesterday.
Well, you followed me.
That is true. You mentioned it on the show, and then I did it.
I bring you good ideas.
What do you want to do? IBIT, ETHA, Intel. What's going on?
I know. I have two that you're probably gonna poo-poo, and then I gave you one that you'll be like, oh, Intel, yay.
Intel.
I'll make another 20 cents there. Perfect.
Oh yeah, great. Congratulations.
Which calls did you sell in Nvidia? I said you're gonna go beyond 200. You go
200s.
I said you're gonna go 160, 210, and you're gonna do I said 160, 200. You're gonna do a 1x2.
I did
for $1.67.
Oh, which
or
one?
I think it was $1.80.
Which one?
I thought you were gonna do 1x2 puts to calls. So you're gonna do 2 calls to every 1 put. You're gonna do the 160 puts, the 200 calls, 20 points out of the money on either side.
I'm not selling any puts because I think the stock could be down 50.
50
or 10.
Okay. All right.
I really think I'm
playing inside down too, which makes
you think it's going down 50.
No,
you think you would do
I think I think it's going to be down 10.
Okay.
And I think Nvidia is just one of these stocks where I'm sure they're going to
have great numbers.
They're going to have unbelievable numbers.
Unbelievable. It's already baked in.
It's already baked in.
Right.
The question is, how much higher can this stock go? Is it going to be a $5 trillion company?
That's what I was saying. I was like, do you play for this thing to be $4.5 trillion after the announcement, or
No
or
chance.
4? I mean, that's the move. Is
No
$250 billion or a little bit more than that in either direction is 10 points, 5%.
Yeah.
So it's like
no chance. You got to just. It is what it is. You got to just.
Which I hate that I agree with you. Which is, I might have to.
I know.
I might have to reverse my position. All right, I got a couple trade ideas. You ready?
SPX position, markets moved against you, but you did an excellent job rolling up the put side, basically a scratch.
Basically, a tiny little winner. But I rolled up 4 levels. Okay.
You can't
have to
take
congratulate
a
him on the 10 cents
as a profit and say you had a
It
winner.
is when
What is
market,
it, CNBC? Seriously, you can't do this. You're on Tasty Live.
Yeah.
It is when the
took
market
80 cents
moves.
yesterday.
I said you did an excellent job defending the trade, rolling up the puts. I think you made a nickel. You can't do that to me.
Well, but it's the size. He does it in such big size.
To turn a loser into a winner, it's pretty good.
Well, look what I did with you all these years.
Go ahead, dude. What do you
All
got?
right, I got 3 trades for you.
He even got a chuckle out of the young guy.
That was good. That was good.
pretty good. The timing was
good.
great. It's all in the
Yeah.
delivery.
We always knew the bats were like the real stars of the show.
Uh-huh.
It was never about you.
Nobody you ever
You're
trained
just-
became somebody in this organization.
Yeah.
What? Nobody ever what?
Nobody you ever trained became somebody in this organization.
That's true.
What about my offspring?
She's on the other side of the glass over
Yeah.
there. Scott had to take her under his wing to make her into the woman that she is
that was an appointment. You
Right,
know,
I got
like,
my
she was
son. I
appointed
got
king.
Katie.
Yeah.
Come on.
Yeah.
I got
Okay.
Pete.
I bid call diagonal spread.
Yeah.
Unbelievable.
No, I'm super bearish in Bitcoin.
In
I think
Bitcoin.
I think it's going to 80.
80,000.
80,000.
When did you become this like mega? You know, sometimes you say
I'm not
like
making
opinions
anything.
don't matter.
Did you say MAGA?
No, that's like.
Oh, sorry,
it's
mega,
like-
mega. You said
Yeah,
mega.
like
sorry.
everything. It's going down 50%, 25%.
No. I just want to buy some Bitcoin. I like to buy it like mid 70s.
Yeah. The last time you did this, by the way, the Nasdaq was like what? It's like 8,000, and you rode that short for about 2,000 points with Case. Was the last time you?
Oh, and then she said, "I have to go be a bean counter."
Yeah,
That's
we were
right.
thinking
That's
that
right.
everything would go down 50%.
You guys just remember the losers. You don't remember all the winners.
Okay. All right. We got.
No. I don't. I'm long Bitcoin, but I wanted to go lower to buy some more. But I want it in the 70s. I want it in the 50s, but I'll take 70s. I'm not buying it 110.
All right. Well, I'm doing a call diagonal spread. I'm buying the 65 in November, selling the 70 in the September expiration. Volatility very, very low here. If you get a big move higher, you probably get a pop in volatility, which will help this position as well. It's a
problem
cheapie,
is-
$3 debit.
The problem
20
is,
deltas.
if you think that Nvidia is fully priced, so are digital assets, in my opinion.
Well, Bitcoin's dropped 10% in the last 2 weeks.
Yeah, dropped $8,000.
True.
It's not quite 10%,
It's
but
dropped
still.
like 12%.
I mean, I think a reasonable sell-off in Bitcoin would be at least a minimum of 20%.
All right.
Okay. I'm not bearish, and I just want to buy it lower.
Oh, well, you poo-pooed my trade. It's okay.
Yeah, I poo-pooed a little bit.
Yeah, it's all right. You're the boss, big man. All right. Next trade. Ethe, you got a position?
Yeah.
100% implied volatility, or IV rank of 100%.
Yeah, it's a new product, so I don't think it's that accurate, but yes, I agree with
Yes, volatility is very.
you. We've been short strangles in there since the stock was in the 20s. You know, I've been adjusting and trading them.
Yeah.
Haven't made a damn dime in this stock, but
Now you might because volatility is expanding here. So
I have the 32.38 strangle on.
Okay, so you're right. Yeah, so you're right where I am. I'm looking. I'm doing an iron condor here because it's basically cash secured. You get a little bit of leverage, but $2,000 ish for a naked position, a little bit too.
It's heavy capital requirement here.
Heavy capital.
Which I don't understand because it shouldn't be that high.
Yeah, Bitcoin's or the IBIT is kind of the same way. IBIT uses about $3,000 in buying.
No, I know.
power of that.
I'm saying that's set by the clearing firms. I don't like that call.
Yeah, you would think that at some point it'll get.
I agree.
A little bit lesser, but it does have really high. Both have high implied volatility. IBIT not as high, so maybe that's a way for them to reduce the margin requirement there. But I'm doing the 30-45 strangle, and then I'm buying the wings. I'm buying a $10 wing on the downside, the 20 put on the upside. The 54 strike is the highest strike, so I just bought that one. So I'm nine points on the upside, 10 on the downside here. Delta neutral. You have a little bit of extra room to the upside because there's a ton of call skew here. So just playing for playing the volatility here. I did it at $2.33 October.
Yeah.
Rocktober.
I have this position on already.
Cool. Well, this isn't Tom Trades. This is Johnny Trades.
Okay.
So we're putting on trades for the Johnnies.
Okay.
Okay.
Saddam, you can close your SPX spread right now for a 15-cent profit if you'd like to.
Oh, you're so funny.
That's lunch money, baby.
Oof.
Go
ahead.
855-238-2789 or 855-BE-TASTY. I still got 2 or 3 lines open. We'd love to hear from you. Phone lines open
He's
immediately
not done
following
yet.
this
He's
next
not
trade.
done yet.
I got one more trade.
I said immediately following this next trade. I'm pumping it so that the people can call. You see, this is called a call to action, Sosnoff. So you give them a little bit of time. Otherwise,
What do you want?
wait
What
for
are you
the end
doing
of this
here?
trade.
What are you doing here? You're selling a put and a call ratio spread.
I'm doing a naked put with a call ratio spread. The call ratio you do for basically nothing. It's a penny or two debit credit depending on where
Listen,
you
he's
get.
only been doing this for 40 years. This is a complex trade here.
You're selling the 23s?
Multiple legs.
23 put, buying the 25 call, selling 2 of the 28 calls. You do it at a $97 credit. Synthetically, a strangle, you got about your risk to the upside is past like 31 to the downside, or 32-ish to the downside is 22. You can wheel this. You can.
Your first fill.
Thank you. Thank you.
92 cents.
One of 3. That's a pass for a Batista.
92.
Thank you.
Wow, I cannot believe you made that trade.
No, it's.
No, I love the trade. It's just a complex trade for me. You had to do
know.
all 3. You had to change the
He's refreshed. He had some good food. He had some golf, some time off. He's
You
refreshed.
haven't been watching the show. He's asleep over there.
Yeah, so the brain is, you're refreshed. It's good.
Totally refreshed.
It's good to see.
And yeah, I didn't have any time off, but it's still good. I have 1 day off.
Oh, you didn't have time off?
You didn't have
Wait.
time off.
Oh,
You played golf 2 days in a row.
Yeah,
How
I played
can you say
9
you don't have-
holes 1 day.
You don't have time off.
The other
That
day
means
was
you
a
had time
Saturday.
off.
It was
you
a
played in
Saturday.
the middle of the day. You had time
It was
off.
a Saturday.
Okay.
Oh my God.
Hey, make sure you put those days off and work.
You were in bed by 6, 7 o'clock at night every night. What do you mean you didn't have a day off? You didn't do a darn thing. 855-238-2789 or 855-TASTY.
I'm hurt by that.
Go ahead.
So that's it for me. It's been fun.
You done? That's
Yeah,
it?
yeah, that's it. That's it.
Beautiful, beautiful.
Johnny.
All right, son. Good job. Good job out of you. We're going to go to Sosnoff, another fan favorite. That's right, the father of Q, who was on the show yesterday. Mark the Trainer, Cocoa Beach. What's up?
Tom, Tony, Mickey. Tom, you're never going to, you go away, thank God you're back.
Thank God is right. Those guys tried to
my God.
They tried to ruin the network, didn't they?
Well, I'm watching Tasty Live yesterday, right?
Yeah.
And I'm expecting Scott to come in. You're away. He's going to start hammering you and Tony. Okay? He's going to hammer you. You're away. Next thing I know, I wake up in the hospital with all these doctors looking at me. And they go, "What are you doing?" I said, "Well, I was watching Tasty Live, and I expected Scott to come on, and I just blacked out, had a heart attack or something." What are you guys thinking?
Yeah.
Nicky Bat, that is my only begotten son.
It is your only begotten son. He did a great job, by the way. Got good feedback on him, too. You should be very proud. I know you are.
I got to say,
Thank
you
God.
guys handled it so well.
Hey, thank God the apple fell way away from the tree.
Uphill both ways in the snow. Hey, Tony,
yes, sir.
I got to give you some ammunition. When they were talking about iconic movies last week, being a New Yorker, the original Death Wish, 1974 with
Charles Bronson.
That's right. Iconic. Yeah, it's the neighborhood Quentin grew up in. Exact same one.
I love that.
And,
Hard Times is another one with Charles Bronson. That was a great one.
It was a series. It was
and
like
the other
5.
one.
Hard Times? Hold on one second. I got the correct
Charles
sound.
Bronson, the whole,
No, was it Hard Times when he was a boxer? Hard Times.
Oh, that movie.
Well, you don't remember it. You don't.
I wasn't a big Charles Bronson.
Oh my God, you're such a snowflake. Yeah, Hard Times. Charles Bronson. Yeah. Rotten Tomato, 89.
Movie,
How can you not like it?
I don't remember it.
Oh my God, it was a great movie.
And the other movie.
1975, South.
What?
A Bronx Tale.
Yeah,
Sure.
I love a Bronx Tale. Classic.
Okay,
now you can't leave.
I actually have a trading question. I own a bunch of Nvidia, and I'm never going to sell it. And I've been writing covered calls. It's been a great revenue generator for me.
Mm-hmm.
21 days is in 2 days, but earnings coming up.
Mm-hmm.
Should I roll now or wait till after earnings?
I mean, obviously, it's subjective, right? You've been long Nvidia; it's been working out for you. You've been selling covered calls against it; it's been working out for you, collecting, lowering your basis. Classic type of trade in a bull stock, which is exactly what you've had. If you roll from September to October, you'll either be able to roll to the same strike for a lot more credit, or you'll be able to roll further out of the money for around the same credit that you would if you stay in September. So you can go further on a higher probability of success. I personally, especially with your assumption, roll from September to October. My only thought on the whole trade would be, do I roll to the same strike for a higher credit, being less bullish, or do I roll to a further out of the money for more delta risk and less credit? So I would definitely be rolling. It would just be between what strikes would I be rolling to, Tom?
I'm 100%, Mark, on board with Tony. In your position, because your assumption is you're never selling, that kind of thing, you roll to October and just close your eyes. You hope the stock goes up. Who cares?
Yep.
All right, great. Thank you, guys. You're amazing.
Take care.
Be well. Bye.
Thanks, Mark. Bye.
You got it. Sadnov, even the S&P's up $6.75, catching a little bit of a bid here. NASDAQ up 9, very slightly. I mean, this is an unchanged market in my mind. Russell up 5 and change. Dow up 72. Bonds can't get out of their own way, although they are 6 or 7 ticks off of their lows, down 16 ticks to 113.23. Bitcoin catching a bid here, Saz. Back up over, just at 113. That's 113,000 after trading down to 111. There's been some volatility in Bitcoin. Bitcoin up 1,000 on the futures right now. Ethereum up 28. You can see it's a lot stronger relative over the last couple of days than Bitcoin has been, although maybe not today. Oil up 48 cents after being two-sided action last 2 days. It's back up 48 cents.
Wasn't it down big yesterday?
It was down big yesterday. It was up big the day before. We're talking about gold. We're talking about oil. Yes, you're 100% correct. Silver down 24 cents. It's been doing its own thing, decoupling from gold. But really going nowhere. Nat gas, after catching a little bit of a bid, up to 290 is 285 and change, but it's still up 2.5%. So we got to take a quick break here so we can get to the girls who are at the SIBO. You haven't been there in a long time. I went there just a couple weeks ago. I had a great time. Bunch of old time, about a half a dozen.
Liar.
I went there. I went there with the interns.
No, I know you went.
Oh, yeah, I had a great time.
I was saying you're lying about having a great time.
Oh, all the guys clapped in the pit for me. It was amazing. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny from the SIBO. Let me find these messages.
All the guys. Oh, yeah.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on TastyTrade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
TastyTrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm going to be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right.
I know it's on there. I know it's on there.
It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5 just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC's power?
3.7. I gotta be real. 2.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce.
I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say.
It's an elevated. It's an elevated.
It's an elevated nothing.
It's a chicken. It's actually pretty good.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at TastyLive.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure. Yeah. Like I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh, yeah. It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call 2 real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. I'm Hold on.
She's wrong, I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. Same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Hello, everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews, and we are second favorite day of the week, first favorite day of the week, Wednesday, live from the SPX pit.
Yes, live from the SPX pit. I can see SPOOs are up 870. Well, ES is up 875. SPOOs are up 10.
Woo!
Well, no. I get thrown off up there. SPX is up 1150. SPOOs are up 950.
Why do they put in the SPX pit?
Again.
We need to change the order. Who do I talk to about this? Who do I talk about this? Matthew, can we get SPX above
Above the SPOOs? Right. And then the VIX is up there too. VIX is trading current value 1486.
1486. We're in the 14 handle.
And it's the end of August. And I thought there might be some action in August. And we really haven't had too much. We had, a couple days down 70, but not too much August action.
My buddy Chris Vecchio said a while ago that August is notoriously a kind of a,
And it
hasn't been. But notorious doesn't mean 100%. I mean, he's forgiven.
We had one shining moment where VIX got up to
18?
1789.
I think did we graze the 18?
No, I think 1789 was the high. I don't know. But it was busier this morning here. We had a little action. It
was louder than yesterday, right? So we come in, you can hear a little bit louder. But as soon as we start the show, the hush comes over because I'm sure they're all paying attention.
We're all watching the Liz and Jenny Show, trying to hear what our latest SPX study has to say. Because we do have a new SPX study today made by the amazing Jacob Pearlman. He's back. He's back, folks. He's back.
He is back with a vengeance. We do love our Jacob Pearlman. He is probably, I think I can say this because it's only you and me in the room. I think he's the smartest person I know.
He is definitely, he's definitely the smartest. It goes Jacob Pearlman, then TP. That would be...
Ooh, TP, those are fighting words to TP. I forgot about it.
Right? So Jacob Pearlman, as far as the smartest people we know, Jacob Pearlman, TP, do you have a third?
If you had to phone a friend. Yeah. I brought him down here yesterday. Alex the Kid.
Alex the Kid.
Yeah,
He's in the top.
I mean, I'm not going to lie to you. He might be, they're all neck and neck. It's anybody's race at this point.
Yeah. But we do have a busy show. What else do we have going on besides Jacob's study, Liz?
So we do have What's Your Assumption? We'll see if we can get to it. But today, everyone's on pins and needles for the one, the only Nvidia earnings.
Yes, Nvidia earnings are coming out today. I jumped the gun and threw on a trade yesterday.
You did?
I did the trade. We were looking. Well, I don't know why.
I don't think we looked at anything yesterday.
No, we did. We did.
In Nvidia?
I think so.
Did you dream it?
Maybe.
We don't have an Nvidia trade on.
No, I know, but we someone, I don't know. I don't know why. I don't know how, but I put on a trade in Nvidia yesterday a day early. a day early.
So what do you have? Let's jump in the platform if we can. We'll take a look at Nvidia because it is all hands on deck. And I know Bob on fire. I know this is going to be number one on your list, and we appreciate it. We will be looking at that later. But here's Nvidia trading 181 down on the day. NASDAQ is up. Everything is up, and Nvidia is down. Only 16 cents.
Well,
but it's
15 cents. When I was like, oh, can't wait to see this. Can't wait to see how much it's down.
Well,
15 cents.
I'm only saying that in such a dramatic fashion because the Wall Street Journal reports being like, hey, Nvidia is dragging down.
Dragging down the market. Down 17 cents. 0.1%. All right, let's take a look at... We can take a look at the chart. I think the expected move is pretty small.
Is small? Let's see what the expect. Let's go backwards. I'm going to go to the table page first.
So it's $181. The expected move in Nvidia is $10.
Yeah, so 5%. That's nothing to shake a stick at.
I guess it's not bad.
I'm going to get a stick so that we can make... I'm shaking a stick at that.
Nothing to... You got a tight frame, Liz. You got to get your hand a little closer.
Shake a stick at that.
All right, anyway. $10 expected move. Everyone's wondering, like, what's happening with Nvidia? What are people doing on earnings?
Okay, so I'm in the chart. So we're, in the words of Joey Tribbiani, so I'm in my table page. If you're looking at this, the expected move here is this brown bar right there. Now, somebody could say selling premium.
Hold on. You got very quiet for a minute.
You're getting quiet.
You got very quiet for a minute. Either you got quiet or they got loud, but I couldn't hear you.
I think they got loud. Did you just block it out? I was like, so you can get a lot for your expected move here. So if you go to the 165, just outside the expected move, if you're looking for $1 and $1, look how far you get. So you can go 165, 197.50 and get $2.04. I'm not going to press that button because I don't want this, but that's pretty far.
That's pretty far. I heard earlier today that Tom's just going to sell calls.
Yeah, so if he's selling calls, we're selling puts because I like to fade Tom Sosnoff.
I did. Yeah, again, you have the stock. What are you going to do against it?
Downside ratio spread.
Downside ratio spread.
Yep. So I have the stock. I'm going to, and I might pay a little bit for it, but I'm probably going to buy one.
For anyone that has a bullish position already or has something that they want to protect, this is a way to not really protect, but if it goes down, you can cover your loss of your stock on to the downside with a ratio spread, as long as it doesn't blow through the ratio spread. But this is a very common strategy for us on earnings, and something that we have the stock.
If I have the stock, I will do this. Now, and so. Nothing is a trade recommendation, but this is what my plan is. And you'll notice I would never put this in if I didn't have the stock because I'm paying 48 cents for it.
Right, but then if the stock goes down, from 177 to 170, you could make $700 on that ratio spread, which would offset
it will recoup
loss,
some of the losses if the stock goes down.
If the stock goes down. But if it goes beyond the break even there of like 164, 163 and a half, then you could.
And I'd be long 200 shares.
Yeah, and then you go from long 100 shares to 200 shares.
But if you like it at 181, you love it at 162.
Sometimes with these, if I'm adding on a downside ratio spread to offset like the risk of stock, I will buy an option and create a broke wing butterfly.
Oh,
just
sure.
So if I don't want to get long double.
So I just brought it up by one. So I brought it from the 170 to the 172.5. Now I've got 71 cents in credit, and I can go down and purchase the 62.5. So it doesn't change that much.
If Nvidia has a massive move down, this has defined risk. But if it goes down a little bit to its expected move, this will pick up and make some money.
Yes.
This will make some money if it goes down its expected move.
All right.
But maybe not until Friday.
Not until Friday.
Only Wednesday.
Today's Wednesday. So what do you have in Nvidia? Are you
No,
bearish,
the only reason
you bullish, bearish, or neutral? And what did you do so early?
I only did it because I think we had a question on collars. This was the example of I think it was one of our examples of collars versus call spreads.
Yes,
collars versus call spreads. So all I did was buy 100 shares of stock, wrap a collar around it, and my thought was, and I did it out in September. My collar out in September. And my thought was, Nvidia, if it goes down on earnings, then I'm going to buy back my short call. Sell up my long put, then leave it for it to run up in the future.
Then to run up. So all you can lose then would be its expected move or wherever your collar is.
Well, it was close. It was close. It was my long put's the 177.5.
Okay.
So
what's your short
I
call?
have very little risk to the. If you go to September, my long put's the 177 and a
You have
half.
about $4 in risk to the downside, and then 170.
And then my short call is. Let me look.
Yeah.
To see how much profit potential I have versus risk. Because if it's trading 181.69 and my long put's 177 and a half, very little risk to the downside.
Mm-hmm.
Very little risk to the
But
downside.
$4 in risk to the downside.
And my
which isn't bad.
Short call is the 190.
Short call's a 190. Well, you have $5 in risk to the downside because you're paying 125 for this. I mean, I'm sure you probably did it for even yesterday.
Well, I don't put it on. Maybe I paid maybe very little for it.
So here you're paying $1 for it. So your risk is $300, $400 to the downside.
Not bad at all.
No.
Not bad. But again, my plan was if it goes up, great, I make money on this trade. If it goes down, great, I'll take up my short call and then hope for
it to reverse.
But if it goes down,
so what do you want to do? What do you want to do in our account? Now it's only got a 20 rank. If we were doing it in our account, both of us have bullish trades on.
Yeah, again, you talked about how that's like a call spread. It's like a call spread. It's like I bought that 177 and a half, 190 call spread and paid $594 for it.
Yep, because that's what you have to lose. So that's true. You have, because you're paying for it, you have about $500 to lose.
And I guess in the same scenario, if it goes down, then I can buy back my 190 call, leave the 177 and a half, and just leave it.
You could, yeah. They're synthetic. They're all synthetic, the same thing. Now, we could do a call spread if you wanted to do it there, because that's something that's, let's replicate your collar.
$600 is a lot to risk on an earnings trade in Nvidia. Let's narrow it for us. Like for, this account is.
And I'm actually going to go in. It doesn't matter if you're doing a call spread. It doesn't matter what cycle you're in. So I'll buy that.
I wanted more time. So that if it goes down, you can buy back the short, and then it can bounce up. I want a little more time.
I just put it in the 23-day, and I actually am collecting a little bit here. So I'm paying $6.35 in extrinsic value, just assess the out-of-the-money options, and I'm collecting $7.20. So we're getting about 90 cents in extrinsic value here.
But I feel like for us, we really need to tighten the reins because we don't want to lose $400 on an earnings trade either. Just make it really tight. Do like wrap around the at-the-money, 180, 182. Just make it really tight.
I just was trying to get extrinsic value. Here, we're still getting extrinsic value.
Make it really tight and risk very little because, again, if it drops down, then we'll buy back the short call, and then we have the long call for 23 days.
So we're paying $7.45 in extrinsic value, and we're selling $8.35 in extrinsic value. I like this. It's pretty wrapped around the at-the-monies. Our max profit is 120. Our max loss is 130. I'm okay with it.
But if it goes down, it's we're risking very, very, very little.
Yeah, ship it. We're in an Nvidia.
And
bullish in Nvidia.
We both have, you have more risk on than I do. This has very little risk, but but I like the idea of having something on because, like you said, you have a bullish trade on.
Yeah.
But I considered, I know Nvidia is so high, but who knows? Who knows? Is it going to go down? Is it going to follow Palantir? Did Palantir start going down on earnings? Did you see? And I'm only bringing that up because that's one of those that had a big PLTR.
Here,
it had a
I'll
big move. One of those that was, way up, crazy run, but then started dropping and continued to fall.
Yeah, but it kind of leveled off. So take a look at this. PLTR is right where it was. I think the earnings was an up move, wasn't it? I think this was the earnings move.
You think that was the earnings? And then what started? What?
I don't know, to be honest with you. I
think you were out of town.
I know I have PLTR, but I do have rip in. Go right now. I can't tell you what happened here.
I think you were moving JD in.
I probably was.
Yeah, but again.
But it's right back to where it was August 4th. It's Palantir just erased the month of August. That's all it did.
Yeah, that's true.
August, gone.
Now, in Palantir, since we're on that and looking at it.
So this also has a 20 rank. Nvidia has a 20 rank, but Palantir does not have earnings on the horizon.
Would we want to just sell put spread? You could sell the 145, 140 for $1 in Palantir.
Hey, I love it.
And I'm just in the 23-day. I know we could be moving out further in time.
I'm shipping it.
Yeah, ship it. We're spending. We've been. And
no, I will tell you,
Nvidia
is going to move the market in one direction or another because it is so highly percentage-wise in all the indexes.
Right. Now, would you ever, if you have a bullish portfolio and you have a long position in Nvidia, would you ever put on like a downside triple Q's diagonal?
Already in.
Oh. Let's pull that up too. Let's take a look. Maybe we'll throw something like that on.
And we've been doing that in here, so it's interesting because every hedge I put on, I wind up losing on. So if my positions are too big, and this is why I love having TP on, because he was like, hedge is a 4-letter word. If my positions are too big for me, I've got two choices. I can put on something that will make money if the market goes down, hence the triple Q bearish diagonal, or I can take off some of my position. It's the same thing.
You can do either.
Take some of my profits, because both of those are two versions of the same coin.
Now, are you pushing everything out on the follow page?
I don't think we got filled on anything yet.
Oh, really?
Oh, no, we did. We got filled on both.
Okay, so Nvidia.
Filled and filled.
That's our baby earnings trade. We only risked $133.
PLTR, our baby put spread. We only risked $400.
$400. We collected
yeah,
$1.
but we've got so much more room.
Yeah.
So Nvidia, I'm glad it was smaller because there's zero room to be wrong. We need a uptick in Nvidia. Now, I will tell you, if Nvidia, where is it right now, moves, you're not going to get a full profit today. Where is Nvidia?
No, because it's further out in time. But the thought process of if it goes down on earnings and we could buy back that short call for very little, then we've got that long option that we paid $1 something for, and then maybe we can get some kind of skyrocketing move.
And I was thinking, if I'm looking at this, a lot of times if I have a very tight credit spread on, if I look at it at 2 o'clock, no, we don't do that because we only trade in this account. But I might be like, if it was up, I might take it off.
Take it off, yeah.
Yeah. Because you know you're not going to make that much. The ones I let ride through are the ones where I was like, big money, no whammies.
Now, we could have sold a put spread in Nvidia like we did in Palantir where we collected $1 and a $5 wide, but I didn't want $400 in risk.
Correct. Even though both of us are bullish, we want to kind of be...
And I don't... Yeah, right. And again, I don't know what I don't know what it's going to do on earnings. It could go down, and I won't be surprised.
No, I won't be surprised either.
Yeah.
Like at all.
Right.
All right, let's assess really quickly the situation. I want to take a look at CoreWeave because this was our buffer trade we put on yesterday.
We put it on yesterday, but then after we put it on, CoreWeave fell a little bit.
I just went into, you can see the buffer trade. I'm sorry, I'll stay in my frame, Matthew. If you can see the buffer trade, it was trading 192 at the time. So it's up a little bit.
92, just 92.
Oh, sorry, yeah.
Yeah,
The one long option we have was at 92.5. So we know it was trading right there. You can tell from a buffer trade, very similar to a zebra, where your long put starts is where it was trading.
Where it was trading. So CoreWeave has had a little run. It's up $4 today. This trade is up a little bit, but we're going for big money, no whammies. We're leaving this.
I want to leave it.
Yeah.
Is there any adjustments we can do to this? No, right?
Nah, just leave it.
Okay.
I mean, later, if it's making more, we could look at a buffer trade adjustment, and I'm sure we can come up with one. I'm sure we can come up with it. I did want to bring this to everyone's attention.
To someone's. Meaning me?
If you go to the very top of our positions.
Okay.
And you open up the natural gas that expired.
Okay.
I just want to show people that nothing happened to us. Like, they were all in the money, one exercised, one assigned. It didn't matter. We weren't getting a phone call. We weren't getting a tank of natural gas.
So we wouldn't get a tank of natural gas because they were both in the money. You still don't get a tank of natural gas even if one is out of the money.
Yeah, you don't.
Because I've been here before, and I know it's kind of a confusing thing because I think it was confusing for some people on our trade desk at one point.
Right, like what's the settlement on natural
everybody
gas?
kept giving me different things, and I rolled the dice and said, bring me the tanker. I want to see what happens.
Hey, you know what? My in-laws' place, they used to live on they literally had one of those, and that's how my grandparents' house was too. They had the tank in their yard.
Oh yeah, that's how it is at the island.
Oh, is that how it is?
Yes.
Where you have that giant tank in your yard, and then a truck comes and fills up the tank with natural gas.
Yes.
Yeah, and then you live on that, and when it starts running low, you're like, oh, my heater won't go on.
Yeah.
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 So Liz would have happily
I would have been
taken.
like, ship it up.
Send that to the island.
Ship it up north. Yeah. So that is, I'm glad you brought that up. This stays here for a little bit though too, until it decides to roll off our.
I just have a question about the island. For those of you who don't know, Liz's family has a place on an island that you can only get to on a ferry.
Ferryboat,
so
Madeline
does the
Island.
truck, does the natural gas tanker go on the ferry boat?
I've never seen it, and I don't want to get on with it.
Because that one,
I'll be like, I'll take the next one.
I wouldn't get on that
I'll take the
ferry
next
boat.
one. Do you know what's crazy too? I mean, it's very, very, very remote, right? So, and they also have we have to call, and I don't think this is his real name, but every time there's like a septic tank too, so we have to call septic dick. Is what they call to remove the waste.
And he comes on the ferry boat.
And yes, I don't want to get on with him either.
I'm not getting on that ferry boat. Could you imagine the septic tank and the natural gas tank
together
all on the ferry boat together?
I would for sure take 3 boats later. Yes.
Oh my gosh.
Yeah.
So the joys of living on a small island in Lake Superior.
Yeah. Yeah.
Yeah.
These are, I mean, I wish I could make this up, but we're not. Okay, so, but we do have a second natural gas position that is up $60. It's only up 20%.
Put in the 50% GTC.
Yeah, I will.
Although natural gas has been bouncing around. It's been going up, coming back down. It's been bouncing around, and people have been able to get in and out of trades. Now we're seeing, if you look at the chart.
I will, give me 2 seconds.
We're
The
seeing
chart,
a slight jump today in natural gas.
so this chart is also, I need to just go back to the position
Oh,
page.
yeah.
These are different. Natural gas is different.
Do dollar sign NG. $/ You get $
slash NG.
No.
Oh, sorry.
$/ / NG. And then here we can see the chart of just all
Natural
of NG.
gas. So that doesn't look nearly as good. Nearly as good as when you just type in NG.
Well, you look at this chart and it makes me want to take that $60.
Correct.
Might take it.
That's what I'm saying. So look at this. This is everything together because what we're talking about right here is if you go to natural gas, I'm going to close this real quick. And you can see right here on the trade page, these are all the prices of natural gas. So this month, the 29-day cycle, the price is 2.86. In 62 days, the price is 3.206, and so on and so forth. But when you have the dollar sign up there, it blends them all together.
And I was paying attention to you. I promise I was.
I don't believe so.
We have a group chat of 14 friends, and I just want you to know, I want you to hear this right now. They have been talking about, because you probably haven't been keeping up with this.
No, I silenced it. I can't take it right now.
Who won worst driver in our high school? And 2 of the friends in our group are fighting over which one of them won worst driver. And I'll have you know, I wasn't anywhere near the list.
Okay, so I will remove you from it because I would have said you.
I just wanted to let you know.
Okay.
I know you would have thought I would have won that.
Oh, I can. That's easy. It's either going to be Dylan or Julie.
It's Dylan or Mandy.
Dylan or Mandy.
But anyway, it's not me. It's not me. Liz always
Mandy,
says
Mandy drove me to safety in the middle of a crazy blizzard. So I would remove if she got worst driver.
Well, I just wanted to let you know, everyone's fighting over who won worst driver in high school. I wasn't even in the running. Liz thinks I'm a terrible driver because I drive too slowly.
I do. I mean, I'm not shy about it.
And it wasn't me. I think I won safest driver.
Call BS, but that's okay.
All right, so do we take off NG for $60? Sure.
Yeah,
let's
take it
do
off.
it. Let's take it off. Maybe we'll get back in. Maybe we'll get back in another day. We'll wait for a down move and jump back in.
Yeah.
Or,
and I mean, yeah, let's take profits early. It's fine.
Or we could have looked at turning that. We could look at turning that put spread into
a butterfly. It's not ready yet, I don't think, because look.
Not ready. It hasn't baked enough.
Not ready yet. Not ready yet.
Well, it wasn't a ratio spread. Let's see.
know.
So we collected 0.033 on that.
Here, I will show you. So what you'd have to do is you'd have to buy one of the 2.55s and sell one of the 2.45s, right?
No. You'd have to buy the
it.
2.75 and
delete.
sell at 2.65 for 36 debit. So it's like 0.03 away from putting that on for even.
So here, this is what I will do. 0.03.
No,
I want to buy that for 0.33 and let's have a butterfly on for free. No, let's take our $60.
Well, yeah, I don't know.
You know I love butterflies and natural gas,
And
though.
for free, yeah.
I love butterflies and
because
natural
they
gas.
could be worth something.
So 0.33 is even?
Well, we sold that put spread for 0.33. So if you put in a debit for 0.033, then we have a put spread on for even. Minus commissions, I understand we're paying commissions here. And if people want to know what the commissions are.
I'm going 0.29.
Okay. Then the commissions, here, look, commissions. $7.68.
Is
So
that
for
$10?
that, it was $7.68 for the other one, so it's $15.
This and each tick is $10. That's what I'm saying. So I'll go 7. Let's go. Because this we can get to. We can get to this. This is a number I can live with.
Yeah, we can get to that. We'll lock in a profit and have that butterfly on in natural gas.
Keep in mind, whenever you put in natural gas, when you're putting your closing order in, you have to close it to GTC or it will. It doesn't go in that way.
Wait. Why do you have two lot? Cancel. You've got like two. You're putting it in 2.
Yeah, let's get out of that. Good catch.
Okay, so let's walk through, because we were confused at first. I was confused at first. If we want to turn this short put spread into a butterfly, we have a winning short put spread.
And I'm going to tell everyone why my eye line went to the bottom of it, because I usually have ratio spreads in it. So with a ratio spread, to butterfly it off, you have to go to the other side. We have just a put spread.
So if we sold this put spread for 0.033,
which I will pop out the side to check your work.
Yeah.
Wait, what the heck?
Oh,
here we go.
It's NGV, yeah, there we go. She's going to check. There it is.
0.033. So, work checked.
.033. So if we sold it for .033, which I think is like $330.
$333. Your favorite numbers?
I was born on 3-3.
I know.
So it is. I do always bet on 3 on roulette.
I know.
333.
I know. 3 is your favorite number. Okay.
Actually, my favorite number is 8.
When did this happen?
Always.
You love the number 3. Is it because it's 3 if you cut it in half?
I don't know. I don't know. But anyway, let's walk through the process of turning this put spread into a butterfly.
So if you have a short put spread, you then have to add a long put spread where you're doubling your shorts.
Yeah, right. You want your short in a butterfly. It's long 1, short 2, long 1, short 2, long 1. So you see you've got the long 1 and you need to make short 2. So by selling one more 2.65 and buying one 2.75, we'll have a symmetrical butterfly. If we could get filled for anything less than .033, we'll have this on for a credit. And then this has the potential of making $500.
And as we said, natural gas gets whippy, especially at the end. So I do thoroughly enjoy butterflies and natural gas. I like getting them on for free too. So this I put in for .028, and I changed this to GTC. I'm glad you caught the 2 because you and I would have been so mad.
Well, but then you're just buying. You're buying a put spread. So if we went down, great, we'd take one off and then leave the butterfly.
No, I know, but you and I would have been like, what?
What? We would have been very confused.
Okay, so that's in.
Okay.
Who's up 11?
I gotta tell you, breaking news. Guess who just texted me?
Who?
Mikey.
Oh, Mikey!
Let's pop into Twitter and see if he's on there. And he didn't say like, hey, you better get to Twitter. I posted something. He didn't say that. He was helping us. I asked for some help. I reached out to Mikey and said, Mikey, we need some help with our German presentation.
We did. We did need some help with our German presentation. Did Mikey help us?
Of course he did.
Yes, he did.
Of course he did.
Okay. Here's Scott Somers coming in first, then we got Mikey afterwards, okay?
Okay.
Be aware, due to Nvidia earnings scheduled to be released 20 minutes after the closing bell, thank you for this public service announcement, you will have
out of the money assignment risk in physically delivered index ETF products.
Such as Triple Qs and SPY.
So,
Thank you.
yeah, and I'm glad that Scott does this. Whenever there's big earnings coming after the bell, he warns everyone, if you have a position on that's expiring today in Triple Qs, if you've got like a 0 day in Triple Qs, don't just think at the end of the day the closing price is a closing price, because that can keep trading and you can end up, someone could exercise an option in the 0 day that's expiring today.
They could. Yeah, so keep an eye on it. I appreciate that, Scott. And then Mikey, the texter during the show.
Well, I appreciate it. We were looking for help. We needed that picture. We needed that picture that Mikey posts of us like 2 German people.
Yeah.
And so they did use it. Our creatives used it, but they edited it a little bit. They cleaned it up a little bit.
Oh, they did clean it up a little bit, yeah. They made us look a little younger. It's just
yeah, they're like, let's take 10 years off these ladies.
Which we appreciate. Okay, Mikey, happy hump day, ladies. If you like no whammies, you should watch this. Caught it on a plane ride to South Africa. The luckiest man in America. You know what? I'm not going to press play because I can't do it here, but I just hearted it.
Official trailer. Go behind the scenes of the most infamous episode in game show history.
As an ice cream truck driver. ...
I'll tune in and watch that.
I'll watch it too. I just don't want to. I don't know how long it is.
I'll tell you, ever since clearance, can't walk, I log a lot more hours watching videos on my phone because I just sit with him.
Yeah, you do. You do. And you sent it to me.
So I'm going to watch that, Mike.
Okay, and then Jackie, thank you very much for reposting. Oh, because there was a typo. Frank the Great put #IZJNY, and Jackie comes in with the right hashtag. Thank you very much. People helping people.
Thank you. So talking about option volume, 45.4 million contracts was 24% below recent average levels, with calls leading puts 2-1.
I appreciate it. Thank you. And then this is for Jenny because she wants to crowdsource something.
Okay, so I just put this out there because I might have Mikey's number, but I don't have Nikki Bat or Mikey.
You have their numbers? I do.
Mike, no, I'm going to have to get them from you. So I am trying to, I know they don't live too far, and this pop-up is going up this weekend. This Avenged Sevenfold pop-up is happening Friday, Saturday, Sunday, Monday, and this is one of my son's favorite bands. He is desperate for a t-shirt from this pop-up, and I cannot make it. I will pay someone to go there and get it for me.
So
that's why I tagged Nikki Bat and Mikey, Trader Mikey, because I'm hoping that they can go.
Well, they live in the city.
Oh,
we don't know how far away they live.
No, I think they live a few blocks from here.
From this?
Well,
I think they live in the Loop.
I know they probably live near-ish. Well, I don't know. Maybe they're a little further.
I think they live in Bucktown.
Maybe I have to raise. Maybe I have to raise my price of what I'm going to pay.
This is in the loop. This is
They live by the office. They walk to the office.
Oh.
So they're not that far. 10-minute Uber drive. I'll pay their Uber bill and
she'll buy you a drink.
Could be $100 plus your Uber ride, plus a drink, and plus the cost of the T-shirt. I just need someone to go to this Avenged Sevenfold pop-up.
Yeah, well.
I'm going to be out for my daughter's birthday.
You ask and you shall receive. We'll see how it goes.
One of those boys will come through.
Okay. And then Bob on Fire comes in too. Well, somebody will come through. Nvidia, Snow, CrowdStrike, HPQ, Urban Outfitters, NTAP, Dollar General, Best Buy, Best Buy World War I, Burlington Northern, and Dick's.
I wonder if that's the same. I wonder if that's Dick's septic.
What is this, septic Dick?
Oh, all right. Snow. Let's take a look. Well, hang on. Before we get to these, because we haven't done Jacob's study.
Oh,
This show is off the rails because it's 10:30. We haven't looked at Jacob's study. We haven't talked about what's your assumption. We never put in our triple Q's diagonal. We said we were going to put in.
Yeah, so I think order of importance, these are great earnings. We have our Nvidia trade in. Let's go to Jacob's study, then we'll put our triple Qs in.
Yeah.
Deal? Okay. So we've got this.
Now,
we appreciate
and I
this.
just do want to mention that the Nvidia trade, if even Nvidia could be up $10 tomorrow, and that trade is going to be up maybe $40. Not much. That is.
So for every gimme, there's a gotcha. We didn't risk a lot either.
We only risked $100.
It could be down $100. Nvidia could be down it.
And then we're only out $120.
Yes.
Yeah. It's very small.
Very small.
Okay.
Oh, I did want to get to this, and I will go back. This is super cute. Bumper to bumper traffic in Rhinelander this morning. Look how cute this is.
So cute.
Okay, so now I'm going to go to.
And that's. Wait, will you go back to that?
There's Frank the Great.
No, I know. I didn't know who was driving the car in the front.
I think that Frank the Great's got a little doll of himself.
That's what I was wondering.
He's in the front. Okay, so now we're going to go to Jacob's study. I got to go through this way, and here we go. So SPX, every week we get these studies from Jacob. I love it. He's back.
He's back.
We took a little bit of a break because he's got people need vacations, even smart people.
I mean, I don't know if he's on vacation, but he he has a house in Arizona, he has a house in Rhinelander. He had to go to the Rhinelander house.
I'm talking about Jacob.
Oh, Jacob. Thought you were still
I was
talking
like,
about
Jacob's
Frank.
got a house in Rhinelander?
No, he's Jacob. I heard. Now, he has always gone to Burning Man. It was in his contract, like must be off for Burning Man. But I heard he was actually helping set up for Burning Man.
Oh.
So I think he was hard at work.
Yeah, he was hard at work.
Somehow he's got a gig. He's got a side gig working for Burning Man.
Zero DTE options and Burning Man. No, he does more than zero DTEs.
All right, winners and losers. Now, this is another amazing study, but next week we're going to start a series.
Yes.
A new SPX series.
Yeah, we just wanted to start from the basics and start with defined risk and then have everything build from it. So
Right.
that's next week. But this week, Jenny, winners and losers, zero DTE OTMs, out of the monies.
Okay, winners and losers, zero DT OTMs.
And here is the first slide, out of the monies.
All right, historical backtesting provides a remarkable opportunity to assess potential trades, yet deciphering the outcomes can often be challenging, Liz.
Yes, they can. And to make sense of these, we frequently resort to summary statistics.
Typically, we depend on the average P&L. Pay attention here.
This is the meat and potatoes.
You better pay attention to this. The average P&L calculated as the net P&L divided by the number of trades to identify promising strategies.
Okay, and so then this kind of breaks it down. However, in particular with smaller accounts, there's a marked difference between a strategy that loses $27 on Monday and then recoups with an $8 win each day, Tuesday through Friday, compared to a strategy that steadily earns $1 through each day throughout the week, even though at the end, both end up with a net profit of $5. Got it?
Got it. We've previously broken down the size and variability of winners and losers for iron flies, but today let's explore out of the money iron condors. And again, keep
So
this
this
in
is
mind.
maybe Jack
that
Tucker and Blue
P&L,
Wackadoo-esque.
that average P&L calculated as the net P&L divided by the number of trades. Oh yeah.
Yeah, and we can go back to this if you need to see it. So the study is over 2 years of data and zero DTE SPX options collected every 10 minutes.
Consider selling zero DTE iron condors at 9 a.m. Chicago time, plus or minus 5 minutes every day, with a variety of short deltas and wing widths. And I like to see that plus or minus 5 minutes because when we push our SPX trade through on the train, it's like 8:55.
I didn't do it. I'm going after 9 every single time.
I did mine, and it was.
Are you out yet? You're not out yet, right?
No.
Because SPUs were down.
SPUs were just pretty much unchanged.
Yeah. And then winners were closed the first 10-minute snapshot that they were found above 25% max profit.
Okay.
Now, our iron flies were at 10, but these are iron condors. These are going to be Jack Tucker blue wackadoo-esque.
So because you're collecting less, you're looking for a bigger percent. Instead of collecting more and looking for 10%, here he's collecting less and looking for 25%.
Yes, and all trades were assumed to exercise at mid-price. So I love that he's back-testing all these. Okay.
So iron condors with short 30 delta.
I'm just going to go forward and backwards so people can see what we're looking at. So we're going to assess the, it's just short iron condors with a 30 delta, short iron condors with a 20 delta. That's all we're looking at, okay? So they're both very similar, just so we can kind of know what we're going to be looking at back and forth.
And in both $10 wings, $20 wings, $30 wings, and $60 wings.
Yes.
Now, the 30 delta, you're going to collect more, right? It's tighter. Your shorts are tighter.
Can I show that? Let's go back. I'm going to go to SPX right now. I'm just going to show what we're talking about.
Yeah, it's
so
10:30.
the only
We're not
difference
that far
is
from 9 a.m.
If the only difference is, here's your
So
30
30 delta, let's just pull one up, like 30 delta with, like here, the biggest winner on the 30 delta here is the $60 wide wings. But
$60 wide wings.
That performed the best, but that uses the most buying power and has the most risk.
And let's talk common sense. I like that we actually jump into this. I understand Jacob is putting parameters, and he's got to. But let's take a look. If you're going $60 wide, Jenny, that would bring me to, what, $64.10. Look at all these. They're all the same price. Just bring it up.
Yeah, that's common sense. It's like, okay, well, I'm going to pay 20 cents for the $64.15.
Why?
Or pay 30 cents for the $64.30.
I mean, you could bring it all the way up to the $64.40 for 35 cents.
Now, I will say it's 10:35, so it's not quite 9 o'clock, and it might be slightly different at 9 a.m.
But that's what I'm saying. I like jumping in because I'm sure they're going to be a little bit more expensive at 9 a.m. But it's still common sense. Like, you don't need to go 60 just because the study says 60.
Right. You could give up a little more and have a little less risk.
And same to the upside. Take a look at this.
Oh, yeah. You can go to 6,500 and make it $15 wide and give up very little.
Yes. Yeah. So I'm glad we did this. There is your 30 delta. Now, the other study is the 20 delta. So
and
you're bringing it up.
What were you getting on the 30 delta?
The 30 delta, I'm going to make it $15 wide.
Now, again, this is...
No, I would make it wider on the bottom. So take a look at this. To Jenny's point, you can go $64.85 to the $6,500, and it's only 30 cents.
Giving up a quarter.
Yeah,
right.
But on the downside, I might make it a little bit wider because I don't want to give up so much. So I might go to, if 60 was where we're starting, it doesn't have to be symmetrical.
So...
Here, this is $3,500.
So you're getting now think about this. We're getting 420 and it's 10:30, so it's an hour and a half later, and we're at VIX levels of 1485 or so.
Low 1485.
Yeah, so we're at a very low VIX level, and it's a little later. So you'd be getting more, and typically VIX is higher than 14. So it's a low credit today, like this period of time right now.
And then if you bring it to the 20 delta, so you have to actually, I'm just going to move it by one because keep in mind, then you're only getting $2.15. I would keep the shorts the same.
You need to get 25%.
You need to get 25%.
Okay, so let's go check out these results.
Okay.
Average, so you can see the average winner goes up as the wings widen because you're collecting more, right?
Correct.
So, but the average loser, the $10 wide wings, the average loser is only $3.84. Some people don't want to deal with a bigger loss than that. Or the $20 wide wings with the average loser of $8.66. Some people, are you surprised that the $60 wings average loser was $2,000? That seems high.
No.
As far as average, it's not biggest loser, that's average loser.
Okay, it's your average, but your win rate is 88% on that 60 synthetic. So when it loses, it's going to lose all of it, or a lot of it. So if it blows out of the water, it's going to blow everything out of the water. That's why your average is so high. You know what I'm thinking here? Never do $30 wings because your net P&L is negative.
Oh, that net mean P&L. Right.
Is negative.
Right. So again, kind of the $10 wings, because I think here on the bottom, net mean P&L, the higher the number, the better.
Yeah.
So you've got plus $9.75, or at that $6 wings, $12.79. $10 wings doesn't look too bad.
I'm telling you, Jacob, thank you, I'm a $10 winger. I love $10 wings.
I'm going to have to change that shirt I got you from I love 10-cent wings to I love $10 wings.
Well, it isn't. They're not $10 wings. The wings are $10 away. How about that? Wings are only $10 away.
I like it. I like it, Liz. So, not bad, honestly. And would you be better off, let's say you did 2 of the $10 wings versus 1.
That was our question we had yesterday.
Yes.
I'd rather, thank you, Bob.
Yeah.
I'd rather 2 $10 wings.
I got so excited about that. My nose started running.
She gets excited. Her nose starts running, ladies and gentlemen. The and to each his own. So in general, 45 DTE premium. I know, and you know, you're better off widening it versus multiplying your contracts because you're getting a better
general.
rate.
And when you're doing the 45 days or you're going out in general. But with these, I don't know. Okay, so if I do two $10 wide wings, my average loss goes up to, 760, 768, and my average winner goes up to 224. I'm still, I know my winner's not quite as high as a $60 wide wing, but my average loser's much less.
Much less than your $20 wing.
Yeah. Right, it's still less than the $20 wing.
Yeah.
Well, it's right around there.
Ish.
Yeah.
But your profit's only, your net mean profit's only $1. And that's what he was trying to go with right here. So we're usually doing, he'll give us, in his studies, we get all of it minus the net P&L, which we can.
This is new.
We can net out ourselves if we need to.
Average P&L divided by number of occurrences? Not number of occurrences. It was...
it's your average winner divided by...
It calculated as the net P&L divided by the number of trades.
What's the number of trades? We need the number of trades to do the math ourselves.
Do you remember yesterday we had Sahil working on a study, and there were like 60,000 examples, and I was trying to tell Dr. Data, he went through one by one.
And I was like, 60,000?
60,000.
Yeah, well, that's his dedication.
Okay, so now we look at the 20 delta, iron condors with 20 delta shorts, and this
so the 20 delta shorts, you're taking in we looked at this, you're taking in a lot less. You're taking in a lot less premium. You have to wait until 25%, but it's still not that bad.
The net mean P&L is honestly higher on all of these because you've got a higher probability trade maybe. It's not getting tested as often. You're not hitting your loss as often because you've got a higher probability trade because those shorts are further.
They're a little bit further.
Yeah.
They're a little bit further.
Mm-hmm. And your win rate's higher. So let's go back to we don't go back to the slide, but look at the $10 wide wing. Your win rate's 89%
That's
on the
going.
20 delta.
And it's only 79 on the $10 wide.
And your average winner is not terrible, 73 versus 112.
I mean, honestly, you have with these. I think we're going to go to Jacob's takeaways. But kind of taking a look at this, what I love is this is a menu, if you will, because somebody might say, I want less of an average loser, and I'm willing to do the $10 wings versus a $500 loser on the 20 delta wings. So, or the 20 delta iron condor with $10 wings. It's a menu.
Yeah, no right or wrong. You pick what you want. You pick what your risk tolerance is. And if you read the takeaways, evaluating winners and losers separately clarifies some of the trade-offs we make when it comes to strike selection.
I agree. Looking at what the losers are versus the net P&L, because we did get that from someone where they said. And I think that's where Jacob's coming from. We sent him this saying your average winner is 89. I'm just using 89%, and your average winner is $73. Well, not all your losers are full loss. And that's where I think the confusion was coming in. So just because it's a loser doesn't mean you're losing full loss. Yeah.
And he only closed these winners at 25%, and if they never hit 25%, he let it go till the end of the day.
But it could they might have closed it 20%. Winner.
But I do think we're getting deep into these studies, which is I'm glad we're gonna kind of start back to the basics. And long ago he used to do all of his studies undefined risk.
Well, in SPX it's big.
Right. So now we're asking for all defined risk, smaller scale.
Yeah.
Because we're seeing good results with these defined risk trades.
I've been having good results with my iron flies.
TP is every day we get a text from TP. Close mine again. Close mine again.
I try not to rub it in when I close mine, TP.
I don't text anybody.
So you did the evaluating winners and losers separately. Trading further out of the money meant smaller credits and smaller winners, but more consistency of results. Meanwhile, the size of the losers largely depends on the wing widths, which makes sense.
Synthetic strangles were more net profitable than their truly defined risk counterparts, but require significantly more capital and comfortability with the occasional large loss.
Yeah. And as we did see, I feel like that synthetic strangles, and I love it, they have to put a parameter around it. And people like symmetrical. They want to hear $60 wings. There is a common sense slide.
Yeah.
Bring it in.
Absolutely. So the final takeaway?
The zero DTE marketplace has been very rewarding. This is like I had to film 8 commercials yesterday, so here's my commercial voice. The zero DTE marketplace has been very rewarding place for retail premium sellers, provided winners are managed attentively. It's all up to you to determine where in the scope of winners and losers you want to fall.
Enough said, Liz. You might want to go to the final page, and this is just our disclaimer. Past performance is not
indicative
of future success or future results.
That's pretty funny. Okay, so that was fun. I'm glad we went through that.
I know. I do want to get in, since we have, if I take a look at our net delta, we're long. So I don't mind throwing in that triple Q's diagonal just in case.
I don't mind it either.
I don't know. Or maybe we don't have to. Maybe we just
take a look at it.
Maybe we just throw caution to the wind and let Nvidia earnings come out and hope that the market goes up.
So if you're going to take a look at a triple Q's delta, would you like to? Okay, so the diagonal is going to be a little expensive. I'm going to give two options to you, Jenny Anders, okay?
Okay.
So you can do a pool medic style calendar, which will be cheaper in triple Q's.
Let's compare the two.
Okay.
Let's compare the
so
two.
So pool medic style calendar means open up the closest to 10 days. So I'm going to go with the 12. How about that? Okay. And go 12 days because you have 9 or 12.
Oh, okay.
Okay. So I opened up September 8th with 12 days till expiration, and I'm going to sell the 560 put.
At the expected move.
Yep. 560 put.
So $12 away.
Now, and then you go to the closest to 30 days, which would be September 26th, which is exactly 30 days, and I buy the exact same one. So this is inexpensive. It's $354. This is a downside calendar. The crux of this was you pick the expected move for the 10-day cycle and then don't overthink it. Just go buy the one in the 30-day cycle.
It's not that expensive. Ball's low right now, $355. If Qs goes down to that level, $12 lower, or has a down move, or we get a boost in vol, this can come off for a winner, but not a huge winner. Like we'd be lucky to get $70 out of it.
Yeah, that's what I'm saying.
Yeah, so
$100 would be
20% would be $70.
Yeah.
So that's what we put in GTC for $70. Not huge profit potential, and if we get a massive move to the downside, it can blow right through this, and this could turn into a loser.
It could. Now, and that's if you manage it to the downside.
But I don't mind it. It's only $350.
In 10 days. Now, this is where do as I say, not as I do, because we should take
Then
it
we
off
just
at
have that
$70.
long for $350.
Then you got the long.
Then you got the long. Then if nothing happens in 10 days, and then the short rolls off, and you got the long, and then we have a crash, you got that long.
You got that long.
Which we don't hate that either.
I don't hate it.
Sometimes I like doing multiples of these and then take some off for a win to cover the costs of some, and then you leave what's left.
Okay, so this is option A, which is the pool medic style diagonal. I hope pool medic is doing well.
I hope so.
It's his busy season.
Yeah, it is busy season. It is. How much do you think a pool costs now? I think the COVID pool prices have come down.
Oh no, they've gone way up.
No, they went way up, but they're coming down.
I talked to Clark the other day about my pool and what it would be. 4 times what I paid for it.
Well, so now
I got mine before COVID though too.
We got ours when they were giving away pools on the cheap.
Yeah.
Then they skyrocketed. But now I saw an ad yesterday, get a pool for this price, and I was like, pool prices are coming down again. They're still more than what we paid back in the day, but they're.
Yeah, Clark said my pool would be 4 times the price I paid for it.
Well.
Minimum 4.
I don't know. I don't know what they are in different parts of the world, but
for those of you joining us, Clark is my pool boy.
But all I know is long ago when I put my pool in 2010. I don't remember when. But you could when I put my pool in, I don't know how many years ago that was. It was only $35,000.
But that's just for the pool.
Yeah, right. That's all I'm talking about. Then during COVID, those same pools went up to over $100,000.
Yes, they're still over 100.
I saw a sign yesterday. I got an advertisement saying, "Put an in-ground pool in for $65,000."
I feel like that's gonna be a big bait and switch.
I don't know.
They're gonna be like, "We'll dig a hole and we'll put the above ground pool in the ground."
I don't know. I feel like these COVID pool prices have come down now. How many years post-COVID and the prices of pools have come down?
I think you should get a quote because like I said, he told me that the other day. Now, okay, that being said, here's option A for triple Qs. What do you think? Now the diagonal is completely different. Let's choose strikes and you can walk with your diagonal.
All right, so diagonal, and I would probably look at selling the SEP 23-day. We want to get enough credit, so maybe sell that.
Maybe still stay at the 560.
I was going to say the 560 for $5, but honestly, 59, 58, 57, they're not much different.
They're all the same.
Yeah,
right.
So go as far as we can.
I'll go to the 55, 555.
Yeah,
because
that's
the expected move of the cycle.
$4 is enough. All right, so yeah, we'll go back to the platform. Let's go back to the platform.
Oh, sorry, we're just doing it ourselves.
We'll go back to the platform so everyone can see what we're doing.
So here,
in the 23-day, sell that 555, and that's at the expected move.
So yeah, 23-day, open it up. I'm going to close this and open it up.
And
23-day regular step. And we're just, because I think this is going to be pretty expensive, we're selling the 555 for $4.10, 11 cents. Okay?
Okay, that's at the expected move, and we could tweak the strikes. Now, go to the 51-day and
buy the at the monies.
That's $8.93. If we want to make this a little cheaper, you can.
I mean, they're all the same price again.
Let's see. If I move that to the 570, so if I do 570, 555, 55, there's $15 wide.
And you're paying
you're paying 50%.
You will usually in the symmetrical, and this is kind of symmetrical. You're looking at around 50%. The width of the strikes, meaning from 555 to 570 is $15 wide. We're paying 50% of that,
which is expensive. Because
it's not as bad as I thought it was going to be.
No, because VIX is so low.
Yeah.
So it's not that bad. We're paying 7 something, and I do these a lot. I do, but. We want that much risk on if Nvidia earnings are amazing and
so here's the
it runs up?
Well, here's the problem. This isn't a hedge to our Nvidia trade. So in our Nvidia trade, we can make $30.
Yeah, that's true. We have a very small trade.
Yes, this is.
But will it take down the rest of the market?
That's what I want to be very clear
about. Will it take down the rest of the market?
This triple Qs is saying, how much delta does this give us? This will give us 20 delta. What's our bearish delta right now?
No, we're long. We're long.
I mean, what's our
almost 60 delta?
Okay, so this beta weighted to the SPY would probably give us
take off 20 deltas.
20-ish. I mean,
I
it's the
think
Qs.
so. Like it'll take off. Let's say it takes off 20 deltas. So if we're long 60 deltas, this would take off 20 deltas. We'd have long 40 deltas.
Yes, and these Greeks are in theory, so it's not a one-for-one.
Just to be exact, we're long 56 deltas.
Okay, so this is a short 20 delta. This is short 20 delta in Qs.
The calendar isn't going to do anything for our delta.
No. Well, I agree. I'm just going to clear this out.
I mean, maybe it'll give us shorts.
And keep in mind, it's shorter term because we went 10-day, I went 12-day. I'm just pulling up the delta to look at it.
So on the calendar, I say short 5, 10.
6.
6, yeah.
And this one is cheaper because I actually went, oh no, hold on. This is not fair. That's not fair. I gotta go to 30-day.
12-day.
To compare apples to apples. Let me buy it.
Buy that one.
So it's 350.
8, yeah. 8
it gives us 8 deltas instead of 20. It's not bad.
No, it's not. It's not bad. And then we could spend 350 instead of
850.
Yeah.
And then we might have a long option.
Sure. That's the benefit of the calendar. Then you maybe have a long option, and then we can do something with that later.
So, but we are going to take this off at 20%. So we're going to make $70.
Yeah.
If we make $70, great. If not, and it goes against us, then we hold on for dear life.
I think we need to.
I didn't mind the diagonal. Do you want the diagonal instead?
No.
It's too. It's a little expensive.
If triple Q, okay, so here, if triple Qs were at the top of its range, I would put in the diagonal, but we're not. So then I would say let's spend less and risk less and do the calendar. We're not. If it were at all-time highs, I'd throw that diagonal in.
ATH was 2 weeks ago, whatever the date
so
is. August 13th.
I only throw them in at all-time highs.
I'm throwing the calendar in. Poolmatic, this is on honor of you.
And I'm not saying only because maybe one day I'll put on diagonal and someone will say, hey, we weren't at all-time highs. But we're not at all-time highs.
I'm not gonna lie to you. I don't want to spend $800 on a hedge because it's so hard to lose on our hedges. Do you know what I mean?
And we still haven't gotten, and that Q's calendar, that's not a hedge because that's not going to make us much. That's not going to make us much.
No, but it's a down. But
we still have our UVXY.
Yeah.
Yeah, we still have our UVXY. That's $11 now.
Yeah, but we still have 23 days.
Anything can happen.
Anything can happen. So that's in. So I'll push that out so you can push that through too. I'm going to go back into Twitter.
Make sure we got everybody, and I don't know about what's your assumption, or if we want to look at any other earnings.
I want to look at some other earnings too. Okay, Eric, Blue Wackadoo, done for the day. Collected $1,108 after fees. Thank you, Mr. Market.
You know what? One day we should have Eric come on.
3 green days in a row.
Eric,
he
Jack
came
Tucker.
to the Chicago show.
I know.
They're famous.
Yeah.
And there was a great picture of all of them together.
I'd like to go through and see every day what he's doing.
I mean, you can. What I love about this is the absolute transparency.
Maybe I'll do this tonight when I'm sitting with Clarence instead of watching YouTube videos. I'll go through Eric's daily.
And then Ashvin said, "Someone help out Jenny."
Come on, Mikey Bowler. Come on, Nikki Bad. Go to Avenged Sevenfold pop-up. Hopefully they've heard of the band.
Well, your son's very musical.
Oh, I have to listen. He knows every song on this album. He plays guitar, so he can play every song.
That's awesome.
I think that's his goal. That's his goal for this semester. Like,
looks like-
instead of like working on schoolwork, he's working on playing every song from
Is that the
Avenged
Grim
Sevenfold.
Reaper on the cover?
I mean, their songs are not pleasant to listen to. They're great, maybe.
It's
but
not like easy. It's not like
it's
yacht
not
rock. It's not yacht rock. I mean, it doesn't. I'm not gonna lie to you. It doesn't look like yacht rock.
Okay, I need to find who at work would be into
punk
or metal, maybe.
I don't know.
I don't know. I don't know what the pop-up line is going to look like.
Don't send Brittany. I thought
Things could be
like
dangerous.
she's pretty hip. That's why I was going to send Brittany, but upon review,
I'm not sure. I'm not sure I'm going to get any takers. I'm not going to get any takers.
okay, but we did get to everybody. I'm going to go down, make sure in the underneath after Blue Wackadoo, we got him. There's the typo. There's oh yes, and we are pushing things out on YouTube right now, so we'll be
some of
pushing
our
this all the
SPX
time.
segments,
Yeah.
sure.
Mhm.
Yeah.
And then Ashvin, love it. He's the one who wants you to be helped. So Ironfly winner, thank you. So this is great.
And
That's from yesterday, though.
Guess who's going to join us on Friday? Special guest.
TP.
Yeah.
Yeah.
I was telling the viewers.
Oh.
I mean, you didn't actually.
I actually thought you were going to surprise me with somebody else.
Friday, we're going to be joined by TP. He's going to start coming on Friday, so I'm excited about that.
I am too.
Tomorrow we have what do they call it, Glenn?
Oh, G Money.
G Money. Tomorrow we have G Money coming on. Friday we have TP coming on. We're getting guests every day.
Yeah. Dan the Crypto Man. That name better stick.
Dan the Crypto Man Monday, G Money on Thursday, TP on. So our only days that we don't have guests are Tuesday, Wednesday, and the SIBO.
We're trying. No one wants to talk to us
Nobody
here.
wants to. Well, we do have one crowd favorite who comes on, but he's on vacation.
Well, and I would like to say a lot of these guys, number one, I think it is intimidating to be live on camera. But number two, a lot of them can't talk. Because I remember when we were on the trading floor.
They can physically talk. They just they're not mutes. Their firms don't allow them.
Their firms don't allow them to speak to the media. And even if we said it's not even about, we don't have to ask about trading, because I think that's where they get in the weeds. Even then, it's a harder time to get people to come on. But okay.
All right. I don't know if you even want to attempt what's your assumption with just 5 minutes to go.
So I don't know if we should.
Probably not, unless you saw any like real.
So a lot of them were, and that's why I was going to say a lot. And I told you this on the trade today. A lot of them had come up with these earnings trades. CrowdStrike was on there. Nvidia was on there. And I want to take a look at some of these. So let's take a look at more earnings trades.
Okay.
We've got. What is Snow
And I was
doing
going to say, do you want to close OKLO because our OKLO position is up 40%, and that's just good. That could be something. We're 23 days till expiration, so closing winners makes sense, and we could always go out to October if we want to.
And that's just the 65-60 put spread. I'm trying to.
Yeah. So what are we trying to buy that back for? 97 cents.
One am I trying to back for? 97 cents. I'll
So
pay 98.
see if we did that same one in October. What was it? The 65-60.
65-60.
So that same one in October would give us $1.60. Yeah, so just buy back for 97 cents and sell it out again in October for additional credit.
We could. Would you ever think of close $78? Is this cash settled? I was going to say this looks
Is
like
it
a
cash
good
secured?
cash secured.
Like, were you going to say a good buffer candidate?
Yeah.
Yeah, it's not bad because you could do the. It's basically the 75-65 put spread and then sell that 90 put, but it is using $4,000.
That's a lot.
We don't have. Yeah, that'll eat up our
That's a
buying
lot.
power.
That's a lot for this account. So I'm trying to buy it back. Now you can see 5 cents wide here and 9 cents wide there. So that market keeps moving. I don't want to pay 101. I guess I will.
So I am going to give a shout out to my brother because he's the reason we started trading Oklo long ago. We were the first on the network to bring it to everyone's attention back when it was $10.
Josh is claiming it was him.
Well, we can take it to the tape. So, because my brother's in the nuclear industry, and it's his birthday tomorrow, and I'm struggling with what to get him for his birthday. I'm struggling if I should give him some of my Oklo profits.
Oklo tattoo.
I don't know. I don't know what to think. It's been 2 years in the running now. 2 years going. Because Oklo I remember last year being like, thanks for that Oklo tip.
You're a very good sister if you're going to give him your Oklo profits. Why don't you buy him a sweater?
I don't know. It just crossed my mind. Today I said, what do I get my brother for his birthday tomorrow? And I thought, well, maybe I'll give him some of my Oklo profits.
No. Why don't you buy him Oklo stock? Why don't you buy him one share of Oklo stock?
Because he just puts all of his money in his retirement account. He doesn't even have a trading account.
He doesn't?
No.
I got an idea. How about you open him a trading account?
He doesn't. You know what? He doesn't even need it. His company's been matched. He's been with the same company since day one. I'm not saying need it, but he's busy. He's been with the same company since day one out of college, and they've been matching his 401k 15% since.
Yeah.
So he's I guess he's okay, but
okay, LO.
Okay, LO, but he doesn't trade. And he hasn't learned. And maybe he will one day when he retires.
If you're giving him some of your Oklo profits, you get his social security number and open him up an account and put Oklo in it.
If I open him up an account, he's not going to trade it.
Yeah.
He's so busy. He's so busy. And he won't trade it until
And I know
he
my brother's
retires.
not watching, so I can tell you this. And never mind, because like my brother's always calling me, be like, put this in my account. Put this in my account.
And there's no way I'm going to buy him Oklo at 75 when he told us to buy it at 10.
We did buy it at 10.
That's why I said maybe I'll give him some of my Oklo profits. I'm not going to be like, here, I bought you some Oklo at 75.
You bought my son Oklo at
20.
20.
That's when he turned
18. Yeah.
20. Yeah.
He's holding on for dear life. He's HODL those 3 shares he gave him. 3 shares.
5. I gave him 5. I gave him 5 shares. 2
You
for
gave
6,
5
8, 10.
shares. Yeah.
$100 in Oklo. 5 shares.
It's pretty good. It's pretty good.
Anyway,
I'm trying to close it. It's not closing. I mean, I can pay up for it, but I don't think we need to. If we're gonna send it out in time, we don't need to pay up for it, right?
Okay.
Want to take a look at anything
That's
else
it. We're
that
out
needs
of
to be
time.
managed?
We're,
We are?
We're done. 11.
Oh.
It's 1 minute till 11, Liz. They've got another show starting soon.
I know. They're busy at the SIBO. All right, everybody, good luck with their Nvidia earnings, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days, I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built TastyTrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. TastyTrade.
Global markets never sleep. Explore them with Forex on TastyTrade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on TastyTrade.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Mr. Glenn Freiberger in the house with us today for our Tasty FX special every Wednesday. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on from strategies, concepts, trade ideas, trade management, whatever, just come in with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddies, Mike and Glenn. Glenn, good morning, sir. How are you?
Good morning, Nick. I'm doing well. I just had a turkey sandwich.
Ooh. Nice. You put some jardinera on there or no?
No.
You don't do spicy,
as you can probably tell from my name.
Yes.
Not how you said my name 3 minutes ago.
Yeah.
There's no jardinera going on anywhere.
Yeah, you don't do it.
Just
What's your
mayonnaise.
spice level? Can you handle like sriracha?
That was such an insulting question.
I mean, like,
can you handle like sriracha?
Yeah,
It's just a matter of like what I actually want spice on. Like, give me a spicy chicken sandwich, I'm in. But like,
you go mild though.
I go medium. Sometimes.
No, you don't. You are a liar.
Dave's Hot Chicken, I'm getting a medium.
Oh,
when I Uber Eats Dave's Hot Chicken at 2 a.m. last Saturday night,
damn,
I got a medium.
What were you doing 2 a.m.?
I was eating chicken. Perfect. So I'll go up to a medium. There are just other things that I don't think it enhances what I'm eating. Like,
so what's your 2 a.m. like? Are you at a bar? Are you clubbing? What are you doing?
I was out in Logan Square.
Ooh.
Doing a little dancing.
Nice. What kind of dance? You a salsa guy?
The owl?
No, it was nothing like actually. It was a bar. Whistler. You been there?
Oh yeah.
But they're
nice.
spinning some records.
Yeah.
Little disco action.
Nice. It's cool.
Boogie Wonderland. Ha ha. And you have to eat after that, you know?
Come on, John.
Okay, this soundboard's amazing.
Seriously.
Yeah. This all day.
So good.
How are you guys? Happy NVIDIA Day.
Yes, big day today. What do you think?
I mean, man, risk to the downside for sure.
Ooh, you're like Tom and me. I'm playing it a little bit inside down.
I just mean like if there's gonna be a reaction, I'm not seeing a screamer.
You don't think so?
Maybe the buyers are still out there. Everybody wants in.
Yeah.
But
ever had a screamer? Just kidding. I'm with you. I'm with you on the NVIDIA. I'm playing it a little bit. Yeah.
Speaking of Omaha, you guys like football? That's about to start.
Yeah. We're ready.
So back.
We got a fantasy draft.
Are you a Chicago boy? Are you from Chicago? Were you born in Chicago?
I root for the Bears.
Yeah. I know you went to Northwestern. Pinky up.
North Carolina.
Northwestern. So smart. Look at me. North Carolina? You're from North Carolina?
Yeah.
Really?
North Kakalaka, as they call it.
Really?
Down south.
Nice. Wow.
Cool.
That's cool.
So, Duke fan growing up. Not necessarily for football. They kind of suck.
Yeah.
So does Northwestern. One of my friends went to Georgia. I like going. There's a Georgia bar here. in Chicago.
Which bar?
Highline, right by Merch Mart.
Oh.
It's a riot.
Really?
Yeah. Last year we were there. Matthew Stafford's wife was there one time for the Texas game.
Really?
Which have like 80 grown men barking like dogs. It's
yeah.
Where else do you get that? Also, there's an Oregon bar in Lincoln Park. I learned last year.
Okay, you're an Oregon guy.
No, not at all.
There's a bar for every college. It's a major
Northwestern.
city. There are certainly Northwestern bars. You can go to like Evanston.
I'm telling you, even there, it's a tough scene.
Yeah.
Those bars are fun though. Like I'm going to Boston in a month, something like that. I don't know about everything. I'm going there at some point in time. But I'm gonna find a Bears bar there.
There's got to be.
I'm sure.
College is just the funniest. Like stumble into Home Slice, which is a pretty good pizza place.
Yeah.
All of a sudden, you walk in there. Or should you expect it? So, if you have any recommendations for random college bars in Chicago, I'll go.
Yeah. Kansas
and I'll cheer.
Kincaid's. Kincaid, you ever go to Kincaid's?
I do, yeah.
Can I tell you a secret?
Kansas?
Yeah, it's a Kansas bar. On Wednesdays, they do dollar
beers.
Dollar night, which is what we had in Kansas at the Hawk, which I worked at. I was a bartender there during college. Yeah.
So you like let all your boys in?
Yeah. Well, it was dollar you call it. So it was dollar like anything.
Anything.
It was dollar night. So it was everything. So you could get you go there with $20 and you leave absolutely lit.
Yeah, that's incredible.
Yeah, so but that's why Kincaid's does the dollar beer night. Is
really?
Because of dollar night in
Nice.
Kansas, yeah.
Ever been where?
I mean, there's nothing like taking like, you know, a copious amount of Barton's vodka, you know, like just a nice, you know, like $18 handle kind of thing. That's what it was.
Lukewarm Gatorade.
Well, you know, the bar had ice, but yeah,
Oh, the
everything
bar, yes.
at the bar, yeah. But it was all like just the lowest of low shelf.
Oh, that's gross.
Yes.
But still, a good deal.
Yeah.
Yeah, they really rang the Northwestern crowd for all they were worth. No dollar nights up there.
Yeah. Well, that's because you're all preppy little smarty pants.
Pinky up.
Yeah, pinky up. Pinky up. That's good. That's good, Northwestern.
What has you
Fine.
feeling so feisty today?
Just, you know, just living life, man. Just hump day, you know, it's a great day. We got fantasy football draft today.
Nice.
Yeah.
It's gonna be great.
Yeah.
Who's top of the board?
I have the 10th pick. You have the 12th
I have
pick.
the 12th pick, which I actually love.
Because then it's a twofer.
Yeah.
Twofer.
And I'm gonna get the wide receivers that I want. So don't care about the
wide
running backs.
receivers first.
Yeah, 2 wide receivers back to back.
And who would they be?
One of them rhymes with Brad Machonki. The other one is Sleeko Rollins.
Oh,
Okay,
he's not going
nice.
to be there.
Oh, he's going to be there. I think he's going to be there. Because everyone's going to just pick all the running backs, like you said. There's probably going to be some rogue that picks a quarterback, top 12.
Really?
Yeah.
In this league?
Maybe.
We'll see.
Rookie league, Bush league.
Bush League.
But yes, it's
All
going
right.
to be great fun. We are 1 week out from
From football.
from week 1. It feels great.
Beautiful.
All right. I'm glad to be here with you guys.
We're glad to have you. It's always fun. We'll give a quick little market update and get into it. Got E-minis up 11 right now. It's kind of the high of the session here. We've had a 23-point intraday range, including the overnight session. Been a bunch of chop this week here. Just chop fest, up, down, sideways, just choppy chop. NASDAQ up 18. You got the Dow up 104. You got the Russell up 10. So the Russell, the strongest of the group, but everything well inside the expected move here. Oil, catch a little bit of a bid, 63.94. Your volatility futures actually upticking slightly, but we've kind of seen this the last 3 days. You've had volatility stay bid in the morning, nothing really happens, and then by the end of the day, it gets a little smashed. So we'll see if that continues. You do have Nvidia earnings after the close today, as Glenn mentioned. Nvidia day, big day for everybody. So that might keep volatility bid a little bit into the close here. Bonds down 15 ticks, now below the 114 handle. We've reversed the entire move that we had on Friday with JPZ, you know, talking about his has rate cuts on the horizon, or at least suggesting that maybe they're on the horizon, but we'll see if that pans out here. You got gold up $5, silver down 7 cents. Bitcoin has been pretty weak for the last 2 weeks or so. It's sitting at 112 here, up $700 on the futures, spot up $500, and then Ethereum up $16, very much an inside move there as well. So chop fest around the board. Nothing huge moving.
Nothing ado.
Yes.
Yeah, Nvidia is going to be interesting. 10-point expected move, $180 stock. Pretty low implied volatility for earnings, but still high relative to September and October. So I'm feeling inside as well. I'll probably do something like an iron condor or something like that in September.
Ooh, okay.
But I am long. I did a pairs trade diagonal spread. So I got short the Qs with a 10-point wide diagonal spread, and I got long IWM with a 10-point wide diagonal spread.
Okay.
The Qs are kind of flat, IWM rallying today. So we'll see. Maybe if Nvidia sells off and that rotates into the Russell, that'll be a nice little trade.
Bingo.
Yeah. Bingo bango.
Thesis confirmed.
Speaking of thesis confirmed, I just closed my CAD yen trade this morning for a whopping $9.
There you go.
I'm now like 10 for 10 in Tasty FX.
Is that good? That sounds pretty good.
So it's pretty fun.
We've had some good success.
I have a great time. I click whatever the swap bid or ask is that's positive.
Nice.
And I wait.
Favoring the carry trade, positive carry.
Positive carry is my thing.
So you're waiting until your position's green, but all the while, every day, you're collecting a little premium, if you will.
It's almost like a directional short premium trade, where you're collecting some value, being on the right side of the carry, and then eventually, if you're sized correctly, which is small, eventually there may be a move in your favor and you can close it.
And let's be honest, the carry that you're getting is
Very
microscopic.
small. But so are my position sizes. They're microscopic. I'm like 0.02, 0.04 pips. Yeah. What would you say in terms of size? Like 2 pips is 0.02?
Is correct. Yeah.
Cool.
Yeah.
Sweet.
Dollar, little softer today. If you want to go into the TastyFX platform, mover of the day for me is New Zealand dollar, US dollar. Seeing overnight, saw US dollar firm up a little bit, start to gain back what it had lost yesterday. And then US session comes in. Now we're getting a lot more dollar softness, similar to kind of how equities are rallying. I talked to you, Nick, yesterday about some correlations, and you are seeing, the kind of turnaround we're seeing in equities, seeing that play out completely in this New Zealand dollar, US dollar. If you flip over to the hourly chart, you'll really see it, because we were pushing up against that.
What hour? Like 1 hour?
Yeah. We were pushing up against that 58-cent level, or marching towards it right around 6, 7 a.m. here, and now 0.5% move back in favor of the New Zealand dollar. So the New Zealand dollar's been weakening against all currencies, but now nice to see getting a little bid on this U.S. dollar softness. Nice trading range here for this pair, stuck between 59 cents and 58 cents. But yeah, that's the big mover of the day. As we anticipate, how is Nvidia correlated to U.S. dollar? A funny question, but if
is there a correlation?
I mean, as much as
you would think it would be a negative correlation. With dollar going lower and being weaker, risk assets become more expensive.
Right.
Typically, and you could put that if you charted the dollar versus the equity markets, probably pretty decent negative correlation.
Right. But in this scenario, if, say, Nvidia surprises to the downside, we get a skid and markets react as, this one Nvidia earning is a bellwether for all of U.S. GDP or what have you.
Which don't we get tomorrow?
We get a second estimate, yeah. So, they do this 3 times. So the first estimate of Q2 is usually the most in the dark. These tend to be in line, but could surprise as well. You never know with how they're collecting data these days.
Yeah, it's all fake news.
GDP man might get fired. I don't know. But yeah, I mean, in this particular scenario, if you see kind of a fall apart in equities on the heels of this data release, then it also wouldn't surprise me that kind of trickles down into U.S. risk as a whole, and we see the dollar actually soften. You can see it both ways, you know.
Okay.
But if growth in the U.S. is falling, then that could price in more rate cuts, U.S. dollar softness, and that would be in contrary to the other dynamic of, right, like you said, where instead of going into risk on assets, U.S. dollar gets more of a risk off bid. But I think in this case, that wouldn't necessarily be. That would surprise me. So we'll see.
Very nice.
But in theory, one company's earnings shouldn't sway the currency of the United States.
You would think not, but
where crazier's been done.
Yeah. Oh yeah. Yeah. Oh yeah. Things have been quite crazy.
So yeah, not seeing in the currency space. Still, volatility is pretty low, but if you're a short-term trader, a lot of things in the middle of the range. So maybe not as much conviction. But when you take a step back and look at where that dollar Swiss franc market is, even where the euro dollar market is, we're still at price levels that we were at a month, 2 months ago. So if you have a long-term directional play, you're still getting in at around the same price. Not sure if that.
It's had some two-sided action though.
Yeah.
I've been trading the euro futures as well. The
Nice.
options there. I mentioned this to my dad throughout the last 2 days. Is volatility in the euro has been relatively high compared to what we've seen in equities.
Right.
It's not high in raw terms. I mean, euro volatility is like 7-8%. It's not like it's a huge number, but I think it does warrant having a position here. I've been playing it kind of the 115, 119 range, 115, 118 range. That's kind of been the trade for me, with some short premium on at those ends. So kind of playing for more of that chop.
Beautiful.
Not a hard line stance.
I've got some slides that actually play right into that. If you want to jump over to those,
let's do it.
Today, wanted to look at measuring volatility in Forex because this audience perhaps a little more options focused. You guys in particular, a lot of options expertise. So I wanted to try to equate the two and give you guys some good actionable takeaways for how to look at volatility in Forex. First things first, wanted to look, the focus here is on realized volatility. So while in the options space you have this implied volatility, which is a wonderful tool that you guys use every day to measure expected volatility, SpotFX typically relies on realized volatility metrics, maybe because that's all you have. I mean, you have, like you just called out, the euro futures. A lot of the major currencies have a futures product that has options on futures. So that's a good gauge as well. But since FX markets trade so frequently, this realized data is actually relatively smooth compared to individual equities. There's no stop starting as frequently. There's just that weekend gap risk. And so you are able to get a pretty good sense of the realized volatility. And I'll go over two of these measures, these metrics that FX traders use to give you a quick snapshot, like you guys would look at IV rank or implied volatility and know pretty quickly kind of what the dynamic is and what environment we're in right now. So first wanted to look at average true range. So this measures, right here, looking at this chart, we're looking at daily, but it measures the price movement over whatever time horizon. Here I'm focusing on what you can map using TastyFX charts to keep it really visual. And so that's responsive to, if you pull up an hourly chart, it'll use the periods, whatever period you're looking at, it'll use that data. And so it tells you kind of what the average range is using highs and lows over whatever period. And this gives you a sense in pips of kind of what to expect, kind of similar to how when I run standard deviations, kind of what a daily range would be. And this can help for, profit target levels, stop losses, just to contextualize instead of looking at just candles. And then, of course, you have, when it's mapped like this, where it's been historically, so you can compare as you would kind of your rankings, where we're sitting right now compared to prior months, prior years, whatever you're looking at. And so I think this is a cool way where for you guys that are looking at across asset classes, you could look in here and see kind of what the volatility environment is, not only for pricing, where you want to get in and what your get out levels is, but even dictating what kind of strategies you want to put in. If you're seeing this is a low volatility environment and you do want to get more neutral, then you could flip back over to your futures options, and maybe that's a more directionally neutral way to play this. Or if it's very high implied volatility, like you're saying, then you'd step into the option space to sell some premium. But in the spot FX world, it's more around what you can expect for profit targets and stop losses. Moving over to Bollinger Bands, a favorite of mine because they look the coolest, gives you a very easy interpretation visually of what's expected. And these use standard deviation. So the default, you can change these in the TastyFX platform to whatever. You can change to 1 standard deviation, 2. The default is 2, and that'll give you, 95% of the actual realized price ranges.
Okay.
And so this gives you a good idea similarly around the actual price levels of what you can expect if volatility is contracting, if it's expanding, and it's based around that moving average right there in the middle. So people use this for mean reversion if it touches the band to get back to the moving average, or to test a breakaway if we're getting some contraction. And we do see a large move. Some traders use that as a breakout signal, so it can work both directions. But yeah, it gives you kind of a similar gauge of IV crush versus IV spiking.
Yeah, you can see it in just the bubble, so to speak.
Exactly.
The wider the bubble is, the more price movement, which is intuitive if you look at the chart itself, but this gives you a little bit of extra confirmation.
And instead of looking at, the various options chains for points in time, you can just change the look back period to daily, hourly, even monthly, just to validate whatever your thesis is.
I was going to ask you what the difference between Bollinger percentage B, Bollinger Bands, Bollinger Bandwidth were, because all three of them are in the TastyFX platform. But there's a little information tab.
Wow.
That explains exactly what it is. This is really, truly incredible stuff. I love it. You love to see it.
Yeah, let's wrap these slides up so we can get back into the platform. Just looking at the key takeaways here.
Must be a big team of developers working on this product. I hope they can do my little fix at one point.
What's your fix?
Just putting the description column. So I'm hoping after they get done with all these Bollinger Band percentage things, they could just write what the products are.
I agree. That
might be valuable.
That seems like a great plan of
one
action.
Day. Hopefully one day.
So yeah, here you have it. Just comparing some of these visual indicators to some of those implied volatility measures. These can help you visualize what kind of environment you're in, compare time frames, and as well inform you on what reasonable profit targets and get out points are.
Sweet.
What's your preferred Bollinger Band look back period for the moving average?
Yeah.
Do you do default or do you change it? Do you have your own personal?
Yeah, so the default is 20.
Yeah.
If we want to hop back into the platform, then we can look right at it.
I've added it actually already.
Damn.
Oh,
how
yeah.
good I am at technology. I'm not total on status. I can work the text and the interwebs.
For now.
For now.
Yeah. That's the caveat.
That is
for now.
For now. I am slowly turning into my father.
Yeah.
No, I think the 20 is a good number to use. That because it depends on what your time horizon is. So for the daily, I think 20 is an accurate representation.
Yeah, if
of,
you're trading
past month,
yeah,
past 3 weeks or so. But yeah, if you get into those hourly candles, I mean, some people are trading this so fast that if you switch from daily to 1 hour, these charts will respond to that, right?
Okay.
And depending on what your actual thesis is for trading some of this, then you might think, you might want to use the whole past week of price action even on this hourly chart here to give you some smoother lines. But it's all personal preference. But yeah, the defaults are set there for a reason to give you the main thing, I think. Altering the inputs would be if you're altering that standard deviation, because that categorically changes the bands, right? So here under the default, using 2 standard deviations,
It's going to be wider.
It's going to be wider, and it's going to encapsulate
pretty much everything.
Right. And so if you change that to 1, that's perfectly valid, but it's important to remember that changes, the data points that will fall into that to around 70%, right?
Yeah.
I just bought the New Zealand dollar CAD.
All right.
5 pips size.
There you go. 5 micro lots.
5
New Zealand dollar
lots.
CAD.
New Zealand dollar CAD on the lower end of the bandwidth.
Oh,
nice.
Oh, Mr. Technical Analysis now. Look at this.
Yeah.
Look at this.
You see on the daily chart.
The daily.
The daily. On the lower end of the band.
There you go.
Okay.
And average true range near bottoms. If you assume that that's going to increase, maybe you get some volatility to the upside.
There you go.
In which case, that's going to be good.
All right. And so you're looking for not too much, maybe even that 0.82 level is
just pass through the mid range.
There you go.
What else am I asking for here? Nothing crazy.
I mean, you could ask for positive carry, but these are pretty,
It's
you're
basically
buying that,
neutral.
and it's
Yeah.
basically neutral. Absolutely right.
So if I put this on, I would be synthetically, or no, if I bought this, that would be different than the pound New Zealand dollar trade that I have on.
You'd be double New Zealand.
I'd be double New Zealand. What's the New Zealand dollar doing generally? Down?
It's down right now, yeah.
All right, so I could do that.
Yeah, why
Do
not?
double.
Double up.
Yeah, we'll do it small.
But you're kind of neutralizing your double with the different pair.
Yeah.
Yeah.
We'll say.
And we've seen some, divergence between European currencies and North American currencies. So
Yeah.
if U.S. has any tailwinds, if the U.S. has any strength, perhaps Canadian dollar has some of those tailwinds as it pertains against the British pound. So some unique exposure there.
Which do you have one off the top of your dome on, and then we'll let you go after that. I know you have to get to lunch. Very hungry. He's a hungry growing boy. We have to get him.
Yeah,
his food.
you do not want me hungry.
Yeah, hangry. A pair that is currently kind of higher outside of its normal range. Something that I could be short.
Something that you could fade a price extreme.
Yeah, on the upside, because we're kind of playing. I got, that was one where I'm playing, on kind of a downside price extreme, so to speak, or on near the lows. There's something that you can,
Yeah, I think you've found it with that British pound New Zealand dollar. That one, you had a little reprieve, and now we're back to where we were. And so if you wanted to layer into that one, that's up there for price extremes.
Okay.
But a lot of these U.S. dollar pairs are healthy within their ranges right now. Nothing too crazy going on. But that New Zealand dollar has had some historic weakness.
Okay, this could be a cool one, because then I'll have my 2 line items here.
Yeah, there you go.
So now I can look at each one of my entries. This is not something that I've done before. I've been straight in, full bore each time. So now I have this a little bit bigger than I normally go.
And because you made them unique position sizes, you can close them in either order.
Oh,
so
cool.
If you had, just doubled into it and had another 0.05 lots on it, then you would be required first in, first out.
Oh.
But because
It's a different lot.
Correct.
Oh, that's a good thing to know.
Yeah, so increased flexibility here.
Very nice.
Yeah.
Beautiful. Well, thank you, Mr. Glenn, for
Thank you,
joining
guys.
us. We appreciate it.
I'll
Always
save
fun.
you a tuna sandwich.
Please. I always eat a tuna sandwich, honestly.
Yeah.
I think there will be some
Yeah.
left for you.
Thank you.
so-
Yeah.
There always is.
Yeah.
There always is.
No more turkeys because everyone likes turkey.
Yeah.
Nick.
Yeah.
Everyone.
Enjoy it with
Everyone.
your extra mayo.
All right. See you guys.
Thank you,
Happy
sir.
Nvidia Day.
We'll catch you later. E-mini S&P 500 futures, we're up 3 right now. You got the NASDAQ down 20. A little bit of a sell-off here, middle of the day. Spooky.
Spooky, spooky.
Almost spooky season.
Literally.
Spooky season is coming up.
How about this natural gas rally?
Yes.
I think we might have been onto something with the rotation out of the U and into the V.
Yeah.
I think the shorts are now becoming long. You're seeing almost a 4% move in the V, and the U doesn't trade anymore.
Yeah, I think I gotta take some money and run here. I had 2 of the micro natty gas contracts. I closed one 30 ticks lower.
Wow.
Which was still a profitable position, but I think I did these. Yeah, so this will be net 50, 60, about 50 ticks each, average.
Yeah.
So I'm going to take that money and run.
I like it. I like it a lot.
Beautiful. Nice.
Yeah, so I'm long. The only one I got long was in terms of FX, long the New Zealand dollar CAD. 5 micro lots.
There you go.
So, we'll see. We'll see what happens there.
We just
I'm still
set them and forget them. That's what we do with these things.
That's literally correct.
We just,
And check back in a week. I
See where
forget,
it's
I
at,
forget
take-
that I have it on, and then I'm just like, oh, maybe I can check on this thing.
Yeah,
Or
I mentioned that with my dad. It's if you stay small enough here, you can just sit with it.
Yeah.
And if you're taking, it's all commission free. There's a spread, obviously, but if you're small enough, you don't get squeezed out of these positions, and you can hold them and take 20, 50, 20, 30, 40, $50 out of them and move on to the next thing. Fun little diversification.
For sure.
Yeah.
So what position do you have on Nvidia?
I have a downside. So I have the 175 strike in October, the put. And then this is part of a crab trade. I have 2 trades. I have the crab trade, and then yesterday I put on an iron condor in the cherry picks. So I have a 2-day iron condor. That's the $5 wide, 92.5, 97.5, and then the 67.5, 62.5. And then I also have this downside crab trade where I'm long the 175 in October, short 2 of the 165s in the weekly. That's this one, and then long the 150 as a way to cap my risk. So it's a 10 by 15 point wide downside crab trade.
I like it.
So my overall delta on this position, we could look at it here, Nvidia. My overall delta, I'm short about 17 deltas.
Beautiful.
Yeah.
I'm thinking I might do something a little spicy here.
What do you think, Ken?
I kind of want to do a symmetrical butterfly in the 2-day.
Okay.
180, 170, 160.
180. Oh, butterfly.
Just a
okay.
butterfly for $2.
180, 170. Okay, so just a buying a butterfly, just taking
Straight
a
up
little
butterfly.
downside shot. Yep.
And then
Okay.
buying a call calendar spread at 190. Long October, short the 2-day for $5.
Okay.
So the thesis is you get an inside down move, that butterfly appreciates, you sell out of it. Over time, people say, oh, Nvidia's down, let's buy it. And over the next month,
So you're playing for the flop then pop.
Yes. I think I'm going to do it. I have to do it.
Okay.
It feels right.
You got to do this in 2 transactions.
Correct.
Your net delta on this position is going to be basically 0.
Yeah. But collecting reducing basis with a lot of 2-day premium for sure.
Are you doing the September for the 190?
October.
No, for the short option for the calendar.
No, the 2-day.
Oh, the 2-day. Okay.
Yeah.
All right.
Because the October is $7 and change. The 2 days $2 and change.
Okay.
So you're still
so
reducing,
$5. Yeah, 5.
Yeah.
So
you're reducing basis by 30-40% still.
Okay.
I'm gonna do it.
Okay.
Spicy.
I'm excited.
Yeah.
It'll be fun to see what happens.
Yeah. So yeah, calendar just got filled at 5:15. Long October 190, short the 190 2-day. Basically the expected move. And then the downside butterfly is the 2-day butterfly.
Mm-hmm.
If we rally to 190 tomorrow, that calendar spread will probably be more than a $200 profit.
Okay.
And if not, the flop and pop is in session.
And if we blow through at 200,
then I'll just laugh.
Yeah, then you'll be out on both.
Yeah.
That's really your risk.
The blowout to the upside
or blowout to the downside.
Yeah.
You're playing for an inside move.
Yeah.
This is a complicated way to play an inside move.
Correct.
You got a lot of variables, a lot of moving pieces here.
But there's a lot of profit potential. When I say upside, there's a lot of profit potential. If there's an inside down move, that butterfly is going to be a nice trade.
Mm-hmm.
And that long option is still going to be on for the next month.
Okay.
So
I like it.
you could hit both. If there's a downside move, you could hit both. If there's an upside move, probably not.
Okay.
Just got filled on the butterfly at 208.
There you go.
So total package, 515, 208. Carry the 2. That is 713 in total risk. 723 in total risk. And I'm excited. It's gonna be great.
I like it.
Very spicy.
Very spicy. Glenn couldn't handle that spice, no doubt.
Yeah, I'm actually gonna look at this analysis mode here. Let's just push it to tomorrow. Let's crush that IV. 5 percentage points in the back. Yeah, so you're looking at the theoretical range of profitability is between 170 and 200. 200 to scratch. If you push this tomorrow and crush IV in October by 5 percentage points.
Okay.
Sorry, push it to Friday. Push it to Friday.
You'd have your butterfly expire out of the money too,
Yeah.
so you lose $200 on that.
Yeah, if you push it to Friday with the same thing, crush IV in October by 5 percentage points and push the analysis to Friday, Theo mode, you have a sort of a squiggly M looking thing.
McGarrigle pattern.
McGarrigle pattern. I'll tweet this out when I post this trade.
All right.
But
I'm excited.
the Friday break evens are down at 164 and up to 204.
Okay.
If this is all correct. With a nice wide myriad of ways to be profitable in the middle.
Okay. All right.
Kind of love it. This was inspired by, I forget who was doing it in the YouTube chat, but they were doing call diagonals to the upside and then symmetrical butterflies to hedge to the downside at the expected move, to hedge the risk of the call diagonal, and then vice versa.
Mm-hmm.
Spicy meatball. All right, so we're locked and loaded for Nvidia after the close today. What time do they announce? Do you know?
I can try and look it up.
It's probably like 3:05, 3:10.
20 minutes after.
Okay. All right.
I don't know when the conference call or if they're going to have some sort of, I'm sure they'll have some sort of grandiose conference call video, something.
Nvidia market cap larger than California's GDP. Yeah, sounds about right. It's larger than a lot of GDP.
Yeah, things have gotten big.
Didn't we just do that analysis? Germany? Larger than
Something
Germany's
like that,
GDP?
yeah.
So there's some weird thing.
Yeah.
You're a Jayhawk?
I am.
Rock chalk, baby.
Rock chalk. Right.
Iron fly. I've got a 0-day iron fly in profit. To block it and avoid PDT, is it possible to do a debit iron fly by arranging the center strikes above or below the one on the credit?
You would have to do it. You'd have to do them butterflies. So if you're, okay, so you're short. Yeah, you would have to do it. You would flip it, but so what you would have to do is you'd have to buy.
Just buy all the opposite legs.
Yeah. Well, no, you'd. Well, yeah. You'd flip it.
Yeah.
So you'd sell the in the money call spread, buy the in the money put spread at the same strikes.
So that you're long and short.
So you'd have at each strike, you'd have long put, short call, short put, long call.
Yeah.
Your new trade would be long call against your short call against, or short put against your long call.
Yeah.
So you would have.
So on this visual, you'd have a red and green bar on each of your strikes that exist.
Yes. So this is your original trade. You would be so if you have the iron fly, whatever the strikes are, you'd be buying the put at your short call strike.
Yeah.
Selling the put at your long call strike. Buying the put at your buying the call at your short put strike. Selling the call at your long put strike. It's the exact opposite on this page.
Correct. And yeah, you would be sacrificing some of your profit with slippage and commission costs.
Yeah.
That's about it.
Yeah.
But it's tough. It's tough to be doing these if you're in
such
PDT.
a small, if you're in PDT.
Because then you're doing this all the time and it's eating away at a lot of your winners.
Yeah. It stinks. But maybe PDT will go away someday.
Maybe.
Hopefully.
Please.
Yeah. Be nice.
I'm looking at the break-evens and profit curve for double diagonals for CrowdStrike, and it looks appealing. Do they have...
They have earnings after the close today.
Yeah. Okay. Yeah, there's a little bit more IV in the 2-day, but I think what you need to do, if it looks really appealing, you're not crushing implied volatility enough in October.
Yeah.
Because you really gotta you have to account for the fact that one of these is gonna be a loser.
Yeah.
If you're doing double diagonals. So.
Are you doing October?
Yeah, October.
What strikes? 400. Do 30 delta, let's say. 400, 460.
Mm-hmm.
And then we'll sell the 380, 20 points. You want to do 20 points, and we should just look at this. And then the 680. Yeah.
Mm-hmm.
I gotta get my short put spread out of there.
Yeah, so you gotta crush IV, and that will bring this profit range way down. But yeah, if you assume that one of these spreads fills up to max intrinsic value, and then your whatever is left in your remaining out of the money long option equates to more than your debit paid here, then yeah, it can be a nice trade. Your worst case scenario is in between these strikes.
Yeah.
Because then both of these lose a lot of value.
Yeah,
There you go.
I just moved to the end of the week, and then, you're going to have to crush volatility a lot. In something like CrowdStrike, which has a lot of upside call skew, you really got to be correct on the call side. You can't expect to make much on a downside move.
Yeah. But yeah, crushing IV more than you think is the key here. Crush it by 10 percentage point, 15. It's well in the realm of possibility.
Yeah.
So.
Yes.
Just got to be mindful of that. And because you're paying a lot, you're not going to be able to cover the width of one of the sides.
So you have tail risk.
Yeah. So in these situations, I almost like just doing a double calendar a little bit better. It'll be cheaper. And if you're right on the call side, it'll be it can be nicer, but they're tough regardless. The doubles are tough.
Yeah.
Rolled a losing position into crowd. Let's see. A 440, 450 put spread with a credit of 468.
440, 450. Do we have an expiration?
SEP. 440, 450.
Yep. In the money put spread.
Yeah.
Yeah, I mean, it's a 50-50 shot. I know the pop is 36, but you're inside the expected move. So you're a 50-50 shot here going into earnings. You have $400 in risk. You're synthetically going back to the PDT question. Bless you. Good sneeze. Woo. Great sneeze. Got it out.
I think I hit the mirror.
Yeah, there you go. Might have to clean that thing.
Glass.
You're synthetically long the 440, 450 call spread.
Yeah. So to answer the question, is it worth straddling it in September? No, I would not do that.
No.
Because you'll pick up more premium, but you basically end the trade.
Yeah, you're stuck.
Because now you have a pop of 11%. If you just look at the current pop, if you create an iron fly, 10 points wide, this is a dead trade. It's done.
Yeah, you're done.
You could roll out to October and widen the strikes, but
no.
Then you lose a lot of the value you can get back if you're right.
Don't throw good money after bad. Just
I think
close it or hold it. Those are the two
Yeah.
options.
Yeah, you're not down that much.
Yeah.
On this trade, if you're
worried
about it,
close it and sell an out of the money put spread.
Mm-hmm.
And the $200 or, if you do it 10 points wide and you do it at $3, if the stock goes up after earnings, you'll make back the, $100 or $200 in loss that you have in your current position. But you have more buffer to the downside.
Yeah. What's a good trade to put on Nvidia for earnings? We don't know the good trades yet until
I
the
wish I
announcement.
knew.
Yeah. Once the announcement is made, we will know what the good trades are. So with that said, you just got to keep your risk really small and be tolerant of a max loss. And my position, I'm tolerant of max loss.
Yeah.
But they're both very small positions. And one of them to the upside has a longer time frame.
Mm-hmm.
But that's it. You just got to, with earnings trades, you don't have any control after the market's closed unless you're buying shares of stock or shorting shares of stock to hedge delta. But even in that case, it's a very dirty way of hedging unless you have static, long, naked options or short. But long, naked options is how you can completely hedge.
Michael have those posted after the show. Somebody asking about.
I can post it. I'll post it.
There you go.
I'll do it while I talk. How about that?
So you can get all these trades on the follow page. So in the platform on the left side here, we got the little follow button. It's just below the history. Follow here. And then you click that, you can see all of our beautiful faces.
Just
got Ryan on there. Got all the peeps.
Mm-hmm. Let's see. Can you look at something like the 2-day, 9-day on 30 delta shorts and $5 wide on the buy sides?
For crowd?
For crowd. So yeah, if you're going really short term, it's a little easier to do. But this is where this is an example of like if you like the way this looks a lot, you're not crushing IV nearly enough in the 9-day.
Mm-hmm.
So in the 9-day, you have to assume in crowd that IV of 71% goes to 40.
And there's time value too, so you have to discount for how much time is coming off the table.
Yeah.
A quarter of the time is going to be off the table.
Yeah.
Too.
If you push this to Friday and you crush the 9-day, if you crush that by 30 percentage points, what does that look like?
And this is just like synthetically taking that off the table here. Oh. Oh, I have to take my put spread out of there.
I love when the Three Musketeers shows up.
Yeah. Shoot. Sorry. I got to move this to the other side. Oh, this reset.
There you go. There you go. There you go. Boom.
This is probably what your risk profile is, realistically speaking.
Yeah.
Because you have to account for the fact that 2 days or even tomorrow, with volatility baked into like right now, after the announcement, it's going to be a lot of premium coming out of this. And so they're all going to be like this. They look very, very interesting. You just have to understand that you want, like, your trade is to pin your long strike. And you got to hold it.
Yep.
You know, like, that's really your play. If you get a move that's, you know, to 500, let's just dissect what this trade would look like. Or let's say it's at the expected move, which is what? You got the expected move there?
For CrowdStrike, 31 points.
31 points. You get a to 460 or 470.
Yeah.
This spread is going to be worth $5. You're paying, you know, $7 for this. You're going to lose basically all the value from this spread. And so, yes, you'll have $5 plus the extrinsic value in this long option. You're probably, you know, a scratch in this range is exactly what this is looking at. When you get the outside the expected move, you're going to lose money on this trade, even though you're like sort of correct. So it's really playing for pinning the long strike.
Yeah. And that's the same if you were to do a double calendar.
Yeah.
Same story.
Yes.
Pinning the long strike, ideally to the upside.
Yes.
You'll always see this where there's more profit potential to the upside.
If there's call skew.
If there's call skew. And really it's just because the stock price is increasing, all of the extrinsic value increases with a higher stock price.
Yes.
Any advice for managing CoreWeave diagonal if it doesn't rally? 120, 130, October, September.
Yes. Yeah, so I have this on. I'm out about $100. I might just close this now. I think this was a bigger loser recently. I mean, CoreWeave is probably going to move on the Nvidia earnings because they are very closely tied. I'm just going to close this out. I don't have a bone to pick here. Take a $100 loss.
120, 130.
Yeah, I have this on. I think we did this. Was this a fast market?
Potentially. I didn't have anything on in there.
Markets stink.
Yeah, the last trade I had on CoreWeave was a butterfly in the beginning of August. Or actually late
there we go.
July.
315. So I'm out for, so I'm taking a $113 loss on this. We did this on the 14th. Yeah, I think we made back some money today, so that makes me happy. But yeah, closing that one out.
So that what we were looking at with the 2-day, 9-day, they were looking at inverting. So the longs further out of the money than the shorts. We don't do those because it's a mirage of your risk because you have the risk profile is fine on the platform, but you have credit spread risk then.
Yeah.
Where if you get a move too much, not only are you losing your debit paid, but you have credit spread risk because your short option is closer than your long.
Yeah.
So it's just, you're basically looking for nothing to happen for earnings, your shorts go to zero, and then you get the move to your long option after the fact. But if that doesn't happen very quickly, that value will dissipate pretty quickly. So we stick with the standard debit diagonals. That way our risk is the debit versus the embedded credit as well. Any last questions here? A couple minutes left. So yeah, today, Nvidia.
Yeah, I gotta get mine.
CrowdStrike.
Snowflake.
Oh yeah.
Is it gonna snow tonight?
No, I don't think so. It's getting chilly, though.
It is. It is, unfortunately.
It's getting chilly. Yeah, Snowflake will be interesting. 20-point expected move. This is the highest implied volatility. 20-point expected move on a $200 stock. That's 10% of the notional value of the stock price. That's pretty high for earnings, especially when you look at October, 27-point implied move versus 20 for the 2-day cycle. This one's kind of interesting for some short premium against some long, but I think I'm just going to stick with Nvidia since I've got the double doink going.
Beautiful. E-mini's up 11. You got the NASDAQ up 18.
Cancel
Bitcoin
crash.
rallied a little bit. Cancel crash. What do you say we get out of here 2 minutes early?
Let's do it.
Cool.
Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Glenn's at Glenn Freibarger with an A. Go hassle him on Twitter. But yeah, we got some Tasty FX positions on. I just got the long New Zealand dollar over the CAD, Canadian dollar. It's up a couple of shekels here, but we shall see. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Peace.
It's options. Jive. Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with an option jive.
Music with that.
What's that?
Just say option jive. I gotta get a little music or something.
It should have something.
All right.
Even the SP is down 4, Sadnov. All quiet. I'll let you know if anything happens.
Thank you so much.
Nothing's still happening. Just so you
So now we got to do some little research, huh?
Let's do it.
I'm back, bitches.
I'm back. You are.
It's 8:12 in the morning. So happy to be back in Chicago. Kind of. I enjoyed my little world tour. Next world tour, just so you know, is San Francisco in a week.
Yeah, it's right here. I was talking about it all day yesterday.
Yeah, we're in San Francisco a week from this Friday.
September 5th. tastylive.com/events, Saznov.
We're at the Regency Ballroom. I don't think we've ever been there before, but I am looking forward to it. And I'm supposed to be having Peking duck there, so I'm very excited about that too.
Wow.
Yes.
I know I'll be having Peking duck. You may have some sort of exotic place that you have to go to see friends of yours.
Doors open at 8 a.m. in the morning. The show starts at 9.
Yes, they do, Saznov.
And we're looking forward to seeing everybody in San Francisco. We haven't been out there in a while.
Are you in hair and makeup for that hour between 8 and 9?
God. And can't wait to see you all. We have not been to San Francisco in at least, I think, a year or two. So
longer for me.
Yeah, well, you should be banned from San Francisco. But one of our favorite cities. Can't wait to get back out there. And if you haven't signed up yet, tastylive.com/events.
Come out and see us.
See you in a week. Week and a half. Plenty of seats.
A week and 2/5.
Yeah, we always make sure. We never turn anybody away for these shows. All right, let's do it. So the research team wanted to give you an example of going long in something, okay? How do you get long? And again, we're going to probably do one of these things in getting short as well. So we picked gold, and we're going to use GLD because it's a gold ETF. It's I would give it 3.25 stars liquidity-wise. I'm not going to give it 4 because it's not there. 3.5 might be a little bit of a stretch. 3.25, all right, I'll give you that. But
and subject to change. Markets get a little tighter.
Yeah.
They get a little wider in there.
I mean, it's not quite as liquid as GC, but it's the best of the gold ETFs.
It's a lot smaller than GC.
5 powerful market plays for getting long. And in this case, we're using gold as the example.
Yep.
We're using GLD. We're not telling you to go long gold. That's for sure.
No, we're just showing you the different ways that you can do it. 5 different ways.
We're showing you 5 different strategies to go long. We're using gold as the example. All right, Beth, let's go.
And you can use this, this is just gold, but you can use this in anything, any stock.
That's my whole point. Yeah. 5 ways to go long. Mm-hmm. Okay, so we're going to talk about long stock, covered calls, synthetic longs, put credit spreads, and a call debit spread. All right. So just buying stock outright, buying stock, selling a call, doing the synthetic long, which is virtually the same as long stock. The put credit spread, which is selling an out of the money put spread, and the call debit spread, which is buying the at the money, which is, okay. We made this really simple so you can see kind of the buying power on the right-hand side from full notional to full minus the credit to 20 to 25%, to the width of the spread to the net debit. One of the things that separates trading in 2025 from trading in 2005 is just how people control their buying power usage.
And the ease of controlling your buying power.
Yep. And so all of it's laid out in this slide. Let's go next slide. So the first slide here, well, the first one of these strategies we talk about is just long stock. This is your black and white plain vanilla trade. Just go out and buy the stock, Tony.
That's correct. And you don't have to buy 100 shares of anything. You can do odd lots if you really wanted to. You know, you could do whatever you want, but 100 matches up to options. That's why we use 100.
But everything, for the purpose of this discussion, everything's a round lot, which is 100 shares.
Multiple of 100. Right.
Top 50. It's a 50-50 shot. Delta is 100, of course. The max profit, unlimited. The max loss can be stock go to zero, I guess, but that's assuming. I don't really think that that's fair because I don't think gold can go to zero. And the buying power reduction is.
Well, I didn't think oil could go under zero. So, I mean.
Do you think gold can go to zero? Because there'll be a lot of people.
No, but I didn't think oil can go under zero.
There'll be a lot of people zero bid for gold. And oil in the.
You'd have to get past my boy Frankie in the chat room before you get to zero, okay? He's going to be 1 cent.
Let's be clear about oil. Oil got under $10. But the oil that actually went negative was an oil contract that was expiring that day that had to be delivered.
That's correct.
So, but the actual oil, the futures market oil never got below. That is correct. 10.
That is correct.
So the buying power reduction is half of the notional, and since it's a $310 stock, it's $31,000. Let's go next slide. That's pretty basic. So then we just add a short call to this, and this is what happens when you sell a call against your long stock. Now the difference here is we would never sell a 63 delta call. We would have sold an out of the money call. Yeah, so I'm not sure why they chose that particular call here. Maybe because
it is the oil's 311, gold is 311. They're selling the 318.
They are?
Yeah, it's giving you $62. There's a cover call.
I'm sorry.
Let me explain to a cover call. I know it's a little bit difficult for you. You just did 100 shares by buying it.
For me is reading the screen.
You just did 100 shares by buying the stock outright. Now they're showing what else you could do. You could buy the stock outright still. We still have that stock.
Like I said,
now
the
we're
research
giving
team
somebody a
is
contract
spot
to
on.
take that stock away from us out of the money. Go ahead. You can get
I will
it.
correct Tony here, and the research team is spot on. Don't diss the research team. The pop here goes from 50 to 63. Your delta is 63. That's your pop. Your max profit, because you've now capped it, is 1,200 instead of unlimited. Your max loss, obviously, $1,000 less. And your buying power reduction goes down by 500. It's not a dramatic change, but the most interesting part of it is your probability profit goes from 50 to 63.
Right.
That's pretty damn good. That's almost, you're almost improving it by 25+%. Let's go to the next slide. Well, a synthetic long is buying. No, go back, Beth. Right there. So a synthetic long is buying a call and selling a put of the same strike. Could you do different strikes? Of course. But if you do different strikes, like buy an out of the money call and sell an out of the money put, you're going to have a lower delta. But you can do it on any delta that you want. A synthetic is just, hey, buying a call and selling a put is a synthetic long. If you want to buy an out of the money, if you want to sell an out of the money put and buy an out of the money call, you can do that too. Doesn't matter. Whatever the net delta is, that's where you are. In this case, the buying power reduction is only $7,000 as opposed to buying the stock outright. So there's a little bit of savings just because of the way margin rules are written. But it's still a delta of 100, and it's exactly the same as the synthetic long.
And I would prefer that over the long stock myself.
The requirement for the long stock was a minimum of 15,500. The requirement for this trade is 7,000. That's interesting. Okay, it's more capital efficient. That's why we're showing it. Let's go to the next slide. So this is kind of a classic short put spread. Now you're getting up to the 70% probability of profit, and you're getting to buying power of only $364. So now we're in a different world here. We're starting to use options as both a synthetic and a strategic approach to trading. We're improving our pop up to 70%. We have a much smaller delta, so trade's going to move slower. We have a much smaller max profit, only $136. We have a max loss of $364 and a buying power reduction, which is equivalent to the max loss, $364. Pretty simple, pretty straightforward. We've been talking about this for years.
Yep.
Let's go to the next slide. And here we have the $5 wide call debit spread. This is where we buy the at-the-money call. Either we buy one strike in the money or at the money, and we sell an out-of-the-money call. In this case, we bought a call debit spread. The pop, if we had moved the long strike, one or two strikes in the money, the pop would have been 50-50. But since we did it just at the money, the pop's a little bit lower. It's 47. The delta is the same as the short put spread. The buying power reduction is 220. That means your max profit is going to be the inverse of, or 280, and your max loss is 220. The inverse of the width of the strikes. Classic. It's a classic long call spread. Let's go to the next slide. So stocks give you a single way to take risk, long or short shares, but options provide a toolkit of strategies that let you adjust probability of profit, define the risk and reward precisely, and scale positions with less capital compared to stock ownership. One of the reasons that the industry has gone from 8% option trading in 2001 when we first built Thinkorswim to almost 70% now in 2025 is precisely that reason. You can scale positions with less capital compared to stock ownership. Period. Do-do-do. That's it.
You good?
I am good.
Let's take a quick 90-second break as even the S&Ps make new lows. Enough down $7. Gonna make you a holler? We'll find out.
I thought they were crashing.
We'll find out right after these messages. The opening bell next. Tomas, we're back, my friend, with the even the S&Ps unchanged. NASDAQ trying to bring us lower by 65. Russell up 12, strongest of the group, and the Dow up 100 and change. So don't panic over there. Try to have some, diamond hands.
Have I ever panicked?
All the time.
Never.
All the time.
I haven't panicked in a long time.
I'm just kidding. You're good, boo.
Let's do it. Before we'll talk about other stuff in a second.
Sure.
I just spent 4 days alone with Tony. That's a lot of time. Like I should win something.
Oh, come on.
I should get something back.
You guys had fun.
I should win something, get something. I should get a prize.
He's easy to travel with.
Yeah, he's easy to travel with.
I am easy to travel with. Come on.
Yeah,
like you say, like, yeah, he's easy. Like you gave me a bone. Like really, I'm a pita, but you like threw me a bone.
Yeah, he's easy.
I carry a bag for you.
You don't carry my bag. You didn't put it up on the thing.
I didn't put it up on the thing. Are you going to talk like this for the rest of your life? You mean I didn't put it in the overhead? I didn't take your luggage or suitcase and put it in the overhead? What are you missing these words?
You made me.
The sad part is we know what he's saying.
I know. It's horrible. That is.
Made me put it up in the overhead myself. I could have injured myself. A lot of things happening.
Protect the head. Protect the head.
Protect the head. Yeah. You didn't pre-order me my meal.
Scott and I both had the same meal. We got the pasta on the way home.
Good. Cheese tortellini?
No. Pasta with like peppers on it or something. It's horrible. It was really horrible.
Always get the cheese. Always get the cheese tortellini.
Oh, it wasn't it?
Whatever you do, get the cheese tortellini. I've been telling you this for years. Oh, a little bun scalp. Something, honey.
Bon Scalpellini, 1323. Good job out of you.
Took my 6 ticks.
Did you roll up puts in Reddit? What's wrong with you? No,
I rolled down calls this morning. Rolled down calls, rolled up puts. Do the whole thing.
You really like to get twisted in the wind, don't you?
Yeah.
I mean, show some intestinal fortitude for time on time. I
let's
mean,
do
you've
this.
been here a long time. I mean, come on.
Let's do it, Beth. Let's see these trades.
Now we can do it. What's your assumption?
Down. All right, Jack from Guilford, Connecticut. Okay, Jack, true story. My dad lived in Guilford, Connecticut for about 2 or 3 years on a pond.
On a pond? He lived on a pond? In it?
Next to a pond.
Oh, next to a pond. Okay.
Next to a pond. I used to swim in the pond and go fishing.
Is that where the first snake bit you? Is that it?
I have never been back to Guilford, Connecticut, but for about 2 or 3 years, I don't remember what year it was. Had to be in the early 70s. My dad lived in Guilford, Connecticut, and nice place, beautiful. DUOL. I
don't know what this is either.
I don't know what that is. Let's take a look.
I think we've actually traded once before, though.
DUOL.
We've looked at it. Duolingo.
Oh, Duolingo.
See, now you know it.
$319 stock. Traded 98,000 shares today. That's not good, Jack.
No, this is going to remind me of MDB right now.
Yeah.
I would probably say
October
no
17th,
bueno.
36. Okay, hold on a second. Let's see what we got. He wants. I have not looked at this stock in forever. Stock's on its butt. It is up $3 today. Stock's on its butt. That's why you want to get long it, right?
Hope you got long it yesterday, even if I would not have.
Filled the gaps from Feb to May. Strong volume from the beginning of August. I like the chart. IVR 30. I think I could have been on board with you, Jack, here, but the stock's up too much today. If it goes down on the day, we'll put something on. I actually don't hate this play, but this is a very illiquid stock. Like I said, it's only traded 100,000 shares today. This is a tough one.
Yeah, I abstain.
Yeah. So I'm gonna pass for right now. And if the stock sells back off, which I know you want to do if the stock was lower, which makes sense to me. I like the call. Let's go next slide. Mike from Salem, Oregon wants to do the 0 DTE $20 iron fly at the opening, taking profits at 10%. SPX. We'll go to
Vicky put it on yesterday. Worked very nicely for him. Took, I think, 20-ish%. Half the
0 day. You want to do the iron fly.
Yeah, we didn't do the iron fly. We did more of a classic 30-ish delta on each side.
$20 wide.
You're going to collect around $5.50 or so.
What? $5.50?
I said you're going to collect around $5.50 or so.
$20 wide?
I mean, you should get.
Looks like I'm going to collect about $11.
You're not using the right strikes.
$20 wide, right?
Yeah, $20 wide. You're not going to collect half the width of the strike. Oh, you're doing the iron fly. I said
That's what he said.
did a classic iron condor at the 30-ish delta where you're going to collect around $5.50.
I know, but our man Mike here said
you never do what anybody asks you. But go ahead. All right.
Okay, Mike. Iron fly done on the opening. Let's see. We sold it for $11.05.
You are correct.
I think that's mid price. Let's see what happens. That means our goal is to take like $1 out of it, right?
That's correct.
Yeah.
That's correct.
Charlie from Omaha, Nebraska.
Hey, Chaluch.
Looking at BMNR.
Who?
BMNR. Now this stock has already traded.
Bite me. Oh, bit mine. Sorry. Sorry. It said bite me. Sorry. Bit mine. I apologize. I apologize to Beth. I apologize to everybody.
Charlie, that's what happens when you get old and you can't read.
New stock.
Bit mine looks like
40, 50 cent, 70 cent wide markets. What do you think here?
Our man is bearish, and the stock's down $2 today already.
Volume is relatively It's okay,
which is a
actually.
pretty good call.
Open
stock
interest,
is a
you got some
complete
thousands
muscle
on here,
car.
Sosnoff. Just came out with dollar-wide markets, strikes, I'm sorry, not too long ago.
Let's see what we got here. SEP options 23. Let's go to.
You would look to go to October, wouldn't you, with 51 days? You got a lot of open interest in the calls. This is tradable.
Yeah, I'm gonna.
And open interest doesn't matter to me but if a bid ask and trying to see what like I'm not looking at open interest.
I just want to see how this thing trades, Charlie. So I'm gonna I'm seeing where the skew is too. Let's see the calls.
Skew is going to be the upside, Thomas. Come on, you got to look at this. I mean, you've been doing this for 40 years. You got to freaking understand where the skew is.
I'm gonna trade. I'm gonna sell the 35.90. Seems kind of crazy. 35.90 strangle.
35.90 strangle is not doing what the gentleman said here. I mean, it does have a little bit of short delta here.
Little tiny bit.
Like 2.
I just want to see how bad the markets are or good.
You're talking about liquid, how liquid the markets are, right?
Yeah, I want to see where I can get filled.
Well, I mean, you've got 5-cent wide markets. You probably got filled 2 cents off a mid price.
3.
Okay, well, you're horrible.
I did this trade for 488.
I
just want to see what's going on, Charlie. So let's test it out. I mean, the stock.
You could probably do it better, Charlie, with your eyes closed.
I mean, the stock's already down $2 today, and it's only a $45 stock, or $48 stock. So I'm not going to get too short. Let's go next slide. But I like the call.
Mm-hmm.
Now I'm short premium there. I'll watch it. Jake from Boise, neutral in ETHA. I've had a hard time in this stock, Jake. I've had a position on for a pretty long time now. It's been a challenge. Stock's $35. Sitting there. Where am I?
Where are you?
I know my position's not good when I'm inverted.
That's
so
one indication, yes.
What do you want to do? Naked Strangle. I have a Naked Strangles in there. I don't think they're too risky. It's a $35 stock. I think it's completely reasonable. I'm going to be short the 32.37.
32.37.
No,
love it.
Get back. Let's see. Let's do 33.
There you go.
32.38. 32.38 puts me about right smack in the center.
Okie dokie.
No
pokey?
Yeah. We're going to give it a shot.
A shot we shall.
We'll fill this, Jake. I'm just not sure what exact price. It's completely neutral, but I'm working it.
I'm working it, boss.
Let's go next slide. We'll get back to it because we're going to get filled.
Oh, you think so? And you did get filled.
144 and 172.
You rolled in here. You got one back.
Yeah, 316.
Right.
316. Let's go to the next slide. Russ from San Lorenzo, California. Natural gas. Hey, Russ, we got a bunch of natural gas positions on already. We've been struggling in there, to say the least. We are currently in...
Catching a little bid for you, Sosnoff. Flirting with a little bit. Flirted over 290 just a moment ago.
270, 315. We have that trade on pretty...
One of the biggest percentage movers, up 3.3%.
Yeah. 270. We're currently in the 270. He's a little bullish. You know what? I'm a little bullish too.
Okay.
I'm already in a bunch of strangles, but for you, I'm going to
cut them up real good.
For you, I'm going to roll up my put side. And I'm going to take my 270 puts, move them up to 275, because I'm already long, and I'm going to get longer. Okay?
I like it.
So I sold a put spread in there. Let's go to the next slide. Brian from Denver, Colorado. He is neutral to bullish on Nvidia, but I don't want upside risk. Put ratio spread. Well, actually, Brian, I'm neutral to bearish.
Wow.
So I just did a call ratio spread in there this morning. I'm not going to do a put ratio spread because I have a different opinion, slightly different opinion. I'm not super bearish. I just want to play the downside. I think the NASDAQ is overdone here. Let's go to the next slide, because I just did a call ratio spread. I did the 95, 102, 1 by 3. No, I take that back. That's wrong. I didn't do that.
No.
I'll tell you what I did in a second. I did the 192 and a half 200s, 1 by 3 for a 28-cent credit.
In where?
Nvidia.
Oh, yes.
Let's go to the next slide. Topo Chico. Dell. I don't know. Topo Chico, you got it. You have an opinion. September 19th earnings trades. When is earnings in Dell? Let's take a look.
Dell, D-E-L-L. I could do that for you, Thomas. A lot quicker than you can, for sure.
August 28th. That's tomorrow?
After the close.
Tomorrow after the
Not
close.
something we usually trade. 268,000 shares have traded. Markets are okay, and Dell better than you probably would have suspected.
Dell has been drifting higher for quite some time. You're no clue. Take me to the promised land. Oof. I like the 2-dayers in here, and I like the 2-day. This has a $10 expected move. It's a $1.31 stock. So let's say that's a 7% implied move.
Right.
Now the problem is Nvidia has a 6% implied move, so that's more interesting. IV rank is super low at 29. The other problem with Dell is the liquidity just isn't there very much. Markets are 20 cents wide. Nvidia, the markets are a penny wide.
Right.
Dell's trading for 131. The implied move is $10. You go 2 times the expected move. Oof, not much there at all. It's limited, dude. Oof's right. I'm okay with the put ratio spread in this stock. I didn't like a put ratio spread in Nvidia, but I'm okay with the put ratio spread because I think it's gonna be harder to get a decent fill in here. If we go to the expected move, which is $10, we go inside the expected move. Ooh, man, these markets are not good.
Oof.
Let's say we buy the 123s, and
let's say we do that.
Let's say we buy the 123s and we sell the 120s 1 by 2. I think I can do that.
You think you can?
As a put ratio spread for a 64-cent credit? No, I think it's going to be way lower. Maybe 58-cent credit. I got filled.
Nice.
1 by 2, 58-cent credit. Bought one of the 123 puts, sold 2 of the 120 puts. That's my ratio.
I like it.
All right. Okay. I mean, I don't know, Topo.
I mean, it's their assumption. You're playing on it.
The earnings is not till after the close tomorrow, so I want to see what happens first.
Correct.
In there. It's a tough, it needs to trade a few million shares. It's only traded 200,000 right now. I don't love it. Let's go next slide. Sean from Hong Kong, GDX neutral. GDX outran GLD way too much. Time for a breather. I think that's a pretty good argument. The problem is, can you make any money in this damn stock? Yeah, this stock's had a pretty wild run. I think it's time for a breather too. Let's go to AUK. And in AUK, time for a breather means, well, we got to sell something around 20 deltas, 24 deltas in that range. Let's go 20 delta call. And where's the 20 delta put? We're going to go 23 delta call, 24 delta call, 23 delta put. About 195. That's mid price. Nothing done yet. Sean, I think that's the right play in here. Is like a pretty decent strangle. I think these markets are crap. But let's see.
Here's what you think, Sosnoff.
It's probably going to fill. Yeah.
194.
194 is actually not a bad fill because it's only a penny off mid price. Let's go to the next slide. Ajit from Chicago, Illinois. CRM. Ajit's neutral. Long at the money calendar. Front month IV low. Earnings tenor inflated. IV skew strong. Edge to the calendar spread. Okay. All the logic makes sense. Stock's up about $3 today. Stock has currently been kind of flat. Long at the money calendar. So we will sell earnings coming up, like you said, long at the money calendar. Let's sell the, where's the stock? Tony, what strike should I use?
CRM.
240 puts, 242 puts, 245 puts. Which one? Pick your poison.
Earnings coming September 3rd. Stock's at the lower end of its range. Oh, split the baby. Go right in the middle, Saz.
Right in the middle?
Yeah.
245 puts.
Sure.
Doesn't matter. Puts or calls, doesn't really matter.
That is true.
So we're selling the SEP 245 puts. We're buying the October. Oh, they don't have 245 puts. So let's do 240. So we're going to buy the October 240 puts. We're going to sell the September 240 puts.
Mm-hmm.
And the spread trades for a little over $2. I think, man, the volume in there is really light today. What's going on? 215. I did a little price discovery at 215. All right. By the way,
15 it is.
S&Ps are now up on
Up $1.50. Nasdaq still down 46. That's your weakest of the group. Russell is up 590, and the Dow is up 84. Volatility still up 10.
Let's go to the next slide. AJ from LA, Costco, bullish. Didn't Costco have a pretty big sell-off recently?
Costco's had a pretty big everything lately. Costco is up $2 right now, trading $9.43. But yes, over the last 5 days or so, it's come from flirting with 1,000, Sadnov, or back to 1,000, back down to around 950 or so. 940.
Best play in Costco. Ivy rank's pretty decent. Expected move is $65. Stock's trading for $942. I mean, I think you just go down to the one standard deviation put and sell it. The problem is, where does it trade? There's no volume in here. And the markets are 75 cents wide. I kind of like a naked short put in here. No, it's a little expensive. But I kind of like that play.
Yes.
I just don't know where I can get filled. I don't want to give up too much. So I'm trying a bunch of different prices. We're going to come back to you, AJ, because we're going to get filled in here. But so far, no bueno. I think $8 fills me, but if I don't get filled there, then I got to spread it off. Nothing. All right, let's do a spread instead. I tried, AJ. Now we're going to do the spread. So we're going to change our game plan here, and we're going to sell the 890s and buy the 880s. Trying that. You know, Costco's not the most liquid stock.
No, it's not. I actually got into a little trouble there. I
sold the 890, 880 put spread.
Yes, you did.
For 201. I kind of, I don't know. I'm okay with that.
Yeah.
Let's take a look and see how our 0 day is doing.
Trade. I mean, what are you going to do, right?
Let's take a look at our SPX 0 day. It's unchanged.
SPX 0 day is unchanged.
SPX 0 day is unchanged. Now you could, if you want to, you could roll up the put side a little bit because the stock market's rallied.
You could if you wanted.
So I might just roll those up a strike. Now you're saying, why would you ever adjust an iron fly? Because I do that all the time.
Sure, I get that.
So I just rolled up a put spread for $1.50 just to give myself a little, so it's a little bit uneven now, but it's okay. Give yourself a little delta adjustment. It's cool. Is that the last slide, Beth, or are there more? Okay.
That's it, Saz.
So Duolingo, we didn't trade it because the volume was really low. And it would have been hard to sell anything in there, put spread, puts, or whatever.
Right.
SPX, we did the 0 day fly. We're about unchanged on it right now. BMNR, we did sell a strangle in there. ETHA, which is the Ether ETF, we did sell a strangle in there. NG, which is natural gas, we sold a put spread in there. Nvidia, I didn't do the put ratio because I had just done a call ratio spread this morning. In Dell, we did do a put ratio. In GDX, we sold a strangle. In CRM, we bought a put calendar, which is right at the money. And in Costco, we sold a put spread. So we got long Costco, flat CRM, flat GDX, a little bit long Dell for earnings. SPX were no deltas for today. And then natural gas, we got a little bit long. And BMNR and ETHA, we just sold premium. Pretty good mix of 8 out of 10.
Very good mix. Nice job out of you, Saad. A better job out of you out there, our viewers, for bringing us those assumptions. So I appreciate it, even if Tom butchered many of them. We're going to take a quick 90-second break and come back. We got more Tasty Live. Saad, what comes up next? That's right, a market measure. You're always right, Saad. Enough on the ball, sharp as a tack. We'll be back in 90 seconds with Tasty Live. Market measure next.
So today I want to talk about Monte Carlo again. We've talked about it before, but it's so crucial to how the platform works on the underside that I think it's important to cover it.
Yeah, let's do it.
And in particular, I had some historical. So it's called the Monte Carlo method, based off of the Monte Carlo casino. But that actually isn't developed anywhere near the Monte Carlo casino. That's a code name, which is a fun fact that we're all going to get into today. But yeah, we'll talk about Monte Carlo method. It's sort of a really powerful tool for using randomness to unlock deterministic things in a surprising way, to do computations that would be deterministically sort of infeasible and to get very accurate results very quickly. And, it helps us blow up bombs quickly, or it helped make sure bombs would explode once upon a time. The actual ones that got dropped were dropped before the method was developed, and they were just crossing their fingers that it would work. But in the post facto, they determined how to do it. So let's get into it.
Try it. Let's do it. I've been to that casino.
The real problem here is that despite the fact that people tend to use the phrase exponential as if it meant, super fast growing, and it is very fast, right? If 2 is your base, the exponential growth goes 2, 4, 8, 16, 32. Right, that's pretty quick. And for most people, right, that's the rate at which bacteria will reproduce. For most people, that is as fast as they can conceive of everything. There are many faster rates of growth that come up in mathematics. Combinatorial or factorial growth comes up when you're considering paths or different arrangements of things, right? And those, instead of being multiplied by the same number every time, they get multiplied by a larger number each time. So they grow much faster than exponential. They completely dwarf exponential. They make exponential seem like linear. It's 2, 6, 24, 120, 720. It gets out of hand too fast. But the thing is that American options can be exercised at any point in the life of the trade, which means that the entire path of the price matters, which means that we do have to consider all the possible paths, which can make it sort of impossible to actually model or get precise answers to things. In a pure Black-Scholes model, you can do this because Brownian motion and normal distribution are very well understood, so you can short circuit a lot of the computation. But if you want to do anything a little more complex, any sort of local volatility or dynamic volatility model, those tools go out the window, and you're left sort of flailing about, wishing you could conceive of all the paths at once. So instead, what we're going to do, and what happens inside the platform, is that we rely on what are called Monte Carlo methods, where rather than doing an exact computation, we do probabilistic simulations and come up with a very close approximation to the numbers that we want. So let's see how that process works and what it can get us. Let's go forward one, Beth. Thank you. So the historical fact that I felt like that our viewers really need to know is that the Monte Carlo method was first developed as part of the Manhattan Project. It's in 1946, so the Heisenberg movie has already come to its conclusion, but it still is important. Stanislav Ulam got sick and was in the hospital playing solitaire. And the solitaire game he was playing is one of those ones where, depending on the initial state of the deck, it might be impossible to finish or it might be possible. And he, as a mathematician lying in a hospital does, thought to himself, how likely is that? What are the probabilities of going on? It's, it's just 52 cards. It depends on their arrangement. It's 52 factorial is a very, very, very large number. And he was trying to do it by exact combinatorial means and just kept failing. Now, maybe this is because he was sick in the hospital, or maybe because it's an unreasonably hard question.
Wait, the Manhattan Project, you're talking about World War II, right? Like the atomic bomb?
Yeah.
That's a fun fact I had not known.
Yes, because in order to make sure that the nuclear fission occurs, you need to be sure that the neutrons are actually going to collide, which means that you want to consider the paths of the neutrons. And considering the paths of the neutrons is a lot like considering the paths of the underlyings, in that it's combinatorially complex and sort of too hard. Even though they had all of the precise inputs that they would need, actually getting an exact computation was proving too difficult. And so they were left sort of crossing their fingers and hoping the bombs would go off. And so, but he was lying in the hospital playing cards to himself, and he thought, well, maybe this abstract thinking is too impractical. I should just do something more crude and straightforward. And I'll just lay out the deck 100 times and see how many of them it's repeatable, it's solvable, and then this will give me a reasonable estimation for the likelihood. And this turned into the Monte Carlo method, right? It's called Monte Carlo method because as part of the Manhattan Project, it needed a code name. You couldn't just tell people what you were working on. And that's why it's called Monte Carlo. Apparently, Ulam's father used to lose his money at the casino. But it's not named actually. It's named after the casino, but only as a code name.
I did not know that.
The actual methodology was after Ulam got out of the hospital, he went and talked to John von Neumann, and the two of them worked together to sort of figure out exactly how many simulations you would need to do in order to get a good estimate, and work out the things that will cover the rest of this piece. But yeah, down there in the bottom right is our nuclear bomb ready to go.
Good to know. I had no idea.
Yeah, I had no idea either.
Yeah. That's why I thought we should do a fresh Monte Carlo piece, because this is a fresh Monte Carlo fact. I mean, it's not fresh. It's 70 years old, but it was new to us. So I thought we should share with everyone. So let's go forward. We'll see how it works. We're going to do a very simple computation. We're going to compute the value of pi. 3.14159, yada yada. But pi is really physically primal in its relevance. It's the ratio between the circumference and the diameter of a circle. It comes up anytime there's spheres or circles of any sort. But it's an irrational number, and ancient mathematicians didn't really have good ways to deal with irrational numbers. So the Egyptians went with 22/7, which is pretty good. It's 3.1414. Which is, a pretty good approximation of 3.1415, but it is not exact. Thanks to the speed of modern computers and pseudo-random numbers, we can come up with sort of a dumber way to get a better approximation by doing this Monte Carlo approach, right? So I take a square. I say that the square is, unit 1 on the side. I'm going to drop points into it randomly by just picking an x and a y coordinate, both at random between 0 and 1. But then I'm going to draw a quarter circle to inscribe inside the square, right? You see that arc. And now we can get a good estimate for pi, because some of the points will land inside the circle and some will land outside the circle. Since pi is supposed to give me the area of the area of the circle, the ratio of the area of the circle, the quarter of the circle, the radius of the square should be the percentage of points that land inside the circle. And so that gets me that 4 times the number of points that land inside the circle divided by the number of points dropped is pi, right? The 4 because it's a quarter circle. And so you can see here as the number of points getting dropped ticks up and up to a few thousand, the approximation gets to be very good. And we'll be more precise about how good that is in a second. But the idea here is that this very crude method of I'm just going to throw darts at the dartboard and see how many of them land inside the circle gets me a better approximation for the value of pi, the actual area of the circle, than anyone had access to for thousands of years. It's a very strangely powerful technique. It's somewhat counterintuitive to use randomness to compute deterministic values, right? There's nothing random about pi. Pi is just what it is. But by adding a little bit of randomness, you can get a much better approximation to it than anybody had for a very long time, which I think is a surprising and powerful technique. With sort of the great insight of
that's pretty interesting, actually.
Yeah. So let's look at how this actually applies to the probabilities that we want to compute, right? We don't actually spend that much time computing how many points land inside a circle. We spend time computing what's the probability of getting to 50% profit. So let's go forward and we'll run that through the Monte Carlo machinery and see how it works out. So the first step you want to do is you need to simulate price paths. And you're right, this is going to be the equivalent of the one dart thrown at the dartboard. So we're going to do it lots and lots of times. But each one is going to have to require the simulation. And to simulate a single one of them, we're going to flip a bunch of coins. How many coins? Well, we'll say between now and expiration is some amount of time. And then there are 2 points here where we're going to need to pick big numbers in order to make our approximations good. The first one is we want to cut up the time between now and expiration into a bunch of little pieces. And then the second one is how many simulations we're going to run. But each simulation is going to be a better simulation if it cuts it up into finer pieces. So we cut it up into n pieces. So it's tau over n. Because of how standard deviations scale, each one will be square root of tau over n times the standard deviation or the volatility. Right, if tau is measured in years, you can just use the VIX volatility. And at each step, you multiply the price randomly by e to the positive volatility or negative volatility. Right? You either go down or up by a factor of that. We're doing it as e times because we want to do this thing where we've talked about a number of times about why we use log and why we want scaling to work out. Right? We want things to work in a way where up 10% minus 10% doesn't leave you up 1%. Right? We want it to exactly cancel out. And so that's why we put things into the exponent. And this gets you a Black-Scholes simple random walk in the log return space, but you could adjust the volatility, right? There's no requirement that the volatility in this methodology be constant. And so all the dynamic volatility models can be handled in this exact same way. The machinery is powerful enough to just absorb a wide variety of models. All you have to do is say, well, I don't think volatility is constant. I think that if the price goes down, volatility will go up. I think the price goes up a little bit, volatility will go down. I think the price goes up a lot, volatility will go up, but not by as much. And those can all be just change that sigma to a sigma sub t, and it's no problem. The model, you can still run 1,000 trials and still get your Monte Carlo probabilities out at the end. So we run 1,000 of these trials, and then we want to ask questions about how our options have behaved. So we do a very straightforward thing. We plug them through our payoff functions. Let's go forward one, and we'll see how that goes. So the possible price of an underlying is, modeled by your paths. We now have thousands of paths. We don't think that this is all of them, right? Because we know there's a combinatorial number of them. There's in fact literally trillions of possible paths if you split it up into a bunch of into many spaces. So what you want to do instead is you want to just use several thousand paths, but make each one picked randomly so that you have a good chance of getting any of them. Right, so that it doesn't matter that you're not doing the trillion possible paths. 1,000 randomly selected paths gets you a reasonable sampling from the trillion possible paths. And so then this lets us answer questions like, did the trade ever reach 50% of max profit, or was the strike ever breached? Because we can see how many of the paths it was and how many of the paths it wasn't, and this will get us all probability. We look at how many successes over how many total trials. And this doesn't matter if you're doing a single option or a multi-leg function or a multi-leg option or a calendar spread. It's all very straightforward once you've got your simulations run to just plug into it and ask any question you want and get different probabilities. And this is what happens under the hood inside the platform. This is where all the CVARs and P50s and things inside the platform come from, is running a few thousand Monte Carlo simulations. I forget. Dr. Data will know exactly how many, or once knew exactly how many simulations run inside the software. I don't, but it's a couple thousand. It's enough to be pretty close.
It's between 1 and 3.
Yeah, 1 in 3,000.
Yeah.
Okay. Not between 1 and 3 trials, like 2.
No. Between 1 and 3,000. But I've asked him before, like, what's the minimum, and he said like 300.
Yeah, so let's go forward one, and we'll see sort of how the error scales with the number of trials. So that's my next slide, which is the rate of conversions. Right, we're doing this simulating, approximating. Some things are not going to be exactly precise, right? We got a very good approximation to pi, better than 22/7, but it's not the exact value of pi. It took a few thousand darts. Right, the estimated probability is a random variable that will depend on the random simulations. Each simulation is going to have accuracy about 1 over square root of n. So, right, if n is, I'll say 400, then that's 20, right? Then square root of 400 is 20. That means you're getting about 5% error, right? If you do a 400 trials, you get about 5% error. If you do, 3,200 trials, you'll get about an eighth of a second. You'll get about like a 2% error. which starts to be not that bad, right? At least as far as the idea of like, if you're going to make a decision, right? If you're going to decide, does this trade look good or not, then a fraction of a percent off for a retail trader is just not going to make the difference, right? You can only trade discrete contracts. You can only yes or no trade them. There's a cutoff to the decision-making process that means that at some point you're accurate enough to not worry about it, right? And that the all of the variations are based on 1 over square root of the step size and the number of trials. So you just want to cut it up into, and 3,000 seems like a reasonable, compromise. Because every time you quadruple, in order to double your accuracy, you need to quadruple your number of trials. So at some point you want to stop doing that because you're not getting as much out of it anymore.
Well, also because on a retail level, we're not talking about massive size positions or that much risk. So it generally just a close enough approximation is plenty good.
Exactly. Well, especially because right at the end of the day, you have to boil down to yes or no, I'm making the trade or not making the trade, which means that there's some amount of, once you're precise enough, you don't need to be, unless you're right at the cusp, unless you're really torn about whether or not this looks good to you or not, in which case you can be doubtful. But you'll probably fall pretty solidly on one side or the other, and then you know that you're within the error bounds, right? Everything's a little
what people are looking for is confirmation and validation more than they're looking for like a trade idea.
Right, or risk, right, or risk error, right? They've got a trade idea, but they want to know like what is the actual downside of this?
Yeah.
Well, to get to a good conditional value risk approximation, we ran 3,000 simulations. We looked at the 5% worst of them, and here's how those did. Right, that's a pretty good idea for how bad things might go. Exactly. All right, yeah, let's go takeaways.
Takeaways.
Reaching exact probabilities based on price paths is computationally infeasible because of the rate of combinatorial growth, especially if the model is anything other than a traditional Black-Scholes, anything with a changing volatility or jump possibility or anything like that, and the actual ability to do the computations goes out the window. Monte Carlo methods were originally developed to make sure that nuclear fission would be successful. And they use the sort of very counterintuitive idea that you can insert a little bit of randomness into a problem and get very good approximations to deterministic questions that were previously impossible. But it's important to keep in mind that they can only really be as good as the model that was used in the simulation and the number of trials that you're doing. So as a retail trader, it's important to remain attentive and active because, right, we don't exactly believe the Black-Scholes model is exactly true. So these things are all going to be slightly discrepant from reality. So but if you're staying active and attentive and making sure to monitor your positions, this difference won't make very much difference because it'll all be very small, at least over a short time spans. But don't put all your faith into a theoretical computation and then walk away for a year. That's probably not a good choice. You want to stay small, stay often, keep yourself a little diversified, just in case there's some flaws in the model, some flaws in the computation. You have to be a little bit prepared for some error bounds.
Yeah, the way we built it in the platform is really for the purposes of validation.
Yeah.
Which is how I think people should use a lot of this technology.
Sure.
Is for validation.
Validation and error estimating, right?
Yeah,
or risk
error
estimating.
estimating.
Like giving yourself a good concept of what a downside might look like.
Exactly.
Right? Because if you ran 3,000 simulations, you probably didn't miss how things could go wrong. Out of 3,000 tries, a few of them gave you a very bad result. And so you can see what those look like, even if you don't actually compute what the literal worst possible result is.
Jacob, I have a question for you on this too. Why aren't you at Burning Man?
I sprained my shoulder at the beginning of the summer, and I really didn't feel like going and babying it. I was worried I was going to have to hurt it. And also, my partner is finally graduating, but her due date's in 3 days, so we didn't want to have to be preparing for that as well.
That's love, Jacob. That is love. That is love. Although you did miss that. It was a little bit of a sandstorm that I saw, I thought.
Sandstorm, lightning storm, rain, mud.
Yeah, but that's the whole.
What happens when Jacob doesn't show up?
No.
That's not true.
When he's been there, they've had plenty of acts of God.
Floods, famine, locusts.
I think that's the whole thing with Burning Man.
We always have plenty of food. Everyone's very well supplied. But we did have floods. We did have lightning. We've had snow. We've had all the weather.
Very nice. Yeah. Good job out of you, Jacob. Son, if you ready to take a quick 90-second break?
Ready.
We're going to take a quick 90-second break. You know what we got coming up next, Jacob? Fan favorite Nick Batista. That's right. Johnny trades next. We'll be back in 90 seconds. Let's take the
Young
live.
hero.
Thank you.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch TastyTrade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. TastyTrade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new TastyTrade and TastyLive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I
well,
wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. TastyTrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at TastyTrade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
To rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
You can get up to $4,000 when you open and fund a new account with TastyTrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. TastyTrade. Make your move.
Hello, everybody. We are back. It's another week with Tom Sosnoff and Dylan Radigan. It's Truth or Skepticism. Dylan, how are you today?
I mean, I'm so darned excited. I got ants in my pants. I gotta dance, as Muhammad Ali used to say. I'm just chomping at the bit here. I cannot believe what's going on.
It's champing. I hate to correct a English professor like you, but it's champing at the bit.
Okay. We've been through this.
Sorry, I didn't mean it.
Champing is not a thing. Okay. Champing is what Muhammad Ali was. He was he was champing. Mike Tyson was champing.
Talk to Tom Preston because he's the official. He's my Latin guru, and he says it's at the bit.
He spells 50 cent, fitty. He doesn't even spell 50 correctly. That guy. You can't trust him on champing.
All right, I'll give you.
I got ants in my pants. I got to dance. We won't even avoid the whole entire phrase. Did you see what happened?
I'm not sure what you mean. What do you mean?
Taylor Swift is getting married.
Oh yeah,
bro.
I mean, Taylor Swift getting married is almost equivalent of Dylan Radigan getting married.
I mean, this is way bigger. Dylan Radigan gets married from time to time. It happens. You kind of find out about it after the fact.
Well, we thought the odds were very low. I mean,
Okay, I see what you're saying. It was a 4 standard deviation move.
Yes.
So anyway, we got a new power. I think this is going to be bigger than Brad and Angelina.
Oh God, yeah. No, this is going to be bigger than Princess Di.
Bigger than Lady Di and Prince Charles.
Yeah.
Bigger than J-Lo and Ben Affleck.
Oh, way bigger than J-Lo. No, this is going to take down half the nation. I like both those guys a lot. I just don't know if I can be able to handle the overwhelming
media.
I don't know if I'll be able to handle it.
The total domination of every screen on earth.
Yeah. I don't know if I'll be able to handle it. Vanetta's already lost control of her functions. Okay. I mean, she's completely
sleepless midnight checks for looking for any evidence of wedding plans.
Exactly.
Is there any whispers? They must get married. They should get married at what is it, Arrowhead Stadium? They could do like 100,000 person wedding with a football game and a concert.
They should get married. They should get married at halftime.
Yeah, they should. Their wedding should be the halftime show at the Super Bowl, and she should perform. That would be the opposite of a small wedding. They could have 7 billion people at their wedding.
I used to tease one of our producers, the Beth who runs the Tasty Network. I used to tease Beth when she first started working for me. She was on the road with me. We would do money shows and stuff. And I told her that one of the events at the money show we're going to do was her wedding. And it disturbed her so much that she requested a job change. She's like, I kind of feel like you're kidding, but I also think that you would actually try to do that to me. And I don't want to do that. And I'm like,
her most personal romantic moment.
Yeah, she didn't know if I was really kidding or if I'd go through with it. And she's
just something you could monetize for a new account creation.
Yeah. So anyway, that was pretty funny. But anyway, we got limited time today.
Okay. So listen, I got a question. Very simple question. Why is it when Donald Trump talks about buying interest and taking control of companies, whether it's, control by way of fees and taxes or control by way of leveraging for, the U.S. country leverage for equity, for national interests in private companies, that everybody seems okay with it. But when Mamdani and the so-called socialist mayoral candidate in New York talks about free grocery stores, everybody, flips their beret. How come one side, it's socialism for thee, but not for me kind of a thing? I'm confused.
Well, there's a lot to be confused about, because you could probably take it a step back and think about the Obama years and,
the GM bailouts and all that.
Well, I mean, the whole point of, Trump saying recently, that investing in Intel, talking about investing in, taxpayer funds and defense companies and things like that. I mean, it's the most conflicted. It's on the one hand, it's the most conflicted, but on the other hand, it is absolutely the most anti-competitive thing I've ever seen from the executive branch. Now, the crazy thing about this is that, Trump's whole position is, I am this great businessman, I'm this great capitalist, and Trump is so much closer to an anti-competitive socialist, wants to control everything, wants the executive branch to control everything from who performs at the halftime in the Super Bowl, to what we should invest in as a company, to who runs the Fed, to who does everything. He's the most anti-competitive president ever. He's the least, he's anti-trade. He's anti-free trade. And he's anti-competitive in every which way. He wants to control everything. And he's the least free market capitalist of any president we've ever had. It's the scariest thing. He's the closest thing to a socialist, to a dictator, whatever you want to call it. I think it's more like right-wing socialism, but he is anti-competitive every way. He's the exact opposite of what the Republican Party stands for. Exact.
And why do you think it's so tolerated?
Because
considering how animated people become about Bernie Sanders, or
right.
About,
well, because the base thinks, it's a cult. It's not really a political party. It's a cult. And second, it's the dumbest fraction of that party. And that's all there is to it. You've said it a million times, that people don't really understand what it is. They don't understand they don't understand free trade. They don't understand free market economy. And the issue that we have with Trump is that he's the exact opposite of the Republican Party platform forever. It's the exact opposite. It's like, it blows my mind. I mean, Obama was the guy that basically tried to, let's take care of everybody. Essentially, let's take care of everybody.
Healthcare for all.
Healthcare for all, right? Let's if you need something, let's make sure you have it.
Mm-hmm.
And in the process of doing that, let's do that through free market capitalism. Okay, Trump is exactly the opposite. It's all for me, and I'll distribute how the money goes. and I'll distribute who can do business with who and where the competition is. I mean, have you ever seen anything more anti-competitive than his trade policies and that his decisions of who to invest and who to run everything? Everything is anti-competitive now. It's insane. We've never seen anything like this in a democracy.
Do you find it strange that there's such an animated reaction to the mayoral candidate in New York, but there isn't a more animated reaction to the president of the United States, who is a billion times more powerful than a mayoral candidate, even in New York?
The attraction to the mayoral candidate in New York is just that he's different. And New Yorkers are sick of the same old crap. And so, I mean, some of the things get so taken out of context. I mean, wanting to start a food co-op is every city in America has food co-ops. I mean, I personally love going to food co-ops. They're fun. They're nice. It's like going to farmer's market every day. But the way Fox News paints it is we're basically going to socialize. We're going to have a city takeover of every. D'Agostino's is now going to become part of the. Isn't D'Agostino's the big chain in New York? Right? Yeah. D'Agostino's is going to now become part of the. The New York State government, it's going to be regulated. I mean, it's ridiculous.
Government takeover of all the grocery stores.
Right. I mean, come on, man. This guy. I mean, it's a totally reasonable projection, and he's a self-proclaimed democratic socialist, right? That doesn't mean that's nothing. That's not. You're a Democrat, basically. That's it.
Mm-hmm. But I guess what I'm getting at is you find it peculiar, the lack of a reaction. Like if you look at the heat of the reaction, the negative reaction to the New York mayoral candidate.
No, I don't find it strange at all.
The absence of a negative reaction to much more socialist behavior from the president.
How can you find that reaction to be weird or off-putting when we have a domestic insurrection and people think it's okay to release everybody that was involved? I understand being mad about certain things, but it's gone to such an extreme that essentially the only thing that seems to bother a certain group of people is if you're a convicted pedophile or if you kill a dog. If you kill a dog or kill a pet or you're a convicted pedophile, that's the only thing that seems to bother. Everything else, it's fine. Don't worry about it.
It's okay.
Yeah.
Speaking of everything else, do you see the Trump? I don't know if I couldn't tell whether it was successful or not, but the Trump attempt, or maybe successful attempt at getting one of the Fed governors fired as the sort of latest bit of the theatrics between the executive branch and the central bank?
I thought it was interesting because, I mean, I have a different take on this too. I think it's interesting because I think the Federal Reserve is an independent agency, and it's done that way for a reason, to remove the conflicts. Right. The whole purpose was we don't want, the executive branch. We don't want people making. We want this to be independent so we can make objective decisions. And what's supposed to happen is that if there is somebody that's part of the Fed, any one of the Fed governors, and they act inappropriately or out of line, there is a whole series of procedures that come into place almost immediately, and the Fed itself will self-police. That's their job, to self-police. What we don't want is an outsider, whether that's the executive branch or some random judge, whatever it is. We don't want a politician to politicize the Fed, and they have every right to file suit and sue for that, because it's an absolutely ridiculous. Yeah, it's ridiculous. And the challenge is, and the bad thing about that, I mean, Trump should have been smarter. If he really wanted this person fired, he should have had somebody else gone to the Fed and had somebody else do it and bring up the topic. And then they should have decided internally to do it. Because what he's doing now is he's undermining the power, the authority, and the integrity, the credibility of the Fed. Because if the president of the United States can fire a Fed governor, then how independent is the Fed? And therefore, all that integrity, which has taken decades to build up, is out the window. I mean, if the president of the United States, whoever that president is, really hates somebody at some point, there's a lot of different ways that you can go about moving that person. There's no reason that you have to create all that drama unless you're just a kind of a psychopath and you want to just show you want to flex. It's a flex. But it's a stupid flex because you're undermining the credibility and the power of the Fed. It makes no sense. Like, I don't know who this governor is. I could care less. But now, is the Fed stronger today as a unit? Do people have more faith in it? No. And so what you're seeing right here is that people are starting to discount, and I'm not opposed to discounting the importance of the Fed, but when push comes to shove, and there's going to be an issue in 2 or 3 years, or something's going to happen in 6 months, who knows? And we need the Fed to step in as an emergency recourse, as kind of like crash protection or whatever it might be, disaster, act of God, who knows?
Yeah,
they're going to be much less effective
because of the diminished credibility. I mean, on the other hand, because you're kind of famous or / notorious for saying the Fed doesn't matter. Not in the relative sense of like, intervention for financial catastrophe. I wouldn't say the Fed doesn't matter. That the Fed is not that rates come not from the Fed.
Yeah,
rates come from the market.
Yeah, I think
the Fed follows the market. The Fed doesn't lead the market, basically.
I've always said that the Fed follows the bonds, and they have an obligation to follow the efficient. The bond market is a $50+ trillion marketplace, the debt marketplace. The Fed has an obligation to follow the efficient pricing of that $50 trillion marketplace. If the Fed gets out of line for whatever reason, the marketplace brings it right back by pricing. So the Fed is relatively ineffective until you need that catastrophic insurance, until there's a meltdown in the market, you need to pump in liquidity, until there's something going on in the world where the Fed has to act to stabilize the markets. The Fed is the ultimate catastrophic insurance, and you cannot undermine that by trying to control things. Like, I have no idea why the president would want to control the Fed, because it gives him always not just a scapegoat, but it gives him it balances off all the other risk out there. And I just don't even understand. It's almost as if he just doesn't understand it, or he thinks he's got to control everything, which again is anti-capitalism.
I mean, because my thing is, I'm like, I actually think that if let's say the president took control of the Federal Reserve, or either directly, he's like, if the Fed said, I'm now the Fed chief and the president, which could happen with this particular president, or I'm the president, and my son is my most loyal servant is the Fed chief, and our first thing we're going to do is cut rates. I actually feel like that would not cut rates, if that makes any sense. In other words, I
agree with you 100%.
I think if it was apparent that the Fed was under the control of any one person who had some very specific agenda that is out of alignment with the market, basically, that's not part of natural market environment, that rates would go up.
I agree with you. I think everybody agrees, and I think they've tried to teach that to Trump. But I think the real the real story here is, and it has nothing to do with Mondavi or anything. It's just when you look back at history, and a lot of people have made this case. This is not something that's just that you and I are just making up. Trump is the most socialist president we've ever had. And he's the closest thing to, it's actually scary. He's the most anti-democratic, the most anti-free market president in the history of this country. And yet nobody seems to care, or I shouldn't say nobody, because obviously, like you said, a third of the country likes him, a third of the country hates him, and a third of the country doesn't care about anything.
Right. But whatever, there's the people that are, he has enough support that that this carries on with basically unencumbered.
Unless they lose control in the midterms, yes.
I'm in these board. I've been in Florida these couple of days. And I'm in board meetings for a company that's preparing to roll out a gigundous AI initiative, having related to a bunch of things, whatever. So I've been sitting for 3 days in this with all these tech people, and it's all these. Did Facebook really offer $200 million for like? There's all these sort of conversations internally. Like, does that really happen? Did this really happen? That sounds like a tall tale?
Yeah.
The bankers are here, the JP Morgan people, and this one Citigroup people, Google people, all this. And what's very clear is that the momentum in the domain, in the universe of AI is accelerating, not decelerating. Like, that we're not at the end of this by any stretch. I'm not saying, obviously, we're not at the end of it technologically. So the transition is underway. But because the dinner conversation last night was, for the first time in 20 years, Google is at risk. And which is Google probably is not really at risk, but the point is that this is such a big technological event that you can tell a story about a tech engineer getting a $200 million job offer, and people don't laugh in your face. Yeah, like, maybe that's even could be potentially true is absurd.
Yeah,
or totally. That Google could potentially be at risk is absurd. And so the only question is valuations. Right? No one can debate AI. No one can debate whether it's happening. The only question is it worth paying somebody $200 million, or is it so powerful that it can knock Google off, or is it worth paying whatever you got to pay for Nvidia coming out of earnings, or Meta, Microsoft, et cetera, et cetera, et cetera.
Yeah, sure.
And the obvious thing is to make comparisons to the original .com. In 96, 95, 6, 7, 8, AOL, CompuServe, all that, Windows 95. Is that a fair comparison? And do you think that where are we in it? What's your perspective on valuations in AI in public markets?
So I feel pretty strongly about this, and I just gave a lecture on this last week in Mexico City, and another one in Guadalajara 2 days later. So I've been on the road for the last 6 days giving speeches about this, specifically kind of a version of this topic, basically telling the good part of AI. But I want to cover a couple things here. First thing is Google at risk? I don't think Google's at risk. I think search is at risk. So I think the future of search is at risk. And Google's obviously, controls search. So the reason people think Google's at risk is because search is at risk. The question is, are you going to use Google to Google for you? I mean, that's as crazy as it is, but is Google going to be the new Googler? And are you going to use Google's AI to search for you?
So we had dinner with the Google people last night, and we were teasing them.
Yeah.
And the joke is that, like, everybody, because right now the sort of conversational colloquialism is GPT, right? Like the more than Grok, more than Bard, more than Gemini, which is the Google product. Everybody's like, oh, well, ask ChatGPT, ask ChatGPT, ask ChatGPT, in terms of just the social layer.
So is AI going to kill search? And the answer is 100%. Yes, it is going to kill search. Is AI going to kill Google? Probably not, because Google's in that I'm too big to fail. Like, Google's not Sun Microsystems. Google's not,
Alta Vista.
Yeah, Google's not Alta Vista. Yeah, I just was
InfoSeek.
I was trying to think, what company was I? Lucent, like just things like that, like those are all the 2000s, whatever. But getting back to so I think Google's too big to fail, and I think they'll pivot, because they don't necessarily own search, but you're still going to have to use the search that Google has created, in order for AI to be effective doing search.
And
so
and clearly, even in looking at Gemini, which is their product, they've already integrated all of the things that make search work with all the paid this and the paid that, and which is your best broker, and what's your best airline, and what's your best cleaning service. That is already integrated into their AI, and it's not in ChatGPT. Like, Gemini already has it.
Right. So the real question here is then, is AI, are the AI valuations ahead of AI? Now let's go back to, just for a quick second, let's go back to 1999, 2000. I think it's the closest comparison. And the companies back then were much smaller than Google, Nvidia. You're talking about, 10, 20, and $50 billion companies. Now you're talking about 3 and 4 trillion dollar companies. You have a lot more cush at 3 and 4 trillion. But in 1998 and 1999 and 2000, companies, and this was the market top, the bubble, companies like Intel, companies like Cisco, companies like Sun Microsystems, companies like WorldCom, companies like Global Crossing. Remember all these companies? They laid the foundation for what the internet was for the next 25 years. These companies that all went bankrupt, essentially. Intel and Cisco didn't go bankrupt, but all those other companies went bankrupt.
Everybody else went away. Yeah.
Everybody else went away. Hundreds of billions of dollars went away. And those companies that created a lot of that technology, that built the foundation of the internet, they were real because they built all that stuff. And the internet and technology exploded for the next 25 years because of them. But they all went out of business because the valuations got too high and they couldn't maintain the debt, service the debt on those valuations, and they couldn't satisfy the shareholders because the shareholders expected more, they got less, and then everybody blew everything out and blah, blah, blah. And then came the next generation of megastars, which was, Apple and Amazon and all those, Meta and all those other stocks. They were all born, like Meta wouldn't exist today.
On the carcass of all these other companies.
Exactly, on the carcass. And so what happened in 2000, basically it unwound in 2000. It started in 1997, 1998, and unwound in 2000. What happened during that process is this core group of companies built the entire foundation. And these other companies came in, disrupted everything, and took over and created this incredible valuation in just 20 years. It's amazing. So the question becomes, in 2025, it's a little bit different, but is this essentially the same movie? Is Palantir really worth 350 times, times earnings? Is Nvidia really worth 36 times earnings? I'm going to use our own company, for example. We traded 4 times earnings. Tasty is part of IG. We're a $4.5 billion company, $5 billion total. We trade 4 times earnings. Nvidia trades 36 times. Palantir trades at 350 times. Are these valuations sustainable in 2025? And if they're not, are we basically building the foundation for the next 10 to 20 years of technological expansion and development and everything else, but at the expense of these companies that 5 years from now, Palantir is going to be a $60 stock. 5 years from now, Nvidia is going to be, half of what it is today. And the reason that is so possible is that what happens is these stocks always get ahead of the industry. And the industry builds the foundation, and the stocks get ahead, and all the speculators get ahead. And at some point, they roll over and they go to the next foundation. But you saw it happen in 2000, and it is entirely reasonable to assume that it could happen. I don't know if it's going to happen in 2025, or it'll be 2027 or 2026 or 2029. Who knows? But Nvidia at $182, where it is right now at record highs. It's got a lot of the future of AI priced into that $182 number. Now, could it go to 200? Sure. Could it go to 400? I guess. But the reality is right here, it's priced at a ridiculous level already. And it has a lot more, I think, it has a lot more risk to the downside and competitive risk than the upside. And again, another perfect example of what this administration is doing is basically saying to Nvidia, listen, if you want to go to China, you're going to pay us $15 billion or whatever it is. That is, again, the most anti-competitive stuff you can ever see. Like, how are we letting everybody get, and then we're still buying the stock? Like, if I'm China.
Do you have a trade going into earnings on Nvidia?
I'm short it. I'm shorted a little bit, not much, because it hasn't been worth ever being short Nvidia. But China's reaction is exactly what it should be, which is, listen, you can come here, but we are going to bury you with cheaper chips, better, cheaper, faster chips. Just give us 6 months or 9 months. And that's what's going to happen. You're creating an environment that is unsustainable. Nvidia cannot go to these other countries in an anti-competitive trade environment. Like, I don't understand what this administration is thinking. You want your companies to explode, then make it a competitive trade environment. Don't make it anti-competitive. Don't force China. Okay, they're not gonna say roll over and say, hey, you know what? Here's all. Charge us more. You got this. They're gonna say, screw you. We'll build this ourselves. We can build anything. We can do it better, faster, and stronger, and smarter. That's what they're gonna say. And of course they should. You would do the same thing. So I am very worried that I'm very happy that the foundation's in place. And I think AI is going to make all our lives better. I think it's going to create jobs. I think it's going to improve the economy. I think it's going to make everything, it's going to streamline everything. I think it's going to be a better world. But the other side to it is, I think these stocks are way overpriced.
So I think Google is the best name on the board right now, to the upside. I mean, I think it'd be easy to get short Meta or short Microsoft or short Nvidia, but who God knows when and God knows how, and good luck to you, because it can go for another year and it can double from here and all the rest of that. So I would say that of all the AI trades right now, I think Google is the most undervalued because they're better equipped. They're better equipped. They know how to monetize information in a way that maybe only Meta. It's like Meta and Google are the two companies that know how to not just deal with information, because lots of people have information. Amazon's good with information. Netflix is good with information. Tesla is great with information. But no one knows how to make money with information better than Google and Meta. And I feel like between Google and Meta is the weaker of the two performance-wise. So that's my AI 2 cents of the day.
Google, I agree with you. Google is very inexpensive relative to Meta. I don't think that's a fair... I don't think that's a reason to invest in Google, but I think of all the companies, I agree with you, Google being considered to be the most vulnerable is probably the cheapest play out there. The other ones to me are way, way too expensive.
Yeah, I agree.
Well, this is going to be a short and sweet session today, Dylan, because I know you're booked and I'm booked first day back, but this has been a really good discussion. Thanks Absolutely. So much. And
welcome home. Welcome home. Nice to see you. I saw the kids were happy to have you back in the house.
We'll see you next Wednesday. Looking forward to it.
All right. Likewise. All right. See you soon.
You can get up to $4,000 when you open and fund a new account with TastyTrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new TastyTrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? TastyTrade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
TastyTrade is now on TradingView. Trade stocks and futures directly on TradingView charts with TastyTrade's low commissions. Try it out and leave us a review.
What is going on, everybody, and welcome back to today's assignment. We have a different guest today. We got Gus in the house. We're going to go over some of the top 10 micro futures ranked by intraday range today. Dr. Jim is, I don't know. You know, so if you guys let me know. But no, we're gonna miss Dr. Jim. We'll get his thoughts back on this segment next week. But Gus, my brother, how we doing today? How we feeling?
I'm feeling good, man. For those of you who are fans of Errol and I's show Risk and Reward, which is on Tuesdays and Thursdays at 4:30 p.m. Central, will notice that we're on opposite sides of the screen here. And that's because Errol has relegated me to the side of this desk that he does not like. Relegated. He said, "You have to sit over there. This is my show, and I hate you." That's what he said when we came into this room. So it feels a little trippy here. It's like we're not getting my good side. But no, I'm feeling good. Happy to be here, and happy to talk some futures. I must admit, to be candid out the gate, I am not a big futures trader myself.
Not yet.
I can hold the conversations and damn it, can I make people laugh? But I don't know how much we're gonna be throwing around high level futures terms from my side of the desk here.
This is gonna be a fun one. We had taken a lot of the micro futures products because it's a lot more conducive for smaller accounts or even larger accounts in my position. Like, I think they're great products to use if you want to scale in and out of positions. So even if you got like a Tom level account, you got a 20-figure account, I still think there's a lot of use in those micro products because you can, scale in and out 2 contracts at a time, 3, 4, maybe
20 figures is $10 trillion for anybody who's counting.
Anybody who's still counting that's 10 trillion. But no, I think they can be conducive depending on your account size too, and even larger accounts. But we'll get into all of that here in a little bit. Today is Wednesday. We put on some risks of the week yesterday. We got OKTA. We'll talk a little bit about the NASDAQ position that I wanted for today too. We'll get into an update on that. But it's Wednesday. Anything else new besides the Cracker Barrel news? And we'll take a look at the Cracker Barrel stock. Is there anything else that's new from when we last spoke last night?
Yeah, the Cracker Barrel news definitely was a major positive for me. I got out of my naked calls for a 9x there, and it looks like my verticals are not going to be experiencing any risk at all. What I did not expect to be a risk for me today is Okta, which you just mentioned, OKTA. The highest it ever was post-market yesterday while we were on here talking about it, so it's hovering right around my critical 94 range. But no, nothing else really catching my eye today. I exited a couple of Forex positions, but it's just been cleanup. I'm totally lying right now too. What did I put on? Oh yeah, I bought some Smuckers. I got me some Smuckers, some SJM, some Smuckers International. Just a slightly bad earnings call that I felt like was overreacted to. Too much selling pressure to the downside there. So grab some of that. I eat enough Uncrustables to keep this company afloat myself. Oh my gosh. I mean, I think I'd say I eat on average 1.5 Uncrustables per day.
Yeah. Well, some insider information. I'm going to be getting some more Uncrustables here within the
the market is still working on pricing in my Uncrustable consumption, but I think that we'll be there soon. So grab some Smuckers as well. Bullish put.
Where is Dr. Jim? Is right here. This is Dr. Jim 15 years ago, guys. Come on.
Yeah.
Maybe 20. Maybe.
Yeah, I'm not a doctor yet because I don't have my PhD yet. I'm working on it, guys. Damn. Somebody say maybe he's at the barber or the gym. Those both might be good guesses.
One or the other, probably both. Getting a haircut while at the gym and managing positions.
We should have a barber come in here sometime, and we can like be like those really crappy YouTube or Instagram videos where we're like both getting a haircut while we have a conversation.
Oh, well, yeah.
Yeah, and
that'd be
it's
fun.
like for no reason.
I'm actually getting a haircut today. Actually, not from the barber, but I'm actually going to the salon for the first time out here in Chicago. Just gonna get a few inches off.
Nice.
Getting a little nappy. If anybody doesn't know the word nappy, I had to explain today. Nappy just means a little fussy, a little messy, a little not as clean and as together as it could be for anybody.
Yeah. Go look up a picture of Kevin Durant. Kevin Durant got some nappy ass hair.
Yeah.
But it's always scary picking a new place to get a haircut after you move.
Every time.
Yeah, when I moved up here, I know it was quite the undertaking. I did all sorts of research, but found my girl Amy. Shout out to Amy.
It's funny how that's one of the first things top of mind when we're heading to a new location. It's like, yo, but what about this?
Yeah, it is. I mean, it's a big deal. You get one bad haircut, you got to live with that for like 2 months.
Yeah, exactly.
I got a bad haircut. I got a bad haircut at Sports Clips in 5th grade, and I've never been back to a Sports Clips.
Sports Clips. That name is traumatizing. Never been there, but I got PTSD from them already.
Yeah, I got PTSD because I have been there. So maybe it's just the PTSD aura in the room. But yeah, I'm anti Sports Clips.
Anti-Sports Clips.
Also, it just seems like it's kind of a strange concept to me. I'm not gonna go in the middle of an NFL Sunday to get my haircut. I don't know. I guess I see it. I see it. I'm gonna roll back that statement. I see it. Now that I've said it out loud, I see it.
See the vision. We can go ahead and pull up the slides here. But the segment for today, guys, is going to be micro futures intraday ranges. If you had to guess and just throw out a few, which products would you think, would move the most? I was completely off. And the top 3 kind of surprised me.
What kind of time frame are we talking on here?
Just intraday. So which ones do you think are the most volatile intraday? Let's say for the last year. We got stuff like platinum, we got gold.
Yeah, I mean, given the nature of the question, like, I feel like I want to go like ultra contrarian and just get something that I think wouldn't move at all.
Okay,
like corn, like.
I don't look at corn. Who's looking at corn?
Corn coming to mind.
They probably aren't moving.
Farmers, damn it! If they have a market, somebody's trading it.
Or maybe this is psychology right now. Maybe it is corn.
What if it's all fugazi and the market makers are just moving corn around on themselves and nobody even cares about the corn?
Might be what it is.
Kansas City white winter wheat, bro. Okay, I'm gonna say copper.
No, not copper. A little bit more to the crypto side of things, actually.
To the crypto side of things.
Yeah. So they actually there's a micro ETH that we can trade. We'll get into the details here in a little bit, but would not have guessed that's one of the most volatile products. Do we have it on the Tasty platform? We absolutely do have it on the platform. So maybe we take a couple trades in and out of there.
This is news to me. Might have to throw something on. Like I said, I'm Midas with the Forex. Maybe I'm Midas with the futures too. We'll see.
Might be, brother.
I'm best at trading products that I don't know anything about.
The realest statement ever.
That's actually a problem as I learn more because all of a sudden I know too much and then I'm a bad trader.
Pretty much. Granted, which is another conversation. I would say knowing too much can sometimes in the trading world can be a downfall.
Oh, absolutely.
Right? Analysis paralysis, being too smart for your own good, honestly could come with some setbacks maybe.
Yeah, especially as it pertains to technical analysis, and obviously there's varying schools of thought on how much people buy into that here at Tasty, and it's not something that I particularly embrace myself. I think it has validity in some contexts, but there's so many different indicators, and if you put enough of them on, there will always be 2 that are telling opposite stories. I think that's
100%.
An interesting thing.
No doubt. As we get into the list for today, guys, obviously we have the watch list platform, and it will section off these products for you. If you go over to the micros platform, micros are the only type of futures contracts that I personally trade. So I use this tab quite frequently, and it's most conducive for my account. But we're going to be using the watch list tab, and they have a specific micro section. So you can find that over here at the top left. Just hit that drop-down menu. Find the futures and then find those futures micros, and it'll give you a long list that you can check out. But I did a lot of the hard work for you. I did a lot of the hard part. What are the actual products that you want to trade? Because volatility is a trader's best friend. So, I mean, if something's moving 1 or 2 points, I mean, that's not really an exciting product or something we're going to gain some opportunity off of. So the way that I like to look at it is like a car. We got a Ferrari, we got a Honda, we got a Prius, don't even matter. If we don't have any gas, we're not going anywhere. We're not gonna make it to any destination. There's no opportunity.
I had no idea where that analogy was going. I see the volatility. The volatility is the gas. I see. I was seeing the vision from the beginning, but I was like,
you just gotta trust the process. Sometimes the last two words tie it all together. But we had pulled two different data sets. This first one is going to be the top 10 largest intraday ranges with the micros in the last year. So this is going to be the last 252 trading days, the last 365 days. And with that being said, number one is going to be the mini VIX futures. Not as much of a surprise from a percentage point of view. If you see, we have two columns, percentage and then the average points. As you know, the percentage kind of gives you a different perspective sometimes. Like the mini VIX futures is saying 8%, which relative to the surrounding percentages that we see, that seems pretty high. But then when we look at it from an average points perspective, you can see that it's actually pretty low.
So you're telling me that the volatility futures are volatile?
I'm telling you that, what was it? I'm telling you that a shrimp fried this rice. Are you telling me?
A shrimp fried this rice?
Shrimp fried this rice?
Tell me a shrimp fried this rice?
It did. But first one was the mini VIX futures over there. Micro ETH, which was the one that had surprised me, but not a surprise, but a surprise. A surprise that it's the answer, but not surprised to see that it is the answer, if that makes sense. But 6.7%. It made absolutely no sense. But 6.7% there, 180 points, intraday moves, pretty large relative to the mini VIX. Then we got the E-mini natural gas futures, not even a full point. But if you look at the percentages, we got about 60% on the E-mini natural gas. Micro Bitcoin, 4.2, we'll round up to 4.3%, but massive swings in Bitcoin. And then we got micro crude oil, 3.2%, 2.17 points. And then we got the E-mini crude oil, 3.3%, micro silver, 2.7%. Mini Chicago wheat.
I was close.
You were close.
I was close.
I almost saw you hit the net on the nail there, the head on the nail there. But we got 2.3%. We got the E-mini Russell at 2.18%, and then we got the E-mini Nasdaq just under 2%. So this will give us a better idea for which products are a little bit more volatile intraday, at least. But we're going to go down to this next slide here, and this is going to shift the data set a little bit. This is going to be over the past month. So you can see right off the bat, the mini VIX futures lost its number one spot to the micro Ether at 6.4%. Mini VIX futures 4.7%. E-mini natural gas 4.7%. And then I'm just going to go down to the bottom three. We got micro corn that made the list.
Hell yeah.
E-mini Russell made the list. And then again, mini Chicago wheat. So, I mean, we got corn and we got
They
wheat.
laughed at me for saying corn. Corn's right here, man.
What was it from yesterday? The gelato hoof? You're like, I just gelato hooved you.
Oh yeah, it was that they put horse hooves in the gelatin.
Right, and it was the fact that it wasn't.
Oh,
did we just do that?
Well,
here?
yeah, and then I guess I don't know if we just did we just do that here? I guess maybe we kind of did. I mean, you guys might have kind of just horse hoof gelatoed
a little
me.
bit. I know I did.
You might have beaver testicle vanilla extracted me, bro.
Just a little bit. But I was a little bit surprised by the corn here. I don't think I've ever traded corn. I'm curious to look at the other micro futures products that we have, maybe trade a little bit more of those.
I've definitely never traded corn futures. I have played around with the ticker corn, which is the broader agriculture ETF. But yeah, certainly never the futures. I agree that that's surprising. I gave corn as an answer just to be contrarian because you prefaced with the fact that this was going to be surprising.
Yeah, I mean, it was going to be a surprise for me just because, again, I'm such a NASDAQ guy. Anybody that knows I'm trading NASDAQ regularly. So when it comes down to these other products, I'm like, yo, what other futures products?
I'm actually a tech boy, so these agriculture stocks, I really don't know anything about them.
Actually, no. We'll go ahead and jump to the platform here, though, and then we'll go ahead and check out the micro Ether. I'm curious about that. See which type of products we want to get a little bit more involved with. Let me see if I can pull this up. There we go.
Yeah, let's have a look.
There we go. We'll first start with some micro ETH /MET. And before we do that, we'll do a little quick platform run through on what's been going on in the portfolio today. We got absolutely beat up in the micro NASDAQ today. Obviously, it's only down $65 on the day, but that was after, like, no kidding, maybe 8 trades of just getting absolutely hammered. Just manage the risk extremely well. But today was a very frustrating day. The volatility kind of just died around midday. So if we zoom in there, I know yesterday we were talking about this 23,616 level, and we were getting a lot of reactions off that price level today, especially in the pre-market. And originally in the pre-market, I thought it was making the move that I was, looking for. And at that point, I wasn't in the trade, so I was like, you know what? If we can come back up and retest this level, maybe it gives an opportunity to get in short there. So you can see over here in the morning, we sold off from that level, and then we reclaimed that level midday, and then we popped up right before I think we hopped on here, actually. And if I zoom in, I know we guys, I know we give a lot of flack for using stop losses sometimes, but I do think it's important, especially if you're scaling in or out of positions, because it can be really difficult to manage that risk with multiple contracts with how quick this price can move sometimes. Because if we look over here, just right before we hopped on here, as we're breaking this high in just a matter of a couple minutes, I mean, we shot up another 20 points. You know what I mean? So if you have on any extra contracts, I mean, that's 20 points that you can't manage by, you know, if you're maybe doing something else on your computer at the time or whatever the case might be, just to emphasize how quickly these products can move. But anyways, guys, we tried to get short here, pretty much got stopped out. I'm going to be looking to get long now. So maybe if we have time, we can put on a long position in these micros and we'll manage from there. But today was a tough one. Today was just one of those days where price action is just playing games. And then, you know, the market does what it does when it wants to do it. But it was one of those kind of days. Outside of that, we got Apple moving fairly slowly, sold an out of the money put spread, got some long delta. Celsius, this one was a skewed strangle. It's working out pretty well today. Gap, this one was just a put that we had bought. These are the smaller positions. I think some of these were risk of the weeks as well. RKT was a risk of the week. This was a very small contract that was just sitting in the portfolio doing whatever it wants to do. And then we got SPY. This one's an out of the money call spread. Obviously, when the market's ripping, it doesn't help this position at all. But we got 23 days left till expiration. We'll manage that by the end of the week. And then I folded on the UNH position. I folded. I had to. I couldn't even sit in that one, bro. Especially with the reaction, you know, the gap ups, the runs.
You were bearish? I
was.
Yeah. Oh, yeah. I remember. You got bearish against Buffett.
Right. But there was, like, no actual data behind the trade or whatever it was. It was just like, oh, let me fade this news.
We were going to see if it dolphin dived. We invented the term dolphin dive to categorize this trade. Yeah.
We were just gonna do the little dolphin dive.
Yeah, everybody out there, dolphin dive is the opposite of a dead cat bounce.
Exactly.
This is a proprietary Gus and Errol term, patent pending. Don't try it.
If you hear dolphin dive anywhere else, especially on anything trading related, just know dolphin dive came from here.
Yes, I will excuse people who use it to refer to Call of Duty. Only them. They get a pass. But yeah, if anybody says dolphin dive as it pertains to trading, you tell us and we will send them a cease and desist.
Let us know. But yeah, no, UNH wasn't doing the dolphin dive how I was wanting it to do the dolphin dive, so I ended up exiting that position over there. And I needed to manage that one within 2 days anyways, so I was like, you know, let me just take it off. I always sit there and think, like, is this a smart thing to do to manage it now? Or is that my emotions influencing my mind to want to manage something a little bit earlier? So sometimes I think about it that way too, but managing it in 2 days anyways, didn't really want to fade the Buffett man anyways. So he's like, you know, let me just get out of here while I can. Other than that, that's all we got going on in the portfolio. We'll take a look at some of these micros here. But we do have NASDAQ. We do have NASDAQ after the bell. We do have Nvidia after the bell. You got any thoughts over there on Nvidia?
Yeah, Nvidia, definitely not going to be involved with any trade through earnings here. It's something that I've been eyeing and I've been thinking about angles to get in, but no, my sentiment hasn't shifted very much from our show yesterday evening. I think if anything, we might be a little overextended to the upside, and that there's certainly more room for a downside move. But I also am not going to sit here and fade Nvidia. I feel like that's I'd feel a lot stupider fading Nvidia and being wrong than going with Nvidia and being wrong. And so yeah, there's just too many factors for me. And also, you know, something I alluded to on the show yesterday is there's just, with this many eyeballs on a stock, I feel like whatever reaction you get is going to be an overreaction. So I do have a particularly vested interest in seeing where Nvidia opens tomorrow and potentially playing the other side of that.
Yeah. Maybe we do get an overreaction. It does feel that NVIDIA is talk of the town, pretty much what everybody else is going to be waiting on. It's partly why I wasn't comfortable with just sitting in that short position too for the micro NASDAQ. It's one of those things where, we have a binary event like NVIDIA with nothing else surrounding NVIDIA. So it just felt like such a lot of uncertainty in the air.
Yeah, big deal. Nvidia sympathy trades. Remember Julia doing an AMD sympathy play last quarter here. Yeah, that's an interesting thought process as well. Is that maybe if you don't want super direct exposure to Nvidia and you would rather just capture whatever the sentiment of this Nvidia earnings call is, AMD is definitely a great avenue to do that. Also, obviously ASML, TSM, both integral parts of the Nvidia supply chain there. So, Yeah, that might be an interesting angle. I don't have any particularly strong convictions about how I think this earnings call is going to go for Nvidia. It's just, earnings. I always say earnings are like a 5-team parlay. You need the EPS, you need the revenue, you need the forward guidance, you need there to be no other bad externalities, you need stability with management, all these things. There's a lot of ways that earnings plays can go against you, and then you have to decide how strongly the market is going to value all of these different things once you've made your predictions on them. So, I think if anything, if I were to be forced to trade this through earnings, maybe a sentiment play would be the better way to do it. Just some exposure without the full parabolic reaction that it may give.
Yeah.
But I don't think I'm going to get involved with it through earnings at all.
Yeah, I almost forgot about AMD a little bit there. AMD was one of those that I think I would trade a little bit more often than Nvidia, but Nvidia really has put AMD in its shadow.
Yes, Micron might be a sympathy play. Says Shooter McGavin. MU. That's an interesting one.
Micron Technology, really solid IV rank. Let me pull up this IVR indicator so we can get a nice visual.
When I first started trading in like 2020 and 2021, Micron was a ticker that I was constantly going back to. Micron and AMD.
Wow, was it volatile?
Just
solid or what?
Yeah, just real good mover. Micron and AMD both.
Because volatility is a trader's best friend.
Because volatility is the gas in the Ferrari or whatever. You're telling me a shrimp fried this rice?
You told me a shrimp fried this rice.
But but it's just a good mover. You get lots of like these 2% and 3% intraday moves, and I was always a big fan of it in that regard. But just eventually wound up moving on. No particular reason, really. This isn't a company that I've thought about in some time, to be candid with you.
And you're talking about MU?
Yeah, MU.
Yeah. I know. I just seen MJ. We'll check out MJ.
That's the marijuana ETF.
Yeah, we've been.
Hey,
hey, don't sleep now.
I have some MJ in my long-term shares account. Yeah.
How long you had in there? Did you get that in around 2020, or did you?
Not quite that long ago, but some years.
I know that sector was on fire.
I did, yeah. One of the first trades I ever made before I even knew options existed was Hexo, which I think is a bankrupt, defunct company now. I'm not even sure if that's a ticker that's still around, but that was like the most comical thing. And one of the first things that got me hooked on trading was I bought Hexo at 25 cents or something. And I think it went to $12. and I had just 5 or 6 shares or something playing around with my high school account or whatever. But I was like, man, this is easy. Things just go up like this. Yeah. This is so free. And my first options trade went similarly, which is why I'm addicted now.
You know what's funny? And it's so ironic, but we've had this conversation before. Honestly, having a very large trade in the green sometimes is one of the worst things I think that can happen for a beginner.
Oh, yeah.
Because it just absolutely already shapes. It does something to you psychologically.
No, yeah.
And it sets those parameters in your head already, just off the first trade.
Well, yeah, I mean, if the first time, which I want to be incredibly clear, the statement that I'm about to make, options are much more predictable than what I'm about to say. But if you walked into a casino and you just sat down at a slot machine and the first spin you have is a jackpot, you might become a problem gambler. Right. I mean, it's the same sort of idea here. Yeah. While options are much more calculable.
It just gives you the wrong expectations.
It does. It does.
Yeah.
I mean, I remember the first options trade I ever placed, I remember this clear as day, was Apple calls, and they 2x'd in an hour. And I was like...
You're like, what is this going...
This is free money. I had $300 an hour ago, and now I have $600. Are you kidding me? Right. Yeah, and then I blew it all.
Yeah.
but it kept me. But it kept me. It got me locked in. Yeah. You're always chasing that dragon.
Yeah, I mean, for the most part, it reminds me of when I had seen the stock market on my brother's computer for the first time, and I had said, I get the risk involved, but the fact that you can do that is just absolutely absurd. The fact that you can sit here and make or lose real money was extremely intriguing. It's
oh yeah,
no way.
Yeah, I joined
2x.
I joined an investing club in 5th grade at my school. That was this weird club that existed for 1 year when I was in elementary school, and I joined it, and they gave us all $100K paper trading accounts. And I remember we got ours. We actually were really tactical and asking our parents for advice and stuff, and buying Berkshire Hathaway and making good, strong investments. We got ours from 100 to 130 in the course of a full school year, which is really good considering we were in 5th grade. We did 30% somehow, and so we were sure we were going to win this thing. And then there was a group of girls that had loaded all 100K into some penny stock, and it had gone crazy, and they had over $1 million. But they 10xing their money. I was like, oh, okay, we weren't sharp enough with our investments, even at that young age, but that showed me that it was possible.
Right.
And I kind of always had a passive interest in finance after that.
I like that though.
Yeah.
It just reminds me of pot odds. Whenever Tom used to mention that a lot. Like you saw the risk to reward. I'm telling you, I really do think everything lies around risk to reward.
Oh,
I think
absolutely.
regardless, or whether you recognize that on a subconscious level, the risk involved for the potential upside, it was a no-brainer to take on that risk.
Well, yeah, and I think that lots of people outside of the finance space or any sort of speculative space whatsoever are taking lots of risks and performing lots of expected value and probability of profit calculations throughout their day-to-day, every day.
Outside of the market.
Yeah, outside of the market, just in your day-to-day life, but you don't realize it.
Right.
You, frankly, every time you get in your car and drive, you made a decision that that's plus EV, that has a really high probability of profit and a very low risk of ruin.
Right.
But it's
So are you saying
all of these things?
Are you saying in life, everything has an element of, I don't want to say a gamble. I was going to say uncertainty, but I mean, that kind of correlates
Yeah,
with the
and there's
definition.
an element of speculation.
But we don't really think about life that way.
No.
We don't really, right?
No, and yeah, I mean, in a statistical context, you would say nothing is certain. I can't guarantee you the sun's going to rise tomorrow.
Right. But based off of my calculations and experience, it might.
Yeah. Well, I think it probably will. If I were a betting man, depends what kind of odds you're going to give me on no, I guess.
Oh, yeah.
Well, if the sun doesn't rise, it doesn't matter. You're obligated to bet yes. Anyway, sorry,
what is
go on.
it? Is that Alaska? I think Alaska, it doesn't, the sun doesn't go down?
The whole Arctic Circle, there's like months in summer where the sun never sets and months in the winter where it never comes up.
I'd go crazy.
I think I would.
I could do the 24 hours in the night.
Yeah, you have to do both. If you live there, is
Right.
the thing, because you get the night and the winter. The 24 hours of daylight, I think I can make that work fine.
Yeah.
The 24 hours of night, though, I think I would just be super depressed.
I would be absolutely depressed. I mean, just get some dark curtains. It's a nap. Take a nap.
No, yeah.
Go to bed.
Yeah.
SPY is creeping up here towards the highs as we were speaking here. But before we get into that, let's go back to these futures products and look at some of these micros. I'm really curious about the micro ETH. /MET. Go over here to the swatch list.
I feel like I'm listening to kids talking about their glory days. I guess that's pretty apt. That's a pretty apt analysis, strategic resistance. I think you hit the nail on the head there. Yeah, ETH a little extended to the upside right now.
Yeah, a little extended to the upside. I really like to use, when I'm using futures, I really love to use a volume profile. And the volume profile just shows the trading activity that occurred at each price level. And I mean, this product doesn't have as much volume traded, obviously, as something like NASDAQ, the micro NASDAQ product. And I can just tell right off the bat, going on the 1 minute, how choppy this looks. So it just shows me how illiquid this product is too. And like I said, the volume profile is nice to use here just to show where the market is interested and at what price levels. So I'm gonna pull this up here just to see what that would look like on something like ETH. But it's looking like big deal, scramble everything, and strategic resistance might be trading. I think it's just them three trading ETH because it's pretty choppy. There's not much volume going on in there. Volume profile. See if we can find that. There we go. There we go. We'll have to have a segment where we come on here and play with these a little bit more.
Big deal. Hexo and ACB. I remember ACB. That's a blast from the past. That's a good shout.
ACB is a marijuana stock, right?
Yeah.
That is a blast from the past.
I always heard you watch somebody dump money into a machine and doesn't pay off, you jump on that machine and start playing it. That's true too.
ACB, let's take a quick look.
It's true too. That's gambler's fallacy, but it's true. That is the strategy.
Go.
ACB.
Play with these.
Good to see that they're still around. Is Hexos? Let me see. It is.
ACB still hanging around. I don't know about Hexo though.
Hexo 71 cents a share. I'm gonna buy 10 shares. Why the hell not?
I mean, it can only go down 70 cents.
I can only lose $7. I'm tempted to buy 100 shares. No, it's not. I lied. It's delisted. I was duped.
There we go.
These things happen.
We're gonna go over here. Let me pull up the micro corn.
Yeah, give us some micro corn.
Yeah, let's.
Micro corn, that makes me think of those like the mini corn that you get like in Chinese food. You know what I'm talking about?
No, which one is that again?
I think it's called mini corn.
I love Asian food.
Somebody in chat, correct me if I'm wrong on that, but yeah, I know if you go to like any not like Panda Express, but like Chinese or Mongolian like buffet style places, often like mini corn is a thing you can throw in your bowl.
Okay, we got /. No, I do love me Asian food though. Probably one of my favorites. Probably one of my favorites. Volume is so low on mini corn, but very volatile lately. Let's go to the daily so we can see what it's been up to. I'm not gonna lie. I'm just not a big fan of a lot of futures products, right? Like there's some like gold and silver I want to get more familiar with.
Baby corn, Mr. Pillows. That's right. Thank you.
Baby corn. Is that what it is for
Yeah.
the Asian food?
Yeah, yeah.
It's a baby corn.
Yeah, baby corn. It's just okay. I'm not really endorsing baby corn right now.
No, I bet it's good though. Like I said, I love Asian food.
Yeah, it's more of a texture thing.
Yeah. But no, just looking at a lot of these micro products, they're not as attractive. And the reason why I stick with the micro NASDAQ so much is because it's so liquid and so volatile. It's like everything you need, every element you need if you're a trader. But I'm not knocking corn out of the way because I also want to see the buying power that these contracts need. Like, for example, corn only needs $305 of buying power. If I'm not mistaken, the micro NASDAQ needs around 2,000, maybe 2,400. So the buying power effect, there's a dramatic difference in trading corn versus a NASDAQ.
Yeah, not a very dramatic difference in volatility, which is
100%.
Interesting as far as trading vehicles are concerned.
Yeah. So we'll have to circle back around to that one too.
The thing with corn and like some of these products is just like I don't even know how to begin to like make a decision or become convicted.
100%. I remember I was trading a lot of futures with Frank maybe 3 years ago, and I was so drawn towards that style of deriving an assumption. And what we would do was we cranked data, and then we would just find the extremes of the directional moves, and we would identify whenever there was an extreme of a move. And I remember we were looking at a lot of futures products, and I think you can do something similar by using a volume profile. So I think we'll probably get into a volume profile another time, but I think that's a very useful way to trade the futures market for the most part. Because I get it. It's like, how do you derive an assumption? Like, how do you even think about this market in the right way?
Well, yeah, in corn or wheat, like I mean, I guess this Chicago wheat, I'm a little bit privy to the weather in Chicago, but I mean, yeah, the places this wheat is coming from could be going through extreme drought for years, and I would have no idea. I would look at this chart right here and say, okay, this looks oversold to me objectively. I mean, at a glance, it seems like we're probably more due for upside than we are for downside, but it's just really hard to begin to make those determinations.
100%. And I know there's some products like oil that trade completely different from something like gold, silver, whatever. I know something with oil.
That's true too. The commodities can just be completely independent of the market, and are in most cases. And so that's a whole other factor.
Yeah, I'm not against the oil side of things.
Oil, I've dabbled in oil.
Yeah, I mean, I like oil. I like the volatility, but it feels like, for me, it feels like a different ball game. It's like I understand how NASDAQ is played. Like I understand how you play the game. I'm not saying you're gonna win every time, but I know the rules and I know how to play the game. Something like oil, what are the rules of the game? Do I need to pay attention a little bit more to the supply and the demand, a little bit more important to those weekly data points that they drop in terms of supply?
No, yeah. I mean, I've always said, like, oil or like metals, like these kinds of things to me it is like crypto or Forex. Like, it almost feels like it's an entire like other battle to attack. And that doesn't mean that it's not worthwhile and that there's not an abundance of profitable angles on a daily basis. It's just never something that I've invested a ton of time into myself. But oil, I do play around with oil a little bit. Oil is always a fun one to play in times of like military uncertainty. I don't know exactly.
Trading oil.
Yeah, oil.
Yeah. There's always a huge level of uncertainty with oil. Any product, but especially oil. I do feel.
Yeah.
Energy products.
That's true too.
Yeah.
You guys team wind or team solar? Let me know.
Team wind or team solar? From a business perspective or from like what perspective?
I don't know.
Because
vibes.
I think.
Here, you want me to give my answer first?
Yeah, let me hear you.
I'm team wind because I think windmills look cool. So there's your basis.
I never thought like, windmills are pretty tough. Never thought about it that way. But I do think solar is going to get more popular. I do know it's so popular in Florida. It's a sunshine state. It makes sense. Right? It's going to save people a little bit of money. Look, I
believe they're both highly inefficient, if I'm not mistaken.
So what is efficient?
Like, I don't know. I feel like I should. If I put solar panels just on the roof of my house, I should probably be able to power my house, but I'm under the impression that that's not enough to power your house. So you can just kind of supplement it.
Let me ask you this. If it did power your house, my kind of thing is like solar panels, it's ugly in my opinion.
Oh, yeah.
So my first thing is like you're putting all this tech on your house, which is like, I guess if it makes sense and this is where the industry is headed, but the first thing that I think about if I'm a homeowner is like, am I really going to, throw all these panels on my home?
No, yeah, and solar panels too, especially in like a wide scale, like powering a city context.
Right.
I think a field of windmills is a little bit more visually appealing than a field full of solar panels, and you can still do things with the field that has the windmills in it. Like you could still grow crops or whatever.
Don't you, if I'm not mistaken, I think you get paid out by the state, if I'm not mistaken, if they put whoever owns the windmills or puts them on your property, they can pay you out.
Yeah, they cut deals a lot of ways. I don't know. I'm sure it's like sort of similar to if you find oil on your property.
Yeah.
Like mineral rights. I guess you sell your windmill rights. Anybody got specs on this? Anybody got a windmill at their house? Let me know.
Anybody got a windmill? Anybody live in the little house?
I say hook up power generators to gym treadmills. Now we're thinking with our head, or exercise bikes. That's an idea.
That could work.
Oh yeah.
Now, just taking a look at
Google flying.
These markets over here. Another thing I wanted to highlight, which is really dope, is on here on the ladder, something I noticed today that they put in an update for is they'll show you the volume at each of those price levels. So these are a lot of the resting orders in the book, in the market. So just the limit orders waiting to be filled at the price levels that it's waiting for the market to get at so it can fill those orders. And if you see over here on the left-hand side, it has the volume, has the number, and then it also has the little graphic to show how much it's filled up. But it'll just show us the dominant areas in the market that most orders are sitting at. A lot of times questions get asked like, yo, what about spoofing? What about this? What about that? It's like, yes, there's gonna be spoofing, especially when it comes to passive orders. It doesn't happen all the time, but you might see it sometimes. Pretty much whenever people put in like large orders at a specific price level to make people think there's gonna be a massive order filled and then they'll pull it last minute. So I know the first question always is a spoofing, but I don't think that's something we can avoid for the most part. And I think it's something that we just have to watch how price responds to levels in the market, no matter if there's a ton of orders sitting at that level. So that would be my take on that. But
yeah, that is very interesting. Yeah, that's fascinating.
Yeah,
very,
yeah.
very
I know a lot of people are like, oh, there's massive orders here, and people will try to do that to try and manipulate and do this, that, and the other. It's not even legal, but I mean, it's done regularly every single day. But we can see where most of the interests are at each of these price levels. Right now, we don't even have to derive anything like from this ladder right now, but it is interesting to see like at 23,616, for example, the level we were talking about yesterday, right, has a higher number onto it from the surrounding price levels. And that just goes to show there's more market interest at those levels. So I know when trading a lot of the futures markets, not to go off on a tangent here, but one way I think you can derive an assumption is finding those levels where there's a lot of decisions that are about to be made. And I think those give you really good risk to reward opportunities, not because you know the direction the market's gonna head into, but you'll know fairly quickly whether or not you were right or wrong. So I think by finding those levels where there's a lot of high interest, the market is typically gonna make some type of move at those levels. So if you're wrong, you're gonna find out you were wrong really quickly. And if you're right, you might be able to catch a decent sized run. So it's like, if I'm wrong, I wanna know when I'm wrong. I don't wanna sit in a position forever and then just to find out that I'm wrong. I'd rather it stop me out right away. Cool, at least I know I'm wrong, very minimal risk, and the potential payout was worth that risk that I just put on. So that's kind of
yeah. I mean, yeah,
futures.
You force disproportionate risk in a way when you do it that way,
100%,
which is good, which is always what you want.
100%, and that's where, which I think it'll be interesting to get into. But that's where even Dr. Jim and I will go back on using a stop loss, not using a stop loss, and we had came to the conclusion that if you use a stop loss, use a stop loss. If you don't use a stop loss, don't use a stop loss. But whatever you do, have a consistent approach. So that's one of the conclusions that we had drawn from that. But yeah, 100%.
Well, yeah, and there's ways that you can go to. I mean, something I've always said is like the only time I deploy stop losses is if something is running like in my favor, and I want to continue to get that run, but make sure that I'm protected and can take my profits in case it suddenly stops and corrects. And so trailing stop losses are the only time I will ever use stop losses, and it's rare that I need to apply them because I'm usually talking about a situation where a position has like 1.5, 2x'd, and I want to make sure I'm capturing the biggest end of the gain, but I also want to still be there if it 10x's.
Right, 100%. I like that. But yeah, that risk reward discussion, we'll circle back around to it. But we got some nuts. What's that?
Yeah, absolutely. I have angered the solar community. What has happened. We have a lot of very experienced solar people here.
Okay, so what we got?
So Jared Kramer says, my panels power my house and my 2 EV cars. Only time I have to pay an electric bill is during the winter. So Jared, I eat my words on the house thing. You are right. I don't know much. I'm kind of just sitting here talking out my ass. Perhaps you could use the heat generated by human bodies to create energy. I don't know how we're going to attack that. I mean, maybe. I think the treadmills thing is a better idea. And then Adam enlightens me. You can still do stuff on solar farms too. Some plants grow better shaded. Some animals like it. Offshore best is wind at sea almost always blows. Blades are larger. Oh, you switched into wind as well. Okay. Adam's just a proponent of renewable energy. I can get with that. And then Big Deal Donuts with the gigantic brain comment. Can I use my hose to spin something and create more power than it costs me to use the water?
Yes.
Maybe.
If done correctly.
Maybe. And then, yeah, I've been a part of 3 solar farms, and you never do it without the tax credit. Economics suck. But, okay. I eat my words, people.
Hey, but look, it's a
I still think windmills look cooler.
Hey, but look, it is a relevant topic. I just bring it up because it's so popular in Florida. Like,
yeah.
I mean, there's solar agencies. Like, it's just.
Well, it's an interesting difference of experiences because the wind farms are very popular in Texas. That's what I've seen the most. Is you'll be driving through Central or West Texas and there's just giant acres and acres and acres of windmills.
Yeah.
But I know windmills kill birds. I don't like that. I don't condone killing the birds. Oh yeah, and then wave energy from buoys tech is coming along. That's a great point. Scramble everything. I've seen that, and that's a very fascinating and that would be a very cool thing if we can get a breakthrough on that. But anyway, yeah, good solar discussion. Sorry, I didn't mean to diss solar, guys. I like it. I was
up here dogging on solar as if it's not saving money on your car, in your house.
Yeah, maybe I need to get some solar panels.
Stick with the solar. This guy's lobbying for the windmills. This guy got windmills on his property right now.
You got me.
We got a big windmill over here. A big windmill. Now, I'm just looking at some of these other products and looking at the buying power, because that is an interesting one. Can Arrow use the solar shingles?
Arrow can use the solar shingles. I guess they make shingles.
For the solar, yeah, solar shingles.
Solar shingles. That makes sense.
So the Dow is about $1,400 in buying power. Oh, are we selling? What are we selling? Are we selling solar or are we selling the market right now? Are we getting short? Are we getting short solar or are we getting short the Dow? I have not traded the Dow futures yet, or the micros for that matter. Just taking a look over here. We got some natural gas futures. That's the E-mini. Crude oil, silver. I'm not opposed. We'll put something on small. We'll find something. We got a little bit of. We don't have too much time.
I was gonna say no, we do not. You gotta piss and get off the pot, my boy. We gotta do this.
Let me see. What do we got here? Let's just for the culture.
Yeah, man.
For the culture.
Just do what I do with Forex. Just pick a direction arbitrarily and do it.
No, I know. Let's see if we can get filled on /MET. I think that was a micro ETH. Do we want to do that? Yeah, we can. All right, guys. Well, we got short some micro ETH if it works out. Shout out to Grumpy Mike. If it doesn't, shout out to Grumpy Mike. But no, anything else to add before we
shout out to Grumpy Mike
to wrap up here?
No, I appreciate the education on solar, guys. This has been very informative. I'm smiling, but I'm being genuine. This is cool information. So yeah, thanks. This was a fun one.
All right. That was the top 10 most volatile micro futures products. If you have a smaller account, they're going to be more conducive for those. I know I like to use them. Easy to scale in and out of some of those positions, but we will be back here Thursday, 4:30 o'clock Central Time. We'll do a recap on some of our risks of the week that we had put on last night. But thanks for taking the time to hang out with us, and we'll catch you guys in the next one. Peace.
You can get up to $4,000 when you open and fund a new account with TastyTrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new TastyTrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? TastyTrade. Make your move.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. TastyTrade. Make your move.
Global markets never sleep. Explore them with Forex, now available on TastyTrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on TastyTrade.
We built TastyTrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your knowledge. See it, click it, trade it. Join the club. TastyTrade.
Hey everybody, happy Nvidia day to you. I guess in about an hour. I don't know exactly when they report. Some companies report like the millisecond after the market closes. Apple like waits a full half an hour just to torture people. I don't know what Nvidia does, but we'll soon see. Yeah, pretty big deal. Whole world's waiting for it. The market's been rather spasmodic today. Glancing at the NQ, it has been red, green, red, green, red, green. It's flying all over the place. I have no particular opinion about what Nvidia is going to do. If pressed, I guess it's going to go up. And there's nothing bearish looking about it at all. I'd be thrilled if it went down, not because I have any stake in it at all, except in as much if Nvidia got zapped, everything would fall. I mean, you can't usually say that, you know, about anything, but it accounts for almost 8% of the entire S&P 500. It is the largest stock in the world, and psychologically, it is the market, just like Cisco was the market back in 2000. But I'm not counting on it. No way. No way, no way. I wouldn't be at all surprised if it went up, but you never know. Might get a surprise. I've got some charts for you, including that one, but it's a fairly green day. ES, RTY, YM, CL, all green. NQ's down 0.01%, but things are kind of frozen until we get the news. Looking here at the spider, on an intraday basis, we have a lifetime high on our hands. We've got a new lifetime high and almost certainly a new high close. So, you know, some anticipation, it would seem, of Nvidia producing the results the bulls want. For me, the biggest position, save my bacon today, which is good old China, FXI. Talked about this yesterday. That's all about this one simple trend line. And as I said yesterday, resistance, 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 resistance. And happily, even though we're entirely green in the US, FXI down 2.66%, which would be like over 1,000 points on the Dow. So that's pretty cool. I'll happily take that. So yeah, big winner for the day, and I took a little bit of profit, but mostly still in. The diamonds are up almost 0.5%. They seem poised to blast above lifetime highs. Lifetime highs were set on Friday. Anything above zero for Nvidia on the net change tomorrow would probably push the Dow into new record territory, because Nvidia is the Dow component, and I suppose the biggest. The small caps are up about 0.2%, like so, getting closer and closer to their own lifetime highs. And the cubes, at the moment, they're up a little bit. They sneaked a bit above Friday's high. We'll just scooch this up a bit to Thursday's low, like so. The lifetime high was here, back on the 13th. We'll see. Honestly, I adore my individual positions. They're very thoughtfully picked. I don't have, except for FXI, On the short side, I don't have any big short position. I've got no options positions. I've just got a mishmash of little bitty short positions and 2 long ones, IEF and GLD, like I keep mentioning. Those are my bullish plays. So yeah, less said, the better. SMH, the semiconductor index. Now, even though the SOX itself, the semiconductor index itself, hasn't made lifetime highs, that's still set 13 months ago, the SMH incorporates the dividends that have been paid, and so it's pretty close to lifetime highs. Those lifetime highs were set quite recently. The peak was on the 13th also, just like the cubes. And we're fighting our way back. And this is the range we're in right now. We've been in this range for many, many weeks, ever since early July. Tomorrow we will not be in that range anymore, I strongly suspect. One tech stock that had a sensational day is MongoDB, MDB. And this is a really good example of why it's important to know the personalities of stocks, because as I've said in the past, we could look at past behavior here, monster top, and the results are a little squirrely because, a top of this size should have blasted this into bankruptcy. It fell a little bit, pretty good fall here, but it completely recovered from that. This is strange behavior for such a well-formed pattern. Here too, we had a nice top, it fell, sure, but then it rallied its way back up, pushed back into the pattern. So it's inconsistent, it's weird. I don't like how it behaves, and so I was the least bit tempted to mess around with this, and good thing too, because sure, we had this pattern and it fell, but look at what's going on. We're deep into that again. So it's a very, very fishy creature. And I'd used Dave a few days ago as an object lesson with the same philosophy of here's something which should fall and should fall and should fall and never does, and so I don't touch it. Given enough time, the stock will sort of, it's like the saying about when someone tells you who they are, believe them. Same with stocks. When the stock tells you what it is, believe it. History is your guide. The personality has expressed itself with prior behavior. Over in Bondland, TLT, still grinding away, a little bit in the red. I guess the next events forthcoming would be on Friday morning, which is before the Labor Day weekend, so in 2 days, the PCE comes out, the inflation report, the Fed's famously favorite inflation indicator. So PCE will have, I guess, some bearing on that. And then well into the middle of September, I think the 19th, I want to say, is the Fed meeting where everyone pretty much expects Powell will make it official that he has caved to political pressure and is going to chop those rates down just like he's been asked. So that'll be the next event there. But in the meanwhile, TLT is just languishing around these levels. Of more interest to me, and which is green instead of red, is IEF. Like I've said, I don't want to touch TLT with a 10-foot pole, but IEF I will touch with any pole you give me. I love this chart, and it's getting closer and closer to what I think is going to be a nice breakout above the base. So these aren't big moves. I mean, it's a treasury bond fund. This is not a biotech stock, but it's getting there. And it's a big pattern. Plus, pays a dividend. So that's nice too. Abercrombie and Fitch was a bit of a wild ride. This is one of my shorts today. When they reported early this morning, like 2 hours before the opening bell, it blasted higher, like to 112. And shortly thereafter, it began crumbling. It got down to the 80s and recovered from there. So it's only down a little right now. So still in the position. Be nice to see those 80s again. But for the moment, it's down, but only very modestly. So post earnings hanging in there. Meta, another short, is down over $8. And it's turned away nicely from this cute little zone. Its own lifetime high was just recently on the 15th. I almost got to 800. And so it shaved off about $50 from those levels. Back into Netflix again, earlier today in FLX. In this case, a tight stop at a very easy to remember $1,234, $1,234. And also sticking with Roblox, RBLX. This one's down about 1%. And I'm keeping the stop tight on this one. A very liberal stop would be way up here. That's a bit too much for my liking. I'm going to keep it more conservative, like so. But yeah, all in all, at last count, I think I've got, I want to say, yeah, I think 18 short positions and actually 3 long ones. I'm going to talk about the third in just a moment, because I've already mentioned IEF, I've already mentioned GLD. Speaking of gold, here it is. Kind of like the IEF, nothing dramatic, but tiptoeing in the right direction. It's up about 0.5%. The big news will be when the happy day comes that we cross above 317.63. That I think will be a big deal, and will let loose a lot of buying excitement. As it is now, we're just inching our way there. But the third long, which I got into for the first time again today in weeks, is our old friend Palladium. I finally decided I've waited long enough. So I'm back into PALL. I guess psychologically it's nice that it was a double-digit security again. Stop on this one is this dashed green line, the gap, 97.70. It's a pretty thinly traded issue, so I've set my own stop at 97.5, so 20 cents lower than the gap. But I'm satisfied. This is enough of a fall, because it's come down from its peak here about 20%, almost exactly 20%, over the course of just about 6 weeks, 5 weeks. So that's good enough for me. I think that's an appropriate and much more appealing price point to go long again. And this is also illustrated with this ratio chart of the long-term palladium versus the US dollar fund. You can see here that this is the third instance we've had a nice basing pattern. The prior two produced terrific results. And, it's going to it could take months before we break above that current base, but we'll keep an eye on it. Over in stuff you can't hold land, Bitcoin is broken well below this trend line, and is even teasing breaking below this dashed blue horizontal, which was the prior peak. Looking pretty wobbly here, gotta say. And in turn, Strategy Inc., MSTR, is down again over 2%, and has basically been blasted around wildly since almost Halloween of last year, really going nowhere fast. With all the talk of Nvidia, Snowflake is another that's kind of the second big earnings report this evening. It won't get much attention, I'm afraid, but it's a pretty big stock. I don't have any particular read on where I think this is going to go, no position in this, but the belle of the ball, king of the hill, is going to be this monster here, Nvidia. Very close to lifetime highs, very richly valued, but they could blow the doors off as far as we know. I will say that even the ratio chart of Nvidia to the semiconductor fund, pretty honest comparison, pretty apples to apples comparison, shows just how massively huge this move higher has been for Nvidia. Because even versus SMH, it looks like a bottle rocket. So that's a good place to end. So fingers crossed, we'll see how it goes, and I'll see you on the other side of it. And 3 months from now, we'll do the same thing. So good luck. See you on Thursday.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on TastyLive.
Global markets never sleep. Explore them with Forex on TastyTrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on TastyTrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
TastyTrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on TastyTrade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for the last call. Even the S&Ps are up 1375. But look at this volume, Sosnoff. Another very light day, 715. I mean, yesterday at least we had, well, we almost had 800,000 at this time. 715 right now. It'd be hard-pressed to see if we get over 800,000 at even the S&Ps trading for the full day in the next half hour or so. NASDAQ up 14. It was just red for a quick second. Obviously, it's been higher, it's been lower, but it's up 13 right now. Russell up 15. That's your leader in the clubhouse to the upside, with the Dow up 167. Volatility up 10 cents for most of the day. I don't think it's moved. I think it has a lot to do with what's going to go on this afternoon. It has 100% to do with that, and that's why the S&P volume is nil, because the only index that won't be affected today is the Russell. Right. The only index, and the Russell's is quite strong today, the strongest of the group. And you make a good point right there. If we can talk about that for a quick second, then I'll go through the rest of the market here. Nvidia comes out probably with its earnings around 3:20 Central, about 20 minutes after the market closes. You're still going to have, if you trade like Qs or SPY, especially if you're trading the 0-day or the 1-day options, you could open yourself up to some risk here if you stay in these positions. So that's why volatility is staying up, and also, especially in the Qs, you're going to have those out of the money options retain. They won't go to zero, is what I'm trying to say here. They won't go to a penny. They're going to say some multiple of what they normally are. If they normally get to 2 or 3 cents, they're going to be 8 or 12 cents. Because of that risk of Nvidia moving, and I know it's only a $10 or $11 expected move, but it could move significantly more than that, and that would definitely give you some risk on any kind of 0-day options, 1-day options you may have in the Qs or anything like that. Makes sense? Yeah, but let's be clear. The SPX has none of that risk.
You know what? I'm gonna slightly disagree with you.
Well, the 0 day would have none.
The 0 days. The 0 days.
The 1 day is going to hold. Yeah, right. 0 day has no risk. Yes, you're right. I said the Qs is what I was talking about.
Yeah, the Qs and to a certain extent the SPY, but I think it's more the Qs.
Agreed. And
it's the MNQ if you're trading, or the Nasdaq, the Nasdaq futures.
So if you got a 95% win and you're used to getting a 99% win, take the 95 and just chalk it up to experience was what I would do, at least.
You heard it there.
All right, let's see what else we've got going on here today. We talked about volatility staying bid. We both believe it's both Nvidia, even though you do have Snow and Crowd coming out with earnings also.
I did not know that. You have CrowdStrike today?
CRWD. I've said it to you 100 times today.
You didn't say it to me once.
Do you have selective hearing?
Obviously.
You're in charge of your own positions. Okay. When you sign up for an account, they say you're in charge of your own positions. What I do for you is a courtesy.
Oh.
As a courtesy to you, as a favor to you.
Oh.
Crowd, I rank at 34, up $6 today. I don't know, mid-low range for low range.
Pretty big expected move.
Yeah, $31, a bigger expected move than Nvidia on a percentage basis. Nvidia has about $11.
I didn't know Crowd was coming out, so I had to roll my Crowd position today. I just rolled it.
Boo. That's on you.
Okay, what else has earnings today other than Crowd? I say it again because I got to make sure I don't have these positions on. I didn't know about Crowd. What else?
Snow. Oh, what would you have done differently?
I widened the strikes just now.
Okay.
Snow, I do not have a position on. Where's Snow trading?
Where do you think it's trading?
180, 201. Wow.
Not bad. 201 is correct.
That's a tough one for me.
IV rank of 59, highest IV rank on the board. But when you look at these 2-day options in August, you've got 35-cent wide market, which are only going to double as the day goes by after earnings.
I mean, the last couple of times Snow has missed pretty bad.
Yeah, I mean, it's rebounded pretty nice. You get in on the cheap.
You can. You could sell some 155 puts if you want to for 51 cents.
In this economy?
I'm going to. I don't mind buying Snow at 155. I hope that doesn't come back to.
Now you've said that before about stocks, and really kind of didn't want it, right? I mean, like you said that, but when it happens, you don't want it because it's usually lower.
Not on your life.
A
what?
Is that A your mama? What do you mean
A? You're supposed to say A.
Funds A Agilent A.
Oh no, I don't care about Agilent.
How about?
I've never actually looked at Agilent.
How about NTAP?
Agilent. No, you can't trade Agilent. It's only traded 1 million shares today. NTAP?
Mm-hmm.
I don't think I care about that.
How about DG, which is like...
No, I do not care about NTAP or A. DG, Dollar General.
Yes.
I absolutely do not care.
You care about Dick's, Tom? Have you ever really cared about Dick's?
Not really, but
One time you cared, one time. How about the BBY?
No, these are all, they haven't traded enough today.
All right. Everybody who wrote me, Peter, Julia, and a few others, thank you very much. We are all done now, Sal. We have done our fiduciary responsibility, which we owe none.
No, but you did help me. We sold some puts in Snow. We widened the strikes in CrowdStrike. And
ooh, that's NASDAQ you sold. Ugh.
No. I just sold some ES futures at 64.99
and a half. Yeah. Mm-hmm.
I sold some at 96, 98. I don't know. I sold them all over the place here. I'm getting short.
Daddy's getting short. You heard it here.
No, I haven't sold any NASDAQ yet. I did sell some Nvidia calls. The cheapies, the 200s.
Yes, the one that make Nick very, very happy for you. That is correct. With Nvidia trading around 181, you sold the 200 calls. That's 2 times the expected move, approximately, with the $10.5, $11 expected move in Nvidia over the next 2 days.
I think Nvidia is going to be. I mean, I'm betting. Well, I was very clear on my podcast with Dylan. I think Nvidia is laying the foundation for technological expansion for the next 10, 20 years. I think Nvidia is one of the most important companies in the world. I also think Nvidia is grossly overpriced. And so we'll see.
Okie dokie.
I don't know.
Okay. Nobody knows, right?
Of course, nobody knows.
Sure.
Nobody knows. I feel like the NASDAQ wants to roll over here. Reddit, Palantir, Meta, they're all down a little bit today. Some of the Chinese stocks, Netflix, yada, yada, yada. But no bueno.
No bueno. I mean, you just got a small P&L today. Neither here nor there. But
I'm neither here nor there. I mean, honestly, there's not enough going on today to really impact me that much. I'm just looking at all these different stocks on here, and I don't see anything that kind of really jumps off the screen. I mean, I don't get Robinhood's down $5, so I don't really understand that much. But other than that, nothing. UNH up $4.
Yeah. Hood has quietly come down.
IBM finally bouncing a little bit, but these are just everything's churning around.
Yeah, everything's churning. Tesla was one of the larger option trading today, basically unchanged.
Yeah, it's pretty much unchanged all day.
I mean,
Apple's been strong all day, but that's about it.
That is true. That is true. Most of the trade in SPX, SPY, Nvidia, Tesla, those are the top 4 or 5 or so.
I'm thinking the NASDAQ's getting a little rich up here. It's like it's playing this.
Well, it's a skosh, as my friend Tim Knight would say, off of all-time highs. I mean, you're not pointing out something we don't know.
I don't know.
I mean, I didn't pay you to come back for that kind of analogy. That's what I'm trying to say. Like if I wanted something to be, if I wanted Mr.
Okay,
Obvious,
let's be clear on something.
If I wanted Mr. Obvious, I bring somebody else on the show.
You don't pay me for anything, but I will, Mr. Obvious, sell some futures at.
Oh, you heard that? You heard that?
At 6,500, I'll take a little bit of a shot. I did not get.
You'll take a little bit more of a shot.
A little bit more of a shot. I'm getting a little short here. Offering some.
How has that worked out for you in the past? Just out of curiosity.
Yay! I mean, I'm still here.
That's good enough. Okay, that's good enough.
Yeah.
Get it?
I mean, I feel like there's less risk in getting short S&Ps than there is in getting short Nvidia.
Okay, I'll give you that.
But I'm short 2 times the expected move, so I'll take my chances.
Okay, beautiful.
I want the high prob trade.
Chances you shall take.
Yeah, I'd like to sell a few, maybe just a scotch of NASDAQ futures here, just a tiny bit, because I could see them up 100, I could see them down 200, or I could see them unchanged.
So, wow. Now you're basically you're covering the roulette table, all except the zero, the green. Yeah, that's all you're doing.
I covered every single number except
covered every number. You guarantee a winner.
All right, let's see what else do we got going on here. I mean, I was a little bit busier today than the last couple of days, but still.
I just think because you feel the market's getting a little frothy.
Well, don't you?
Oh, sure.
I mean, it's pretty hard.
But it's lulling me to sleep, and you don't sell a creeper, Sosnoff. You know that.
Yeah, what's so funny about the low S&P volume is I feel that's just, I feel S&P volume now is really. Oh, there you go. NASDAQ futures 27.
627. You are correct.
There you go.
What do you mean? What do you mean? There you go. What does that mean?
There you go. Like I'm in now. I got short S&P futures, nibbling on NASDAQ futures, but mostly, I mean, it's going to be a little game of Nvidia. Even and just do me one favor: when Nvidia comes out, don't try to trade it in the aftermarket. You'll just get killed.
You're right about that. Not something I want to do.
Yeah, I've tried that many, many times in the past, and it has not worked that well for me.
Since you're bearish in Nvidia, do you sell a little premium in the Qs, like calls in there too, or something like that, or maybe a skewed strangle in the Qs, closer calls, further away puts. Just trying to hedge the volatility that's kind of creeped in for the day. I'm trying. I know it's hard for you to understand. I know it's a little bit of abstract. It's almost like synthetically trading Nvidia by the Qs. And I know I'm blowing your mind here, but try to harken back on your 40 years of experience and catch up with me.
Okay. Well, I'm already short the Qs.
Well, who would have been short the Qs up till now? I mean, that's your fault. You did that.
Obviously, but right. I'm already short them. So right, I don't need to sell any more. Is my point.
Okay, so do you sell some puts in the Qs? Hedge your bet?
No. We're right at all-time highs. We're whatever. S&P's at 6,500.
Well, you corrected me earlier today. We're not right at all-time highs. I mean, we're off of all-time highs in the Qs.
All right, whatever. I don't care. Anyway, we're high enough that it's interesting to me here. And so I'm going to take my shots. If Nvidia is up tomorrow, I think maybe that's if gap opens higher, maybe that's the hook. If Nvidia is sharply lower, maybe that's
the hook to buy them high and sell them higher?
That's exactly right. You buy them high, you sell them higher.
Gotcha. Okay. All right. Makes sense? I don't know. Does it make sense? I
guess. Also, a couple things happened today that are a little more interesting. Bonds rallied off their lows. They were down, a half a point lower, more than that.
They're starting to get a little scary there. They've done this 4 or 5 times this week already.
They've done it 4 or 5 times. They've gotten a 113 handle every time we bought them there. Mm-hmm. So we traded bonds pretty good today, all from the long side. That they rallied from down. They traded 113.16, 113.17.
You're right.
Rallied all the way up to 114.07, which was nice.
5 or 6.
Let's see what else. I thought that was good. I thought the fact that volatility, I didn't think it was going anywhere today, but it hasn't moved the entire day. Mm-hmm. I think the option volume was stronger today, and the futures volume just is. Think about this: the S&P futures. Yeah, they don't care. This is an earnings play. This is an earnings day.
Mm-hmm.
Your IP without your knowledge or consent to visit websites.
What are you watching there? Don't be watching your little sneak videos.
Hey, Nick, get in the room for me, please. I'll be right back, Thomas. I'll be right back. I hope.
Activity.
What are you doing?
Important security
I get out. I'm fine. Goodbye.
Yeah, I'm trying. I can't control anything.
Hey, Paul, shut down Tony because he's got background noise to annoy. Thank you. Anyway, we don't need him. We're good. We're good until he comes back. There's all this background noise on his computer. I didn't understand what it was. So as we wind down into the close, and we're bringing Dylan on in a couple minutes too. There's 10 minutes left to go in the trading day. I generally, when I have a stock like Nvidia, even though the IV rank is low, let's talk about some of the interesting things about that stock today. Number one, this is the first time we've seen puts trade as rich as calls in Nvidia. Like normally there's huge call skew, meaning normally calls are priced way higher than puts. Today, the first time we've seen an earnings play where the put prices are the same as the call prices, maybe even a little bit higher. That's pretty interesting to start with. The second thing is the implied move in Nvidia. It hasn't moved in like 2 days. Some of the calls are bid up. Let me just take a quick look. But the implied move in Nvidia right now is about 1070. Yesterday, it was 1080. Nothing has moved in there. So what you're seeing right now here is we kind of, chunk along into the close. The Nasdaq's bid up to almost its highs of the day. The S&Ps are just off their highs of the day, but Nvidia hasn't done anything. It's just pure speculation. Everybody's just covering stuff and, flattening out their positions. I usually use these as an opportunity to put some stuff on. So I've sold some S&Ps up here, sold some Nasdaq futures, and we'll see what happens into this rally. As when you get days like today, what I usually do is I widen out my strikes. So I don't like playing it that close to the at the money anymore. Some people do. I like to widen out the strikes, go to 1.5, 2 times the expected move, and bet on my direction. I'm not playing Nvidia both ways because I think that I'm just not that interested in selling puts in there today. I think there's pretty good pot odds. And I also think the stocks looked a little heavy, and I think the NASDAQs looked a little heavy to me today. And there's a few NASDAQ stocks that reversed today. So maybe Nvidia's next up. I don't know. We'll see. Again, we have about 8 or 9 minutes left in the trading day. And Tony brought up a really good point before. He said, if you have some S&P positions on, just be aware that, and meaning NASDAQ positions or S&P positions, just be aware that it could move the market, after the close. If you have SPX positions on, it won't, because those are cash settled. So nothing can happen there. We're not going to be able to stay on until the Nvidia earnings come out. But one of the things I mentioned a couple minutes ago is the stock is going to trade really actively after hours once the earnings come out. Just be super careful. And if you normally trade like 2, 3, 500 or 1,000 shares, reduce your size down to like 100 shares, because these things can jump around, 5 or 10 points in a heartbeat. So just be careful on that one. All right, as we get closer to the close here, S&Ps are wrapped around 6,500. Yesterday I was watching them and I'm like, no way are these things going to get back up to 6,500. This is earlier in the day. And then they closed up 30 and they're up 17 more today. So they really went from 6,450 back to 6,500 in just 2 days. I think that's a good entry point. And NASDAQ futures have been just up and down all day, moving, 10 points at a clip. I don't think the Dow will be much affected, and I don't think the Russell will move at all based on Nvidia's earnings. We mentioned bonds today, but the story isn't really the bonds. The story was the 10-year notes. They were super strong today, and they turned around the bond market. And then the only other commodity there's 2 others worth discussing just quickly. One was gold, which had a nice rally this afternoon, and the other was natural gas, which may have finally bounced a little bit off its bottom.
Hey, Thomas, public service announcement. If you get an email that says Bronny James has had a heart attack, cardiac arrest, do not click on it. Okay?
Did you click on it?
Yeah, it was from somebody who emails me all the time. So don't click on an email if you get it that Bronny James suffered a cardiac arrest while playing or something like that. So don't do that.
Oh my God, you are
public service announcement, Sadnov. Public service announcement for those who care.
You are unbelievable. I couldn't figure out what you did, and you
didn't take a lot. Didn't take a lot. I'll tell you that right now.
Oh my God. I thought my wife was the only one that clicked on links that you're not supposed to click on.
I clicked on it too. Who are you kidding?
No, never.
Oh my God. I'm going to actually send it to you.
Please do.
That it's going to make your computer go a little haywire. I'm going to do that.
Okay. Thank you.
Okay.
No, don't send it to me because you're corrupt now.
It's not enough. I'm a Batista. I've been corrupt now since the 60s. Okay. That's just how it goes. It's just how it goes. No corruption in the NASDAQ, though. Up 42, Sadnov. What's Nvidia doing before the earnings? Nvidia is almost unchanged. What do you think, Saz?
I mean, it was up. I saw it earlier today, up $1, I think. Pre-market was up $2. I think at one point today during the day, it got up $1.
That's correct. 182.5, just about $1 higher than where it is right now.
And then it was about $1 lower too.
Mm-hmm.
Maybe even more than that. I just think some of the NASDAQ stocks were a little bit soft today. So I'm going to.
The NASDAQ's up 47. It's up on a percentage basis, the same as even the S&P's up 16.
Now it is. It's been soft all day, but now it is. I already have my bid in 100 points lower.
On NASDAQ. You want to know something? That's prudent. Now, this is one of those times where if I had a position in NASDAQ or even the S&Ps, I would put a resting order above or below the market, because you might get some sort of knee-jerk reaction. And I would definitely even do that in volatility futures too, if it was something you were playing. 100% agree with you.
Well, I am now.
Oh, now that I told you?
Yeah. Hold on.
Uh-huh.
Boom. Done. Done, 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 done.
I have to do everything for you.
Done, 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 done. Well, I got a little more futures to sell, but I kind of wanted to wait, but I don't think I can. I don't think I can. All right. I guess, Paul, we don't have Dylan, do we? Oh, we did.
No one's on right now. They're all running a little bit late. I'm going to have to buy them a watch. It's not an expensive watch like the watches I wear.
No, I think they all clicked on the Bronny James, email that you got.
You see, that's not. You see, I'm making fun of them because they don't show up, and then you diss me. That's not like true camaraderie. We're supposed to be simpatico, you and I. Like we're here. Like it's only me and you, boo.
Well, I got my futures off at 02. That's not good.
I was going to say, how does it make you feel?
And they just bid up all the calls in Nvidia, calls before that I couldn't sell to save my life. Now you can sell them anywhere you want to.
Would you admit now that there was call skew, or is that something you're going to?
No, they bid up the puts too.
Okay.
If you go right now, the stock is just under 182.
Yeah, it looks unchanged.
Yeah. The 92 calls are $2. The 7, no, it's the same. There's no skew at all. This is the first time, as long as I've been watching Nvidia, this is the first time where there is no put or no call skew. Maybe if anything, the puts are richer than they usually are.
Yeah.
But this is the first time I've seen that.
Mm-hmm. Well, I mean, think about it. I mean, at all-time highs, I mean, you would think it was, if there was call skew, you would think of it as a big advantage, wouldn't you?
Just sell some NASDAQ futures. Be half a man.
Man, misery loves company, doesn't it? Misery really loves company.
Can you be half a man for once? Just for once. Just be half a man.
You're lucky that everything has changed and you're allowed to say that now. So thank the present environment for that.
What do you mean? I can call you, I could say you're half a man. I could always say you're half a man. I'm just saying you're half a man for
it's true.
40 years. I mean, I'm not going to stop.
Because it's true.
Yeah. All right. Well, I've been selling futures. My average price is right up around here, around 98, 99. But my NASDAQ futures,
too, yeah. Mm-hmm.
NASDAQ futures, I really haven't sold any. Just a tiny bit. I don't know. Those make me more nervous. I'm already short enough calls in Nvidia, so I'll take my chances there.
Nvidia looks like it's going to be completely unchanged here.
All right, Pat, we got 1 minute left. Give me your call on Nvidia. I don't care your call about the market. What's your call on Nvidia? I have a bid in 100 points lower for some NASDAQ futures.
You never get them.
Never? I say I get them before we're off air.
Well, since Nvidia doesn't come out till about 3:20, that's going to be some. Oh, there we got Dylan.
Dylan, you got Dylan. You got me, pal.
Hey, Dylan, thanks for coming on after the show's over.
It's not over yet. Up, down, or sideways, Dylan?
I've been here. I've been sitting here.
Oh,
setting up my Nvidia position long. I'm expecting a huge up move.
Huge up move. You're on Fracola, Mr. Radigan.
Listen, I hung out with the Google ad sales team last night. I've been converted. I now believe that the future is now good, sir.
Oh my God!
You get in the back of the robot.
I was going to cover 100 points lower. Now I'm going to wait for 5. But then
buy me a piece of lamb.
NASDAQ futures. Anyway, Dylan, I know you're coming on doing overtime today. You're doing it with a special guest.
I've got a special. I've been offered the opportunity to invite some special guests. So I thought other, than my second phase.
Dylan, your connection's really bad. We can't hear you. You're going to have to log out and log back in.
Thomas, tell everybody who the special guest is.
Yeah. Hey, Paul, have Dylan log out and log back in because
the connection should be fine.
It's not. We can only hear every other word. and you're frozen.
This is Boomer to Boomer talk, ladies and gentlemen.
Yeah. Hey, Paul.
Who's a special guest? Thomas, you could say it.
I think Dylan's having Guy Adami on, who's an old friend of his.
Beautiful.
And they used to be on CNBC together and do Fast Money, but they're both gone now. And well, I think they are. I don't know. Dylan is. But Guy's a friend. He's a longtime friend of the family. And so we'll see what happens. Let's look at this S&P action here. The S&P's just dropped 8 points. We just sold them at 02. They're 94. And the NASDAQ's dropped 20 handles, not much.
Please. You're embarrassing.
Nvidia, on the other hand, is up 30 cents from where it closed.
Yes, in the aftermarket, which
means aftermarket. So on Tasty, just so everybody knows, on Tasty, the quotes go all the time. We never stop.
Yep.
So what's interesting here is Nvidia is actually up 50 cents, and
NASDAQ futures are off 9. I mean,
nothing. Yeah.
Right.
S&P futures a little lower. I don't know if the numbers actually come out or not yet. I doubt it, but I don't know.
No, 320, I believe.
Well, the stock's up. That's why.
Why do you people insist on using Chicago time? It's so annoying. Okay,
because
all these years,
Chicago. Because Chicago's the center of the universe, Dylan.
Oh God, the center of what universe?
The center of our universe.
All right, 320 it is. I mean, I hate to tell you, the market's in New York, but whatever.
Not anymore. Not after the elections, it won't be. We're taking
Yeah, then it's going to be in Miami.
We're bringing it to Texas.
It'll be in Miami. It'll be in
Miami. That's right.
Dylan, we're a derivatives firm, and all derivatives trade in Chicago.
Okay, I think all derivatives trade in a global electronic market that is atemporal.
Dylan, don't bring facts to a story with Tom, okay? Don't bring facts. I can't stand that about you.
There was once a time when the dinosaurs roamed the earth and derivatives were traded in Chicago.
Oh, Sosnoff.
That one got him a little bit. Did you see that? He takes.
Well, it didn't get me. I'm a dinosaur. I'm one of those. I roamed the earth at one point. For 20 years, I roamed the earth in Neanderthal fashion. I was a legitimate knuckle dragger, along with Mr. Batista.
And now you just over here running numbers on a camera, like every other fool. So Guy Adami's coming on the show. I got a special one. I shared the screen with Guy for a long time. You know, I never have had him one-on-one for an hour the way that I get access to Tom. So this will be the first time I ever get him without he can't sort of hide from my interrogation. But you know,
he's a funny, he's a smooth talker too. He's really good at avoiding some of the direct answers like you are.
Because remember when we did Fast Money, I was hosting a different show, and we did Fast Money as a segment on the show. We just would have traders come and do chit chat, and it was a way to sort of see the chemistry, all the things you're looking. So
I like the two of you guys. I like the two of you guys together. It's good.
So Guy Adami shows up, and everybody else is very serious about things. And Guy Adami's a little bit of he's got a skip in his step, if you will. And so I'm sitting there, I'm like, what about this, whatever. So I'm like, I think the company name was Danaher. Did you know Danaher? You ever hear of Danaher? It was like a shipping company or something.
No.
And I'm like, what's with this? It was like, what's your pick? You know, it's always like, what's your pick? What's your stock? What's your stock? His stock was Danaher, whatever. Okay, Danaher. I'm like, why is that? He's like, I'll tell you. There's two guys in a boat. And he started telling a story about two guys in a boat that got stuck. He didn't talk about earnings. He didn't talk about the product. He didn't talk about the CEO. He talked about the origin story of the company coming from two guys that got stuck up a river in a boat. And I remember I came off the set and I said to Susan Krakauer, who was the big boss on that show, and I was like, this guy, you got to keep this guy around. Now, you got to love somebody with a non-linear answer. So he's evasive, but he's also very engaging. And I, like you guys and like me, I think he really is hugely invested in teaching people. So all jokes aside, I think he's one of the better people out in public right now in finance who's invested in helping people learn, especially young.
I agree. And he's got a little Tony Batista in him, you know, the Italian thing going on. They got a little, it's like, you know, they got very
simpatico. We cut from the same.
Have you guys ever been in the same room?
No, they're very close. They're very similar humans. Okay.
I wonder.
If those
I'm not going to go there. All right, John, I'm going to let you guys go and bring in this mythical animal guy, Adami, right after this with Dylan Radigan. We'll take a quick 90-second
And
break.
Nvidia earnings are coming. Stick around.
Earnings are coming in 14 New York minutes at 3:20 Central.
Okay.
We'll be back in 90 seconds. Peace.
At least you said Central. This is 3:20.
You can get up to $4,000 when you open and fund a new account with TastyTrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new TastyTrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? TastyTrade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. CBOE is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the CBOE's SPX pit. Watch Liz and Jenny live from the CBOE, only on tastylive.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on TastyTrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on TastyTrade.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest, to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Look who's back testing. TastyTrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at TastyTrade.
So Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling in the hole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammies when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful.
Girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem.
Help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air,
The problem is I just have a lot to do. You see, because in your job,
here we go.
Really all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Welcome back to Tasty Live and a special edition of Overtime. We'll do this today and tomorrow. I've cleared the decks of my colleagues in order to make room for some of my most esteemed and celebrated Wall Street friends. And I threw everybody out of the room just for you, Guy, and you showed up.
First of all, I apologize to you and your team and the audience.
How about the Tasty Live viewers?
And the Tasty Live viewer.
Care about them?
I care about everybody, but full disclosure, I had to make my way up from the New York Stock Exchange. I got a little caught on the subway. Then I had to get makeup on for CNBC's Fast Money. But when Dylan reached out to me, whom I adore, who I will tell people might be one of the 5 most intelligent people I've ever met. Absolutely brilliant. I said, absolutely. I would love to come on.
And so I said, and you said, I don't know if I can do it. I don't know if I can do it. If I could do it this day. I said, just come tomorrow. Take your chances. You're like, I got to be downtown at 3. Because remember, I used to work at the New York Stock Exchange and used to have to make it from the New York Stock Exchange to the NASDAQ every day to do the conference call. And that was when I was trying to figure out, because they always want to do the car service. So I take the car service, but then
the whole rickshaw, that was the beginning of the end, by the way.
The rickshaw was the beginning of the end. Because I mean, I was on the subway, but with the subway, there was no cell phone signal on the subway. And some of the subway gets frozen. You get stuck underground. You get stuck in traffic. Which is why, who are you talking to, guy? Who are you looking at?
That's Brian Sullivan.
Oh my God.
In the room. I mean, now we have a whole.
Oh my God.
Now look at this.
I mean,
we need to create an hour just for Brian Sullivan. I mean, if we're going to start doing this, if I didn't realize I could get so many celebrities into one Zoom call. How are you, Brian?
This is what a treat, my man. Are you like, somebody told me you're living in Italy?
This is beach right now.
Of course you are.
Of course you are. Of course he is. Still in
he's still in Radigan.
Rules don't apply to him.
No, nor should they.
Saranac Lake's own Dylan Radigan.
Yes, Union College.
Union College. That's a deep pull.
Okay, listen. Nvidia earnings are minutes away.
Okay.
As much as I would love to
coming
discuss.
Back. Sorry, this is
who
live
grew
TV.
Up where, and you know who lives where.
All right, let's talk.
So one of my favorite things with you, going back to the beginning of our career, is that I believe that you have always been very honest about the fact that you don't really know.
Right.
Which a lot of people in Wall Street especially like to pretend that they do know. And that you're very generous in trying to help other people to know what can be known, and also to be comfortable not knowing and be able to make a career of investing without feeling the need to know. And so for me, that's sort of the most. You talk about, you compliment me a lot, and that's nice. But I believe you're one of the greatest people. You're one of the Wall Street's greats at giving people permission not to know and permission to learn how to make a living while understanding you don't have to know everything. And
so let's break that down a little bit. And when you had the idea for Fast Money, and let's be clear. Fast Money was born from an idea that you had and that you incubated. We did Fast Money as a segment all through 2006. And we probably went through hundreds of people that auditioned, screen tested for whatever, a yet to be named show. And the original group was interesting in a word, unique in a word. But this is what I have learned and what I knew intuitively when I started in 1986. In our world, if you're right 15, 20, 25% of the time, you are Ted Williams, you are Joe DiMaggio, you are Lou Gehrig. Unfortunately, what the media has created and what sort of the universe of Twitter and all the social medias, you have to be right all the time. And I will tell you categorically, nobody is right even close to that. And you say, well, how can you be right 20, 25% of the time and be successful? Well, it comes down to understanding when you're wrong and exiting said wrong position. And when you know that you're right, levering up. But, when people...
Which kind of goes to the tastytrade thesis, which is that all risk is managed on order entry.
That's correct.
And the idea of risk management after order entry is delusional and or wrong. And so that order entry is the point where risk is managed.
Now, I'll say this. For your audience, and we've had these conversations before, the most important thing when entering a trade is knowing where you're going to get out if you're wrong. You have to stick to that. I'm going to buy Nvidia at 182. If it gets to 175, I don't care what's happening in the world. I am getting out regardless, and I'll live to fight another day. On the upside, that's an entirely different thing. But knowing where you're wrong and where your exit is critical. And what I say on the show all the time, like, I don't pretend to know where things are going, but what I say is, given my experience, given where things are trading, given these fundamentals, given these technicals, this is what should happen. And those are the conversations that you wanted us to have and that we still have to this day.
because I've traded much more actively in the last 10 years than I did when I was working with you at CNBC. I think at CNBC at the time it was banned, which I found peculiar.
Well, you were employee of the network, so you were not allowed by contract. We got around that by being contributors. That was the workaround.
But I was not able to actually put on a position of any kind. Whereas in the past 10 years, I've had the benefit and liability of being able to freely do whatever I want. When to sell.
When to sell. That's the most important thing. So let's talk about that for a second.
But not just on the downside, on the upside too. I just think it's when to sell every which way you can look at it strikes me as by far the most the most difficult thing.
All right, so let's play that out a little bit because I do think that's important. We just went through when to sell when you're wrong, and I don't think there's not a hard and fast rule. It changes for every stock you're trading or every situation. But when you're right, when to sell. And I play this game with people and I say, okay, let me ask you this following question. If you bought, and we'll play the Nvidia game, if you bought Nvidia at $100 after the sell-off in April, and I told you within the next few months, it's going to be $140, it's going to go up 40%, would you sign up for that? I guarantee that 99% of your audience would have thrown their hand up and said, absolutely, where do I sign? Well, it went up actually 80% from there. And there are people in the audience right now that probably did buy it there that have probably done nothing. Good for them. The problem, of course, is
everybody sells.
This is what winds up happening. People say, well, it was just 180. Now it's 174. I can't sell it here. Maybe it'll bounce on during the conference call. And then tomorrow we come in and I'm just playing it out. And
I'm going to interrupt you just because Nvidia is crossing. So here we can live it in real time.
And that's where it's trading, about 175.
And so it came out $1.05. Right now it's $1.05 versus $1.01. So it's basically at expectations, up 54%. Revenue at 46.7,
which was light.
No, it was at the numbers. 46.
I think the whisper was about 48, but okay, well, play it out.
I'm saying 46. My point, I have a different point with Nvidia if these numbers are correct, which is 46.7 revenue on 46.2, EPS $1.05 on $1.01, data center revenue 41.1 on an estimate of 41.2. So maybe a touch light. Mm-hmm. My thing going back to Nvidia a couple of years ago was the street had no ability to model the business.
None.
Saw those Meta earnings, Meta's recent quarter. I look at it as an indictment of the street. Flipping it over, it seems to me the street has a handle on Nvidia right now. I mean,
let's talk. Like you say, it's funny you say it's not funny, but think about when Nvidia really got started, and you say the street didn't have a handle on it, and I would agree with you. Nvidia, I think it was 2.5 or 3 years ago. Don't at me if I'm off, but they guided from a $7.5 billion quarter. They guided up north of $11 billion. That was a 50% upward revision guide. So you say the street didn't have a handle on it. Well, it turns out Nvidia didn't either. Now, those numbers have obviously grown by a magnitude of 5, but the percentage gain, the percentages in terms of revenue guides have gotten increasingly smaller. The absolute number bigger, the percentage guide smaller. And at a certain point, the street's going to wake up to the fact that, okay, maybe things, although as crazy the numbers are, maybe things are slowing down. Now, the real key thing to watch is margins and where they guide for margins going forward. They've enjoyed 75% margins because they're in the pole position. But if competition starts to come in a meaningful way and you start to see deterioration there, I will tell you, the history of semiconductors suggests it never reinflects to the upside. So that's something else you have to watch.
And the street doesn't like this. I mean, basically at the number or like you said, a little bit light. So, it brings up the bigger conversation, which is the conversation, which is, does the street have a handle on AI? I was talking to Sosnoff earlier today. We were just carrying on about the obvious comparisons of this moment, and also because I'm down in Florida for this hotel board meeting where it's a tech company. So we were out with the Google team last night, and we were teasing them about GPT and how nobody uses Gemini and blah, blah, blah. it's very clear that we're in a moment, in my opinion, that is not dissimilar to 97, 8, 9, where it's Sun Micro and it's Lucent and it's Alta Vista and it's InfoSeek and it's. What is your sense of where we are in the AI cycle?
Yeah.
Not in terms of the industry, but in terms of stocks. You know,
well, I'll tell you, Brian Sullivan is in the room listening, and he's throwing his hands up in an agreement, in accord with you, and saying, you know what, Dylan's exactly right in his assessment. This feels hauntingly similar as to what we saw, back in the late 90s.
But
Without
Sosnow's
question.
point was Sun Micro, carcass, Lucent, carcass, Alta Vista, carcass, InfoSeek, carcass. Everybody was a carcass with the exception of Amazon.
Think about what happened with Sun Micro. Their CEO came out and actually said that the math is unsustainable around our business, around our growth. And that was the beginning of the end. Now, this is also the point that I'll make. And again, I'm not suggesting I'm right, but I think things move exponentially faster today than they did in the late 1990s, meaning that it took years back then for this to play out and for the market to finally figure out. I think it's going to take months, weeks, or months if you start to see an inflection. And I think the question your audience needs to ask and answer, is there a sanctity to CapEx? In other words, is the CapEx spending that all these different companies promised us, is that etched in stone, or is there wiggle room? If things start to go pear-shaped in the economy, I happen to think the first thing that's going to start to get cut is this CapEx spending. And everything, to me, so much has been predicated in this market rally on these CapEx numbers. So that's the next domino, I think, that's out there.
So, I mean, do you have an opinion? Do you play it all with, because I've been playing a little bit with the AI related names. Specifically, I'm a Google lover. I feel like Google's underestimated and underloved relative to Microsoft, relative to Nvidia, relative to Meta, et cetera. I believe that Google is in a much better position than people give them credit for.
And that's manifesting.
Doesn't show it.
And that's what you just said is manifesting itself in the valuation that the market is giving them. They trade at a trough valuation in comparison. I mean, if you think about what I think are the moats around Google, but there are a lot of people a lot smarter than I, and that's not a high bar. But Ben Reitz's, for example, if you follow his work, I think it was 4 or 5 months ago, he made the following comparison. He said in the same sentence, Google and Eastman Kodak. And I think we all know what happened with Eastman Kodak. You grew up in that area. And what he was basically saying is there's a seismic shift going on underneath the feet of Google in the form of AI, and their search business could be compromised. And I think that's one of the reasons the stock trades at a trough valuation. Now, I think the good news is we recently, when I say recently, I think yesterday, we took out the previous high in the stock. So it appears as though technically we might be at an inflection point and breaking out. So I think your assessment of Google is correct.
And I'm also just biased because I just spent a day with them, but I'll tell you what I learned without sort of compromising anything. But it's obvious that ChatGPT is the consumer favorite. Like it's sort of like GPT is the sort of default consumer favorite. And for sure, Gemini, which is the Google product, most people probably don't even know the name as a consumer product. But what became apparent in looking through the demos on the Gemini side was Google, which has made a large fortune, many hundreds of billions of dollars, monetizing search, selling selling keywords, selling all the tagging and targeting that is sort of the bread and butter at Google and then ultimately Meta. What was obvious in looking at the demos is the Google AI product already has integrated into it. The Gemini already has integrated into it all of the monetization, all of the Google stuff, all of the paid placement, you want to get your house cleaned, you want to get your dog trimmed, you want to buy a new boat, you need to get your hair cut, you want to buy a car, all those things is already inside of the Gemini. And it's not inside of ChatGPT. It's not inside of and I feel my point is I think it's easier for Google to become more consumer facing than it is for Grok or GPT or another AI product to integrate the Google things, which are all of the targeting and monetization, which is very unique to them, along with Meta.
I think that's going to be critical going forward, like to the extent that they can do that successfully and make that transition. I think it's going to be really important. I think that this is just me, and I'm not trying to be hyperbolic. I think sort of in some ways the fate of their search business sort of lies right on that what you just discussed.
Well, search is going away. I think.
Well, search in the historic sense is going away. It's the transition to.
As you go to the new search, which is an AI search product, how do you? And also, it's also all the companies on the product side. I'm on the board of a hotel business that uses paid search. There's all the whole entire travel industry, make Expedia, Booking. They all pay money for to buy New York, the Marriott in New York, the Paris, the hotels. Cruise lines in Miami. Like, that's a huge business that's existed forever. And it's not just travel. I mean, it's automotive sales, it's ticket sales, it's events, and all of that goes through an industry that is, paid search that's going to now not go away, but it's going to transition.
Now, you started this by saying, what are the plays around AI? And again, Brian's in the room and he's listening, but I will say that, his beat has been the energy beat, and we've talked about this. And I'm not asking you to pull up charts on the fly, but there's
somebody pulling up charts. It's not me. So, I mean, they've got the Nvidia chart.
I would like if they could pull up a Vistra Energy, and I will tell you, Dylan, since you started hosting the show in 2007, you handed it off to Melissa in March of 2009. I don't think I ever heard of Vistra Energy until the last year or so, and the chart bears that out. The stock went nowhere. VST, Victor Sam. Look at what that company has done over the last year. It's been a parabolic move. If you looked at this, you would say this has to be a biotech stock. No, it's just an energy company that is taken advantage of, or it's at sort of the crossroads of the energy use that's embedded with all these AI plays, and that's the place to be. If you look at a Constellation Energy, a Vistra, I mean, those companies, there's real things happening there. And this is, to me, I think this is a seismic shift. So AI valuations come and go, but AI isn't going away, and the energy uses on the back end are not going away. So despite the moves we've seen, and they've been historic, these are the types of places you want to be.
What is your sense of the culture of because the culture that you grew up on Wall Street is not dissimilar from the culture that Tom Sosnoff grew up on, or that I grew up on, which is a bunch of human beings in a shared space yelling at each other.
Yeah. Doesn't exist. Well, it doesn't exist anymore. I was just down, as I said, on the floor of the New York Stock Exchange. I started my career in 1986, the spring of 1986. I actually visited down there. I think it's not hyperbolic to say there were 50x amount of people then than there are now. So that has obviously changed. The dynamics around a trading desk have obviously changed.
But it's not even just the exchange. It's like the trading floors themselves.
They don't exist in the same way, and no doubt about it. I mean, the energy around a trading desk is gone, and it's not.
How do you think that affects the transfer of information from young to old, from new to experienced? From because it's easy to be like, to go with the full old guy thing and be like, well, now that we're not that.
Yeah.
But also, I could argue maybe they learn more, the young people, because they're all in the chat room and they have a collective.
Okay. So if you want to learn about companies,
just because Casey has so many young people, and
about balance sheets, I mean, they can do that on their own. If you want to learn the easy stuff that people have forgotten, relationships, how to have a conversation with people, how to interact in a group,
how to win somebody's trust.
How to win somebody's trust. I mean, that's gone by the wayside because the unfortunate reality, there is not a mentorship environment anymore because it just doesn't exist. So people will say, you know what? That's a bygone era. It's not important. I say bullshit. I say it's more important now than maybe it's ever been because it's a lost art.
And I mean, I just think that so much of, the human race exists in the transfer of trust and intelligence from one generation to the next. And that's only possible if you're in a group and under pressure with some shared purpose or some shared task or some shared challenge. And it's, I don't know what replaces that. I mean, it's one of the reasons I actually kind of enjoy, as you know, I got into the sneaker business as one of my enterprises, which is not to get distracted by that. But one of the things that appeals to me about that is it's a physical object that forces people to be together. You can't make a sneaker you can't make a thing. It doesn't have to be a sneaker. You can't make you can't make an object without being in relationship with each other in the object.
Think about, again, going back to the early days of fast, and hopefully I'm not boring your audience, although that might be happened, 20 or so minutes
ago. It's inevitable. I do it every day, so don't worry.
Mad Money started, and the success of that show allowed some of the people there to sort of come up with the next, and you had this idea, but what you're talking about
Mad
now,
Money opened the real estate for fast money.
Of course
no
it did.
question.
But what you were trying to do was replicate the feel of a trading desk, the relationships, the dynamics,
the phone calls that I had every morning with people like you that were not on camera.
So that's what you wanted to do. And to a certain, well, not to a certain extent, to a large extent, we've stayed true to that, the genesis of the show. And there are not a lot of shows that still have the essence of what it is to be on a trading desk. Now, look, at some point, like everything else, it sort of goes away, but we've tried to be true to that vision.
Yeah. Do you know how much I just know at Tasty that the audience and that the audience skews male. I think most financial products skews male and skews older because older has more money. But in the scope of older and male, my sense is that Tasty, my knowledge is that Tasty also does skew slightly younger. In the sense, because Tasty, you trade $100 accounts, $50 accounts, like these little accounts, just to learn how to do it. And I just know that you spend a lot of time. I just want to, because you give me so many compliments and you're very generous, but I know that you spend a lot of your time out teaching. I know you're very active at Georgetown. I know that you're the founder of your own media company, Risk Reversal Media. I know that in addition to the fast money things, that you have a very popular and successful podcast. I think Tom's going to be a guest of yours.
And you will as well.
And me as well at some point in the near future. But whether obviously podcasting or going on television or speaking at places like Georgetown is a way to make a living and it's a life, but much more than that, it's really a way to teach, and it's a way to interact with people, to share.
Yeah.
And I'm interested in your sense of the receptivity, who's the audience, how is the audience? I actually think in the era of AI and the atomization of life, Mary Duffy and I have talked about this a lot, who's another NBC executive, about the value of physical interaction now is at an all-time high.
I agree 100%. And I will tell you the importance of that in this world where, AI has disrupted so many things. I think all of a sudden, what you just talked about is more essential than ever. And I think there's going to be a value put on that. And I'm Roman Catholic, half Sicilian, half Italian. So I'm not one to quote from the Talmud, but I will say this. There's a saying in the Talmud, to save one life is as if you've saved the entire world. And I want to be crystal effing clear. I'm not suggesting I'm saving lives here. I think what they're trying to say is that if you can impact one person's life in a positive way, you've effectively changed their world or maybe saved them in some way, shape, or form. And that's enough. So if it resonates with one person, that's enough. Now, hopefully it resonates with a lot more than that. And I think by virtue of the fact that we're in our 19th year, it's safe to say that we are resonating with people. And I think people want to learn. And I think what I have learned is there's a thirst for knowledge out there without question. And it's not, again, playing stock market. This is going up, this is going down, although that's part of it. It's understanding, like, how do these people think? What are they looking at? Why are they in and out of things the way they are? Why do they look at certain things when I've never heard of that? And that, to me, what 07, 08 that you lived through with me, when we went on air on a nightly basis, seeing things that had never happened before, talking to an audience that was petrified, as was I.
As was John Madden, who pulled me aside at a bakery in Carmel. I was thinking I was meeting John Madden, but he was thinking he was meeting me. That was the highlight. That was the peak of my celebrity, I might say.
Think about that for a second. The point is, what 07, 08, 09 taught me is that there are no effing experts. There are people that have done it for a long time. But as you started this by saying, nobody's an expert in this. The market humbles and humiliates me specifically on a daily basis. And if I'm not being honest about that, then I'm not being honest at all.
What's the distinction? Because I know you got to get ready for fast money in a couple of minutes, so I won't keep you too much longer. But what's the distinction between what's special about your podcast? Why the podcast? What are you doing on that podcast?
No, I appreciate that. Well, what we learn, I think what you know, on an hour-long TV show, and I just, again, just complete full disclosure. I love CNBC. They've been extraordinarily good to me. You opened the door for me. CNBC's been great to me, and I will never underestimate the importance of the show. But what I've also learned is on an hour-long show that probably runs about 46 minutes of airtime, I mean, it's a lot of soundbite stuff. So what the podcast has allowed us to do is to get a bit more granular at times, let people see more of our personalities, to be a little more, if believe it or not, not open about things, but maybe even a bit more irreverent in terms of the things that we're talking about. And it just sort of, I think it's fast money on steroids in a certain way.
And who else is on the podcast? Like, what's the name of the podcast? Who else is on the podcast?
It's a risk reversal podcast. It's Dan Nathan, who you're familiar with, and me. You know, we have guests pretty much every week. We have a few different guests.
It's a weekly product?
We actually do a daily podcast. The one that most people sort of really tune into is the one that we tape on Thursdays. It drops on Fridays. I think this week, Rebecca Patterson, I think, is coming on, if I'm not mistaken. I don't have it in front of me, but we have that caliber of guests, and it runs the gamut in terms of people that we talk to. A lot of people you've seen on the network, a lot of people that you haven't seen on the network.
Now, you know that I've moved to Italy.
Mm-hmm. Good for you.
And you
Everybody should.
And you like to identify yourself as an Italian.
As I just stated, half Sicilian, half Italian.
I heard
there is a distinction.
But I chose not to rise to that particular provocation because I got to pick my spots. But they're building a bridge, and you're just going to have to deal with it. So
well, the Straits of Messina, that is, you could throw a football across from the mainland to Sicily. You know this.
Mm-hmm. I'm aware. Does it irritate you that an Irish Jew such as myself,
right,
has taken up full residency? I have papers. Are you okay with this?
I think if you know anything about Italians, they're very open people. They're very welcoming people. I think you have embraced Italy, but more so, Italy has embraced you. And I think you have learned something about yourself by virtue of the fact that you've lived there, that more and more people, the world should be more like Italians and the country of Italy.
Now, one other thing that I have learned, and then I will let you go to your professional obligations, is that the people of Italy that I meet in Italy are very different than the people of Italy that I meet in America.
And that surprises you. Why? Did you think otherwise? Did you think
like the Italians in Italy guy?
The Goombas you see walking around here are somehow emblematic of true Italians?
Hey, what's
in Italy?
No,
they're beautiful, they're graceful, they're kind, they're not quiet, but
those are the words I describe him with: beautiful and graceful, kind.
I am kind,
but beautiful and graceful, Dylan.
Look at this guy.
Yes, I'm coming to do the show in a minute. No, but Italians.
I think that the reason that they're beautiful people. So I'm going to leave you with this story because sometimes I go to Rome on a regular basis because I like to see the Pope.
I'm sure he feels the same way about you.
Yeah, he does. And so I was, and then Tom Sosnoff on Tasty works with Anthony Batista, who by his namesake you might think may.
I know. Said Tony Batista.
He may have an affiliation with your nation state. And so at one point we're down there, and there was doing this big thing, and there's people walking around with candles and things, because the Catholics, they really believe in magic. They're like,
well, no, it's not magic. Okay. You're making it sound like. There's some like Las Vegas
and
show.
Incense and wearing gold. They get real crazy about it, but whatever. And so I'm sitting there with Tony, and he's like, what was going on down there? And I wasn't thinking because I have a garden. I keep a garden in the back of my apartment in Milan, like a flower box, like planter box.
Have you grown lemons at all?
I do grow lemons, of course.
The flowers of a lemon tree are extraordinarily fragrant.
But
Anyway,
really, listen, lavender is my primary crop because you need to have lavender just for many reasons, especially when it comes to women. But unrelated to women, you're going to need rosemary. I have it for the kitchen. And so I got my rosemary, I got my lemons, and I got my lavender. So I got my three worlds. And I'm sitting down there with the magical Catholic thing with the candles and the smoke and the flags and the marching and all the craziness. And Anthony Batista is like, what were you doing down with the Pope? And I'm like, oh, I was down there for the procession of the Rosemary. He's like, I've never insulted an Italian. The level of indignation.
Right.
He's like, please tell me that you mean the procession of the Rosary.
Yeah, yes.
He was waiting for me to burst into flames. He said, "I'm away."
Listen, that's
rosemary is an important herb.
Of course it is. I think the rosary is probably a tad more important than rosemary, but I don't want to equivocate here. I mean, you can do both. You can actually say the rosary while you garden your rosemary.
As the Irish Jew, I take my chances. You got to go. So
can I just tell people something?
Please.
Obviously, your audience has gotten to know you extraordinarily well. One of the great, and I mean this sincerely, one of the great privileges of my life was working with you, albeit a brief period of time. The level, you are as brilliant of mind as I've ever, and with that brilliance comes a level of, what's the word I'm looking for?
I don't know.
Unpredictability.
Really?
Yes, but that's what makes you you, and that's,
you remember some of the commercial breaks?
Unfortunately, yes. The world should have more Dylan Radigans is my point, because, you're a thinker and you're thoughtful, and I'm proud to call you a friend. I mean that. I mean that. So
the feeling is mutual, and I believe that you are one of the great teachers of our generation for Wall Street. I've had the privilege of working for a decade with Tom Sosnoff, who for sure I believe is one of the great. He's built all these wonderful companies, entirely really dedicated to teaching and learning, and so I've learned to really admire the great teachers of my generation and our generation, and I count you right up there at the top of the list as one of the great teachers, not just about Wall Street, but just how to be a guy, how to be a good guy, and just how to live a nice life under any circumstances, how to not expect your life to satisfy you, but just how to be satisfied with being alive and allow whatever's going to happen. And I think you're a great role model and a great teacher for a lot of people because of the high profile nature of your position. And I'm really proud of your success, and I'm proud to call you a friend. So
wouldn't have happened without you, DR. And again, I apologize that I was late. I mean that, so I'm sorry. But I really appreciate you having me on. Thank you so much.
Before you go, what are you doing with Nvidia?
Well, I'm about to go on the TV show. So Nvidia's down like $6, which is not a big move at all. I got to take a look and see what sort of the margin guidance is. But I want your audience to go back to January of this year when they reported earnings. The stock that day made an all-time high, I think, of 153 and change. It closed lower on that day. I mean, you probably talk about this, but he had something called an engulfing pattern in the stock. And by April, like many other things, but by April, it was trading down to $90. And I want to be clear, I'm not suggesting we're on the precipice of a move like that, but we've seen some really strange things around earnings in Nvidia. So just go back there. It's worth taking a look at. And history might be repeating itself a little bit here.
I know you got to go, but last comment very quickly: comparison of the AI mania versus the .com bubble.
I think it's much more centrally focused. It's much more laser focused on a few names. The magnitude of it now, in terms of the numbers, are far greater. It's not going away, like the internet's not going away, but the mania around it is a little bit scary. I mean, when you think of a Palantir, for example, which is tangential to this, trading at close to 100 times revenues. I mean, and this is not a small company, as you know. I mean, this historically has not happened. So I think you have to keep things in context. It's bigger, and to me, it's a little scarier.
My trade is long Google, short Palantir.
It's working the last couple of days, DR. So keep whipping that horse.
Risk reversal media. daily with the big one dropping on Fridays. Fast Money every single day of the week. Guy's probably not there every day, but he's surely there most days. And he is the reason the show has the continuity that it has, along with a couple of other folks. But no one better than you, Guy. Thank you for making a special exception to come over and join us here on a rare, and this is the first time this is the first time in the history of TastyTrade, Tasty Live that I've ever been permitted to bring my friends on. So it's quite exciting for me.
I appreciate that. And thanks. I'm honored to be the first. Thank you, Dylan. Thanks, everybody, for having me.
All right. Have a good show. We'll see you on Fast Money in 10 minutes. Guy Adami, everybody. Let's get up the Nvidia chart so we can just get a handle. I'm not going to be as good for everybody on the overtime side as Chris Vecchio and Ilya normally are. But the summary on Nvidia, not complex. Basically meeting the numbers, a little bit light on a couple of the numbers, delivering on Tom Sosnoff's short position in a reasonable way. You can see the downdraft, and then pulling back half of the losses only to sort of mellow out once again. I look at this as much as anything as an indication of Wall Street's comfort and understanding of the company. So I don't even look at this as a meaningful negative indication for Nvidia, or for that matter for AI. I look at this more like the Wall Street now understands this company. They know how to forecast it. They know how to model it. And it basically no longer has the ability, the way that it did a couple of years ago, to blast through expectations because the adjustment is in place. I mentioned it in the conversation with Guy. I don't know if we can call up some other charts, but Google would be interesting to look at right now. I do think that Google is the most undervalued of the AI plays right now, because people feel like they're vulnerable on search. They have all these vulnerabilities. I do think that Palantir is the most overvalued of the names just for the multiple. I mean, Google's not doing nothing here, so that chart does have some action in it. But the degree to which Google pulls back because of the Palantir weakness, I would take advantage of it. The degree to which Palantir continues to perform, although you can see I'm not the first. I'm a little late to the Palantir poo-poo party. When you look at that Palantir chart, it's already starting to come back a little bit. I mean, the big thing that I know Chris and Ilya would be talking about on today's program, were they to be with us, would be that Nvidia is bigger than itself. That Nvidia's performance is more akin to a major economic indicator like the jobs number, or for that matter, like an inflation indicator, a CPI, PPI. Nvidia is the definitive bellwether, if you will, for the entire AI space. Is certainly among the bellwethers as much as Microsoft or Meta might be. But again, I don't look at today's numbers as terribly alarming. I would look at any sell-off in any of the broader AI names that is tied to what happens with Nvidia as an opportunity, not as a liability. I don't even know that you're going to get a big sell-off. We'll kind of see how this thing plays out. You can already see the debate in the Nvidia chart if you call it back up here. Again, it stands out more as well, to Ilya's point yesterday, or maybe 2 days ago, because it's the only major name reporting, so it's not lost in the cluster of all of those names. And we can tighten up the chart a little bit closer. You'll see obviously the sell-off on the earnings, and then the sort of churn to try to get it back, and now it's settling. But the net change is still relatively small, considering the sorts of moves that we've had out of names like Nvidia in the past. I do want to emphasize for my pleasure in being able to talk to Guy today, not just because he's an old buddy or because we have the work history, but I meant what I said in the sense that not knowing that you're much more likely. I've been much more successful in my life, and I've seen many more people around me have much more success in their lives when they're very comfortable and humble about the fact that they don't know, which then opens you up to both be more modest in the risks that you take, and also more quickly ask for help and to ask questions in a way that doesn't always happen when you're sure that you know, or when your positions get too big. I've been given the hall pass to invite another friend of mine to join us. So tomorrow, I'm excited to announce that Bill Fleckenstein from Fleckenstein Capital, who basically doesn't do any media, he and I did a lot of interviews during that brief period of the financial crisis and in having that discussion. And I'm excited that he's agreed to join me for an hour for a special edition of Overtime on tomorrow afternoon at 4 o'clock. That conversation, if you know anything about Bill, will focus much more around rates and the dollar and inflation and macroeconomy and the presidency and all the sort of non-AI. I mean, we'll probably touch on this AI conversation, but it's honestly much more likely to occur and to exist in the context of more of the macro things that I know are more native to this audience and these people, particularly considering how smart Ilya and Chris are on the topics in general of macro and macro trading. So I'm very excited to hear what Bill has to say about rates in general. And if this goes well, I may get a chance to invite some more folks to join us down the line as the weeks unfold as we go into this fall, which I think would be a nice thing. And I'm going to wrap things up a little bit earlier than usual if I don't get in trouble with the producers for doing so, and leave everybody to take a handle on your Nvidia position. Ilya is here, and he is preparing today's edition of Macro Money. So I do ask you that you stick around here on Tasty Live. I am Dylan Radigan, completing a special edition of Tasty Live's Overtime with my friend and neighbor, Guy Adami, co-founder of Risk Reversal Media, and one of the only, I think he is the only full-time trader on CNBC's Fast Money who was on the very first show, on the very first episode, and will be on that show once again today. So he is the connective tissue from day zero to present time on that program, and it was a pleasure to have him with us here today. And with that said, I am Dylan Radigan. Overtime for today, out of time. Do come back tomorrow and join Mr. Fleckenstein and myself for a conversation about all things rates, dollar, and macroeconomy. And don't leave us here. Ilya on standby for those who are looking for their daily dose. He is ready to roll with Macro Money coming up after this break.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to TastyTrade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from TastyTrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. TastyTrade. Download today.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
TastyTrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with TastyTrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the TastyTrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. Cboe is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the Cboe's SPX pit. Watch Liz and Jenny live from the Cboe, only on Tasty Live.
We built TastyTrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. TastyTrade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new TastyTrade and TastyLive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We built TastyTrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. TastyTrade.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was. And basically, instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring. And then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
TastyTrade is now on TradingView. Trade stocks and futures directly on TradingView charts with TastyTrade's low commissions. Try it out and leave us a review.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in-the-money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
What a day, what a day. Nvidia shocks the markets. We get some interesting machinations here around Fed policy expectations and a very interesting view on what comes next after this unexpectedly action-packed several days. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is take a look first and foremost at how all of this fits into the narrative that we've been following here since that explosive speech from Fed Chair Powell on Friday, and how all of this is looking like it may play out next. Of course, a huge input into this conversation, the earnings that we just saw from chip-making giant Nvidia, but also an interesting aside here directly from that Nvidia report into a conversation developing around China. We'll update what we're looking at there and consider what it all might mean for where markets are heading next. So let's begin with just a brief reminder here of how we are coming into this week and what all of this seems to imply. So this was how the markets reacted on Friday to Fed Chair Powell. It was unmistakably optimistic around the idea that indeed rate cuts are coming, and the Fed chair did not use this speech to disabuse the markets of that notion. Stocks go up, yields come down, gold goes up, the dollar weakens against its major counterparts. We can see that here with the yen and euro, the big ones, and Bitcoin, of course, reveling as it does in a risk-on mood with an amplified sort of performance. So pretty clear cut. The market hears Powell. We've talked about it on the show this week, how the language there seemed like the stage was indeed getting clear for the September rate cut. And then we look at how we performed this week. And this is before the Nvidia news after the close, which we'll get to momentarily. Stocks essentially going nowhere. Rates a little bit tilted on the downside at the front end, down 2.24%. That's especially something that hits today after we get a pair of bond auctions, in particular the 5-year sale today, but also results from a shorter term auction. We had some more immediate paper on offer today, the 2-year FRN auction, as well as the 17-week bill sale, and meaningful declines on rates there. We have a significant low here on the 17-month bill rate, a significant low on the 5-year rate. So a little bit more confirmation from the markets, not that we needed it, not that we didn't know that this was coming, but nevertheless, a little bit more confirmation that we have a rate cut in the offing here. So markets take some additional comfort, it would seem, at least on the rates side of things, from that little tidbit, and we end up with a little bit more of an outsized move lower on the 2-year. But otherwise, things look very quiet indeed. And so we come into this conversation after that Powell speech with this sense that perhaps the markets did not find follow-through. We have the U.S. dollar notably stronger, recovering almost all of its losses against the major currencies and erasing the move against the euro almost in its entirety. Bitcoin sharply lower. Gold still holding up, ostensibly around what we're seeing here, but the situation much more muted at the long end of the curve. And it's not for lack of for lack of conviction in what Powell said. As a matter of fact, we can see here rate cut expectations have been holding very firm here, now at about 87% chance for a cut, but not too removed from yesterday, and in fact not too removed from a week earlier, which you can see is marked as August the 20th. So this is actually before Powell's speech, where we already see the probabilities were relatively strong. In fact, there was, we can see a month ago, a little bit of a wider spread here, a little bit of a chance for a 50 basis point cut, about a 60-odd% chance for this cut. So already there, but the spread a little bit more dispersed, about a 35% chance that we hold. Well, that ambiguity is clearly gone and it's not going anywhere. Moreover, we can see that the outlook for the coming year has anchored around the Fed's own forecast of 50 basis points for this year, give or take some rounding error. A couple basis points here, a couple basis points there. That's, of course, the same as the forecast that the Fed has been projecting since December, well before the new administration took place in Washington and threw a wrench in the works with its tariff efforts. So the markets are anchored around what the Fed said then. The Fed has reiterated that forecast again in March and again in June. And so here there seems to be stability. Nobody appears to be relatively surprised by what's coming. The situation for next year is growing increasingly dovish and continue to do so today. We're out to 82 basis points on the menu for next year. That, of course, is a very significant sort of escalation in a story that is very clearly insinuating that the markets are still looking at all kinds of room for the Fed to keep cutting. That obviously clashes significantly from what the Fed was itself forecasting back in June. In that summary of economic projections, the Fed had a meager 25 basis points on the menu for next year. And so this is perhaps why the markets are somewhat lackluster in their follow-through for what Powell said. It looks like what he did was remove uncertainty around some sort of a rug pull kind of a situation where the Fed might have said, you know what, we're not as ready to cut rates as you all hope. And so it seems like the markets had about a day's worth of relief, and we're not able to find anything else in that speech. And so perhaps the catalyst for whatever was going to be the dovish Fed narrative is, at least for the time being, until we see some more economic data. And of course, we'll talk about the PCE report that's coming up later this week on tomorrow's show. But at least for the time being, it looks like that story might be out of juice. And so with that in mind, we have a kind of stayed reaction. And then, of course, there's this. This is the reaction from Nvidia shares after hours, after the company's fiscal second quarter results. Revenue comes out $46.74 billion. That's a slight beat over $46.02 billion expected. Adjusted EPS of $1.05 a share. The expectation was $1.01, so a little bit better than expected, but not a whole lot. The magnitude of the surprise, in fact, relatively modest here compared with some of the more recent numbers that we've seen. For example, one quarter ago, we were looking at a beat of almost a 10% margin, about 9.8. This ends up being a beat of just 3.9, let's call it, give or take 4%. So within the lower end of recent outcomes. In fact, this is the weakest beat on EPS in recent memory. So certainly a beat, but not exactly rosy results. Nvidia also approves an additional 60 billion share buyback. And needless to say, this, of course, is not just relevant to the company itself, as we've talked about extensively on the show yesterday. This is the largest of the Magnificent Seven, which already make up a huge share of market cap. And we can see here, in terms of NVIDIA's weight, it accounts for 8% of the overall S&P 500. So it is an absolute behemoth. And this will not only be relevant, this disappointment, for the overall sort of story around NVIDIA itself, for the story around AI and the optimism there, and certainly then becomes a kind of macro indicator for overall market sentiment. At a time when the market had its positive Powell catalyst and then decided the story was over, again, because there was so much more easing that the markets were already baking in, that the Fed would have to go a long way still to meet these lofty expectations. Now, we spoke going into this announcement about how the other 6 of the Magnificent Seven fared in their earnings reports this cycle. And we can see here we have roundly beaten expectations on all but the EPS number for Tesla, which came in right on the screws. So we have a run of positive results here. And of course, most impressively with Meta, where we have a dramatic beat on EPS. And indeed, the stock had a huge, nearly 12% day that day. But as we pointed out, we don't really have a responsive market, even in the face of these results. The markets yawn at Google and Tesla. We get a gap higher for Meta and Microsoft around those Meta earnings in particular, but that gap is immediately faded, and markets actually come in after the initial after-hours pop. Then Amazon and Apple come in, and again, it's not as though those results are by any stretch awful. Round of beats on both EPS and revenue, but the markets ultimately swoon. And only later do you get this build into record highs. This is the Mag 7 ETF from Roundhill, just to give us a sense of what's happening in the isolated space. And although we can see here that since those earnings run their course, that's this right here, and sort of looking at the uptick thereafter, this appears less to do with whatever was happening with those earnings, which happened back here from the 23rd to the 31st of July, and more with this downshift in Fed expectations by year end. This is Fed funds futures for December of this year, the implied rate. So you can see that there is a big revision lower to a more dovish setting, and that's ultimately where the markets start to grind higher and reach a peak on that CPI report on the 12th of this month, after which the markets got soggy across the board going into Powell. And of course, this then is Powell. And since then, we've gone, again, not very far at all. We discussed yesterday already this idea that the markets were punishing bad news in an outsized way in this environment, as opposed to rewarding good news. Now, this is not entirely abnormal. Of course, the market expects CEOs to be guiding when they issue their forecasts on financial performance, to be guiding such that they can underpromise and overdeliver. And so some degree of upside beat is expected relative to forecasts. And so we can see that the 5-year average here already has positive results being rewarded with about a 1% two-day move, a negative result punished by more than double that with an average 2.4% move. But this particular reporting season, the disparity is all the more glaring. Only a 0.4% up move on positive surprises and a huge 5.5% number for negative surprises. So the markets seem already to be more sensitive to bad news than good news. And that seems to suggest that maybe we are looking not only at exhaustion in the Fed story, but perhaps exhaustion in the stocks as driven by tech, as driven by AI optimism, and as driven by the idea that basically all of this can get front loaded into a huge sort of tech powered outperformance, everything else notwithstanding. Perhaps that story is running into a situation where it also is beginning to run on fumes. And it is with this that we get to the real meat of what seemed so disappointing in these Nvidia results. It wasn't so much that the numbers were soggy. As we say, they did in fact beat relative to expectations, albeit by much smaller margins than recent history. But the big question was their forecast on revenue. And we can see here that there was an unusually large gap this time. This is the forecast for fiscal third quarter revenue right here. And we can see here a wide disparity in expectations. And much of this disparity has to do with whether Nvidia will be able to sell chips to China. The Biden administration blocked them from doing so. The Trump administration started with blocking them from doing so, then recently reversed that and said, well, if you're going to sell chips to China, in particular the H2O chips that were slated for it, well, then you have to give us a 15% cut of the sales. And so there was a lot of question as to whether these forecasts would include sales to China in the estimates, suggesting that the company expects that market to become open. And when we look at the estimates for third quarter revenue that Nvidia released today, it is somewhat soggy, 54 billion plus or minus 2% leeway against expectations of 53.46 billion. So definitely on the low end of expectations here. Certainly doesn't help that data center revenue came in a little bit light for the second quarter, 41.1 billion versus 41.3. But it's really the forecasting that stands out. Nvidia saying it did not include sales to China, of which there were none, into these second quarter results. And when we look at this revenue estimate coming in on the low end, the presumption seems to be, well, there won't be sales to China, or at least there's not going to be a meaningful uplift from sales to China in fiscal third quarter, which sets us up for a look at China, where in fact over the weekend here we're going to get updated Purchasing Manager Index numbers suggesting that we might get a little bit of a wiggle higher. These are going to be the official figures from CFLP, the China Federation for Logistics and Purchasing, alongside the National Bureau of Statistics. So the expectation is that China's economy is going to stick relatively close to neutral, as ever in the logic of PMIs. 50 is the center line where there is neither growth nor contraction. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. Manufacturing expected to remain in contraction mode. Services expected to hover near neutral, as is the composite index, but a little bit better, a little bit more into a positive direction here than the prior month. Of course, this is a critical story about demand from the world's top three sources of GDP growth. Between the US and the Eurozone and China, we have 58% of global GDP. And as we can see here, Europe has been quietly improving here a little bit. The US has remained relatively strong. Looking at the S&P global version of the numbers, China has been soggy. And if we look at the problem here, of course, we've talked about it extensively, it is that there is virtually no demand to speak of. With real GDP running above nominal GDP, we have now 9 consecutive quarters of de facto economy-wide deflation, which basically suggests the entire economy is in the bargain bin. There's not enough demand to clear available supply, so prices are sinking. We saw this in spades in the latest inflation numbers, CPI pegged to 0, just a hair above. Wholesale inflation still deeply in negative territory. But the markets have seemingly sniffed out perhaps something more positive. We see that we have the credit impulse index for China, the share of new loans in GDP, starting to finally see a little bit of positive growth. This is as of July. We don't have August numbers yet, but starting to finally see a little bit of positive growth. And the markets are perhaps even getting a little bit of optimism there. We can see that there's an uptick in northbound capital flows through the Stock Connect, which connects markets in Hong Kong with those on the mainland. Northbound flows would be flows from Hong Kong and into mainland bourses. In other words, more demand both from Hong Kong and, of course, from foreign investors as an extension, because they're using Hong Kong as a hub through the Stock Connect to get exposure to mainland shares. The situation in Hong Kong itself still relatively vibrant here. We saw this pickup in flows last year and now again, but whereas last year they came with weakness in flows domestic on the mainland, and it seemed like it was more like money exiting the mainland than going southbound and out through Hong Kong. This is a different story now. So perhaps the markets are starting to get a little bit more optimistic about a China turn, and that, of course, makes this Nvidia report a little bit jarring and makes the PMI numbers that much more interesting, because Chinese economic data has actually tended to weaken relative to forecasts recently, looking at this data from Citigroup. And we find, in fact, it is now below zero on this measure, which suggests Chinese data now tends to disappoint relative to forecasts, which, of course, makes the current situation that much more interesting, because if the Fed story is running out of speculative juice, and if these Nvidia earnings are telling us that but for China, revenues are on the low end for the AI space, and though there is clearance to sell to China, the demand may not be there because the economy is weaker than meets the eye, when there's plenty of optimism to unwind and risk appetite finds itself without a new batch of fuel to burn. That sets up as bad news, perhaps, for the S&P, for NASDAQ, and for U.S. stocks in general, and perhaps paints a more positive story for the U.S. dollar, which has tellingly benefited from risk aversion and shown itself impervious to building Fed rate cut expectations for next year, at least for now. And that is Macro Money for today. As ever, we are here right after Overtime, a show that I co-host with Dylan Ragin and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on TastyTrade, named best online broker for options trading. Genius loves company.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Traders, start your platform.
Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
What's one macro risk that people aren't talking about enough right now?
Consumer credit. People are talking about, I feel like everyone's talking about risk these days. People are talking about like consumer credit. They're talking about like all these different sources of consumer debt is a big one. Buy now, pay later. I remember like all that consumer debt was kind of more discussed about last year. And I think those conversations are really going to start to bubble up again in the near future. Yeah.
The biggest macro risk, I think, is just the sudden volatility. So, you know, politically, anything can kind of happen day to day, and I think seeing volatility at a 16 handle is just too cheap. Like, I think volatility should be at the lower end of the range, be like 19, 20-ish, and the higher end be in the 30s. That's what at least it seems like to me. So I think people are just kind of dulled to sleep right now, especially into the summer, and you got holidays and all that stuff. So I think volatility is the macro risk that nobody is thinking about right now.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Look who's back testing. TastyTrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at TastyTrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. TastyTrade. Make your move.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days, I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, of course, Dan Cecilia. And also with us today, special guest, we've got Greg Magadini, professional options trader, head of derivatives at Amber Data, back on the show. And if you're not familiar with Greg, which you should be, he's a regular on the network. Greg's always bringing us, tons of unique insights, trade ideas. Greg, we love having you on the show. Welcome back.
Thanks so much, Ryan. Yeah, I'm glad to be here. I love being on the show as well.
How have you been? What's new? What's exciting?
Yeah, I mean, there's a lot of stuff going on. ETH is continuing to pop off, which is very exciting. There's a lot of interesting macro monetary things going on as well. And so I think we're setting up for a good show, good trade ideas coming up.
Yeah, let's talk about that. We had the absolute ripper, and not just in crypto, but in equities as well, just across the board on Friday, which seems like forever ago, given the price action in the market. But post Jackson Hole speech, the market breathed a sigh of relief. We've got a interest rate cut upcoming. Everything rips higher. Per usual, we see a little bit of a pullback. But, you know, ETH has really taken center stage now. The narrative shift, the flow has shifted. ETH's outperforming Bitcoin. You can see this clearly when you look at the ETH BTC ratio. What do you make of kind of what you're seeing in the market here with Ethereum specifically? And I guess how high can ETH BTC go in reality?
Yeah, I think the BTC ratio going back around sort of the average median levels of 0.07, which would put ETH, around $8,500, $9,000, is pretty realistic. And world keeps spinning, nothing's really different. It's just ETH is a higher price. So to me, this is just kind of a natural path of prices, and there doesn't need to be like some massive catalyst for that. But the dynamics in Ethereum in terms of vol are getting very interesting. I mean, you see it in the realized, but there's fundamental reasons and shifts for that. And that kind of brings me to my trade idea in a little bit here.
Yeah, and you mentioned the vol dynamics, and in that newsletter you talk about the BTC lagging realized vol versus ETH's rising realized vol. What do you think is causing that divergence?
Yeah, actually, maybe we could just go to slide number 3 here because it's very interesting. So one of the things that's interesting for Ethereum, so we had sort of the Bitcoin accumulation occur a little while ago now with the spot ETF, Bitcoin treasury companies. Now we're getting sort of those same dynamics for Ethereum. So if we go back to June, total treasury holdings for ETH were about 200 million. Today they're about 12.5 billion. So that's a huge jump and a lot of buying pressure. So that's one interesting catalyst. Then you're seeing a lot of inflows into Ethereum ETFs. This would be slide number 4. So that was a laggard for quite a while, and now it's starting to pick up for the first time in ETH. So that's very interesting. But then we have this kind of other dynamic that's very particular to ETH, which is staking. So right now we have the highest staking ratio. 30% of the ETH supply is staked. So that's a tradable float diminishing effect. So if there's less coin to trade around, the coins are going to move around more because it takes less money to move prices. So that's a realized volatility catalyst. And then what we have at sort of the last aspect, we have all the major ETF providers in the US filing for distribution of staking rewards. And that's kind of a two-banger. So not only is that a catalyst for more people to invest in ETH because now the ETFs have some sort of yield to them, but then those inflows into the ETFs are also stakes that reduces the float as well. So those are kind of two big major movers. Combine that with treasury accumulation, that's going to move prices a lot. And that decision is expected sometime in October of this year. I do think there's some vol to that time of the year, especially if we're going to get a regulatory decision around the staking ETFs.
So, Greg, we've got this divergence in volatility, which, as you've described, is being driven by all the attention on ETH. For the moment, at least, Bitcoin's kind of taken, I guess, a back seat. You're kind of seeing this with price action as well. I mean, I've noticed that the correlation, if you look at 90-day rolling correlation between the price of Bitcoin and the price of ETH, I mean, it's still a pretty strong positive correlation, but has broken down quite a bit from, let's say, 0.90 to maybe closer to 0.7 in some cases. What do you think is driving that? Like, why all of a sudden is all the attention only on ETH versus Bitcoin, in your opinion?
Yeah, I think it's a little bit of a reversion to the mean because 2023, 2024, and part of 2025 were sort of the opposite picture. all the attention was on Bitcoin, digital gold, macro policy, SVB banking crisis, all that stuff. And Web3/tech plays, crypto tech plays were a little bit out of favor. And so we got a rotation out of ETH into Bitcoin. ETH was sort of the dog of the crypto pile. And now everyone is underinvested in ETH and the momentum is returning. So people who are in crypto typically have a portfolio of cryptos and they sort of rebalance away from the big winner, say say Bitcoin, to buy a laggard, say ETH. And I think those are the type of flows. And that's why you kind of see a correlation breakdown, because you have people who own Bitcoin selling Bitcoin to buy ETH. So you got selling at the same time as you have buying pressure. So that kind of breaks down the correlation a little bit.
So if you see this correlation continue to move a little bit lower here, and we do see, you know, when we look at ETH specifically, as you mentioned, there's a positive correlation between price and volatility right now, which I think is a pretty bullish signal, as we've discussed in the past. But if you go back to, you know, this divergence between Bitcoin and ETH, not only in volatility terms, but also in price terms, you look at the breakdown and correlation. If that continues, do you expect that to be bullish, I suppose, for ETH or the ETH BTC ratio? Is that what you'd want to see, is a further divergence?
Yeah, I would say so, but I would say it's not necessary. You can have positive correlation, but just higher beta in ETH. So both are going up, but ETH is going up more. And that's actually a more constructive environment. We saw this in 2017, you know, major bull market for crypto, but Bitcoin dominance went down and altcoin season came into fruition. So everything was going up, but smaller assets just had a higher beta and did better. And that's kind of the environment I want to see for Ethereum. I don't want to see an environment where Bitcoin's crashing for whatever reason and ETH is relatively strong.
Yeah, so given this setup, let's move on to the trade idea you had in your newsletter. You alluded to selling the MSTR volatility, the premium in MicroStrategy, and buying ETH volatility. Can you just break down that trade, what your thinking is there, and just how to set that up?
Yeah, definitely. This is slide number 2. You can just see the MicroStrategy volatility go down a lot. So kind of just setting up the picture, one of the things that you want to keep in mind when people buy volatility, when there's kind of, it's the insurance policy last resort, so to speak. So you can see that in the S&P 500, when we have market crashes, the only real hedge you can have is a put option or some sort of volatility premium in VIX or something like that. And so in MicroStrategy, we have Michael Saylor selling convertible bonds to buy Bitcoin. So what that means exactly is that he's a supplier of volatility. Those convertible bonds have a 0 coupon, and they have an embedded option. The strike is around $670 on conversion for MicroStrategy. So if you're a convertible bond holder, really how you think about that is you have present value of the bond itself, and then you have sort of the embedded optionality. And if you're long that optionality, typically you would sell some MicroStrategy against your bond holding because you have a convert and that has a delta. And if MicroStrategy goes down, you buy back some shares because your delta goes down, so you need to rebalance and gamma scalp. And so that's typically the type of gamma scalping flows you see with just plain vanilla options. Now you would see them with convertible bonds. Now, the reason to me why this is so interesting is because it shifts the dynamics. For quite a while, we had MicroStrategy outperforming Bitcoin, and we had an increasing net asset value premium in MicroStrategy to its holdings. Now we have a decreasing MNAV to MicroStrategy holdings, which makes total sense. As Bitcoin rallies, you're going to get into delta rebalancing of the convert holders. They're going to be selling the shares of MicroStrategy, and it's going to kind of collapse that premium. So not only is MicroStrategy going to have lower realized vol because everyone's long vol in there already, but then the asset that MicroStrategy owns, which is Bitcoin, is also a decreasing volatility profile. And the lower the profile of the MicroStrategy volatility, the less they can raise money with more converts to buy even more Bitcoin. So that actually reduces the Bitcoin volatility. So there's kind of all these mechanisms that are vol consolidating in MicroStrategy and Bitcoin. And as we just talked about, ETH has the exact opposite profile. We're just now getting treasury flows. We're now staking ETH. We're now getting a catalyst of the ETH ETFs coming online that can explode ETH volatility even higher. The last kind of component here, like the trade idea, in my mind, selling out of the money call spreads on MicroStrategy to buy out of the money call spreads on ETH-A on a pretty closely delta dollars for delta dollars basis makes a lot of sense. So that's kind of a type of trade I think would be interesting.
Okay, I want to take a look at that in the platform in just a second, Greg, but just so we understand this, we've described the divergence in price action, right? We want to be long ETH versus Bitcoin here. You can see that in the ETH BTC ratio. You also are looking at this from the volatility perspective, where we want to be long ETH vol. It's trading positively correlated to price, where we're seeing a decline in Bitcoin volatility. And I guess it gets to the third part of this question, just as I'm kind of rephrasing this back to you. Naturally you would just go in there and say, okay, well, why not just sell call options in IBIT? But as I understand it, you're saying MSTR is a better vehicle for this trade because of this dynamic you've just described. It's almost reflexive in nature, given the structure of the vehicle. And so if you're going to put on the short vol and in some ways kind of negative delta position for Bitcoin or for IBIT, you actually would be better suited in many ways to do this in strategy or MSTR. Is that correct?
Yeah, I think the dynamics are more interesting. And MSTR is also underperforming Bitcoin in price terms right now. So you're extra long the ETH BTC ratio by being long the ETH MSTR ratio.
I love these trade ideas, Dan.
I want to dig into this a little bit further, and I do want to bring up the platform just because I want to take a look, like what expiry and strikes would you consider with this? If our viewers want to take a look at this on the platform, are you going longer date or where are you looking here?
Yeah, so I think October, November, December are sort of the interesting months for the ETH side. And so I'm kind of driven by the ETH side in terms of expiry selection, because I really want to see that regulatory ETF approval play out in terms of the staking. I think that's a catalyst for more inflows into the ETFs and more interest in just owning ETH and ETH ETFs and the staking ratio to be higher.
So given that time frame, I mean, if we were to look at, as an example here, the October expiry, what is the delta that you kind of would target, or where's your sweet spot in terms of you don't want to pay too much and you want to, have a little bit of bang for your buck, I suppose. Kind of how do you hone in on what that spread looks like, or what option you're going to buy, how wide your spread's going to be? Like, how do you think about risk as well in that sense?
Yeah, I'm actually not too sensitive in terms of the strike selection. Basically, what I want to do here is that given the spread that I'm putting on in MicroStrategy, that's going to give me a delta. And so let's say the delta is 10 times 350 gives me 3,500 delta dollars. And then I want to have a spread that's about equivalent in delta dollars long to the ETH side. So I can actually kind of play around with those ratios. But basically, on the initial setup, I want to have delta dollars for delta dollars. There's a little bit more volatility to ETH. So it's not like a perfect one-for-one. I think ETH right now is 75, MSTR is 55, but close enough. It doesn't have to be perfect. The trade, it'll either work or it won't, but it's not going to be because you didn't hedge extra couple vol points of delta dollars.
Okay, so you could volatility weight this, I suppose. But if I'm just looking at the platform here, and you said kind of eyeing up the ETH-A options in terms of your expiry to start with, but if we went to MSTR, and just to show everybody this, if we went into the October period here, and we let's just change this from open interest to delta, and if we were to look at this, and I suppose just as an example, let's say we wanted to sell the 370. It's a 40 delta. I mean, maybe you want to be a little bit farther away. I don't know. It's up to everybody's own risk preference, but we'll look at a 10-point wide spread. Sell the 390, buy the 400 in October. That's the regular monthly expiration, 51 days to go. And then you're honing in on, I mean, let's just say we're going to do this 10 times. So we're at 37 in terms of the delta we'd look to match up against with our long delta in ETH A. So our call spread we'd want, versus this spread, we'd want 37 positive deltas to kind of go delta neutral, or 35, 30, just somewhere around there. Maybe 40 on the other side of it, I guess, if you're a little bit more bullish ETH.
Yep, and I would do, because ETH A is 1/10 of the price of MicroStrategy. For every 1 delta in MicroStrategy, I'm going to do 10 delta in ETH A.
Gotcha. Okay. So in terms of sizing that, is it correct then that if we were to do 1 here in MicroStrategy, just 1 contract aside, we'd want to do 10 contracts in terms of our ETH A spread?
Yep, that's right.
Awesome. Okay. Yeah, let's just pop back over to the ETH A option chain for just a second. So we're looking at the 390, 400. You'd be selling that. So you get the negative deltas there, get the positive theta decay as well. Go over to ETH A and just looking at that same delta setup, about 37. We want to be in the same expiration, and correct me if I'm wrong here, Greg, but if we went out here and just start to play around with this a little bit, so this is going to get us 6 deltas. I guess you'd have to go a little bit, closer to the money, or widen the spread out a little bit in terms of how you might set it up?
Mm-hmm. Yep. You could structure it either way. It's not going to matter too much, but yes.
Okay.
Whatever you need to do to jigger the deltas to be about equal, 1-to-10 ratio in equality.
Gotcha. So you definitely, again, have to go with a much larger size for those deltas to equal out or balance out here. Maybe that's 10 contracts, 15 contracts, or you kind of adjust the spread here. But that's the general concept. Again, selling premium in MSTR via a call spread, buying a call spread and getting those positive deltas, and getting long vol in ETH A. Would you ever go in here and just do it naked? Sell the MSTR. It kind of sounds scary saying this, but I mean, I think as you've described, there seems to be a high probability, or at least kind of wind in the sails of kind of that short premium trade there for MSTR. But would you ever go in there and sell the call and just buy the call in ETH A and do it without a spread?
Yeah, definitely.
Okay.
All you have to do is just ratio down your sizes, and just use a stop like you would in any short position, or actually any long position. Just manage that risk. But yeah, the scary thing with selling out of the money calls is sort of the convex exposure. So if you're selling like 1 delta options, you're selling that in size, that can quickly explode in your face in any move in vol. But if you're selling kind of a meaty option, the payoff ends up looking more like a short stock. So it's a lot easier to control.
Is there any risk that you see to this trade? Like, you talk about that structure where sailors, that ATM structure where the volatility is dampening. Is there anything where that rips higher? Like, is it some unwind? Is there some leverage somewhere? Is there anything you could think of there?
Not necessarily the MSTR component, but if you get like Bank of Japan buys $1 trillion of Bitcoin, all bets are off the table.
Right. Okay.
All right. That is the trade setup. And again, I think key to hone in on here is you want to make sure that you are in some ways accounting for volatility, but sizing this appropriately given the notional value of the 2 instruments here, or of these spreads. You're trading one, as Greg mentioned, that's $300 some a share, and the other is only 34. So you need to do that basically 10-to-1, and you want to balance those deltas out. We're going to put this trade on tomorrow when the market's open, Greg. We'll put it on the follow page in the Tasty Live platform, but love the idea per usual. Before we wrap things up, we got a couple more minutes here. I want to go back to your newsletter, which if people aren't on the list, how can they get on the Amber Data newsletter list that goes out every Sunday?
Yeah, you can follow us at amberDataDerivatives.substack.com.
Highly recommend it. That is one of the recommendations I can make on the show, Dan. Like I said, before we wrap things up, something that stood out to me in reading your most recent piece, Greg, was what you coined the boom catalyst, which I even made a slide for this one. So if we throw that up as a little backdrop here, can you describe kind of how you're thinking about maybe what's next for the Fed, the current macro backdrop, and this boom catalyst that could be on the horizon?
Yeah, definitely. Just to contextualize it, so when we went off the gold standard in the 1970s, gold was $35 an ounce. Then we went straight to fiat money, unbacked currency. Gold in the next 10 years went up to $700 an ounce, so 20x. So that was the 1970s boom effect, boom catalyst. In my mind, the Fed independence or pressure from the administration on lowering rates and easy money and being dovish is also a potential boom catalyst where we're in good times, but the Fed feels the force of cutting rates and loses its central bank independence. So that would be a game changer in my mind.
Yeah, it seems like we're close to that. I mean, you, not necessarily on a daily basis, but you clearly get the tweets from Trump around, the need for lower interest rates, replacing Fed Chair Powell. I think Scott Bessent, U.S. Treasury Secretary, has been out talking about, rates realistically being 150 basis points or so lower. We'll see if we get there. I think in some ways you could probably see a slight rise in inflation on the horizon here in terms of the rate of change. But then if you have a Fed that doesn't fight that, right, I mean, then it's off to the races for gold, for crypto, maybe for long duration tech stocks in the environment that the Fed's fine, almost bizarrely, but given there maybe is a lack of independence at this stage, but is fine with that rise in inflation while they're continuing to cut. Mm-hmm. Where do you think, is that needed, I suppose, for us to get to that 700ths of a Bitcoin ETH BTC ratio? Is that, does it fall on kind of what happens next, given that dynamic for markets? How do you think about that?
For the ETH Bitcoin ratio, I don't think we need that. I think that's just reverting. Like ETH is just playing catch up to where it should have been. In terms of just overall hard assets and inflation hedges, I do think this boom catalyst is, a game changer, so to speak. Like prices of platinum, silver, gold, Bitcoin, crypto in general, equities can just move a lot higher from here, despite wherever valuations are. So that ends up kind of being, one of the $1 million Bitcoin is scary scenario type of things, but something to be aware about.
Yeah, these assets are definitely your hedge there. I guess really quickly before we wrap things up, on the other side of that, short term, do you see any risks? I mean, obviously there's always risk, but is it geopolitical? Is it macro? Is it monetary policy related? I mean, it seemed as if on Friday for a moment everybody thought it was off to the races with a rate cut cycle, and then very quickly that's kind of reversed and the narrative has shifted to maybe one and done. We'll take a look and see. You've described again boom catalyst being that maybe they don't care as much about inflation as kind of Fed funds have started to reprice. Where do you see the risk to this kind of narrative or the thesis here over the next couple of months?
Yeah, so I'm a little bit torn. So the typical risk is, markets crash. I think in a way that would be the best case scenario. And the reason why I say that is I think the other risk is, I like to put it in this juxtaposition. What do you think is more likely? Housing gets radically affordable or housing gets radically unaffordable? And I think inflationary environments where asset prices just go up uncontrollably is actually society-breaking events, because it changes a lot of dynamics. Saving is no longer rewarded. Taking as much risk as possible is rewarded. That changes sort of the whole ethos of how our economy functions. And then you have situations where wealth becomes unevenly distributed because asset owners become insanely wealthy, whereas people who don't own assets become a lot poorer, relatively speaking, and sort of the middle there's no middle. It just becomes the wings. And to me, that's actually the risk. It's not a recession risk. Recessions are actually great equalizing opportunities. They're scary, but they're equalizers. If we have just infinite asset price appreciation, that's very bifurcation of wealth, and that actually is kind of scary.
Well, we'll leave it at that, Greg. I hope we go up, but we just don't go up too fast. As always, appreciate having you on the show. Appreciate you coming on. the show here and hitting us with some trade ideas. Like I said, we'll put this on the follow page on the TastyTrade platform. And again, if anybody wants to follow you or Amber Data on Twitter and sign up for the newsletter, where can they find you, Greg?
Yeah, definitely. I hate to leave it on that sour note, so everything will be fine. Let's not worry about it. Just put it out there. Just be aware of it as a trader. That scenario exists, but it'll probably be fine.
Absolutely.
Find me on Twitter at Genesis Vol. You can find my Substack, amberDataDerivatives.substack.com. And then you can check out our platform and look at all these analytics at pro.amberdata.io.
Awesome. Well, thanks again, Greg. That's going to do it for our show. We'll be back on Monday. Until then, or wait, we won't be back on Monday. I apologize. We have the day off. We'll be back Wednesday. Some point next week, we'll be back streaming live. Beans is on Friday. Make sure to tune in to Dan and Shelly on the Tasty Crypto YouTube channel. We'll be back next week. Until then, I'm Ryan.
I'm Dan.
Peace.